marathon revisions. Okay. So good morning and welcome to the marathon revision of CA Intermediate, Corporate and other laws. In these marathon, we will recall all the provisions of all the laws. Along with that, I'll try to give certain conceptual clarity on certain topics based on which they will ask case scenario questions or practical questions in the examinations. For example, we have section number 25 and section number 42 of the Companies Act in the Prospectus and Allotment of Securities. 25 and 42 both are interlinked section numbers. 25 deals with what? Deemed prospectus. Section number 42 deals with the private placement of securities. And we know that any offer of securities to more than 200 persons in a financial year, it is considered as what? Deemed to be a public offer. So if it is deemed to be a public offer, that offer letter is no more called as an offer letter. It is called as prospectus of the company, a deemed prospectus of the company, and all the provisions with respect to the prospectus is also applicable to that offer letter. So section number 42 and section number 62 both are interlinked. In the same way, in case of deposit chapter, which chapter? Deposit chapter. In case of premature repayment of deposits, there is a reduction of interest rate by how much? 1%. If there is a premature repayment of deposits, the rate of interest is reduced by how much? 1%. How that calculation is done, we will discuss those calculations as well. And in case of registration of charge, if the charge is not registered within how many days? 120 days. What are the consequences? Is there any possibility of getting the charges registered after 120 days? We will discuss that concept as well. And if a company create a charge on its holding company assets or subsidiary company asset, who should get the charge registered and what form to be filed with ROC for the purpose of registration of charges? We'll discuss that also. And in case of deposits, in case of higher PC companies, 100% is allowed. They can accept deposits from the members up to 100% of paid up capital, free reserves and security premium account. We'll also discuss how the calculation needs to be done for the purpose of acceptance of deposits. At the same time, in case of dividend chapter, which chapter? Dividend chapters, company can declare dividend. It can be interim dividend as well as the final dividend. Interim dividend can be declared by the board of directors out of the current year's profit or out of the previous year's profit, not out of the reserves. So the right to declare dividend out of reserves is available only to the shareholders of the company as a final dividend. And for the purpose of withdrawal of money from the reserves, for the purpose of declaration of dividend, there are few conditions to be satisfied. Correct, right? There are 3 conditions to be satisfied. That is, you cannot withdraw more than 10% of paid up capital and free reserves. There, what do you mean by free reserves? How the calculations are done? What is paid up share capital? Is it only equity share capital or a preferential capital? So all those things we will discuss in detail. At the same time, in case of accounts and accounts of the company, even in case of what? Accounts of the companies, there is a provision where central government can prescribe the preparation of accounts, preparation of financial statement on a periodical basis. Now, for listed companies, it is mandated to prepare financial statement on a quarterly basis. Correct, right? But there are a few unlisted public companies who doesn't prepare the financial statement on a periodical basis. So government can mandate even unlisted public companies to prepare the financial statements on a periodical basis. Again, when it comes to disqualification, these auditors of the company, auditors chapter, there we have this disqualification of auditor. If an auditor is removed by the tribunal, removed by whom? Tribunal. He is disqualified to be auditor of any company for how many years? 5 years. However, if he is removed by court for a fraud, then he would be disqualified for 10 years. There are 2 different provisions. Under NCLT, NCLT has the power to remove the auditor of a company. If NCLT removes the auditor of a company, he is disqualified to be an auditor for how many years? 5 years. But however, if a court convict him, not tribunal here, court, if a court convict an auditor for fraud, then he is disqualified to be an auditor for 10 years under section number 141 of the Companies Act. Clear with this? So like this, there are certain areas where we can discuss the concepts in detail. I'll try to give those conceptual clarity and we can also solve certain practical questions. Done? So we will quickly go because it is a rapid revisions and I will quickly discussing all the provisions. Wherever you guys have questions or doubts, you can ask those questions. I will clarify. I'll answer your questions. Done. This is your examination pattern or this paper pattern. In the last examinations, January examinations, they asked questions like this from the various chapter. Chapter number 1 is preliminary. They asked 0 questions out of the preliminary chapter. There was not even a single questions out of what? Preliminary chapter. Second chapter, incorporation of company and matters incidental thereto. Based on this, they asked 1 question of 5 marks. Done. Then prospectus and allotment of securities. They asked 1 question of 7 mark. Then 5 question, 1 question of 5 marks. Descriptive question, 1 question of 5 marks, and MC question of 1 question of 2 marks. Totally 7 marks. Clear? Next one, share capital and debentures, 7 marks. Then acceptance of deposits, 7 marks. Registration of charges, 7 marks. Management and administration, 7 marks. Then declaration and payment of dividend, 5 marks. Then out of accounts of the company, they asked questions for 10 marks in the examinations. Then we have audit and auditors, 8 marks questions they asked. Then companies incorporated outside India, 5 marks. LLP, they asked 14 marks questions in the previous examinations. Then in the part 2, we have the General Clauses Act 1897. Out of these, they asked 10 marks questions. Then interpretation of statutes, 8 marks questions. And FEMA, they asked 14 marks questions out of the FEMA. We will cover FEMA also in detail in today's class. Last 1.5 hours, we will keep it for FEMA. We'll do a thorough revision of Foreign Exchange Management Act. Done. So this is the pattern of questions asked in the Jan 2026 examinations. Sir, is it going to repeat again in the upcoming examinations? Not sure. Could be. But weightage remains the same. Correct, right? For example, they can ask questions out of preliminary also. In the last exam, they didn't ask any questions out of which chapter? Preliminary chapter. They can ask questions out of preliminary chapter. I'll tell you guys, even if they ask questions out of preliminary chapter, they'll not ask direct questions. They'll ask interlinked questions. For example, we have a definition of government company. They will not ask you to write what is government company. Instead, what they will do, they will ask you to decide government company, and they will ask you to write the provisions of appointment of auditor of government company. In case of government company, who appoints auditor? CAG appoints the auditors. Now what they will do, they will say there is a company. In that company, these governments are holding shares. You should first decide whether it is a government company or not. Then you should decide who will appoint the auditor. If it is a government company, CAG will appoint the auditor. If it is a non-government company, then who will appoint the auditor? Board. The board will appoint the auditor if he is a first auditor. And in case of a subsequent auditor, that is, in case of other than the first auditor, the members appoint the auditors in the annual general meeting of the companies. Clear with this? Understood? So all these things we will discuss one by one in detail. Ready? Shall we start? Let's start with the marathon revision of your CA Intermediate Corporate and Other Laws. Past chapter number 1, preliminary, section number 1 and 2. Section number 1 and 2. Section number 1 provides what? 3 provisions. Short title, extent, commencement. Everybody? Short title, extent, commencement. What is the short title of this act? The Companies Act 2013. Extent, is it applicable to all over India? No. It's applicable to all of India. Commencement, as and when notified by the central government. Applicability, it is applicable to companies which are incorporated under this act or any previous company law. It's also applicable to insurance companies. Except so far, this is what the crucial point, except so far, the provisions of the Companies Act are inconsistent with the provisions of which act? Insurance Act. Which act? Insurance Act. IRDA Act. Because Companies Act is a general law, Insurance Act is a special law. If there is any inconsistency or contradictions, then which law is applicable? Insurance Act is applicable. Special law is applicable. Clear with this? It is also applicable to banking companies. Again, except so far, the said provisions are inconsistent with the provisions of which act? Banking Regulation Act. It is also applicable to companies which are engaged in the generation and supply of what? Electricity. Except so far, the provisions are inconsistent with the provisions of which Act? Electricity Act. It is also applicable for any other companies which are governed, not only companies, any other body corporate which are governed by the special act. For example, we have LIC. LIC is governed by which act? LIC Act. LIC is not formed as per Companies Act. It is formed as per which act? LIC Act. SBI formed as per which act? SBI Act. So even SBI should follow Companies Act. However, if there is any contradiction or inconsistency with the provisions of Companies Act, what do you follow? SBI Act. Clear? And if there is a question based on section number 1, the question will be based on this last provision. Companies Act is applicable even to such other body corporate. When I say body corporate, it includes even LLPs as well as foreign companies. Company means simple. What do you mean by company? Company incorporated under this act or any previous company law. But in case of body corporate, the word body corporate includes even LLP as well as foreign companies. So government can make the Companies Act applicable even to a body corporate which is governed by any other law for the time being in force by notification in the official gazette. By using this power, central government has notified certain section numbers of Companies Act to the LLPs. For example, in case of LLP, we have designated partners. What partners? So designated partner should also have DIN number. How to acquire DIN number? There is no provision in the Partners LLP Act for the purpose of acquisition of DIN number or disqualification of designated partner. So Companies Act provisions applicable to disqualification of director is also applicable to whom? LLP, that is designated partners. Are we clear with this? So government has the power to make the Companies Act applicable even to a body corporate which is governed by the special act. By notification in the what gazette? Official gazette. Section number 1. Are we clear with this? Next one, definitions. There are various definitions. We will quickly go through the definition. We will not spend more than 15 minutes for the definitions. Clear? Let's start. Not 15 minutes, 20 minutes for the definitions. I know it is not possible to cover in 15 minutes. First one. What is the first one? Associate company. What company? Now, what do you mean by associate company? This definition will help you guys for the purpose of understanding disqualification of auditor and also for the purpose of consolidation of financial statement. A company having one or more subsidiaries or associate company should consolidate its financial statement. Correct, right? At the same time, if a person or along with his relative is indebted to the company, indebted to the what? Company in excess of how much? 5 lakh rupees. He is disqualified to be an auditor of a company, and his indebtedness can be for the company or its holding company or subsidiary company or associate company or subsidiary of holding company. So for this purpose, you must know what is an associate company. What is associate company? A company is called as associate of other company if the other company has a significant influence. What influence? Significant influence. Now, what do you mean by significant influence, sir? Significant influence means controlling at least 20% of voting rights. It is not share capital. It is what right? Voting rights. And only equity shares has what right? Voting rights. But does not includes a subsidiary company. What company? Subsidiary company or subsidiary of a company having such influence, having such what? Influence, but includes a joint venture company. What company? So joint venture company is considered as what company? Associate company. What companies? So what is associate company? It's a company in which other company has a significant influence but does not include subsidiary of a company having such influence but includes joint venture companies. And what do you mean by significant influence? Controlling at least 20% of the voting power or having a control of participation in the business decision. Then it is considered as what? Significant influence. And what is joint venture? Where by a joint arrangement they have an equal right to the assets of the company. For example, Hero Honda is a joint venture of what? Hero and Honda. So for Hero and Honda, Hero Honda is considered as what company? Associate company. What company? Next one, shares held in fiduciary capacity. I hope you guys know what is fiduciary capacity. As a trustee, if the shares are held in the capacity of a trustee, then it will not be counted for the purpose of calculation of control. For example, mutual fund companies, mutual funds, asset management companies, they will not hold shares for themselves. They hold the shares on behalf of the mutual fund holders. So the mutual fund asset management companies holding, it is not considered for the purpose of what? Control. For the purpose of what? Control. Or calculating the control, because they're not holding the shares for themselves. They're holding the shares on behalf of somebody else. Clear? Associate company. Next one is what? Books of accounts. Next one is what? What is books of accounts? Records maintained. What maintained? The moment you see a books of account, it means it is a record. Books of accounts are what? Records. The books of accounts are maintained for the purpose of what? Some money received as well as expanded. Nothing but your cash book. Correct, right? Next one, sales and purchases. Next one, assets and liabilities, items of cost if it is applicable. So books of accounts means records maintained with respect to the money received and expanded, assets and liabilities, purchase and sales, and items of cost. These are called as what? Books of accounts. What of accounts? Books of accounts. We will discuss section number 128 of the Companies Act. Books of accounts to be maintained by the company. Every company shall maintain proper books of accounts. On what basis? Accrual basis, and which provides the true and fair view. What view? True and fair view. It is not true and correct view. It is what view? True and fair view. Clear with this? Next one, control. This definition is not important, but we will have an idea about what is control. See, in case of subsidiary company, what company? Subsidiary company means it is a company in which the other company controls the composition of board of directors. Now, what do you mean by this control? When can we say one company controls the other companies? This control can be to appoint what? Majority of directors. What directors? Either it can be majority of directors or all directors of the company, or having a right to control the management or policy decisions. If a company has the right to appoint majority of directors or to control the management or policy decision, either individually or acting in concert, directly or indirectly, by virtue of shareholding, management rights, shareholders agreement, or voting agreements, then you deem to have what? Control over the company. What over the company? Control over the companies. Are we clear with this, everybody? Next one, financial statement. What statement? What is financial statement? Financial statement means balance sheet for the balance sheet at the end of the financial year. Second one, profit and loss account or income and expenditure account. What account? Income and expenditure account for the financial year. Correct, right? And the third one, cash flow statements. And the fourth one, changes in equity. Statement of changes in equity is compulsory only if your company is complying with Ind AS. What AS? Ind AS. And the last one, any explanatory note. What note? Explanatory note. That is what considered as a financial statement. What statement? What is financial statement? It includes balance sheet at the end of the financial year, because we prepare balance sheet at the end of the financial year. Second one, profit and loss account or income and expenditure account if it is a Section 8 company for the financial year. Next one, cash flow statement, then statement in changes in equity, and the last one, any explanatory note. What note? Explanatory note. Cash flow statement is not applicable if you're a one-person company, small company, dormant company, and also startup company. What companies? Startup companies. These companies are not required to prepare what? Cash flow statement. What statement? For every company, financial statement includes all these statements, but it does not include what statement? Cash flow statements. Are we clear with this? Next one is financial year. What year? What do you mean by financial year? Simple, say simple. The moment you see a word financial year, the word period should pop up in your mind, because financial year is a period. Is a what? Period. So period ending on 31st March of the year, it is considered as what? Financial year. What year? So financial year starts on 1st of April, ends on what? 31st March of the year. So period ending on 31st March of the every year. What year? So here the last word is year, not financial year. Year means calendar year. Year means what year? Financial year means the period ending on 31st March of the every year. However, if the company is incorporated on or after the 1st January, the financial year will end on what date? 31st March of the following year. What year? Normal cases? 31st March of the every year. But if a company is incorporated on or after 1st day of January, then the period ending on the 31st March of the following year is considered as the financial year. Again, if a company is having a holding company or subsidiary company or associate of a company which is incorporated outside India, and if it is required to do the consolidation of financial statements, in that situation, such company can apply to whom? Central government, follow a different financial year. What financial year? Different financial year. And the central government may grant the permission to follow a different financial year. But however, IFSC companies, what companies? IFSC companies can follow a different financial year, that of the holding company. If IFSC company is a subsidiary of a foreign company, and if it requires to, and if the holding company is following a different financial year, subsidiary company can follow the same financial year without the permission of whom? Central government. We will discuss these exceptions separately. I have prepared this list, right? If you see here, section number, this will come in the what? Accounts chapter. What chapter? Accounts chapter. If you see here, IFSC company, financial year, subsidiary of a foreign company can follow same financial year of its holding company and approval of the tribunal or central government is not required. For which company? IFSC companies. Are we clear with this? Yes or no? Which year? Financial year. Next one, foreign company. What company? What is foreign company? Again, we will discuss this topic in detail under the chapter companies incorporated outside India. But for the time, we will discuss what is foreign company. Company which is incorporated outside India but having a place of business in India, either by itself or through an agent, physically or electronically. And most important, conducts business activity in India. It is called as what company? Foreign company. What company? Foreign company. Then comes the free reserves. What reserves? Free reserve. This definition of free reserves is important for us for the purpose of calculation of net worth. Calculation of what? This definition will help us under the deposit chapter as well as dividend chapter, because in case of deposit chapter, only a eligible public company can accept deposits. What is eligible company? Eligible company means a public company having a net worth of how much? 100 crore rupees or more, or a turnover of 500 crore rupees or more. And what do you mean by net worth? Assets minus liability. Nothing but paid up capital plus reserves. You should know what are free reserves, right? Yes or no? For that purpose, you should know what is a free reserve. What is a free reserves? Reserves which is available for distribution of dividend is called as what reserves? Free reserves. What reserves? Free reserves. So foreign company is done. What is foreign company? Company incorporated outside India, having a place of business in India, either by itself or through an agent. Physically or electronically conduct business activity in India. That is called as what company? Foreign company. And we have one more concept where if the Indians are having a control over that foreign company, it is deemed to be an Indian company for the purpose of Companies Act provisions that we will discuss separately. Next one, free resource also done. Next one, government company. What company? What is government company, guys? It's a company in which not less than 51% of paid up share capital held by the central government or by state government or governments, or partly by central government and partly by one or more state governments, and includes a company which is a subsidiary of government company is deemed to be what company? Government company. A company which is a subsidiary of a government company is deemed to be what company? Government companies. Clear with this? Next one, KMP. Next one is what? KMP. Who is KMP? Key managers. This is important for the purpose of officer and default definitions, because in case of any wrongs in the company, who would be held responsible? KMP. KMP is deemed to be an officer in default. Who is a KMP? A company will have either CEO or managing director or manager. Any one will be there in the companies, correct, right? So KMP means CEO, managing director, or a manager. Any one of these persons will be there. Why? Because all of these persons will be having a substantial power. What power? Substantial power for the management of affairs of the companies. So either a CEO or MD or the manager. Next, a company secretary. What secretary? Company secretary is also considered as a key managerial person. Next one is whole-time director. Next one is chief financial officer, generally a CA, or any other person not more than one level below the what? A director, and should be in old-time employment, and is designated as a KMP by whom? By the board of directors, not by the government. By whom? Board of directors, or any other person who has been prescribed by the government is also considered as what? KMP. Considered as what? Who is the first person? CEO, MD, or manager. Then you should also have CS. Then you should also have whole-time director. Next one, CFO, or any other person not more than one level below whom? Board of directors. He is just one level below the what? Board of director, and he should be appointed and designated by the board of directors by passing a board resolutions. Clear? Or any other person prescribed by the central government. What government? Central government. Government has the power to add any other person to the what? Definition of KMP. Definition of what? KMP. Are we clear with this? Next one. Listed company. What company? Listed company. Based on this, they ask questions in the previous examinations. Not in the last examinations, in the previous examinations. What do you mean by listed company? Simple, say simple. Listed company means a company which has listed any of its securities. Any of its what? Securities in a recognized stock exchange. What exchange? Recognized stock exchange. It is called as what company? Listed company. See, there are so many stock exchanges in India, but out of that, there are only two recognized stock exchanges. Only if you have listed your securities in the recognized stock exchanges, then you are considered as what company? Listed company. Again, what is the word used here? Securities. It is not the shares. It is what? Securities. And the word securities includes shares, debentures, bonds, everything. Clear with this? Next one. But does not include. This is the most crucial point. There are three types of companies. Okay, three types of companies and different types of securities. Listen, everybody. What is the first type of company? Public company, private company, public company. What is the classification? Public company, private company, public company. If you are a public company, what company? Public company. You have not listed your equity shares. What shares? If you have not listed your equity shares in the recognized stock exchange, but you have listed non-convertible debt instrument. What instrument? Non-convertible debt instrument on a private placement basis. What basis? Even though you have listed your non-convertible debt instruments, you are still not considered as what company? Listed company. Second one, or if you have issued non-convertible redeemable preferences. Non-convertible redeemable preferences. Redeemable is by default because company cannot issue irredeemable preferences. Correct, right? So if a company has issued non-convertible redeemable preference shares, what shares? Non-convertible redeemable preferences. On what basis? Private placement basis. And if it is listed, it is not considered as what company? Listed company, or both of the above. You have offered non-convertible debentures and non-convertible preferences on private placement basis, and you got these two listed in the stock exchange. Are you considered as listed company? No, because your equity shares are not listed. Exemption. Next, for a private company, what company? If a private company has listed non-convertible debt securities on what basis? Private placement basis. What basis? Then also not considered as what company? Listed companies. Clear with this? Or a public company which has listed, not listed its equity shares. Not listed what shares? Equity shares. But they have listed their equity shares where? Outside India in a jurisdiction specified by the central government. This concept was not there. By amendment to section number 26 of the Companies Act, now the government allows the overseas direct listing. What listing? Earlier, if a company want to list its securities outside India, they were supposed to convert them into GDRS or ADRS. But now, certain class of companies in certain jurisdiction, they can list their securities directly. There is no need to convert them into what? ADRS or GDRS. So if you're a public company, you are not listed your equity shares. But you are listed your equity shares where? Outside India, not considered as what company? Listed company. Clear with this? This is the definition of what company? Listed company. What is listed company, everybody? It's a company which has listed any of its securities in the recognized stock exchange. Is called as what company? Listed company. But however, does not include the following companies. What is the first company? Public company which has not listed its equity shares but has listed non-convertible debt instruments issued on what basis? Private placement basis, or non-convertible preference shares which are issued on what basis? Private placement basis, or both. Or if it is a private company which has issued non-convertible debt instruments on what basis? Private placement basis. Or if it is a public company which has not listed its equity shares but has listed the equity shares outside India in a jurisdiction specified by the central government. That is called as what company? Listed company. Next one, manager. Manager is a KMP? Yes, sir. Who is the manager, sir? See, there are two persons here. Manager, managing director. What is the difference, sir? See, manager and managing director both are having substantial power. What power? The management of affairs of the company. The major difference is manager can be any person, but MD should be a director of the company. What of the company? Director of the companies. Are you guys clear with this? Any person can be a manager, but to be a managing director, you must be what? Director first, because you are a managing director. What director? Managing director. But both of them would be having what power? Substantial power in the management of affairs of the companies. Are we clear with this? That is why company can either have a manager or managing director. They cannot have both. A company can either have manager or managing director. It cannot have both manager as well as the managing director. Are we clear with this, everybody? Yes or no? Who is manager? who under the superintendence or control or direction of the board of director, he is entrusted with the management of the whole or substantially whole or affairs of the company, then he is considered as the manager. Next one, managing director means a director. So you should be a director who either by the virtue of agreement with the company or by articles of the company or by resolution passed in the meeting of the company. Are you guys getting it? So he would be entrusted with the substantial powers of the management of affairs of the company, either by an agreement with the company, or by resolution passed in the meetings of the company, or by mentioning it in the articles of association. If you are having a substantial power, then you will consider as what? Managing director. What director? Next one, who is a member, sir? Who is a member? Nothing but shareholders. Nothing but what? Shareholders. Does it includes only equity shareholders or preference shareholders? Both equity as well as preference shareholders. Both are considered as what? Members of the company. There are two ways in which a person becomes a member of the company. First one, by subscribing your name to the what? Memorandum of association, and by agreeing to subscribe, by agreeing to purchase shares of the company, or agreeing to contribute certain amount if it is a guarantee company. What company? Now, or you can become member of the company by purchasing shares of the company and having your name entered in the what? Register of members. What are members? Just holding share is not sufficient. Your name should be entered in the what? Register of members. If the shares are in dematerialized form, your name will be entered in the records maintained by the depository, electronic record. Then you will be considered as what? Member of a company. What of a company? Member of a company. That is why general meeting is a meeting of members. Meeting of whom? So who can attend the meeting of who can attend the general meeting? Both equity shareholders as well as the preference shareholders. Clear with this? Next one. Net worth. What do you mean by net worth? Again, this definition is important for the purpose of deposit chapter, because what is eligible public company? A public company having net worth of 100 crore rupees or more and or turnover of 500 crore rupees or more. Or a simple say simple. Who can take deposits from the public? Deposits from whom? Public. One hand, 100 crores. How many fingers? 5 fingers, 500 crores. Lame logic, but still you'll remember it. Yeah, eligible public company. What company? Eligible public company can deposit from whom? Public. Correct, right. When you ask money from the public, one hand, you should be having at least net worth of how much? 100 crores. How many fingers? 5 fingers. Correct, right? So net worth turnover of how much? 500 crores. Any one condition is satisfied, you are considered as eligible public company. What company? Eligible public companies. Are you guys clear with this? Now, what do you mean by net worth? Paid up capital, free reserves, security premium account, or credit balances of what? P&L account. All these are considered as part of the what? Net worth. Part of what? Net worth. Less accumulated losses, deferred expenditure, and miscellaneous expenditure not written off. Then you get what? Net worth of the company. Either you can do assets minus liabilities, or you can do what? Paid up share capital, reserves, security premium account, and credit balance of P&L account. Keep this in mind. For the purpose of calculation of net worth, we do include what? Security premium account. But do you include revaluation reserve? It is not an actual reserve at all. Are you guys getting it? As I said, they will ask practical question based on the small, minute details. Get it? Are you guys clear with the net worth? Next one, officer in default. What in default? If there is a direct questions in the examination based on a preliminary chapter, there will be a question based on officer in default. What in default? Officer in default. Who is considered as officer in default, sir? Old-time directors and KMP. KMP includes even old-time directors. They could have said KMPs. Correct, right? KMPs are considered as what? Officer in default. What in default? Next one, if there is no KMP, then who is considered as officer in default? Any person who is designated as such by the board of directors and who has given a consent for such designation. If there is no KMP, if appointment of KMP is not mandatory, such company's board of directors can designate any person as a what? Key managerial person. If no such designation has been made in that scenario, who is considered as KMP? All directors are considered as what? KMP. Are you guys clear with this? Who is the first one? Old-time director. Second one, KMP. If there is no KMP, any person designated as such by the board of directors, and who has given a consent for such designations. Consent for what? Such designations. If there is no such designations, in that scenario, who is considered as KMP? All the directors are considered as KMPs. Are you guys clear with this? Next one. Any person. Yes, exactly. If something goes wrong, they would be held responsible. Next one. Next one is specific provision. If I have entrusted with some work, I have entrusted some work to a specific person, and with respect to that, if you do any default with knowledge or with this negligence, then you would be considered as what? Officer in default. What in default? Officer in default. I have entrusted some work to you as an officer of the company or employee of the company. While executing that work, if you do anything wrong, you will be considered as what? Officer in default. Fourth one. Clear with this? So any person charged with any responsibility authorizes, actively participate, knowingly permits, or knowingly fails to take active steps to prevent any default, then you are considered as what? Officer in default. Next one. Any person as per whose advice the board of director is accustomed to act. He is a person in accordance with whose advice the BOD is accustomed to act. Then that person is also considered as what? Officer in default. Next one, for the contravention of provisions of this act. In case of contravention of provisions of the Companies Act, who would be considered as officer in default? Every director. What director? Every director who is aware of such contravention. If he is not aware about such contravention, then he is not considered as officer in default. You would be considered as officer in default only if you are aware about such contravention, either because you took part in that meeting, or you took part in the meeting without objecting to it, means you have given a consent for it, or you did not oppose to it. Then you would be considered as what? Officer in default. What in default? Who is officer in default? Every director who is aware about what? Such contravention, either by the way of receipt of proceeds of the board, or by participation in the meetings without objecting to it, or who has given a consent to such contravention, is considered as officer in default. In case of transfer of shares or any other matters, that is transferring agent or registrar will be considered as what? Officer in default. There are 7 persons, guys. How many persons? Who is the first one? Whole-time director. Second one, KMP. Next one, person designated. No designation, all directors. Next one, any person who is entrusted with any responsibility. Next one, every director. What director? Every director for contravention of the provisions of this act. Next one, any person in accordance with whose advice the BOD is accustomed to act. Correct, right? And the last one is issue for transfer of shares. Then the transfer agents, registrar, and merchant banker will be considered as what? Officer in default. What in default? Officer in default. Next one, private company. Have I discussed private company? I'll not discuss the definition of private company. What is private company? It's a company which has minimum paid up capital as prescribed. As what? So there is no minimum paid up capital prescribed for private company, public company, or Section 8 company. In the recent MTP mock test paper of this May 2026 examination, they had given about Section 8 company, right? In that first question was like, is Section 8 company required to have a minimum paid up capital? The answer is no. Section 8 company is also either a private company or a public company. Correct, right? Is there any minimum paid up capital required for a private company or a public company? No. You can start a company with any amount of paid up capital. Correct, right? So even for a Section 8 company, there is a requirement of what capital? Minimum paid up share capital. Are we clear with this, everybody? Yes or no? What is private company? It's a company which has minimum paid up capital as prescribed, and by its articles, it restricts the transferability of shares, limits the number of members to how many? 200, except in one-person company, limits the number of members to 200, provided that 2 or more person holding 1 or more share jointly shall be considered as how many member? 1 member. Provided further that persons who are in the employment of the company, or the persons who are formerly in the employment of the company, were members of the company during such employment and continues to be the members of the company even after employment ceases, shall not be counted as a member of the company for the 200 limit. And the last one, it prohibits invitation to the public to subscribe to its securities. That is called as what company? Private company. Can a public company have these restrictions? Only which company can have this restriction? Private companies. Clear with this? Next one, promoter. Who is a promoter? See, this definition of promoter is defined, or the definition of promoter is given for the purpose of making somebody responsible if something goes wrong in the companies or certain documents. See, in case of listen, we would have studied this in case of prospectus. If there is a misstatement in the prospectus, who would be held responsible? Promoter, director, and every officer who has authorized the issue of prospectus would be held responsible, including an expert. Now, for that purpose, we should know who is a promoter. Law is simple. It says if your name is mentioned in the prospectus as a promoter, you are a promoter. You need not be a shareholder. You need not be a promoter, director of a company. Your name is there as a promoter in the prospectus. You are a promoter. Your name is there as a promoter in the annual return. You are considered as what? Promoter. If there is any misstatement in the prospectus, you would be held responsible as a what? Promoter. If there is a wrong information in the annual return, you would be held liable as a what? Promoter. The first provisions. Any person who has been named as a promoter in the prospectus or identified in the annual return is considered as what? Promoter. Second one, who has a control over the affairs of the company. Control over the what? Affairs of the company, directly or indirectly. Directly or what? Whether as a shareholder or director of the company, he will be considered as what? Promoter. And the next one, the person as per whose advice or directions or instruction the BOD of the company is accustomed to act or used to act. Then you are considered as what? Promoter of the company. For example, my company's board of director listens to Bashit. Now Bashit is considered as what? Promoter of the company, even though he's not a shareholder of a company, not a director of a company, because my board of director listen to whatever the advice he gives, he'll be considered as what? Promoter of the company. If something goes wrong in future, who would be held responsible? He would be held responsible. But however, if Basit is a CA or a CS or a CMA or an advocate or a doctor and he is giving the advice in his professional capacity, will he be considered as promoter of the company? No, because he is giving the advice in what capacity? Professional capacity. What capacity? Professional capacity. Are you guys clear with the definition of promoter? Next one. Prospectus. What is the next one? Prospectus. See, simple says simple. Law does not says what is considered as a prospectus. It covers everything. Any document, what document? Any document issued or described as a prospectus is called as what? Prospectus. If company says this paper is a prospectus, it is considered as what? Prospectus. Even tissue paper can be called as prospectus, provided the tissue paper is inviting offer from whom? Public to subscribe to its securities. Are you guys getting it? Even newspaper can be considered as what? Prospectus, if it is inviting offer from the public to subscribe to its securities. Simple says simple. What is prospectus? Any document issued or described as a prospectus includes red herring prospectus, shell prospectus, or any notices, advertisements, circulars which are inviting offer from the public to subscribe to its securities. The most important point is that you are inviting the offer from the public to subscribe to your securities. Yes, prospectus includes abridged prospectus. It's not a different type of prospectus, but red herring and shell prospectus have some different provisions. Abridged is a shortened form of prospectus. Are you guys clear with this? Prospectus. Next one. What is the next one? Related party. What party? Related party. Again, if there is a direct question in the examination, out of chapter number 1, the question will be based on this related party definition. What definition? Related party. For a company, who is considered as related party? What party? Related party. First one, obviously, directors or his relatives. Everybody? Director or his what? Relatives. Is considered as what? Related party. Second one, KMP or relatives. Directors or his relatives, KMP or relatives. If it is a partnership firm, what firm? For me, a partnership firm is considered as a related party only if in that partnership firm, my company's director or manager or the relative is a partner. Getting it? A partnership firm is considered as a RPT of the company if in that partnership firm, the company's director or manager or the relative is a partner. Clear with this? So you should go step by step. First, director, relatives. Second one, KMP, relatives. Individuals are done. Now we'll go to the partnership firm. What firm? A partnership firm is considered as my related party only if my company's directors, manager or relative is a what? Partner. Is a what? Partners. If it is a private company, what company? Private. A private company is considered as my related party. In that private company, my company's director, manager, or relative is a member or director. Either you are holding share or you are director of a company. That is in case of private company. But public company, there is a different criteria. If it is a public company, in that public company, my company's director or manager should be a director of a company. What of a company? Plus, he should be holding more than 2% of the share capital. What capital? Share capital. Both the condition must be satisfied. Then only a public company is considered as what? Related party. What party? Related party. See, private company, there is a limit. Even if I'm holding one share, not me, my company's board of director or manager or his relative is holding how much? Anything. If he are member of a company or director of a private company is considered as what party? Related party. But if it is a public company, what company? Public company. If it is a public company, that public company is considered as my related party. In that public company, my company's director or a manager along with his relative is holding more than how much? 2% of the share capital, plus he should be a director of that public company. Are we clear with this? Next one. Any body corporate. What corporate? Other than this, any body corporate, it can be Indian company, foreign company, LLP, whatever it is. In that body corporate, the body corporate board of directors are accustomed to act as per the advice or instructions of the company's directors or manager. Your company or your LLP or a foreign company accustomed to act as per my company's director's advice or manager's advice, then you are considered as what party? Related party. What party? Or it is otherwise also. If he is a person, individual, according to his advice, my company's board of directors are accustomed to act. Then as an individual, he will be considered as what party for me? Related party. What party? Related party. Are you guys clear with this? And the last one is most important. Based on this, there can be a question in the examination. Any body corporate. What corporate? Any body corporate. It can be an Indian company, foreign company, anything, LLP. So any body corporate is considered as a related party if it is a holding company, subsidiary company, or associate company. Are you guys clear with this? What company? Holding company, subsidiary company, or associate company. If a company is my holding company, then holding company is considered as what party? Related party. I have a subsidiary company. That is also considered as what party? Related party. I have an associate company. That associate company is my what party? Related party. What party? Or subsidiary of a company, to which company is also what? Subsidiary. What does it mean? For example, X company is having Y company and Z company as what companies? Subsidiary company. Now Y and Z is also considered as what? Related party. What party? Because Y company is a subsidiary of X company, Z company is also the subsidiary of which company? X companies. Correct, right? So because they belong to the same companies, even Y and Z is considered as what parties? Related parties. What parties? Are you guys clear with this? Yes or no? Investing company or the venturer company, whatever the company who has done the investment in that company is also considered as what company? Related party. What party? You have done investment in my company. You will be considered as what party for me? Related party. What party? However, this point number 8 is not applicable for which company? Private company, for the purpose of RPT transaction. What transaction? RPT. What is RPT? Related party transactions. What transactions? Related party transaction. Only if it is a what company? Private company. What company? You guys tell me, this Y company is a private company. What company? Y is a private company. Now tell me, for this company, is Z company is considered as related party? No. The answer is what? No. Now what if X Limited is a public company? What company? Y company is a private company, Z company is a private company. Now you guys tell me, for Y company, is Z company is considered as related party? The answer is yes. Why yes? Because a private company, subsidiary of public company, deemed to be what company? Public company. Remember, a private company, subsidiary of public company is deemed to be what company? Public company, for the purpose of Companies Act provisions. Correct, right? Deemed public company. Now, X Limited is a public company. Why is a what company? Private company. But because it is a subsidiary of X company, it is deemed to be a public company. Because it is a public company, then the other company is also considered as what? Related party. What party? Related party. Only if you're a private company, in that scenario, this point number 8 is not applicable for related party transactions. What transaction? Related party transactions. Are you guys clear with this? Yes or no? You guys tell me who is a related party. Director are relative. Second one, manager are relatives. Third, KMP are relatives. Correct, right? Third one, partnership firm in which my DMR. What is DMR? Director, manager, relative is a what? Director or member. Sorry, partner. In case of private company, where my DMR is a member or director. If it is a public company, DM is a director plus holding at least how much? 2% along with his relatives. Correct, right? If it is a body corporate, not body corporate, body corporate, that body corporate board of directors or MD or manager is accustomed to act as per my company's managing director or directors or manager. Correct, right? Or any person in accordance with whose advice my company board is accustomed to act, or any body corporate to which is a holding company or subsidiary company or associate company, or to which the company is also what company? Subsidiary company. What company? Subsidiary company or investment company or joint venture company. All these are considered as what? Related parties. What parties? Related parties. Are you guys clear with this? Next one, small company. What company? Now you guys tell me what is small company? It's a company other than public company. Other than what companies? Public company. A company other than a public company, it's considered as a small companies if its paid up capital does not exceed how much? 4 crore rupees. However, in the recent amendment, they have increased that 4 crores to how much? 100 crore. In the examination, if they ask question about it, as a note, you just mention it. The amount has been increased from what to what? 4 to 10 crore. 4 to what? 10 crores. And the turnover has been increased from 40 to 100 crores. Amendment has been done. Clear? But we are not having clarity because in the suggested answer, what answer? Suggested answer of the last examination, they have taken the 10 and 100. But however, they have not mentioned it clearly. In the provision, they have mentioned 4 and 40 only. But in the answer, they had given different answers. So what we will do, we will go with 4 and 40 only. But in the note, we will write that this has been increased to how much? 10 and 100 crore. So at present, what is the limit? 10 crores and 100 crores. Clear? Are you guys getting it? In the material, you find it as what? 4 and 40 crores. Because government had the power to increase it. Government has increased it up to how much? 10 crore rupees. So paid up capital should not exceed 10 crore rupees and turnover should not exceed how much? 100 crore rupees. Clear with this? However, small company definition is not applicable for few type of companies. What are those few type of companies? Holding company, subsidiary company, company governed by the special act, and also for the section 8 company. What companies? Section 8 companies. These 3 type of companies cannot be called as what companies? Small company. Small company, even though they fulfill the criteria of paid up capital as well as the turnover. Clear with this? So can you guys tell me what is small company? Company other than public companies whose paid up capital does not exceed 4 crore rupees or such a amount as may be prescribed, which shall not be more than 10 crore rupees, and government has increased this to up to how much now? 10 crore rupees, and it is both condition, and turnover of which does not exceed how much? 100 crore 40 crore rupees, but it has been increased to how much? 100 crore rupees, and does not includes holding company, subsidiary company, then company governed by the special act, and section 8 companies. Are we clear with this, everybody? Next one, subsidiary company. What company? Subsidiary company. What do you mean by subsidiary company? There are 2 criteria to be satisfied to be called as a subsidiary company. A company is called as subsidiary of another company if the other company, that is a holding company, controls the composition of board of directors. Controls the what? Composition of board of directors, or controls or exercises more than 1/2 of the voting rights either by itself or through one or more of its subsidiary or subsidiaries. That is called as what company? Subsidiary company. What company? subsidiary company. I repeat, I am called as your subsidiary if you are holding, if you are controlling my what? Composition of board of directors. So now when can we say one company controls the composition of other company's board of directors? If one company has the right to appoint or remove all or majority of its directors. So we have a contract where you have a right to appoint 6 directors out of 10 directors, or you have a right to remove 6 directors out of how many? 10. Then it means you are controlling the composition of board of directors. If you control composition of board of directors, my company's BOD controls the company. It means you're indirectly controlling the what? Company itself. So I'm considered a subsidiary company. You are considered as what company? Holding company. Or it is or condition. Not both conditions. Or a company controls or exercises more than how much? 1/2 of the voting rights. Not share capital again. What right? Voting rights means only equity shares to be taken into consideration. 1/2 of the voting rights either by itself or through one or more of its subsidiary or subsidiary. Are you guys clear with this? Now tell me, I am the holding company, subsidiary company. Let's say X company. I want everyone to focus and answer the questions. Repeat with the class. Okay. When I ask questions, you guys should also repeat. Okay. Now let's say X company. X company is having Y company as what company? Subsidiary company. Z company as what company? Subsidiary company. What company? Subsidiary company. Now in the A company, Y company is holding 30%. And Z company is holding 21%. Now tell me, A company is considered as subsidiary of which company? Y company? Is A company is the subsidiary of Y company? The answer is what? No. Is A company is considered subsidiary of Z company? The answer is what? No. But A company is considered as what? Subsidiary of which company? X company. Because either by itself or through what? One or more of its what? Subsidiary or subsidiaries. Are you guys clear with this? I will give one more example. I want everyone to focus and tell me the answers for this. Let me see how many of you guys are thorough with this concept. Listen, everybody. Let's say X company. Which company? X company. By a contract, it has a right to appoint 6 directors. How many directors? 6 directors out of 10. Now, is this Y company is called as subsidiary of X company? Yes. Because X company controls the what? Composition of board of directors. Because it has a right to appoint majority of directors of which company? Y company. Now Y company, everybody, Y company has the right to remove. Right to what? It does not have a right to appoint. By an agreement, Y company has the right to remove 6 directors. How many directors? 6. Out of 10 directors. Tell me, is Z company is called as subsidiary of Y company? Yes, removing. They don't have a right to appoint. They have a right to remove. The answer is yes, sir. Why? Because right to appoint or remove. A company deemed to control the composition of BOD of another company if the other company either has a right to appoint or what? Remove. See, if I have a right to remove, you will be scared, right? Obviously, you listen to me, whatever I say. Resa, no, it is either right to appoint or what? Remove all or majority of directors of the company. Now my question is Z company is the subsidiary of Y company? Faster. Yes. Is Z is the subsidiary of Y company? Answer is what? Yes. Is Y company subsidiary of X company? Now is Z company is the subsidiary of X company? The answer is what? Yes. Why? Because the control. Repeat. A company is deemed to be a subsidiary of another company if the control referred in the subclause A and subclause B is that of the subsidiary company. It need not be by voting rights. Either I can control voting right in that company directly or through whom? Subsidiary company. Or even if that subsidiary company is exercising the control over the what? Composition of board of directors, still that company would be considered as what company? Subsidiary of my company as well. Because I control you, you control her, I control both of you now. Are you guys clear with this? Yes or no? I have a 51% voting right in your company. You are considered as what company? Subsidiary company. You have a right to appoint 6 directors of her company out of 10. Do you control her company? Now she will be considered as what company? Subsidiary of your company as well as my company. Understood? Yes or no? So these are the definitions of chapter number 1. With these, we are done with the preliminary chapter. What chapter? Preliminary chapters. Are you guys clear with this? Now quickly answer. What is associate company? It's a company in which other company has a significant influence. Includes joint venture company, does not include subsidiary of a company having such influence. What is significant influence? 20% of voting rights or right to take part in the management or policy decisions. Correct, right? Yes or no? What do you mean by KMP? Uh, CEO, Managing Director, Manager, All-Time Directors, CS, CFO, any person not more than one level below the Board of Directors and designated by the Board of Directors or any other person prescribed by the central government is considered as what? Key managerial person. What person? Key managerial persons. Are we clear with this, everybody? With these, we are done with the chapter number 1. What is listed company? Company which has listed any of its securities in the recognized stock exchange but does not includes the following type of company. First one, public company which has not listed its equity shares but has listed the non-convertible debt instruments on a private placement basis or non-convertible redeemable preference shares on a private placement basis or both, or a private company which has issued or listed a non-convertible debt instrument on a private placement basis or a public company which has not listed its equity shares but has listed its equity shares in a jurisdiction outside India notified by the central government. Are we clear with this, everybody? Chapter number 1 is done. Now let's go to the chapter number 2. Out of this, there is a chance of asking 5 to 7 marks questions out of this chapter. Done? Shall we start? Let's start. I will go detail only in the section numbers where practical questions are expected. There are few section numbers where we cannot expect practical questions. I will only recall those provisions. Done. And wherever you guys have doubts, you can ask questions. I will clarify those doubts. Done. Section number 3, not so important. The chances of asking question based on section number 3 are very less. Section number 3 just says a company can be formed. What can be formed? Company can be formed. Everybody repeated. Company can be formed only for what purpose? Lawful purpose, by members subscribing their names to memorandum of association and by complying with the provisions of which are Companies Act. Which act? By having 2 or more person if it is a private company, 7 or more persons a public company, 1 person as a private company, that is a 1 person as a 1 person company, that is to say a private company, by subscribing their name to the memorandum of association and by complying with the provisions of which act? Companies Act. And these company may be limited by shares, limited by guarantee, or unlimited company. You can choose whatever liability you want. For example, private company. What company? It can be either limited by share, limited by guarantee, or unlimited company. But practically, you don't find unlimited companies. If it is a 1 person company, what company? It can be limited by shares, limited by what? Guarantee. But generally, companies with a charitable object. What object? They go for companies limited by guarantee, because they don't need any capital in the initial stages. Clear with this? Section number 3A. Based on this, there can be a practical question in the examinations. Members severally liable. Who liable? Simple says simple. If at any time number of members reduced below 2 in case of private company, 7 in case of public companies, and the members continues to carry the business for more than how many months? 6 months. And every person who was a member of the company during that time when the company carries on the business for more than how many months? 6 months. And cognizant means aware about the fact that the number of members has been reduced below 2 and below 7. Last then is what most important. Severally liable. How liable? Severally liable. What do you mean by severally liable, sir? Individually liable. Means you can be held responsible for all the liabilities of the company which are contracted after how many months? 6 months. Till the time the number of members have been increased to the minimum 2 or minimum 7 in case of public companies. Are you guys clear with this? Section number what? 3A. Section number what? 3A. Next one person company. What company? 1 person company. First of all, who can start 1 person company? Only what person? Natural person, citizen of India, or resident of India, or otherwise. First condition is important. It should be an individual. Means what person? Natural person. Citizen of India. Must. It should be citizen of India. Third condition, resident of India or otherwise. You need not be resident of India. Resident of India or otherwise. Both are allowed now. What do you mean by resident of India? The one who has stayed for how many days? Minimum 120 days. In which financial year? Preceding financial year. What financial year, everybody? Preceding financial year. Or otherwise, you need not be a resident of India for the purpose of starting a one-person company. Clear with this? Who can start one-person company? Only a natural person, citizen of India, resident of India, or otherwise. Let's say a foreigner, UK citizen, comes to India, resident of India, want to start one-person company. Possible, not possible? Because it's a citizen of what? UK. You should be a citizen of India. What of India? Citizen of India. Next one, can incorporate a one-person company and can start a what? Nominee of a OPC. Even for becoming a nominee of a company, you should satisfy three conditions. That is, you should be a natural person, citizen of India, resident of India, or otherwise. Not required to be resident of India. Then, how many OPC a person can start? A person cannot be a member of more than one OPC and nominee of more than one OPC. Correct, right? But however, he can be a member of one OPC and nominee of one OPC. And if you are member of one OPC, nominee of one more OPC, and by virtue of this, you become member of two OPCs. For example, the member dies. Nominee becomes the member, right? Now you are a member of how many companies? Two companies. In that scenario, the law provides that you should choose any one OPC within how many days? 180 days. Should not continue in both the OPCs. Next one, appointment of nominee. You guys tell me who appoint nominee? Who appoint nominee? Obviously, members appoint the nominee. Who appoint the nominee? Member. If I am starting a one-person company, I should name any other person as a nominee with his prior consent who shall become the member of the company in case of death or insanity of the original member. And the consent of that other person should also be filed with the ROC at the time of incorporation of a company along with MOA and AOA. Clear with this? Next one. Can nominee withdraw the consent? Yes. Law provides the option to withdraw the consent by a nominee. A nominee at any time by giving notice to the company and to the members, he can withdraw the consent. In that scenario, the member should appoint a new nominee within how many days? 15 days. How many days? And he should inform this to whom? To the company. And company shall inform that to whom? To the ROC. Within how many days? 30 days of change. Appointment is done by member within how many days? 15 days. And the intimation is given by company to whom? ROC. Within how many days? 30 days of change. Means 15 plus 15. It is not 30 days from the date of receipt of intimation from the member. It is 30 days from the date of what? Change. You withdraw the consent today. From this date, it is how many days? 30 days. I have a time to appoint nominee within how many days? 15 days. And I should inform this to the company. And company must inform this to the ROC within how many days? 30 days from the date of change. Are we clear with this? Next one. What is the next one? Change of nominee. By whom? Member. Can a member change the nominee? Yes. Obviously, can intimate the same to whom? Company. And appoint the what nominee? New nominee. And the company shall intimate the same to the ROC within how many days of change? 30 days of change. What are days of change? 30 days of change. Next one, in case of death or incapacity of a member, if a sole member becomes incapacitated or unsound mind, in that situation, nominee becomes a member. Once a nominee becomes a member, he shall appoint a new nominee within how many days of becoming a member? 15 days. And he should inform this to the company, and the company shall inform this to whom? ROC. Within how many days? 30 days. How many days? 30 days. Clear with this? These are the provision with respect to one-person company. There are certain relaxation to the one-person company or benefits to what company? One-person company. First one, no CFS. What is CFS? Cash flow statement is not compulsory. We discussed financial statement, right? What is financial statement? Balance sheet at the end of the year. P&L account or income and expenditure account for the financial year. Cash flow statement, if applicable. And the last one? Explanatory note. This is what considered as financial statement, but for one-person company, financial statement does not include cash flow statement. Are we clear with this? Annual return signed by how many director? One director. No EGM is compulsory for one-person company because there is only how many member? One member. And next one, no board meeting. If there is only one director, but if there is more than one director, what is compulsory? Board meeting is compulsory. How many board meetings? 2 board meetings in each half year. Are you guys getting it? Now, tell me, can one-person company have more than one member? More than one director?
Yes.
Up to how many? 15. Beyond 15, by passing special resolution. Getting it? So if there is only one director, no no board meeting is compulsory. If there are more than one director, minimum how many board meetings are required? Two in a year. Out of that two, one should be in each off year. There should be minimum two meetings and one in what? Each of the off years. Are we clear with this? Next one.
You want more than 15 directors?
You should pass special resolution. Now you can ask me a question. When only one member is there, how can he pass special resolution? There is only one member, then how will he hold meeting and how will he pass resolution? A resolution is deemed to be passed in case of one-person company if it is mentioned in the word minutes of the meeting. You just have to maintain the records, that's it. That you have passed resolution on that particular date. Are we clear with this, everybody? Next one is what? Annual return. What return? To be filed within how many months? 6 months from the end of financial year. Normal company should file their financial statement within 30 days from the date of EGM. Financial statement 30 days. Annual return 60 days. But in case of one-person company, the financial statement and the annual return should be filed within how many months from end of financial year? 6 months. Why? Because there is no EGM for one-person company. Are you guys clear with this, everybody? Next one. Disadvantages. Minor cannot be a member or a nominee. OPC cannot be incorporated or converted into what company? Section 8 company. Keep this in mind. You cannot convert Section 8 company into one-person company or one-person company into what company? Section 8 company. But can we convert one-person company into private company?
Yes.
Public company? Yes. Not Section 8 company. Last one. Cannot carry non-banking financial activities. Most important. You cannot be an NBFC. At the same time, you cannot invest in securities of which company? Body corporate. Means you cannot buy the securities of other companies or body corporate. If you are which company? One-person company. What company? One-person company. Are you guys clear with this? One-person company. Next one, section number 7. Based on this, they ask questions multiple times in the previous examination. Even in the last examination, they asked question in the incorporation of company. There is one amendment, not one amendment, change in your material based on which there might be an MC question in the examinations. I want everyone to concentrate now. Simple says simple procedure, reservation of name. How do you reserve the name of a company? Spice plus part A if it is a new company, and run form if it is a change of name. Change of what? Name. That I will discuss under MOA concept. Clear? Reservation of name. You should file the following documents with whom? ROC. What is the first one? Agile Pro. Second one, Spice plus Part B. Third one, Spice plus MOA. And the fourth one, Spice plus AOA in the form number INC 34. This is what most important. There has to be a declaration by subscribers to MOA as well as the first director. What director? First director. Because if a member of a company or director of a company, if he has committed any fraud with respect to promotion, formation, or management of the company in the last 5 years, he is disqualified to be a member of a company. That is why you should give a declaration saying that you have not convicted of any offense with respect to promotion, formation, management of the company in the last how many years? 5 years. At the same time, you should also declare that you're not found guilty of any fraud or misfeasance with respect to the promotion with respect to the company in the last how many years? 5 years. And all the documents, information, and statements filed with the ROC for the purpose of incorporation of the company are true and correct to the best of your knowledge. These are the 3 declarations to be made by every director of a company mentioned in the AOA as well as the subscribers to the Memorandum of Association. Clear with this? If you give a wrong declaration, that declaration will be held as what? Evidence against you and will be punishable. Clear with this? Form number INC 9. Next one, signing of MOA and AOA. Based on this, they asked questions in the previous examination. How the signing of MOA and AOA is done? Based on this, either there can be an MCQ question or there can be a descriptive question. First one, listen everybody. If you are an individual, natural person, how the MOA and AOA is signed? What is signed? MOA and AOA is signed. How it is signed? The MOA and AOA is signed by mentioning the what? Name, address, occupation in the presence of what? Witness. Presence of what?
Witness.
Array in the presence of what? Witness. Remember in the subscription clause. What clause? Subscription clause of a company, you mention the what? Name of the subscribers. In front of that, you mention the number of shares taken by him. Under the name, you mention his name, address, occupations. In front of that, you write his PAN number or the DIN number if he has DIN number. In front of that, you write number of shares taken by him. It can be equity shares as well as the preference shares. Correct, right? If he is an individual, if he is a what? Individual, and that should be verified by a witness. It can be a professional. CACS, we are the one who write a witness saying that he has signed in the presence of us. Clear with this? Next one, if he is an illiterate, if he is a what? Illiterate, he will sign the financials, he will sign the MOA by affixing his what? Thumb impression, and that has to be verified by whom? Witness. Verified by whom? Who will also write his name as well as the address and occupation. Next one, body corporate. What corporate? Most important, if it's a body corporate, the company, that is nothing but company, Indian company or a foreign company, MOA should be signed or can be signed either by a director or officer or employee of a company who has been authorized by board resolution. What resolution? You must have been authorized by a board resolution. Then only you can sign it. They'll ask this in the examination. Most important, in case of LLP, in case of what? If LLP wants to purchase shares of another company, can it do? Yes. Can LLP be a member of another company? Yes. If LLP is a subscriber to memorandum of association, LLP cannot sign because it is an artificial person. On behalf of LLP, any partner can sign. Which partner can sign? That partner must be authorized by all the partners by passing a resolution with the consent of all partners. What partners? Not majority partners. See, this one is different. This is board resolution. What resolution? Board resolution means majority of the directors should approve of that. That's one with the consent of whom? All the partners. Next one, based on this, they has questions in the previous examination. If you are a foreign national, what national?
Foreign national.
There are three categories of foreign nationals. First one, you are a citizen of Commonwealth country. Second one, you are not a citizen of Commonwealth country, but citizen of country which is a party to the Hague Apostle Convention. What convention? Hague Apostle Convention. And the third one, any other countries. For the purpose of authentication of MOA, signature of MOA, as well as the document, we are classifying the foreigners into how many categories? Three categories. What is the first one? Commonwealth country citizens, Hague Apostle Convention country citizens, or other country citizens. If you are a Commonwealth country citizen, for example, UK is a what country? Commonwealth country. Correct, right? If you are a citizen of UK, just authentication by notary public is sufficient. You are giving your proof of identity, proof of address, photocopy of that. You just take this photocopy to the notary public. He will certify it, saying that it is a true copy of the what? Original, and that document is acceptable in India. At the same time, you are staying in UK. You will not come to India to sign it, right? So what you will do? You take this print of MOA, go to the notary public, get it what? Notarized. He will also sign it saying that this person has signed this document in my presence, and that document is acceptable by the ROC. Clear with this? Next one, if you are a citizen residing in a country which is party to the Hague Apostle Convention, in that scenario, you should get your documents notarized and should be apostilled by the apostilling officer. There are few authorities who are authorized by the government to apostle the document, means certify the document. So if you are a citizen of a country which is, for example, USA, USA is not a Commonwealth country. If you're a citizen of USA, citizen of what? USA, first you should go to the notary public, get it notarized. Then you go to whom? Apostle. Apostle department or apostle officer. They will apostle your document saying that this document is the true copy of the original document, because they will verify both. Are we clear with this? Third option is that. Third situation is for the persons who are neither the citizen of Commonwealth country nor the citizen of country which is party to the Hague Apostle Convention. In that scenario, you should get your document notarized. Notary is compulsory in all these cases. Getting it? Plus, the document should be certified by the consular office. What office? Consular office or diplomatic office. Nothing but embassy office. You should go to the Indian embassy and should get it certified. Should get it what? Certified by the embassy saying that this document is the true copy. What copy? Of the original, or the person has signed in the presence of me. Karke they will give a certificate. Understood? Everybody? How many categories are there? 3. What is the first one? Commonwealth country. Only what is compulsory? Notary. Other than Commonwealth countries? Apostle and notary. If it is other than apostle countries and Commonwealth countries, notary and certification by the consular office or the diplomatic office of the embassy. Are we clear with this? Next one. If a person, a foreign national visiting India on a business visa, what visa? What is not compulsory? Notarization and all these things are compulsory because you came to India, right? It is verified by the Indian person itself. What person itself? Indian person itself. If you are visiting to India on what visa? Business visa. What visa? Now you tell me, if a person comes to India on a business visa, will he be considered as person resident in India or person resident outside India for the purpose of FEMA?
Business purpose.
Yes. The moment he comes to India, he will be considered as what? Person resident in India. Because you are coming to India for what purpose? Business purpose with a business visa. The moment you arrive in India on a business visa, you will be considered as what? Person resident in India. Are we clear with this, everybody? Next one. Declaration of compliance. By whom? Professional as well as the director, manager or secretary of the company. Any one among these. Clear? Next one. Address for correspondence. Address for what? Correspondence. If you don't have the registered office address yet, or if you don't want to give the details of registered office, you can give a correspondence address details till the time you establish what office? Registered office. What office? Registered office. Next one. Particulars of the person who are named as a first directors. What directors? In the DIR 2. Should also be mentioned. Correct, right? Should give their name, address, DIN number if there is any DIN number. All these details must be given in the DIR2. Next one, particulars of whom? Subscribers to the memorandum. And most important, I expect ICAI to ask question based on these. If subscribers to the memorandum is a body corporate. What corporate? Can a body corporate subscribe to the memorandum of another company? Possible or not possible? Possible. We discussed this, right? One company can be a member of which company? Another company. LLP can also be a member of which company? Another company. If LLP want to subscribe to the MOA of another company, who will sign the MOA on behalf of LLP? Partner. Authorized by whom? All partners. By passing a what? Resolution. If LLP is a member of another company, you need to mention the following details. Name of the body corporate, along with what number? SIN number. Next one, registered office address of the company. Next one, email ID. What ID? Email ID. Body corporate is a company. A board resolution. What resolution? Even that board resolution authorizing a person to sign on behalf of that company should be attached to the what? Incorporation form. If it is a LLP or a partnership firm, a certified true copy of resolution agreed by what partners? All the partners. Now, why they are saying partnership firms are? Can a partnership firm be a member of another company?
Yes.
Generally, no. But only exception is which company? Section 8 company. What company? Section 8 company. Only in Section 8 company, a partnership firm can be a member. Normal companies, partnership firm cannot be a member. Why? Because partnership firm is not a person. It is not an artificial person. Correct, right? Yes or no?
Sir.
Understood? So if you're a partnership and want to be a member of which company? Section 8 company, you must be authorized by all the partners by passing a resolution. Understood, everybody? Next one. Rule number 12. Rule number 12 is most important. See, for example, let's say if I want to start NBFC activity, what activities?
BFC.
I start a company. Once I start a company, I should not start my business because I need to get an approval of whom? RBI. To start financial activities in India, you need the permission of whom? RBI. So what you will do at the time of application for incorporation of a company, you give a declaration saying that I will obtain necessary approval before commencement of what? Business. That declaration should be given at the time of what? Incorporation of company. Even for Nidhi company. What is Nidhi company? Nidhi company are a mutual benefit society. Both are same. Nidhi companies are also called as what? Mutual benefit society. A Nidhi company or mutual benefit society is considered as Nidhi company only if it is notified as such by the central government in the official gazette. Earlier, before 2022, there was no requirement of notification in the official gazette. But now, because there were frauds and irregular activities, you will be called as Nidhi company only when you are notified in the what gazette? Official gazette. Starting company is not sufficient. You start a company by filing documents with ROC. You will not be called as Nidhi company. You will be called as Nidhi company only when you are declared as such by whom? By notifying in the what gazette? Official gazette. Till that time, you're not considered as Nidhi company. Understood? And with respect to that, you should give a declaration saying that, sir, you give me incorporation now. Later, I will apply to whom? RBI and central government to take their what? Approval. That declaration must be attached at the time of what? Incorporation of company. Why? Because that certificate of incorporation is given subject to you obtaining the what? Approval. And without obtaining that approval, you cannot start your business. And without obtaining the approval, you cannot file form number INC 20A, commencement of business. And without filing form number INC 20A, you cannot start your business. Are we clear with this? Next one. Nidhi company, you need to get a declaration from whom? Central government. What government? Under section number what? 406 of the Act shall be obtained by Nidhi company before the commencement of what? Business. Clear? If there is a question based on section number 7, there can be a question based on section number 7, subsection 7, consequences of registration of company by providing wrong or incorrect information. If a company got incorporated by providing wrong or incorrect informations, every person who has authorized the incorporation of a company or involved in the incorporation of a company will be punishable under section number 447 of the Companies Act. Section number 447 deals with punishment for fraud. Punishment for what? Fraud. And punishment depends upon what is the amount of fraud. If the amount of fraud is at least 1% of the turnover of the company or 10 lakh, whichever is lesser. If that amount of fraud is either of the amount of fraud, take an amount of fraud. Let's say amount of fraud is 5 lakh rupees. What is the amount of fraud? 5 lakh rupees. Then you take 10 lakh or 1% of turnover, whichever is what? Lesser. Let's say this amount is 5 lakh. Amount is what?
5 lakh.
5 lakh. So now what is the limit? 5 lakh. What is the amount of fraud? 5 lakh. Is it equal to 5 lakh? Yes. Now the punishment is minimum 6 months, maximum 10 years imprisonment. Clear? And the fine will be 3 times the amount of fraud. 15 lakh to 3 times the amount of fraud. If it is less than 5 lakh, that is 1% of turnover of the company or 10 lakh, whichever is less. If the amount of fraud is less than this, then punishment is up to 5 years. How many years?
5.
Or 15 lakh rupees penalty. That's it. Understanding it? If the amount of fraud, what of fraud? First, you should decide what is the turnover of the company. What of the company? Now, what do you mean by turnover? Sales. With GST or without GST? Without GST. Take turnover of the company. Take 10 lakh. Decide whichever is less. Did you decide? Then you compare your amount of fraud with what? This amount. If the amount of fraud is equal to this, then punishment is minimum 6 months, maximum 10 years. Public interest involved, minimum 3 years, maximum 10 years. Fine is 3 times the amount involved. If it is less than the threshold limit, then up to 5 years, fine of how much? Up to 50 lakh rupees. That is a punishment for fraud. Along with that, any person can apply to NCLT. On an application, NCLT can pass any of the following orders. NCLT can direct that for regulation of management of the company. It can make some regulation for the what? Management of the company, including change in MOA and AOA. It can also order that the liability of the members is what? Unlimited. or it can pass an order for removal of name of the company, or it can pass an order for liquidation of company, or such other orders as it may deem fit. But before passing any of this order, NCLT should give an opportunity of being heard to whom? Company. And should take into consideration the interest of creditors, interest of shareholders, interest of employees of the company. These are the consequences of registration of a company by providing wrong or incorrect or false informations. Are we clear with this? Section number 8. What section number 8? Company with what object? Charitable object. What object? What is Section 8 company? Company which is incorporated with the object of promotion of art, science, commerce, religion, charity, protection of environment, and most important, it prohibits the distribution of dividends to its member, and it intends to apply the profits in the promotion of its what? Object. Now you guys tell me, can a Section 8 company give bonus to the members?
Oh,
Can Section 8 company pay remuneration to the members?
yes.
Reasonable remuneration allowed. Excess remuneration not allowed. Can Section 8 company give bonus shares to the members?
Oh,
Can Section 8 company issue bonus shares? Why no?
first,
That amounts to what?
dividend.
Giving dividend to the members. Allowed or not allowed? Not allowed. You should not pass on any benefits to your members, because what is your object? Promotion of charitable activities. And your MOA clearly provides that you intend to use your profit only for the promotion of your what? Object. And you prohibit distribution of dividends to the members. Are you guys clear with this? And Section 8 company can be either a private company or public company. Follow?
Private project.
Private company or what company? Public company. And it can be limited by shares, limited by guarantee, or it can be what company? Unlimited companies. Generally, Section 8 companies are limited by guarantee. Limited by what? Guarantee. Are we clear with this, everybody? Yes or no? Now, incorporation of Section 8 companies, you apply for reservation of name. You make an application for incorporation, the form number what? INC 32. Supporting documents, you file EMOA, EAOA, an estimate of future annual income and expenditure for last how many years? 3 years. How much is your expected expenditure or income for the next 3 years? That should be filed with whom? With a ROC. And also a declaration of future annual income and expenditure of the company for how many years? Next how many years? 3 years. And declaration in the form number 14 by a CS, CAR, CWN practice that the draft MOA and AOA is in conformity with what? Section number 8 of the Companies Act. And declaration by each person in the form number what? INC 15, then DIR 2 and INC 9. What is DIR 2? Details of directors. Consent to act as director. Correct, right? All these details are required to be filed with ROC for the purpose of incorporation of which company? Section 8 company. What company? Section 8 companies. Clear? If there is a question based on this Section 8 company, they will ask question with respect to license. See, Section 8 company can commence its activities only after obtaining the license. The power to issue license has been transferred to whom? To the ROC. To whom? So when you apply for incorporation of a company, at that time itself, ROC can issue the what? License. Clear with this? Now, this is what most important. Point number 3 and point number 4. Based on this, there can be question in the examination. Point number 3 is what? License for the existing company. You're a normal company. What company? You're a normal company doing some business activities. You want to convert this company into a company with charitable object. Possible, not possible? Possible. By obtaining the license. From whom? Central government. Now, what do you mean by central government here? ROC. Clear? So, in this situation, first you should pass what resolution? What resolution? Board resolution. Then pass what resolution? Special resolution. For what purpose? Alteration of what? MOA and AOA. You need to alter your MOA. Why? Because you should prohibit the distribution of dividends to the members. Yes or no? Alter MOA, alter AOA, attach all these documents in the form number what? INC 12. There should be a declaration by whom? Professionals that this company has complied with all the provisions with respect to what? with respect to incorporation of a company. Then declaration in the form number what? 15, that MOA and AOA are in conformity with the provisions of the Act. Then declaration of estimated income and expenditure for the next how many years? 3 years. Next one, statement of assets and liabilities. Statement of what? Assets and liabilities till the date of application or within how many days? 30 days preceding the date of application. It should not be older than how many days? 30 days. It can be yesterday's date or different yesterday's dates or up to how many days? 30 days. Not more than how many days? 30 days. Clear with this? Next one, a notice in the newspaper within how many weeks of application? 1 week of application should also be given to the whom? To whom? To the members, like to public in the newspapers. Are we clear with this? 1 week of application to the ROCs. You need to publish this application in the newspaper within how many week of application to the ROC? 1 week. Clear? Next one, conversion of Section 8 company into other type of company. My question is, can we convert Section 8 company into one-person company? Private company?
Yes.
Possible, not possible? Possible. Public company? Possible. Now, if you want to convert a Section 8 company into private company or public company, you can do that by passing what resolution? Special resolution. Wherever you pass special resolution, keep this in mind. We file MGT 14 with whom? ROC. Within how many days? 30 days. And after that, you need to make an application to whom? RD. Regional Director. What director?
Regional.
Conversion of a company, power is with whom? RD, not with ROC. License, ROC. Conversion, RD. Regional Director permission is required. Why? Because alteration of MOA is required. What is required? Alteration of MOA. Section 8 company can alter MOA only with the permission of which government? Central government. Keep this in mind. Conversion, alteration of MOA or AOA requires whose approval? RD approval. License, ROC's approval. Clear? Next, attach proof of serving the notice to whom? To the charity commissioner, income tax officer, secretary of state. So why, sir? Why? Because as a Section 8 company would have enjoyed some benefits. As a Section 8 company, I have enjoyed a lot of benefits, 12-year registration, ATC registration. I have taken a lot of tax benefits. Now I want to convert this Section 8 company into what? Normal companies. I should take NOC from them. Income tax officers, then charity commissioner and secretary of the what? State. So I should give a notice to them saying that, sir, I am converting my company into what company? Normal company. If you have any objection, raise objection with whom? RD. Raise or no? Along with that, you should also forward this application form to whom? To the ROC. Saying that ROC, I am converting my company into what company? Normal company. If you have any objection, raise them objection between whom? Before the RD. Clear? After that, should also publish that application form in the what paper? Newspaper. What paper? Newspaper. In how many newspaper? 2 newspaper. And also place that on the what? Website of the company. What of the company? Clear? The application to be placed on the website of the company. After that, the company should have filed the financial statement and annual return. It should have filed the financial statement and annual return without any default till the date of application to whom? RD. If they have not filed financial statement or annual return, you cannot make an application for conversion of company. Which company? Section 8 company into normal company. Next one. In the event of application is made after 3 months from the end of financial year. How many years? Sir, how many months? 3 months. We closed financial year on 31st March. I am making application in the month of August. In that situation, because more than 3 months is already over from the date of closure of financial year, I should prepare a new financial statement till the date of application. Or date not more than how many days? 30 days. Because if I prepare it today, I cannot file an application today itself, right? Law gives how many days of time? 30 days of time. But you should prepare a new financial statement and get it audited by the auditor. Limited review. What review? Limited review. Because RD want to know what is your financial position on the date of application. If it is more than 3 months, your financial statement is not showing your position on today's date, right? Yes or no? If the application is made after how many months? 3 months from the end of financial year, then in that scenario, you should prepare a financial statement and get it audited, which should not be older than how many days? 30 days. Based on this, there's MCQs in one of the previous examination. Clear? Then after you obtain the approval of RD, because we know that MOA and AOA of Section 8 company can be altered only with the permission of whom? RD. Central government. So first you take RD's approval. Once you obtain the RD approval, then you call what meeting? General meeting. What meeting? General meeting. Then alter the what? MOA and AOA. Once you alter it, file it with whom? ROC. ROC give a fresh certificate of incorporation. From that date, you are a normal company with a limited liability or limited by guarantee, and your name will end with the word limited or private limited. Normal companies, sorry, if it is a Section 8 company, there is no need to add the word called as limited or private limited. Clear with this? And one more important concept is revocation of license. What of license? Revocation of license. Again, who has the power of revocation of license? RD. ROC has the power only for what? Issue of license. Revocation of license is done by whom? RD. Under two grounds. What is the first ground? If the company is carrying the activities in contravention of conditions or the provisions subject to which the license is issued. If Section 8 company carrying its activities in contravention of its object or the condition subject to which the license is issued, or it is doing the activities in a manner which is fraudulent or prejudicial to the interest of the public. In these two cases, RD by an order revoke the license. Revoke the what? License after giving opportunity of being heard. On revocation of license, RD can pass two orders. How many orders? Two orders. Either it can order the company to wind up its business. On winding up, if there is any surplus, that surplus should be transferred either to another company having similar object, or it should be transferred to the fund called as IBC fund. What fund? IBC fund. What is IBC? Insolvency and Bankruptcy Fund. Or the central government can ask the company to get it amalgamated with another company having a similar object. These are the orders which central government can pass. Nothing but RD can pass on the revocation of license of the company. Are we clear with this, everybody? Yes or no? And for the clarity purpose, for MCQ purpose, I have given the approvals. For what reason, what approval is required. Everybody concentrate here. Change in MOA. Change in what? MOA. Whose approval? RD's approval. License, ROC's approval. Alteration of MOA, for conversion purpose, RD approval. Other than conversion purpose, ROC's approval. Correct, right? Revocation of license, RD's approval is required. Are there any relaxations for the Section 8 company? Yes. It can call the general meeting by giving how many days notice? 14 days notice instead of 21 days. There is no limit on the maximum number of directors. Section 8 company can have any number of directors. And more important, in one Section 8 company, even who can be a member, partnership firm can also be a member. Keep this in mind. Based on this, they ask question in the MTP. Mock test paper. Recently one mock test paper over, right? In that they asked this question. They asked three questions. First question they said, is Section 8 company required to have minimum paid up capital? The answer is what? No. Because even Section 8 company is a what company? Private company or public company? Second one, they asked, can partnership firm be a member of Section 8 company? The answer is what? Yes. Can Section 8 company get itself converted into private company, public company? Or can it be converted into 1% company? No. Are we clear with this, everybody? And there is no requirement of what committee? Nomination and Remuneration Committee. Are we clear with this, everybody? Next one, effect of registration of company. I will not discuss in detail because I already discussed it in the class. Just I will give a hint. Listen, everybody. Once a company is incorporated, company becomes separate legal entity having perpetual succession, common seal. It can enter into contract. It can sue and be sued. I'll give two concepts here. Listen, everybody. If one company is holding 100% shares of another company, are they both considered same or different? Different. Why? Because company is different, members are different. See, you are a company. In your company, I'm holding 100% share. What shares? You are a company, I am a company. Just because I'm holding 100% of your shares doesn't mean we both are same. We are different. You are a different person, I'm a different person. You are an artificial person, I'm an artificial person. Are you guys getting it? So your income is different, my income is different. On your income, you pay income tax. I'm in my income, I paid income tax. Are you guys clear with this, everybody? And one more thing. Let's say there is a government company. What company? Government company. In government company, government is holding shares. Does it mean government company is the agency of government?
No.
No. That is why if you work for government company, you're not considered as government employee. You're considered as what employee? Government company employee. But if you work for railway, work for what? Railway is a department of the government. You're considered as government employee. BBMP, government employee. HAL, not a government employee. You're a government company employee. Clear with this, everybody? Separate legal entity. What legal entity? Separate legal entity. Next one, MOA. In this, I will discuss only the important concepts. Quickly, we will discuss this. And everybody, listen. What are the clauses in the MOA? Name clause. What clause? First of all, what is MOA? MOA means Memorandum of Association of the company, which is framed and altered as per the which act? Companies Act. Which act? Companies Act. Clear? Now, name clause. In the name clause, what do you mention? Name of the company, and with the word called as what? Public, if it is a public limited, if it is a public company. Private limited, if it is a private company. Section 8 company, not required to add the word called as what? Limited or private limited. In case of IFSC company, either you can write the word called as IFSC International for Financial Service Center Companies or IFSC company. Acronym of what? IFSC company. The name shall not be identical or resemble to the name of which company? Existing company or a body corporate. Should not be constitute a what? Offense under any of the existing laws, and the name shall not be considered as undesirable in the opinion of which government? Central government. What government? For example, we have the Emblems and Name Prevention of Improper Use Act. If you use a name which is prohibited under the Emblems and Names Prevention of Improper Use Act, it is considered as undesirable and the name is not allowed. Clear with this? Next one, reservation of name. What of name? Based on this, there can be MCQs in the examination. Listen, everybody. Reservation of name. There are two scenarios. First one is what? Incorporation of company. Second one is what? Change of name of the company. At the time of incorporation of company, you can make an application to the ROC in the MCA website to the form number called as what? Spice plus Part A. What is the form number? Spice plus Part A. Clear? Now, once the application is made, the name is reserved for how many days? 20 days. How many days? If you want extension of time, you can seek extension before the expiry of how many days? 20 days by paying the additional fees. What fees? You have two options now. Either you can seek an extension up to how many days? 40 days from the date of reservation of name. Not from the date of expiry of 20th day. It's from the date of what? Reservation of name. It means plus 20. But in the exam, you should write 40 days from the date of what? Reservation of name. With a payment of additional fee of 1,000 rupees. Or there is one more option. You can seek extension up to 60 days. How many days? From the date of reservation of name by paying fees of 3,000 rupees. How much? 3,000 rupees. Are you guys getting it? Listen, everybody. What is the first option? What is the first option available for reservation of name of the company? What is the first option available? You reserve the name. For how many days it is reserved? 20 days. Before the expiry of 20th day, you should make an application for extension. You have two options. One, you can seek extension for how many days? From the date of reservation of name. With how much fees? 1,000 rupees. Or you can seek extension for how many days? 60 days. Means plus 40 days. Directly you can go for 60 days by paying additional fees of how much? 3,000. Clear? Or what is the option available? You seek extension for 40 days by paying 1,000 rupees, and before the expiry of 40th day, there is one more extension. So how many days? 60 days. How many days are? From the date of reservation of name by paying how much? 2,000. 2,000. Because you already paid 1,000 rupees, na? 20 to 60, 3,000. 40 to 60, 2,000. Clear? And for change of name, use the what form? Run form. What form? And name is reserved for how many days? 60 days. In case of LLPs, it is 3 months. How many months? 3 months. Companies, 60 days for change of name. In case of LLP, reservation of name, 3 months. Change of name, 3 months. Are we clear with this, everybody? Next one, cancellation of name. This is what most important. There can be question based on this. If you got the name reserved by providing false or incorrect information, in that situation, what ROC can do? If the company has not been incorporated, it can cancel the name of the company and can impose the penalty of how much? 1 lakh rupees. And if a company has been incorporated, if the company is already registered, in that situation, ROC by an order the company to change the what? Name. Within how many months? 3 months. By passing what resolution? Ordinary resolution. Or strike off the name of the company, or make a petition for winding up of the company. ROC cannot pass an order for winding up. ROC should make a petition to whom? NCLT for winding up. These are the options or remedies if a company gets the name reserved by providing wrong information. And if the company is already incorporated. If company is not incorporated, what ROC will do? Cancel the reservation of name. Impose penalty of how much? 1 lakh. Clear with this? If company is already formed, you can remove the name of the company or ask the company to change the name. In that situation, company must change the name within how many months? 3 months. By passing what resolution? Ordinary resolution. Or it can make a petition to the NCLT to wind up the companies. Clear with this? Reservation of name by providing false or incorrect information. Next one is situation clause. What clause? Fast answers. Situation clause. In situation clause, what do you mention? State name. What name? State name. Next one, object clause. What clause? In the object clause, what do you mention? The object for which the company is incorporated. This is a crucial clause. Why? Because this clause decides what is the scope of the company. Because as per ultra vires concept, what concept? If a company goes beyond the object clause of the company, it is considered as ultra vires and it is void. It is a fundamental rule of company law that the object stated in the memorandum can be departed only to the extent permitted by the Companies Act. If a contract is made, a transaction is entered which travels beyond the powers of the company, such contracts or transactions are void, cannot even be ratified, and does not bind the company. Clear with this? So in the object clause, what do you mention? Object for which the company is incorporated. Clear with this? And in case of IFSC company, as I said, I will discuss IFSC provision separately, but I'm giving a hint here. IFSC company must have its object as providing IFSC services. What is IFSC services? International Financial Services. That is why it is called as what company? IFSC company. Clear with this? Next one, liability clause. What clause?
Liability.
What is liability clause, guys? What do you mention in the liability clause? The liability of the members. Liability of whom? Members. It can be limited by shares, limited by guarantee, or it can be unlimited. But however, you don't find unlimited companies in practice. Clear now? In case of limited by shares, the liability of the members is limited to the extent of unpaid value of the shares held by them. And this amount can be called by the company at any time by passing board resolution. In case of limited by guarantee, limited by what? Guarantee, the liability of the members is limited to the extent of amount of guarantee undertaken by the members to be contributed at the time of winding up of the company. And also to contribute to the cost of liquidation of company. I repeat, in case of limited by guarantee, the liability of the member will arise only when the company goes into what? Liquidation. Now, what if, let's say, he knows that this guarantee company is going to liquidate within how many years? 1 year. Avoid his obligation. What he has done, he transferred his interest to her, who is not having sufficient money. Now, company has gone to liquidation within 1 year. How many years? Within 1 year of he ceasing to be a member. Now, company asks money from her, but she is insolvent. If a company could not recover the money from the existing members, it can recover from a person who has ceased to be a member within how many years? 1 year, to contribute to the liabilities which were incurred when he was a member. He will be called as B-list contributory. What contributory? B-list contributory. This is the liability of a person who is a member of company limited by guarantee. Clear with this? Next one, capital clause. What clause? What clause? Capital clause. In the capital clause, what do you mention? Capital of the company. What of the company? Capital of the company. Which capital? Authorized capital. What capital? Authorized capital, correct, right? The maximum amount of capital which the company can mobilize by issue of shares, and that you pay what duty? Stamp duty. What duty? Stamp duty. In the authorized capital clause or capital clause, you mention the number of shares, face value, as well as the amount. On that you pay stamp duty to the government. Clear with this? Next one, subscription clause. What clause? We discussed how to sign the subscription clause. Members will sign it. Illiterate, how you will sign it. Foreign nationals, how they will sign it. Body corporate, how they will sign it. Partnership firm, how they will sign it. Yes or no? Next one, nomination clause. Nomination clause is compulsory only for which company? One person company. What company? One person company. Correct, right? Because every one person company should nominate another person with his prior consent who will become members of the company if a company members dies or become incapacitated. Correct, right? Yes or no? And alteration of nominal clause will not be considered as alteration of MOA. There is no need to pass any resolution. Change of nominee is not considered as alteration of MOA. You don't need to pass, don't need to what? Do the changes. Do the what? Changes. Clear with this? Next one, articles of association. Articles of what? Association. See, in case of articles of association, it contains the regulations, and most important concept is entrenchment of articles. What of articles? If there is a question out of AOA, they'll ask questions out of entrenchment of articles. I will not discuss the concept. I would have discussed already what is the reason for entrenchment of articles. I'll just say what is entrenchment of articles. Simple, say simple. See, articles of association of a company can be altered by passing what resolution? Special resolution. What resolution? Now, what is special resolution? Where the intention to pass a resolution as a special resolution has been notified to the members by giving a notice to all the members. Second one, the notice has been duly served to all the members, and where the number of vote cast in favor of the resolution are 3 times the number of vote cast against the resolution, either by a show of hands, or by electronic mode, or by poll, including casting vote. Then it is called as what resolution? Special resolution. Nothing but 75%. Correct, right? Now, what if company wants to make it 80% or 90%, 100%? Possible, not possible? Possible. You can't make it 65%. You can make it more stricter. What stricter? Law says how many votes are required? 75% vote. But company can agree that they will pass resolution for alteration of AOA with 80% vote, 90% vote. Are they making it more stricter or less stricter?
More strict.
And that can be done by passing what? That can be done in 2 ways. First way, by including that provision in the AOA at the time of incorporation itself. But you need to mention it in the what? AOA. That this article is entrenched. Clear? After incorporation, after what? After what? Incorporation, the entrenchment can be done. What can be done? Entrenchment can be done by including a provision in the AOA of a company, and that inclusion can be done if it is a public company by passing special resolution. Private company with the consent of whom? All the members. And the moment you make changes in the AOA, that should be informed to whom? ROC. In the form number MGT 14. What is the form number? MGT 14. Are we clear with this? What is entrenchment? Simple, say simple. Adding a provision in the AOA to the effect that the certain provisions of AOA can be altered only by following the procedures or conditions. Either we can prescribe more voting rights, or you can prescribe some additional condition. Then what is applicable as per the law? Don't go with only voting percentage. You may be saying only 75% of the vote, but you're putting some extra conditions to it. So, adding a provision in the AOA to the effect that the articles can be altered only by passing a resolution that is more restrictive than that of what resolution? Special resolution is called as entrenchment. What is entrenchment? Addition of provision in the AOA to the effect that the provisions of AOA can be altered only by following the conditions or the procedures that are more restrictive than of what resolution? Special resolutions are complied with. That is called as what? Entrenchment of articles. I discussed how it is done, either at the time of incorporation of a company or after incorporation of a company by passing what resolution? Special resolution if it is a public company, and consent of all members if it is a private company. How it is done, why it is done, I have discussed in the class, normal classes. I will not discuss now. It is a marathon revision. Next one, doctrines. There are two doctrines: doctrine of constructive notice, doctrine of ultra virus, and doctrine of what? Indoor management. What is ultra virus? Beyond the powers. Every power is limited in nature. What in nature? Limited in nature. So if a company goes beyond its powers, enters into contract or any transactions, valid or void, void, company is not responsible. Then we have doctrine of what notice? Constructive notice, a deemed notice. Now, first of all, why this principle is there, sir? Why? Because section number 399 of the Companies Act provides that the documents which are registered with ROC are a public document. Any person can have access to it. He can inspect, copy, and take extracts of it through electronic mode. Because you have an access to this document, they are considered as public document. There are two sections involved here, okay? 399 section number what? 17. Even section number 17 says 399 obligation on ROC, 17 obligation on company. Any person who? Any person can apply to ROC to inspect, copy, or take extracts of MOA, AOA, or resolution or agreements which are required to be registered with whom? ROC. And section number 17 provides that a company shall provide MOA, AOA, agreements and resolutions which are required to be filed with ROC within 7 days of request. By whom? By the members. Because of these two section numbers, both members and outsiders are having access to this document. Because you have an access to this document, they are considered as public document. Because they are public documents, every person who deals with a company are presumed to have read them and understood them in a true sense. Even if you have not read them, you are presumed to have read them. And if you make any contract which are beyond the powers of the company, company is not responsible. And you cannot even claim the word innocence. Clear with this? Next one, doctrine of indoor management. This works against the company. This says outsider need not know the internal irregularities of the companies. If a person without having knowledge about internal irregularities happened in the company enters into a contract who is innocent, the company is responsible. Who is responsible? Company is responsible. For example, company has authorized the board of directors to borrow money from any person by passing a board resolution. I'm aware about this. We want loan. Directors comes and asks loan from me. I'll ask for board resolution. He shows board resolution. I'll give a loan. Later I discover that in the meeting where they passed board resolution, there was only one person present. There was no quorum. How will I have access to this information? Now can company deny liability? Is company responsible or not responsible? Responsible, because I don't have an access to this internal information. Company is responsible or not responsible? Responsible. Doctrine of indoor management. They asked this question in the MCQ. They asked in a general meeting, the quorum was not present. The meeting was adjourned to the next week, same day, same time, same place. In that meeting also only one person present. What happens to the resolution passed? Resolution is valid. Company is responsible. Because of what principle? Doctrine of indoor management. Are you guys clear with this? But there are exceptions. If he was aware about the irregularity, he cannot claim protection of indoor management, negligence, forgery, existence of agency, or ultra virus act. Which act? If the act ultra virus the powers of the company itself, there is no question about doctrine of indoor management. Section number 6 is most important. Act to override MOA and AOA. It just this company's act is superior. There are two provisions here. Listen, everybody. Two provisions are there. First provision says the Companies Act will have an effect. Means Companies Act is applicable to every company, irrespective of whatever mentioned in the MOA, AOA, resolution, agreement, whether they are passed, whether they are registered, whether they are filed with ROC or not. Even if your AOA says Companies Act is not applicable, Companies Act is applicable. Because of this section number 6. But there are few section numbers which itself says if you don't want, you can exclude me. In those cases, section number 6 is not applicable. For example, section number 101, notice of the meeting, is not applicable to which company? Private company, if AOA provides expressly. And 101 expressly provides that, saying that private company, if you don't want me to be applicable, you can exclude it by mentioning it where? AOA. Section number 47, kinds of shares, provides that private company can exclude the applicability of section number what? 47, by mentioning a specific provision where in the articles of association. Other than those exceptional cases, what cases? Exceptional cases. In every scenario, for every company, what is applicable? What is applicable? Companies Act is applicable. What is applicable? Companies Act is applicable, notwithstanding anything contrary contained in the where? MOA, AOA, agreements or resolutions. Clear? Now, what if there is any contrary provisions in the MOA or AOA, resolutions or agreement which says Companies Act is not applicable? Is that provision valid or void? Void. Section number what? 6. Are you guys clear with this? Section number 10, effect of registration of MOA and AOA. Once MOA and AOA are registered, they act as a contract between the company and the members, and members and members, and members and the company, not between company and outsiders. Members are bound to members, company is bound to members, members are bound to company, members are bound to whom? Company. But company is not bound to whom? Outsider. Because it's a contract between company and members. If a member has agreed to subscribe to 1 lakh rupees paid up capital, if he don't contribute, can the company file a case against him? Yes. Are you guys clear with this? Section number 10A. Section number what? 10A. Commencement of business. What of business?
Commencement of
Can a company start business immediately after obtaining certificate of incorporation? The answer is no. Wait karo, sabar karo. You can start your business only after filing section number, form number INC 20A and section number 10A. What is 20A? Certificate of commencement of business. Commencement of what? Business. You can commence your business only after filing form number INC 20A. With whom? ROC. Within how many days? 180 days. Section number 10A provides that a company shall not start business or exercise borrowing powers. What powers? Borrowing powers. Unless the company has established a registered office. What office?
Yes, sir.
Within how many days? 30 days, and has filed verification of registered office in the form number INC 22. What is the provision says? A company, I repeat, no, a company shall not commence its business or exercise what power? Borrowing power, unless it has established a registered office and filed a verification of registered office in form number INC 22 with the ROC within how many days? 30 days. And a declaration by director of the company. What of the company? Director of the company, verified by a CA or a CS or CMA that subscribers to the memorandum of association have contributed the value of shares taken by them, along with the proof of the transfer of money from subscribers account to company account. Because what is to happen earlier, before introduction section number 10A, the starting Josh, members used to agree to contribute 5 lakh, 10 lakh. They used to get company incorporated. And they never used to transfer money to which account? Company's account. In the balance sheet, we used to show issued capital 10 lakh, subscribed capital 10 lakh, paid capital 0. To avoid this scenario, now the law mandates that you can commence business or exercise borrowing powers only after filing form number what? INC 20A. And this form number INC 20A must be filed within how many days of incorporation? 180 days. Sir, what happens if it is not filed, sir? If it is not filed, obviously there is a penalty, and the ROC can also initiate the strike-off process. That is the consequences of not filing form number INC 20A. Are we clear with this, everybody? Yes or no? Section number what? Section number 12. What office? Registered office. Simple, say simple. Every company shall have registered office which is capable of receiving all the communication made to it within how many days? 30 days. How many days? 30 days. should answer my question. So it becomes easy for me to go to the next topic. Okay. Verification. The verification of registered office should be done within how many days? 30 days. In form number what? By whom? CA, CS, or the CMA. Clear? Excuse me. Next one. IFSC company, how many days? This I will discuss separately. Clear? This point is what most important. Every company, which company? Every company shall paint or affix. Paint or what? Affix. Either you paint outside the place where you are carrying business as well as registered office address. Either you paint it or affix a board containing the what? Name of the company and address of the company. Wherever the name of the company is mentioned, SIN number is mandatory. Wherever director name is mentioned, DIN number is mandatory. Clear? If company name is mentioned, what is mandatory? SIN number is mandatory. If director name is mentioned, what is mandatory? DIN number is mandatory. So at the outside of every registered office of the company or place of business of the company, you need to either paint or affix a board containing name and address of the company in a legible letters. What letter? Legible letters in vernacular language as well. If that language is not in that local language, it should also be in what language? Local language. In Kannada also you should mention. If you don't mention, then Kannada Rakshana Vedike will come and they will throw your board. They will throw stones at your company. Even law mandates it. If you don't follow law, they will come and make you guys follow the compliance. Done. Next one. Engrave. Mention in the what? Seal of the company. Because seal is small, Allah. You don't mention address in that. Only what you mention? Name of the company. What of the company? Name of the company. Correct, right? Next one. Get name of the company, address of the company, SIN number of the company, email of the company, website address of the company, on all business letters, bill heads, letter papers, and notices and other communications. So in the notices, bill heads, documents, you only mention what? Name of the company, address of the company, SIN number, email, as well as the website address. All these things are to be mentioned in the bill heads, letter heads, as well as the notices and communications. Done. There are three words here. First one is what? Affix. Paint or affix. Second one, engraved. Third one, get. Get all these things mentioned on the letterheads. They can ask based on this. If you don't comply with this, and also you should print name of the company on what? Hundis, promissory note, bills of exchange, as well as what? Check. Even if it's the checkbook of the companies, checkbooks nowadays comes with the name of the company or name of the account holder. Correct, right? Yes or no? Next one. Default. What is the penalty? 1,000 rupees per day. Up to how much? 1 lakh rupees is the penalty for not mentioning SIN number. There are many company who has been penalized by ROC for not mentioning what number? SIN number. What is SIN number? Corporate identity number. Now we will discuss change of registered office. Can a company change the registered office? Possible, not possible? Possible. Within the same city, town or village. For example, Sheshadipuram to Jayanagar. What resolution is required? Board resolution. Same city, right? Bengaluru, same city. Yes or no? Pass board resolution. Once you pass board resolution, file form number INC 22. What is INC 22? Verification of registered office. This should be signed by whom? CA, CS, CMA, or advocate in practice. Within how many days? 15 days. With whom? ROC. If it is from one state to one city, town, or village to another city or town or village, you should pass what resolution? Board resolution. Along with that, special resolution. You pass special resolution in what meeting? General meeting. What meeting? What is special resolution? Where the intention to pass a resolution has passed, a special resolution is mentioned in the notice of the meeting, and a notice is duly given to whom? All the members. The number of vote cast in favor of the resolution are three times the vote number of vote cast against the resolution. It's not three times more. Three times the number of vote cast against the resolution, either by show of hand, or by poll, or by electronic mode, including casting vote. Who has casting vote? Chairman. Remember, chairman has the casting vote, right? Deciding vote, right? When there is equality of vote, he gets second vote now. This is what special resolution. Don't say 75%. What if they ask question in the MCQs? Let's say their intention to pass resolution as special resolution is not mentioned. You want to pass a resolution as what resolution? Special resolution. You should mention that fact in the notice. If it is not mentioned, that resolution is not valid. And the notice must be given to whom? All the members. Every line, every word makes a difference in the provisions of the law. Clear with this? Next one. From one city, town, or village. Everybody, what is the first one? Board resolution. Second one, special resolution. What is the form number? INC 22. Within how many days? 15 days. Array, how many? First, what resolution? Board resolution. So this one is possible. One ROC to another ROC is possible only in 2 states. How many states? There are 2 states. Tamil Nadu and Maharashtra. Because there are how many ROC? 2 ROC. Maharashtra, Pune and Mumbai. Tamil Nadu, Chennai and Coimbatore. Only in these 2 states, there can be shifting of registered office from one ROC to another ROC by passing what resolution? Board resolution, then special resolution for alteration of situation clause, not situation clause, for change of registered office, because in the MOA, you only mention the state name. What name? The question of alteration of MOA will arise only when you change the registered office from where? One state to another state. Till that time, there is no question of alteration of MOA. Clear with this? Next one, board resolution, special resolution. Application to whom? RD, regional director. Once you get the approval of RD, file it with whom? ROC. Then you file form number INC 22, verification of registered office within how many days of approval? 30 days of approval. Are we clear with this? In case of one state to another state, from Karnataka to Tamil Nadu, how can you do it? Board resolution, special resolution, application to whom? RD, and you should also make application to whom? ROC and Secretary of State. If they have any objection, they can raise objection to whom? To the RD. Advertise it in the newspaper. Application to the RD for what? Approval. File approval to the RD to whom? ROC. Then you should file form number INC 22 within how many days? 30 days. Verification of registered office. Are we clear with this, everybody? This is how shifting of registered office is done from one state to another state. Once ROC to another ROC. One city, town or village to another city, town or village. Every cases form number INC 22 is filed. Next one, alteration of MOA, Memorandum of Association. Is it possible to change the name of the company? Yes, you can change the name of the company by passing what resolution? Special resolution with the approval of whom? Central government. Clear? Change of name is not allowed. This is what most important. Based on this, there can be questions in the examination. Based on this, they ask questions many a times in the previous examinations. What is that? If you are not filed your financial statement or annual return, you cannot change name of the company. If a company has defaulted in filing financial statement or annual return, you cannot file what? You cannot change the what? Name of the company. If the company failed to pay or repay mature deposits or debentures, then the company cannot change the name of the company. Once the necessary documents are filed, a default is remedied, then you can go for change of name of the company. If you have an existing default in filing financial statement or annual return, or if you have not paid the mature deposits or debentures, you cannot change the name of the company. And whenever a company changes the name, the old name along with the new name should be mentioned in the what? In the every document. That is why this Shadowfax Private Limited company, they have changed the name. They recently gone for IPO. So if you see the documents, they generally mention old name as well. They say formerly known as this, because it is mandatory for a company to mention the old name for how many years? 2 years. How many years? 2 years. Alteration of registered office clause, we already covered it. Yes or no?
Yes,
Shifting from registered office from one state to another state. Next one, object clause. What clause? This is important one. Can a company change the object of the company? Yes, by passing what resolution? Special resolution. But however, if a company has raised the money by issue of prospectus, if it has any unspent money, and if they want to change the object for that particular purpose, company should pass special resolution only by what ballot? Postal ballot. What ballot? Postal ballot. And most important, the details of that notice or the meeting should be given in the what paper? Newspaper. Whenever I say newspaper, keep this in mind. 2 newspaper, one in vernacular language, one in English newspaper. and also on the website of the company. What of the company? Website of the company. Most important, any person who is dissenting to that alteration should be given an opportunity to what? Exit from the company. To pass special resolution, how many votes are required? 75%. 70% has given approval. Remaining 25% are opposing for this. Those remaining 20% of people should be given an option to exit from the company. If they want to exit, there should be somebody who buy the shares, right? Who should buy their shares? Promoters are controlling shareholder. What shareholder? Controlling shareholder should buy their shares and they will exit. This is in case of alteration of object of a company where the company has mobilized the capital by issue of prospectus. It has any money which is unspent. Which is what? Unspent. Are we clear with this, everybody? And this one and section number 27, both are interlinked. What is 27? Variation of contents of what? Prospectus. Both are similar provisions. Getting it? Next one, capital clause. What clause? Capital clause. Arey bolo, what clause? Capital clause. The capital clause of the company can be altered by passing what resolution? Ordinary resolution. Section number what? 61. Alteration of share capital. What of share capital? Alteration of share capital. The capital clause of a company can be altered by passing what resolution? Ordinary resolution. What resolution? And whenever there is an alteration of share capital, you need to intimate the same to the ROC in the form number SS7 within how many days of alteration? 30 days of alteration. Are we clear with this? Next one, alteration of AOA. An AOA can be altered by passing what resolution? Special resolution. Can there be entrenchment of this? Can company provide additional conditions or additional requirement? Yes, that is called as what? Entrenchment of articles. Aresa, no. However, if a company want to convert private company into public company into private company should alter the what? AOA. Alter the what? AOA. Such alterations are allowed. What is allowed? Such alterations are allowed only subject to the approval of government. Approval of whom? Government. Are we clear with this? Which government? Central government. Next one, section number 15. Section number what? 15. Whenever you make an alteration in the MOA and AOA, and if you are giving a copy of that MOA and AOA to a member or any other person, you should note alterations made. Should give the altered MOA or altered AOA. If you don't mention the alterations made and you give a copy of MOA and AOA, is the company punishable? Not punishable. Punishable. How much? 1,000 rupees for every copy. How much? 1,000 rupees for every copy. Are we clear with this? Next one, rectification of name. What of name? If you learn section number 16 here, then section number 17 of LLP Act becomes easy. Similar provisions are there with respect to rectification of name. What does the provision say? Simple says simple. It says, if central government, what government? Is of the opinion that the name of the company is identical or resemble to the name of an existing company or a registered trademark either on its own or by an application of whom? Registered trademark owner. Again, the registered trademark owner or proprietor should make an application within how many years? 3 years from the date of incorporation of the new company with a similar name. So what is the provision says? Where the government is of the opinion that, who is of the opinion? Government is of the opinion that the name of the company, the name of the what? Company is identical or resemble to the name of an existing company or a registered trademark either on its own or an application from the registered trademark owner within how many years? 3 years. Can direct or may direct the company to change its name within how many months? 3 months by passing what resolution? Ordinary resolution. What resolution? Ordinary resolution. If the company fails to comply with this provision, central government may allot a new name and substitute the name of the company with what name? New name. In that scenario, company can change the name later. And whenever a company changes the name by the order of central government, the same should be informed to whom? ROC. And ROC issues a fresh certificate of incorporation. ASTE, section number what? 16. Rectification of name. Rectification of what? Name. Are we clear with this? Next one, section number 17. As I said, every company who shall give it to whom? Members. Give it to whom? Members. Remember, I discussed this doctrine of constructive notice. ಇದು ಮೆಂಬರ್ಸ್ ಮಾತ್ರ. A stranger cannot go and ask document from the company. If you want, you can go to ROC. Are you guys getting it? A member, if you want MOA, AOA, agreement, and the resolution, not all resolution, the resolutions which are required to be filed with ROC under section number 117 of the Companies Act in form number MGT 14. Those resolution you can request from the company. If any member requests from the company must provide it within how many days? 7 days. Section number is what? 17. How many days? 7 days. If not, is there any punishment for this? Yes, there is a punishment for not providing the copy within how many days? 7 days. Are we clear with this? Next one, conversion of company. What of company? Is it possible to convert private company into public company?
Yes.
Public company into private company? Do you need to alter AOA?
Yes.
Because in case of private company, it restricts, limits, and prohibits. No. Most important is this conversion of private company into OPC. Is it possible to convert private company into OPC? Yes. Take NOC from all the members. Exit. One person will become member of one person company. Correct, right? Can we convert OPC into private company?
Yes.
Possible, not possible? Possible. Increase the number of members to how many? 2. But is it possible to convert Section 8 company into one person company? OPC Section 8 company? No. Can we convert Section 8 company into private company?
Yes.
Public company? Done. This is about conversion of company. What of companies? Conversion of companies. Section number 19 is important. Subsidiary company to not to hold shares in what company? Holding company. Before I start this concept, I will give a question to you guys. You guys should tell me what will happen in this scenario. Think and tell me what will happen in this scenario. ಏನಾಗುತ್ತೆ ಅಂತ ಹೇಳಿ ನೋಡೋಣ. చెప్పండి ఏమవుతుంది. Let's say there is a company. What company? A company
Sir.
is B company. Okay, we'll continue. See, A company. What company? A company. And there is one more company called as B company. Listen, A company and B company. I am A company. You are B company. I am holding 20% of voting rights of your company. Now tell me, you are called as what company of my company? Associate company of my company. Clear with this? Possible, not possible? Possible. Later what happened? B company acquired 51% of voting rights of A company. How much? I am holding 20% in your company. You are holding how much now? 50. I am holding 20% in B company. B company is holding how much in my company? 51%. Earlier, you are my associate. Now, associate company is holding how much? 51% in the other company. Now, my question is, I am your subsidiary company. Correct, right? But are you called as my associate company? See, I am holding how much in your company? 20% of voting rights. How much you are holding? 51%. Because you're holding 51%, I'm called as what company of yours? Subsidiary company. But I'm holding how much in your company? 20%. Should be called as what company? Are you associate company?
Yes.
Yes or no? The answer is no. What is associate company? It's a company. It's a company. It's a what? Company. Which other company is having what influence? Significant influence. Am I having significant influence in your company here?
Yes.
Yes or no? The answer is no because of section number 19. Normal cases, it is yes. Your answer is correct. But because of section number 19, now the answer is what? No, because there is no significant influence. Why? Because once I become your subsidiary company, I cannot buy your company shares. But there are 3 exceptional cases where I can hold shares in your company. That is, as a legal heads, or as a trustee, or where the shares were held even before the company has become what company? Subsidiary company. However, You will not be having voting rights if you are holding shares. Even before you have become what company? Subsidiary company. It means I am holding your shares, but there is no what right?
Voting.
Voting rights. And what do you mean by significant influence? Of what? Voting rights. I am holding shares, but no what right? Voting right. You are not considered as my associate company. See, two section numbers are interlinked. Clear? Now, section number 19. Section number what? 19. There are two prohibitions. How many prohibitions, guys? Two prohibitions. What are two prohibitions? First one, the prohibition is not only on the subsidiary company. That's also on what company? Holding company. First one says, no company shall allot. Sorry, no company shall hold shares either by itself or through its nominee in which company? Holding company. What company? Holding company. A company shall not hold any shares in its holding company directly or indirectly. Which company? A subsidiary company. What company? A subsidiary company shall not hold shares either by itself or through nominees in the what company? Holding company. And the second one, company shall not allot or transfer. Transfer what? Any of its shares to which company? Subsidiary company. If any allotment is made or transfer is made, it is void. So the prohibition is not only on holding company, not only on subsidiary company, it is both. First one says subsidiary company cannot hold shares either by itself or through its nominees in the what company? Holding company. Second one says a company shall not allot or transfer to any subsidiary company any of its share. If it is done, it is void. But are there any exceptions where it is allowed? Yes. Prohibition does not apply to the following cases. It means a subsidiary company can hold share of holding company in the following scenarios. What is the first one? As a legal representative of a deceased member of holding company, as a trustee, or if it was holding the shares even before it become what company? Subsidiary company. But however, there is no voting rights in the last one. And one more is there. Many will miss out this point. The one more situation where a subsidiary company can hold shares in the holding companies as a result of scheme of amalgamation or reconstruction, which is approved by the court or tribunal. Understood, everybody? Section number what? 19. Is the prohibition is only on subsidiary company and also holding company.
Also holding.
First one says subsidiary company shall not hold any of its the shares of the holding company either by itself or through its nominee. Second one says holding company shall not allot or transfer any of its shares to which company? Subsidiary company. If it is done, it is void. But there are three exceptions. What are three exceptions? As a legal representative, as a trustee, or where the shares were held even before the company has become what company? Subsidiary companies. Are we clear with this, everybody? Next one, 20, 21, 22 are important section numbers. ICA's favorite topic. There is slight thin line difference between these section numbers. If you understand that thin line difference, easiest of the easy provisions. See, simple, say simple. All three deals with documents. Deals with what? Documents. 20 says how to send document, where to send document. Clear? 20 says where to send document, how to send document. To ROC, where you will send document, how you will send document. To member, where you will send document, how we will send documents. For company or officers, how you send document, where you send documents. Are you guys clear with this? Yes or no? Next 21 says, if you are giving some document, how to authenticate that it is a document of company. Who should authenticate it? 22 says, if contract is made on behalf of the company, who can make contract on behalf of the company? Or who can make promissory note, bill of exchange, check, or any negotiable instrument on behalf of the company? If a person is authorized to make a contract on behalf of the company, how he is authorized? On what document? Who should sign it? That is what covered in 20, 21, 22. What is 20? Service of document. What of document? Service of document. Listen, everybody. Company are its officers. Company are what?
Officers.
Everybody, company are what? Officers. Where you will send it? Or what office? Registered office. By what post? Registered post, or speed post, or by courier, or by living at what office? Registered office. Physical delivery, or by electronic mode. Everything you write it. Simple as that. What office? Registered office. To the register of companies, ROC, if you want to send any documentation, what you will send? At office. By ordinary post, ಇಲ್ಲಿ ordinary post ಇಲ್ಲ, ಇಲ್ಲಿ ಏನಿದೆ? Ordinary post ಇದೆ. Ordinary post, registered post, speed post, courier or electronic mode. Clear with this? To members of a company, again, ordinary post, registered post, speed post, courier, or delivering at his office or electronic mode. Note, if a member requests for specific mode of service of document by paying the prescribed fees, the company should send the documents to him only in that prescribed mode. If not, the notice is not valid or document is not valid. Based on this, they asked question in the previous examination. Next one. This is what most crucial. In case of delivery by post, bolo, such service shall be deemed to have been effected in case of notice of a meeting. What of a meeting? 48 hours after the letter containing the same has been posted. Means you need to add extra how many days? 2 days. 48 hours. If I am sending a notice of a meeting by a post, whether it's registered post, speed post, whatever it is, it is deemed to have been sent after how many hours?
48 hours.
You would have received to same day itself, but still law presumes it has been sent after how many hours? 48 hours. So it is like 2 days plus 21 days, 23 days. Got it? Yes or no? Only if it is a notice of the meeting. What of the meeting? But for any other document, what document? Any other case, based on this, the last question in the examination, any other case at the time at which letter would be delivered in the what course of business? Ordinary course of post. If it is 1 day, 1 day. 2 day, 2 day. This presumption that notice is deemed to have been sent after 48 hours of posting is applicable only for notice of the meeting. They will confuse you guys with this. Normal communication, whenever communication happened. Notice after how many hours? 48 hours. Clear? Next one. In case of delivery by post, this is right. In case of Nidhi company, I will discuss this separately, but however, just remember, in case of Nidhi company, what company? Nidhi company, notices are sent individually. Our documents are sent individually only to a member who is holding shares of at least how much value? 1,000 rupees in face value or 1% of paid up capital of the company, whichever is less. If you are not holding this much, for you, we will not send individual documents. We just publish it in the notice board as well as in the newspaper. You can just read it. Clear with this? This is with respect to service of document. What of document? Service of document. First, company officers. Second, ROC. Third, members. Second one and third one, just add ordinary post. That's it. And most crucial point is this. Fourth point. Done. Next one. Authentication of documents, proceedings, and contracts. See, I want some document from the company. Or you need to file a resolution of the company with ROC. How ROC will know it's a true copy of original? It has to be certified, authenticated by an officer of the company, or employee of a company, or KMP of a company, who has been duly authorized by the board by passing board resolution. No one else can do it. an authentication of proceedings of the meeting, contracts of the company, or documents of the company can be authenticated either by KMP of the company, or by director of a company, or by officer of the company, or employee of the company who has been duly authorized by the board by passing a board resolution on this behalf. That is why whenever we pass a board resolution, we also mention that one of the director of a company or KMP of the company is authorized to file this document with whom? With a ROC. He will certify that this is the true copy of the what? Minutes of the meeting. Yes or no? Artha aita? Only who can authenticate documents, proceedings, or contracts? Person who is authorized by what? Board. By passing what resolution? Board resolution. Who are those persons? Who are those persons? KMP, officer, or employee, duly authorized by whom? Board. IFSC company, there is an exception. I will discuss that separately. Clear with this? Aresa, no. This is for authentication. What is authentication, guys? टप्पा एग्जैक्टली आप बोल रहे हैं वो सच है, ट्रूथ है, करेक्ट राइट. नाउ मेरे बिहाफ, ಆನ್ ಮೈ ಬಿಹಾಫ್, ನನ್ನ ಬಿಹಾಫ್, ನನ್ಗೋಸ್ಕರ ನೀವೇನೋ ಮಾಡಬೇಕು. ಸಿ ವೆನ್ ಒನ್ ಪರ್ಸನ್ ಡಸ್ ಸಮಥಿಂಗ್ ಆನ್ ಬಿಹಾಫ್ ಆಫ್ ಅದರ್ ಪರ್ಸನ್, ಯು ವಿಲ್ ಬಿ ಕಾಲ್ಡ್ ಆಸ್ ವಾಟ್? ಏಜೆಂಟ್. ಕಾಲ್ಡ್ ಆಸ್ ವಾಟ್? ಏಜೆಂಟ್. Correct, right? And a person is appointed as an agent only by delegating the authority. You must have an authority, and that authority is delegated by a contract called as power of attorney. Power of what? Attorney. And that power of attorney should be signed by the company either by affixing what seal? Common seal, or by a document signed by how many directors? 2 directors, or by 1 director or 1 CS. This is for execution, not authentication. Execution of bills of exchange or any contracts or deeds. If a company wants to make a contract or a deed, can company do it? Yes. There should be somebody who signs on behalf of the company. Correct now? The deed, who should sign the deed? Any person. What person? Any person. Arey bolo, what person? Any person duly authorized by power of attorney. Power of what? And that power of attorney should be signed by minimum how many directors? 2 directors, or by 1 director and 1 CS, company secretary. Arey so no. And even execution of bills of exchange, promissory note, check. To execute that, you must be authorized. How you are authorized? By a contract which is signed by how many directors? 2 directors. That is why account opening form of a company should be signed by 2 directors. Even to operate accounts of the company on behalf of the company, not directors, both directors will operate. Any one will operate, and that authorization should be given by whom? Both directors. By signing the what? Document. See, we both are directors of a company. Out of both of us, I want to give authority for him to execute bills of exchange or a check or a promissory note. How can I do that? I should execute a contract. Correct, right? That is called as power of attorney. Who will sign that? Both of us will sign that because we have only 2 directors. We submit this to whom? Bank. Now bank will allow him to sign all checks. Now who will execute it? He will execute it. Understood? That is section number what? 22. With these, we are done with chapter number 2. Incorporation of company and matters incidental thereto. Section number 3 to 22. Now listen everybody. What is section number 3? Formation of company. 3A, members severally liable. 4, memorandum of association. 5, MOA. Sorry, AOA. 4 is MOA, 5 is AOA, 6 act to override MOA and AOA, 7 incorporation of company. We discussed the authentication of documents and all those things. 8 section 8 company. What company? Section 8 company. Then 9 effect of registration of company. 10 effect of registration of MOA and AOA. 10A commencement of business. 11 omitted. 12 registered office. What office? 13, alteration of MOA. 14, alteration of AOA. 15, every alteration to be noted in the copy of MOA and AOA. 16, rectification of name. 17, service of document. Sir, giving copies of MOA and AOA within how many days? 7 days. 18, conversion of company. 19, subsidiary companies to not to hold shares in what company? Holding company. 20, 21, 22. 20, service of document. 21, 22, execution of promissory note, bills of exchange, or any deeds on behalf of the company. Only authorized person can do it, and he will be authorized by a power of attorney, should be signed by 2 directors or by 1 director and 1 secretary. I expect them to ask question based on this point, most important point in section number 21, this one, not 21, 20, this in case of delivery by post. If it is notice of the meeting, 48 hours. Other cases, no 48 hours. Whenever it is delivered in the what course of business? Ordinary course of business. Understood? Chapter number what? Chapter number what? 2. अब हम discuss करेंगे chapter number 3. Chapter number what? Okay. Chapter number 3, Prospectus and Allotment of Securities, section number 23 to 42 deals with what? Prospectus and allotment of securities. In this chapter, section number 25, section number 27, section number 29, section number 34, 35, 39, and 40 and 42. These are the section numbers which are most important, but we will revise each and every section number. Clear? Understood? Let's start. Simple says simple chapter, and out of this chapter, for sure there will be one question. 100% there will be one question for 5 marks. One question for 5 marks plus one MCQ for 2 marks. 7 marks is the weightage of this chapter. Done. Prospectus and what? Allotment of securities. Section number 23, based on this, chances of asking questions are very less. If they ask question, there is a new concept in this, that is overseas direct listing. Based on that, they can ask question in the examination. Now, section number 23 says public issue and private placement. Public offer and what? Private placement. Common sense, we know this already. Private company can raise capital or it can issue securities either by way of what? Public issue, public company, public issue, or private placement, right issue, bonus issue. But private company, right issue, private placement, right issue, bonus issue. Private company cannot do public issue of securities. Are we clear with this? The most important concept is this overseas direct listing. A public company, certain class of public companies prescribed by central government can list their securities outside India in a permitted jurisdiction, a certain class of securities. This is called as overseas direct listing. Earlier, if Indian company want to raise capital outside India, there was a requirement. There was what? Requirement of converting those securities into what? ADRs or GDRs. For conversion of ADR or GDRs, there are 2 intermediaries involved. First one is domestic custodian and the second one is foreign depository. Will they do services at free of cost? No, they will charge something. It's a cost consuming for the companies. To eliminate that, now there is a concept of overseas direct listing. Only certain class of public companies can do overseas direct listing. They may ask, what is the advantage of overseas direct listing? Elimination of cost of intermediaries. And one more advantage is the time saving and lesser burden of compliances. Clear with this? Yes or no? Next one. The word securities. Based on this, there can be MCQs in the examination. Now, what do you mean by securities, sir? Securities includes all types of instrument, not shares. Shares is different, securities are different. The word security means what? Shares, scrips, stock, bonds, debentures, debenture stock, other marketable securities. Now, what do you mean by stock, sir? Stock does not have face value. Shares have what value? Face value. Company can convert shares into stock, stock into shares. Stock can be transferred in fractions, but not the shares. Correct, right? And only fully paid shares can be converted into the what? Stock. Clear with this? Next, derivatives, unit of what? Collective investment scheme. What scheme? Collective investment scheme, security deposit under the SURFACE Act, units of mutual funds. All these concepts I have discussed detail में in the class. Correct, right? How these units of SURFACE works, how the units of mutual funds works. If you're holding units of mutual funds, you are considered as what holder? Security holder. What holder? Security holder. Government securities, rights or interest in securities, such other instruments. See these bonds, coupons, certificates, all these are called as what? Securities. Even the derivatives are also considered as what? Securities. For example, gold bond, securities. Because gold bond derives its value based on the what? Gold. ADR, security. GDR, security, because GDR derives its value based on the what? Underlying security. What security? Underlying security. Are you guys clear with this? Section number 23, easy. Section number 24, most important. Student neglect this section number, but based on this there can be MCQs. See, SEBI has the power to regulate. Who has the power to regulate? SEBI has the power to regulate issue of securities to the public, transfer of securities to the public, transfer of securities, even the non-payment of dividend. Based on this, there can be MCQs. Whenever there is a issue of securities to the public, once a company issues shares to the public, who comes into picture? SEBI. SEBI can regulate issue of securities, transfer of securities, even the non-payment of dividend. Section number what? 24. Section number what? 24. Clear? Section number 25, easy section number. As I said, you should read section number 25 in connection with what? Section number 42. Section number what? 42. See, simple say simple. Section number 25 says, देखो भाई, if you are doing a public offer of security, what offer of securities? If you do any public offer of securities, any document which you use for the purpose of public offer of securities is deemed to be what? Prospectus of the company. What happens now? In case of prospectus of the company, there are various complaints to be done. Only public company can issue what? Prospectus. Private company cannot issue what? Prospectus. Agree with this? Yes or no? Private company cannot issue prospectus to the public. Second one, public company can issue prospectus subject to conditions. Even if you're a public company, doesn't mean you can issue prospectus SAE. You should take permission of, you should file the document with the SEBI. First you file a draft red herring prospectus, then you take approval of SEBI, then it becomes a what? Prospectus. There are various complaints to be done. Because there are complaints burden, what generally companies does, instead of going for this issue of prospectus, they may use some other routes, indirect routes, by which they try to escape the obligation of prospectus. What are prospectus? Obligation of prospectus. To catch hold of those scenarios, there is a section number called as what? 25. Section number what? 25. Simple say simple. Section number 25 is applicable only when the shares or securities are offered to whom? Public. Again, not shares. Securities are offered. What is offered? Are offered to the whom? Public. And the document by which securities are offered to the public is deemed to be the what? Prospectus of the company. What of the company? Prospectus of the company. Listen everybody, how does it work? Listen. Simple say simple. Let's say I give shares to Basit. I make allotment to him. I allot shares to Basit. 1 lakh shares. Now what Basit does, he will transfer these shares to 500 persons. I do private placement of securities to Basit. Only 1 person. Allowed or not allowed? Allowed. Private placement of securities are allowed up to how many persons in a financial year? 200%. Correct, right? Now what Basit did, he transferred these securities to whom? 500%. Sir, can he transfer it to 500%? Sir, yes, he can do it. Law does not have any problem with Basit transferring it to how many persons? 500%. But however, if this mechanism is used to indirectly to transfer the shares to whom? To the public hands. Whose hands? That is when section number 25 comes into picture. Now, Because I don't want to take the headache of compliance of all the provisions of the law with respect to the prospectus, I made an arrangement with Bashit saying that, Bashit, I will give securities to you. You offer them to whom? Public. Now, the document by which Bashit offered the securities to whom? To the public is deemed to be the what? Prospectus of whom? My company. That is called as what prospectus? Deemed prospectus. What prospectus? Deemed prospectus. Now, how to decide, sir? Like, sir, is every transfer is considered as deemed prospectus, sir? No, sir. Only when a company allots, repeat, company allots or agrees to allot any of its securities with a view to, this is what most important, view to means what? With the intention to, that all or any of those securities being offered to whom? Public. That is what most important. If company allots or agrees to allot any of its securities to any person with a view or with the intent that all of those securities or any of those securities to be offered to whom? Public. The document by which that offer for sale is made to the public is considered as what? Deemed prospectus of my company. Will I be responsible or not responsible? Responsible for every misstatement in the prospectus. Now the question is, sir, how to decide whether the allotment is for offer of shares to the public or for a genuine allotment, sir? I am giving shares to Bashit. Correct, right? If it is made, allotment is made to Bashit with the intent that should be offered to whom? Public. It is considered as what prospectus? Deemed prospectus. If it is not, I just made an allotment to him, he can transfer it to 1,000 persons also, no problem. Are you guys getting it? The law, section number 25 comes into picture only when I made allotment to Bashit with the intent that either any of these securities or all of these securities should be offered to whom? Public. Now, how to decide intention of a person or intention of company? That is the question, right? We cannot decide intention of the person by reading his mind. Nobody can read person's mind. But we can decide the intention of a person by his action. By his what? Action. That is why if the person to whom the allotment is made, what is made? The person to whom the allotment is made by the company, if he re-offers the securities to the public within 6 months of allotment, how many months? Then it is deemed that the allotment was made for the purpose of offer to the public. Within how many months? I make allotment today. Now Bashit offers them to whom? Public. Within how many months? It is deemed that the allotment was made with the intent to offer them to whom? Public. And the document by which he has sold it to the public, it is deemed to be the what? Prospectus of the company. Or one more situation is there. Or the date on which the shares are offered to the public. Offered to whom? Public. The whole of the consideration or part of the consideration, whole of the consideration has not been received by the company. I made allotment of shares to him. He has agreed to pay it after he's selling it to the public, and then he will pay it to me. Now it is obvious that I have made the allotment with the intent that these should be offered to whom? Public, because I have not received the consideration. Even if I have not mentioned this fact, saying that you should offer it to public, then you should pay. If I have not received the consideration for allotment, full amount, on the date on which he is re-offering them to the public, not on the date of allotment, on the date of what? Offer of sale to the public, then it is deemed to be what? Prospectus of the company, because it is considered as a deemed public offer. What public offer? Deemed public offer. Are you guys clear with this? Simple, say simple. What is deemed prospectus? When a company, repeat, allots or agrees to allot any of its securities to any person with the intent that all or any of those securities offered to whom? Public for subscription. It is called as what? The document by which such offer for sale is made is considered as what prospectus? Deemed prospectus of the company. Now, when can we say the offer was made with the intent of, allotment was made with the intent of offering them to public? First situation, these are illustrative in nature. There can be other situation also. It says, if the offer for sale is made within how many months of allotment? 6 months of allotment, or on the date of offer for sale, the whole of the consideration was not received. You would have paid part amount because still the remaining part is not paid. It is considered to be offer for sale, and the document by which the offer for sale is made, it is considered as what prospectus? Deemed prospectus of the company. Understood? If it is a deemed prospectus of the company, you must provide following information. What is the first one? Net amount of consideration is received or to be received by the company. By whom? By whom? Company. Correct, right? How much money I will receive, how much he will receive should be disclosed in the deemed prospectus. Second one, time and place at which the contract of allotment can be inspected. Means on what terms I have done the allotment to him. That contract should be open for inspection, and you must disclose the fact about the time and the day on which that can be inspected. That can be what? Inspected. Yes or no? And the last one is that the person making the offer named in the prospectus as a what? Directors of the company. What of the company? Even you would be held responsible as what? Directors of the company. Understood? It means if Basit is making the offer for sale, he would be considered director of a company, and he is also equally responsible like my company's director if there is any misstatement or fraud. These are the additional compliances in case of what prospectus? Deemed prospectus. And who will sign this deemed prospectus? Obviously, I will not sign it. Who will sign it? Basit will sign it. If he is a partnership firm, who should sign it? Half of the partners. If it is a company, 2 directors. If Basit is a company, 2 directors. If it is a partnership firm, half of the partners must sign. This is about your deemed prospectus. What prospectus? Deemed prospectus. I want everyone to repeat what is a deemed prospectus. When a company allots or agrees to allot with a view to all or any of those securities being offered to whom? Public. The document by which such offer for sale is made is deemed to be the prospectus of the company. A company deemed to have made an allotment with a view to offer those securities to the public if on the date of offer for sale, offer for sale is made within how many months of allotment? 6 months of allotment, or on the date of reissue, the whole of the consideration was not received. Based on this, they asked questions in the previous examination. There is a descriptive question based on section number 25. Clear? Next one. Section number 26 is an easy section number. It just says what information is required to be mentioned in the prospectus of the company. It is not a detailed section numbers. In the rules, we have a details like what are the information to be mentioned. It just says you need to date it, sign it, provide such other information or the report specified by whom? SEBI. SEBI prescribes the contents of prospectus by making regulation. We have ICDR regulation, issue of capital and disclosure requirement regulations. Clear? Next one. Declaration about what? Compliance of law. What of law? Compliance of law. Should give a declaration in the prospectus saying that the company has complied with all the applicable laws. What laws? All the applicable laws. Are we clear with these? However, the provisions of section number 26 is not applicable for the following type of companies. Based on this, there can be MCQs in the examination. What is the first one? When the prospectus is offered only to whom? Existing members are debenture holders. No need to comply with section number 26. Second one, where the prospectus is with respect to shares or debentures which are listed, and uniformity with what? The shares or debentures which are already quoted are listed in the stock exchange. What exchange? Stock exchange. In these cases, there is no requirement of complying with section number 26. For example, right issue. What issue? Not applicable. Done. Next one. Signing and filing of prospectus with ROC. Who is required to sign this prospectus? Should be signed by every director or a proposed director or a duly authorized attorney. Based on this, they asked MCQs in the previous examination. Either it can be signed by the director or a proposed directors or duly authorized attorney. Attorney means what? Nothing but power of attorney. Simple as that. Same like companies. Correct now? To be filed with whom? ROC. Obviously, you should file it with ROC. This date of filing with ROC is most important because A prospectus is valid for how many days? 90 days. From the date of filing it with whom? ROC. Are we clear with this? Yes or no? A prospectus is valid for how many days? 90 days from the date of filing it with whom? With a ROC. Are we clear with this, everybody? Next one. Conditions in regard to the expert statement. What statement? Expert statement. Most important. Can a prospectus contain a statement made by an expert? First of all, who is an expert? Expert means CA, CS, engineer, doctor, valuer, any person who is authorized by the law to give a certificate is called as what? Expert. Can a prospectus contain expert statement? Yes, provided he was not interested in the promotion or formation of the company or management of the company. Correct, right? Second one, he has given a consent. If he has not given a consent,
Then you cannot include.
you cannot include. And the last one is that even if he has given a consent, but he has withdrawn that consent, withdrawn that what? Consent before filing that copy with the registrar, then you cannot include. That's expert statement. I will repeat it. An expert statement cannot be included. Cannot be what? Included. In how many cases? Two cases. Everybody, how many cases? Not two cases, three cases. What are three cases? What are the three cases in which we cannot include the expert statement? First one, he was interested in the promotion, formation, or management of the company. Second case, he has not given a consent to issue the what? Prospectus, or he has given the consent but withdrawn the consent before filing it with the ROC. Filing it with whom? ROC. Bashit, next one, concentrate. Next one, section number 27. Section number what? What is 27? Variation in the terms of the contract or the object referred in the prospectus. If you want to change the terms of the contract referred in the prospectus or object of the prospectus, can you do it? Yes, by passing what resolution? Special resolution. Only through what ballot? Postal ballot. And that should be advertised in the newspaper. What paper? Newspaper. In that, you should mention what was the amount raised, how much was spent, how much was not spent, what is the new object, what is the gestation period, what is the risk involved. All these things should be mentioned in the explanatory statement. What statement? Explanatory statement. Are you guys clear with this? And most important thing is that this has to be published in the what paper? Newspaper. One in what language? Vernacular language. And one in what language? English language. And dissenting shareholders. What shareholders? Dissenting shareholders should be given an option to exit from the company by the promoter or controlling shareholder. What shareholder? Controlling shareholders. And most important, the amount raised. What raised? Cannot be used to buy what? Equity shares of listed company. What company? Listed company. You cannot deal unless you're investment company. What company? What company? You cannot involve in trading in securities of a listed company. I have given the money for what purpose? To do the business. Now you are changing your object to do trading with that money, to buy and sell shares in the market. Allowed or not allowed? Not allowed. Are we clear with this? Section number what? 27. Section number what? What is section number 26? 27? 28 is offer for sale. Offer for what? Sale. My question is, can we alter the contents of document referred in the prospectus or object of prospectus? Yes, by passing what resolution? Special resolution. Through what ballot? Postal ballot. Are you supposed to give details of amount raised, amount used, amount not used, reason for not utilization, new object in the what? Newspaper, and also in the explanatory statement. When I say newspaper, how many newspaper? Two newspaper, one in vernacular language, one in English newspaper. And most important, dissenting shareholders shall be given an opportunity to what? Exit from the company by the promoter or the controlling shareholder. And the amount raised cannot be used to buy the what? Shares. Which company? Listed company. 28 is an extension of section number 25. Simple as that. 28 deals with a specific scenario. What scenario? Specific scenario where a member of a company, what of a company? A member of a company or members of a company. One of the classic case for this is Adani Group of Companies. Adani Enterprises, they did this OFS. When they came for OFS, at that time, that one company gave a report on them. Adverse report, not adverse report. They made some report saying that Adani is involved in some fraudulent activity and bribing up peoples in abroad. They offered shares at 3,000 rupees. I think 3 or 5,000 rupees. Because of that report, market price came down to how much? 1,500 rupees. Just imagine, company did offer for sale. You applied for offer for sale. To what price? 3,000 rupees. Before allotment is complete, our offer is closed. News came. What came? News. And in that news, because there is an adverse report, what happened? Company's market price came down to how much? 1,500 rupees. You applied for shares at 3,000 rupees. Same share is available in the market. And what price? 1,500 rupees. 50% direct loss. That is why Adani Group cancelled the OFS later, because it is not fair and heavily. They cancelled that OFS. Now, what is OFS? Simple. Members are selling their shares to whom? Public. With the help of whom? Company. Now, money goes to whom? Members, not to the company. Just companies, just intermediating, or it is facilitating the issue of shares to the public. So, a member of a company or members of a company, in consultation with the board of directors, can offer to sell the whole or any part of their shares to the public, and a document by which such offer for sale to the public is made. It is called as what? Deemed prospectus of the company. Now, my question is, money goes to the members or company? Members. That is why company is not, this offer for sale is not required to comply with minimum subscription, minimum application value, and also the statement with respect to utilization of money. Because company is not going to whom? Company. Sorry, money is not going to the company, it's going to whom? Members. That is why company is not required to give a declaration on utilization of money, as well as minimum subscription provisions and minimum application provisions is not applicable. They should also mention who is going to reimburse expenses. Who should reimburse all expenses?
Member.
To whom?
Company.
Companies. Correct, right? And the document is deemed to be the what? Prospectus of the company. What of the company? Prospectus of the company. Yes or no? What are the exceptions to be mentioned in the prospectus? Minimum subscription not applicable.
Minimum application not applicable.
Statement of the board with respect to utilization of money not applicable. Any other information which cannot be compiled or gathered from the members not applicable. Section number what? 28. Section number 29 is simple say simple provision. Section number 29 says simple say simple. It says if you are a company other than small company, dematerialization of securities is mandatory. First thing, we can offer securities only in dematerialized form, not shares, securities. Second thing, first thing is one, you can offer securities only in what form? Dematerialized form. Second thing, all the existing securities must be what? Dematerialized. Company should give an option to dematerialized. Correct, right? Now, what if an existing member does not get its securities dematerialized? Can he continue to hold them in physical form? Yes. However, he can't transfer them without getting them what? Dematerialized. At the same time, If a company does not dematerialize its promoters holding or directors holding, such company cannot do right issue, cannot do bonus issue, they cannot do buyback. Means they cannot do any corporate action unless until they convert. In what form? Dematerialized form. Are we clear with this? Section number what?
25.
Is dematerialization is compulsory for every company?
No.
Every company, yes, except which company? Small company. Every company except what company? Small company. Is private company required to dematerialize? Yes. If you're not a what company? Small company. Not all private companies are small company. Only a private company whose paid up capital is how much? 4 crores. Does not exceed 4 crores and turnover does not exceed 40 crores. Amendment is 10 and 100. Only that company is called a small company. Small companies are not required to dematerialize. Other than small company, every company should what? Dematerialize their securities. 10 and 40. Sorry, 10 and 100. Either you can do two things. You can mention 10 and 100. You can also write a note saying that it is as per the amendment. Or you can mention 4 and 40. In the bracket, you can mention as a note saying that it has been amended and increased to what? 4 and 40. Sorry, 10 and 100. Amendment happened in the, I'm not sure about the date. I think around 5-6 months back it happened.
Before.
I guess, I'm not sure about the date. If it, correct, correct. But still you can mention it. What is wrong in mentioning it? Just mention that amendment has been done. 100 crores and what? 10 crores. Simple as that. Clear with this? Next one. Are you guys clear with the dematerialization of securities? Section number what? 29. 26 is what?
Matters to be stated in prospectus.
Contents of prospectus. What is 23?
Public or private placement.
Public offer and private placement. 24, SEBI part. 25, deemed prospectus. 26, contents of prospectus. 27, variation. 28, OFS, offer for sale. 29, dematerialization. 30, advertisement of prospect. Whenever you advertise prospectus, you need to mention objects of the company, liability of the members, share capital, name of signatories to the MOA, that is starting promoters, and also number of shares subscribed and the capital structure. If you see any newspaper advertisement, you see all these things in that newspaper advertisement. What is the first one you'll mention? Object of the company, liability of the members, share capital, name of signatories to the what? Memorandum of association, number of shares subscribed, as well as the capital structure of the company. All these things to be mentioned in the equally prominent position. Clear? Next one, 31. Simple says simple concept. No complications in section number 31. Shelf prospectus. What is shelf prospectus, sir? A prospectus with a shelf life. What life? Shelf life. See, shelf prospectus is useful for the company which are capital intensive, who need more and more capital. Tell me what type of industries or what type of companies are capital intensive? Manufacturing to some extent, okay. Then think from finance point of view. Other than that, NBFC companies. See, bank, they are capital intensive, but they have an alternative source. They take deposits. They open current account, savings accounts, FD account. But that power is not given to whom? NBFCs. NBFCs cannot open accounts of whom? Public. Example, Reliance Capital, Tata Capital, Muthoot Finance. Are you guys getting it? But what is their business? Providing loans. You give loan, they need money. How they get this money? Obviously by issuing what? Securities, shares, debentures, bonds. They take money from the public at a lesser rate of interest, offer it to the other person who is in need of money at a higher rate of interest, and they earn the income. Because these companies are capital intensive and they're required to raise the capital very often. It is very costly and very time consuming for the companies. So what they can do, instead of preparing the prospectus every time they go for issue of securities, they can, what they can do, they can prepare and file a document called as shell prospectus, which comes with a shelf life of 1 year. How many year? 1 year from the date of opening of the first offer. You can use the same prospectus for the subsequent offer without preparation of new prospectus. But the only requirement is that whenever you make a subsequent offer, at that time, if there are any changes, to intimate those changes, you need to file form number PS2, Information Memorandum. In that information memorandum, you will mention about changes in the financial position of the company as well as any new charges created for borrowing the loans. Clear? And this shell prospectus, along with the information memorandum, is deemed to be the prospectus of the company. Got it, everybody? What is shell prospectus? It's a prospectus which has self-life, correct? Then it's a prospectus in which the securities mentioned therein can be offered to the public through more than one issue without the issue of what prospectus? Further prospectus. Now my question is, in the prospectus, you have mentioned debentures. Mentioned what? Can you offer equity shares in the second issue?
No.
Only the securities which are mentioned in the prospectus can be offered to a subsequent issue without the issue of what? New prospectus. That is called as shell prospectus. A shell prospectus is valid for how many years? 1 year from the date of opening of the first offer. If this provision is most important, based on this they asked question in the previous examination. The last point, there is a practical question based on this last point in the previous examination. Listen everybody, if money is received, what is received? What is received?
Money.
If company receives the money before intimation of changes, changes, I have received. There was some people, or there were some people who had made an application to the company to buy shares of the company, or debentures of the company, or bonds of the company, even before I issue that or make issue the application form. You made an application form before the offer opens. Clear? Now, when I open the offer, at that time, there are certain changes. I'm intimating certain changes to you, saying that there are changes in the financial position of the company or in the charges created. At that time, if the one who has made an application to buy securities of the company, before the changes are communicated to him, if he wishes to withdraw the application form, company should allow it and refund the application form. Refund the application money within how many days of withdrawal? 15 days of withdrawal. Are you guys clear with this? This is about what prospectus? Shell prospectus. So what you will write in the examination? Simple, say simple. In the law examination, they don't expect you to write as it is, but keywords must be there in your answer. If they ask what is shell prospectus, you should write it's a prospectus in which security specified therein can be offered to the public through more than one issue without issue of fresh prospectus or further prospectus. Further, shell prospectus is valid for a period of 1 year from the date of opening of the first offer. Next, every time when the company makes a subsequent offer, company shall file form number PS2, or you can just say information memorandum with the ROC as well as to the public, intimating changes in the financial position of the company as well as new charges created. This information memorandum along with the shell prospectus is deemed to be the prospectus of the company. Further, if any person has made an application to buy the securities of the company before changes are informed to him and wishes to withdraw the application, company shall refund the money within 15 days of application for withdrawal. That's it. Shell prospectus. What prospectus? Can every company use shell prospectus? No, only those company which are specified by SEBI. Sir, why SEBI will come into picture, sir? It's a prospectus, sir. Moment it is a prospectus, it is a public issue. Moment it is a public issue will come into picture. SEBI will come into picture. Obviously, SEBI will say, whom I will allow. Even the contents of prospectus are prescribed by whom? SEBI. We discussed now a prospectus. As per section number 26, a prospectus of the company should contain such information and such details which are prescribed by SEBI by making regulation on this behalf. Because who has the power? SEBI. Section number 24. Are we clear with this, everybody? Next, red herring prospectus. What prospectus? Red herring prospectus. What is red herring prospectus, sir? Simple, say simple. It does not contain the price or the quantum of securities offered. Why? Because the company is going for book building to ascertain the price at which the company is willing to sell the shares. In case of red herring prospectus, you mention the floor price and the cap price. What price?
Floor price.
What is floor price? Minimum price, maximum price. Then you will see demand in the market. Then you fix the price. Once you close the offer, once you fix the price, you mention it in the prospectus and you file it with whom? ROC and SEBI. Clear? So what is red herring prospectus? Does not include the complete particulars of what? Quantum or the price of securities offered. It is filed with whom? ROC. How many days prior to the opening of the issue? 3 days. On the closure, file what? Prospectus with whom? ROC and as well as the SEBI. Then comes abridged prospectus. You are asking about it. Abridged prospectus. What is abridged prospectus, sir? This word must be there in your answer. It's a memorandum. It's a what? Containing such salient features as prescribed by SEBI in consultation with central government. Again, who prescribed the salient features? SEBI. Why, sir? Why? Because people are lazy enough to read the entire notes. See, I have already given the notes. But it is very difficult to read 1 day before the exam or 2 days before the exam, right? For them, what I have given? Short notes. Shortened form of prospectus is called as what? Abridged prospectus. Abridged means reduced. And law mandates it. Section number 33 mandates it. Every application form issued by the company should be accompanied with what? Abridged prospectus. If I am issuing an application form, attach what? Abridged prospectus. Mandatory.
When prospectus is given, then abridged prospectus should also be given.
Issue of prospectus along with application form is not mandatory. Here it is, if I am giving application form to Bashit, along with the application form, it must have a abridged prospectus. Mandatory, other than 2 exceptions.
What is this application?
Application to buy company shares, sir. Remember, application money received, allotment of shares, sir. I issue prospectus. Issue what? Issue what? Prospectus. You make an application to me, then I do allotment, then I get the shares. So whenever I issue application form for purchase of shares of company or securities of the company, along with that, there should be what prospectus? Abridged prospectus. What is abridged prospectus? It is a prospectus which contains such it's a memorandum which contains such salient features as specified by whom? SEBI. Are there any exceptions where an application form is not required to be accompanied with abridged prospectus? What is the first one? Underwriting agreement are not offered to the whom? Public or to the existing members. If it is not offered to the public, not required. If it is offered only to whom? Existing members, not required. However, if anybody asks for full prospectus, is the company bound to give the full prospectus? Yes. Understood? This is about abridged prospectus. Next one, 34, 35, easy. Listen everybody, 34, 35. What is 34? Criminal liability. What is 35? Civil liability. Based on this, they ask questions in the examination. They might ask again in the examination. Simple. If you know the concept, you can answer this question. Simple, say simple. First, you should know what is misstatement in the prospectus. What is misstatement in the prospectus? Any untrue statement or misleading information or omission or inclusion. What is the first one? Untrue. means false or misleading information. Information is there, but it is misleading. Next one, omission. The information is material, but not mentioned. Second one, inclusion. That is not necessary, but you include it to showcase that you have done something, even though you have not done something. That is considered as what? Misstatement. What statement? For example, you have declared dividend in the last year out of reserves. You mentioned the fact that you have declared dividend, but you did not mention the fact that it is declared out of reserves. Is this information misleading? Yes, it is misleading. Why? Because if you mention that you have declared dividend, you just mentioned that you have declared dividend. What I will presume as an outsider, I will presume that it is out of profits. Whereas company suffered losses in the preceding financial year. Misleading information, misstatement. It is true. You're not lying anything here. Correct, right? It is not untrue. It is true, but misleading. So, misstatement means untrue statement, misleading information, omission or inclusions. Omission or what? Inclusions. It is called as misstatement. If there is a misstatement, is a person punishable, not punishable? Who is punishable? Every person who has authorized the issue of such prospectus is liable under section number what? 447. Punishment for fraud. What is the punishment for fraud? Depends upon the amount of fraud. 1% of turnover or 10 lakh, whichever is less. If it is that amount of fraud is done, then minimum 6 months, maximum 10 years, public interest minimum 3 years, and a fine of 3 times the amount of fraud involved. If it is less than the 1% of turnover or 10 lakh, whichever is less, then up to 5 years of imprisonment and a fine of 50 lakh rupees. Clear? That is the criminal liability. You go to jail. Then comes civil liability, based on which they can ask question in the examination. Every person who has authorized the issue of prospectus is also liable to compensate a person who has suffered the loss. Because of you, because of your wrong statement, I applied for shares of the company, I lost all my money in the market. Who should compensate to me? Huh. Who should compensate something? Who should compensate to me? Company, correct. What if company suffered loss? Company's director, expert, or officer, or every person who has authorized the issue of what? Prospectus would be liable to pay compensation to me. Based on this, they can ask question in the examinations. Clear? Listen, everybody. Who is liable? Director, authorized to be named as director, promoter, authorized the issue, or expert. All these persons are responsible. Who is responsible? Director of a company. Any person who has authorized his name to be there as what? You're not director of a company, but your name is there as a what? Director of a company with your authorization. Liable. Next one, promoter. Or any person who has authorized the issue. Or an expert. All these persons will be held liable to pay compensation to every person who has sustained the what? Loss. Got it? But exception is what most important, where a person would not be held liable for the misstatement in prospectus under section number 35. What is the first one? Director withdrawn the consent before the issue and the prospectus is issued without his what? Consent. May director whom? By default I am responsible, but however, if I have not given a consent for issue of prospectus and the prospectus was issued without my consent and I have given a public notice about this, then I'm not responsible. Understood? What is the first condition? Withdrawn the consent and the prospectus was issued without my consent. I have given a reasonable notice to the public that the prospectus was issued without my consent. Clear? Second one, he has made statement. I have made statement. I have made what? Statement on the authority of an expert. I did not make this statement on my own. I made this statement because somebody else said it. He's an expert and he has given his consent to include that statement in the prospectus. Then I am not responsible. You would be responsible. You are a CA. You gave some statement. I made that statement in the prospectus and you have given a consent for this. Then I am not responsible because I'm innocent. Because I believe that whatever the information you gave or statement you gave is true. What if I know it is false? Both of us are responsible. Make sense? Yes or no? Can you guys read that, please? Has made any statement on the authority of an expert who believed to be competent and the expert had given his consent and not withdrawn it. Clear? Next one, he had reasonable ground for believing the statement to be true and that he did believe it to the true up to the time of what? Allotment. Then only the director is not responsible. See, if there is a question, according to me, there will be a question based on exception. Rest everything is tested in the examinations, earlier examination. They will ask when director is not responsible. Is director responsible for misstatement in the prospectus to pay compensation? Is promoter liable? Director liable? Is promoter liable?
Yes.
Director liable? Then who else? Who else? Expert liable. But are there any cases director is not responsible when
He withdrew his consent.
he has not given a consent or withdrawn a consent before the issue and the prospectus was issued without his consent and he has given a reasonable notice that the prospectus was issued without his consent or knowledge and he has made an statement on the authority of an expert who he believed to be competent and he has given a consent and he has believed that the statement is true till the time of allotment. Time of what? Allotment, or the statement was a correct copy. What copy? And of some extract of an official document. What document? ಅದು ಹೆಂಗಿತ್ತು ಹಂಗೆ ಕೊಟ್ಟಿದ್ದಾನೆ. It is not considered as misstatement and I will not be responsible. Even if it is wrong statement. ROC gave some certificate. In that there is some mistake. I gave the same certificate along with prospectus. It's a wrong thing. Will I be held responsible? Why no? It's an extract of an official document. Responsible, not responsible? Not responsible. Yes or no? Next one, prerequisite to claim for damages. Claim for what? Damages. You can claim the damages in the following situation. What is the first one? Misrepresentation was there in the prospectus and it is what? Material fact. What fact? Should be material fact, not immaterial fact. How to decide materiality, sir? You guys know better than me. Auditing. Materiality concept. What concept? Materiality concept. Yes or no? Next one. Person is intended to act upon it. Means you would have acted upon that information. Now what if I made a wrong statement, but you know the truth? You applied for shares of the company. Can you claim compensation? No. You can claim it only when you act upon it, believing it to be true. Understood? Now what if I issued prospectus or offer document to Mr. X? He took allotment of shares. He sold it to Y. Now Y want to file a case for misstatement. Can you file a case? No. Because you did not buy my company share based on misstatement. But can X file a case? Yes or no? X is the only one who can file a case. They asked this question in the previous examination. Not in the previous examination means previous examinations. Okay, last one. Person suffered the damages as the consequences of acting upon such fraudulent misrepresentation. You should have suffered the what? Loss. Without loss, you cannot claim the compensation under section number 35. Are we clear with this, everybody? Yes or no? 36. Fraudulently inducing a person to invest. If you observe the section numbers carefully, it is saying inducing a person. The main element for a punishment under section number 36 is that there should be inducement. What is inducement? Influencing. It means you make a person to do something or not to do something which he will not do or he will do if you don't do certain things. If I create a fake document, it is called as forgery. Called as what? Forgery. With that forged document, if I induce you to do something, that to enter into contract, or to give a loan, or to sell securities, or to buy securities, that is called as fraud. A boy create fake income tax return statement. That is called as what? Forgery.
For what purpose?
Doesn't matter. He created a fake GST certificate or fake income tax return. He showed that to a girl. Girl believes it. She gives a consent to marry him. That is fraud. He did forgery. He did fraud. And because of that, the girl has suffered some damage, the harm to her body or reputation or a mind. It is called as cheating. Called as what? Cheating. Artha agta idea? So all three are involved here. In the same way, section number 36, listen everybody. Idರಲ್ಲಿ three provisions ಬರುತ್ತೆ. 36 deals with a situation where you provide false information or false document or a statement or a forecast or you conceal the information with the intent to induce. For example, I have a balance sheet. In the balance sheet, I provide a certain wrong information. By providing wrong information, I induce you to enter into a contract with me to invest 50 crores in my company. Am I punishable? Not punishable. Punishable under section number 36 because I fraudulently induce you to invest in my company shares. And this covers three scenarios. What is the first scenario? To make an agreement to acquire or sell or subscribe or underwrite any securities. Or make an agreement to secure a profit of to any parties from the yield of securities. Because of you purchase it, somebody is going to get a benefit of it. Clear? And the third scenario is that to obtain credit facility from whom? Any bank or financial institution. You want loan. You provide some wrong information, wrong forecast, wrong material. You conceal material information. Then it is called as what? Fraudulently inducing a person to invest money in the company, and you would be punishable under section number what? 447 of the Companies Act. Section number what? 447. Any person knowingly or recklessly. What is knowingly? Purposefully. What is recklessly? Carelessly. makes false promise, statement, forecast, conceals any material information to induce a person to make an agreement for acquiring, disposing, subscribing, underwriting any securities, or to secure a profit to any of the parties from the yield of securities, or to make an agreement to obtain credit facilities from any bank or financial institution, he would be liable under section number 447. And we know what is section number 447. Punishment for fraud. You are a fraud and you are liable to be punished under section number 447. Understood? You should write 3 agreements, knowingly or recklessly. 37 simple. 37 says what action an aggrieved person can take if a person has purchased shares of the company by fraud or wrong information. Either he can sue individually or he can sue collectively. That is called as class action suit. What suit? Class action suit, where group of persons having common cause of action comes together and file a case. Either you can file a case individually or collectively under section number 34 or 35. What is 34? Criminal liabilities. What is 35? Civil liability. Instead of you guys filing a separate case, come together, file one case. It is called as class action suit. It is also called as joinder of parties. What are parties? Joinder of parties. Next one, punishment for personation for acquisition of securities. What is personation? You act like somebody which you are not. You represent yourself as someone which you are not. Or you apply for shares of the company in fictitious name. Then you would be punishable under section number 38. Section number what? 38. If you observe the words here, if any person make an application or abates an application, what is abate? Support or attempts in a fictitious name. What name? What is fictitious? Imaginary name. Or makes a multiple applications for acquiring securities of a company. Or if you make an application or abet in a fictitious name to allot or register any transfer of securities, either for allotment or for what? Transfer of securities, you would be liable under section number what? 447 of the Companies Act. Then most important section numbers of chapter number 3 is 39, 40, 42. Section number 39, allotment of securities. A company can make allotment of securities only it has obtained the minimum subscription and has received minimum application amount. And the minimum subscription to be received is how much? 90% of the issue. And the amount payable on the application shall not be less than 5% of the nominal value of shares as per the Companies Act. But as per SEBI regulation, it is 25% of the issue price. Again, MCQ question. It is 5% of nominal value in case as per Companies Act. As per SEBI, 25% of the issue price. Issue price includes even premium. Issue price is different. Nominal value is different. Agree with this, everybody? Nominal value means face value. Issue price means what? Issue price means nominal value as well as the premium. Discount are not possible. Why? Because issue of shares at discount is prohibited as per section number what? 53 of the Companies Act. Understood?
Yes.
Condition only on the receipt of minimum amount as subscribed and sum payable on the application is received. Minimum subscription is how much? 90% of the entire issue. The amount payable on the application shall not be less than how much? 5% of the nominal value of security, but as per SEBI, it is 25% of the issue price. MCQ question. Next one, failure to obtain the minimum subscription and minimum application money. Dono, not one, dono. In that scenario, company must refund within how many days? 15 days. If the company fails to obtain minimum subscription within how many days? 30 days from the date of opening of the offer, then the company shall refund the money within how many days? 15 days. Return of allotment. Company shall file return of allotment in the form number PS3 with the ROC within how many days of allotment? 30 days of allotment. Keep this in mind. Money can be used only after filing return of allotment. Keep this in mind. Whenever a company makes an offer, it should keep that money in a separate account in a scheduled bank. And that money can be used only for two purposes, either for allotment or for refund. After you file PS3, then you can use it for what purpose? Specified purpose. PS3 file करना compulsory है. Within how many days? 30 days. Again, keep this in mind. For public issue, it is 30 days. For private placement, it is what? 15 days. PAS3. Getting it? And what is the rate of interest payable? 15% per annum. But for private placement of securities, it is what? 12% per annum. Understood? Next one. Securities to be dealt in the what? Stock exchange. Most important. Whenever a company offers securities to the public, what is mandatory? Listing is mandatory. What is mandatory? Listing is mandatory. So a company making public offer should make an application to one or more stock exchange to obtain permission to list its securities, and the same to be specified in the what? Prospectus of the company. What of the company? Prospectus of the company. What of the company?
Prospectus.
So I repeat, every company making the public offer should mention in the prospectus that they have applied to one of the stock exchanges to obtain the in principle approval. It is not mandatory that you list in both exchanges, but you should list it in any of the one recognized stock exchange. Clear with this? Second one, you should open a separate bank account in a what bank? Scheduled bank, to keep the what money? Application money, and this should be used either for refund purpose or allotment purpose. One more provision is there under section number 40. Payment of commission to whom? Underwriters. A company can pay commission to the underwriter only if it is authorized by articles of association. Plus, there is a limit on the payment of commission to the underwriter. This commission can be paid either out of profits of the company or out of proceeds of the issue of securities. The underwriting commission is payable only on the portion of securities which are offered to public. If securities are not offered to the public, not offered to whom? Public, you cannot pay commission on that. Only if it is offered to the public, you can pay what? Commission. If it is not offered to the public, you cannot pay what? Commission. Understood, everybody? Yes or no?
Yes, sir.
Next one. Prospectus shall disclose the name, rate, amount of consideration, commission not paid on securities not offered to whom? Public. Based on this point, they will ask you guys to calculate the amount of commission payable. For example, let's say a company is offering 1,000 shares. Out of 1,000 shares, 500 shares are offered to public. Remaining 500 are sold to directors of the company. Now tell me, you calculate commission on 1,000 or 500? Only those securities which are offered to whom? To the public. The amount of commission payable shall not exceed, in case of shares, 5% of the price at which shares are issued, or the rate mentioned in the AOA, whichever is less. Shares 5%. Debentures 2.5%. Of the issue price, again, what price up? Not nominal value, issue price. They will confuse you with this in the examination. Clear with this? Next one is what receipt? The global depository receipts. I will not go detail to this. What is global depository receipts? These are the derivatives. These are the what? Derivatives are these are the instruments which are issued by an Indian company to mobilize the capital outside India in a foreign currency. What currency? Foreign currency. If an Indian company wants to mobilize foreign money in the foreign currency outside India, they can convert their shares or securities into what? Depository receipts. If it is offered in USA, ADRS. If it is offered anywhere else, it is called as what? GDRS. Clear with this? Yes or no? This offer of GDRS should be authorized by special resolution. I hope you guys know how it is offered. Remember, company offer them to whom? To the domestic custodian. What custodian? They will direct it to whom? Foreign overseas depository. What depository? Overseas depository. And they offer the what? Receipts. When they offer these receipts, what receipts? ADRS or GDRS. Either they can offer it on private placement basis or public issue. What issue? Public issue. Where they make this offer? Outside India. Correct, right? And these can be listed or it can be unlisted. Now, the one who is holding these ADR, GDRS, they will not be called as shareholders. They don't have any voting rights. Till the time they convert this ADR or GDRS, they will be considered as what? They will not be having any voting rights. Till the time that foreign overseas depository is the one who exercise the voting right. On conversion, they can vote. Till the conversion, in my register of members, I mention whose name? Depository name. Whose name? Depository name. Done with 41. Next one, 42. The most important section numbers, which everybody thinks is important. They may ask, they may not ask questions in the upcoming examination. Listen, private placement of securities. Before I start with this, I will ask you questions to you guys. You guys tell me the answer. With the answer and question and answer, we will complete this topic. Simple as that. Tell me, can a private company do private placement of securities? Public company?
Yes.
If public company is doing private placement of securities, is it required to comply with prospectus provisions? Listen,
No.
what is private placement, sir? It is one of the way in which you offer your securities. Private placement can be used both by private company as well as public company. But the restriction is that, and if it is a private placement of securities, SEBI will not intervene. Because SEBI will come into picture only when the securities are offered to whom? To the public. If you are a private company or unlisted public company or a listed company, but if they're not offered to the public, SEBI will not interfere. And if it is a private placement, what placement?
Private placement.
Prospectus provisions are not applicable. And the document by which we make the offer of securities is called as offer letter. What letter? Not a prospectus. Now, as I discussed, now everybody concentrate. Look here, everybody. Look here, look here, look here. Look here. What type of company can do private placement of securities? Private, public, all type of companies can do private placement of securities. By passing what resolution? Special resolution. However, if it is a non-convertible debentures, or debenture, that can be done by passing only a board resolution if your existing borrowings does not exceed 100% of paid up share capital, free reserves, security premium account. Only what resolution is sufficient? Board resolution is sufficient. And keep this in mind, you should pass resolution every time you make a offer for private placement of securities. It's not like one time in a year. But however, if this offer is made to the QIBs, then one single resolution is sufficient to make an offer more than once in a year. Understood? One more information. Allotment or this proceeding should be completed within 1 year of passing resolution. If you don't complete this entire procedure within how many years? 1 year. You should pass one more resolution for allotment. Got it? Now resolution is passed. What is passed?
Resolution.
Which company can pass resolution? Any company. What resolution? If it is non-convertible debentures and if debt does not exceed so much, 100% of paid up capital, free reserves, SP account, by passing what resolution? Board resolution. Other company, special resolution. Whenever you pass special resolution, you must file form number MGT14 with the ROC. Without filing MGT14 with ROC, you can't issue the offer letter. Clear? Now, passed. Then company must identify the person to whom the offer is to be made. Board of Directors will record the name of the person to whom the offer is to be made in the form called as PAS5. And this offer to be made to the persons in a financial year should not exceed 200 persons. How many persons? How many persons? 200 persons in aggregate in a financial year. This limit is for each security. The offer made under private placement of securities should not exceed how many persons? 200 persons in a financial year. If it goes beyond 200, 201, public issue. And it is no more called as offer letter. It is called as what? Deemed prospectus. For the purpose of this 200 limit, you should not include allotment to the qualified institutional buyers. QIBs will not be counted for the what? 200 limits. What are QIBs? Are big financial institutions like housing finance companies. They are registered with the SEBI. Clear? And also any allotment of shares to the employees of the company under the ESOP scheme. What scheme? ESOP scheme. You will not count them for the purpose of what limit? 200 limit. Other than these two, the offer made under private placement of securities should not exceed 200 persons in a financial year. And this limit is for each security. Equity shares 200, preference shares 200, bonds 200, debentures 200. Understood? And this offer should be made only to what person? Identified person. What person? Identified person through an offer letter called as PAS4. PAS4. Offer come application form. Same form is offer as well as what? Application form to a specified person. What person? Either by registered post or by speed post or by electronic mode. And only the person to whom the offer is made can make an application for buying the securities of the company. And an offer under private placement should not carry or does not carry right of renunciation. No question of renunciation in case of offer under private placement of securities. Unlike right issue. What is renunciation? Transfer. If offer is made to Mr. X, if you can transfer it to Y, it is called as what? Renunciation. The right of renunciation is not available in case of private placement of securities. If it is to Mr. X, Mr. X. If it is to Ramya, Ramya. If it is to Soumya, Soumya. If it is to Deepika, Deepika. Deepika cannot transfer it to Ranveer Singh. But right issue, it is possible. Clear with this, everybody?
Yes, sir.
Now, offer is made. What is made? Offer is made. The person can apply for securities of the company by making an application along with the money. Along with what? Money. That money should be paid only out of his account in the form of DD, check, or electronic mode. No cash is allowed. And the money received by the company should be kept in a separate account, not in the company's ordinary account. Separate account in which bank? Scheduled bank, not in some local bank. Local bank is not cooperative bank. Should be in what bank? Scheduled bank. And once you receive the money, the allotment should be done within how many days? 60 days of receipt of money by passing board resolution. If the allotment is not done within 60 days, the amount should be refunded within how many days? 15 days. If not done, you should pay interest of 12% per annum from the expiry of 60th day. It is also considered as deposit. And the amount kept in this scheduled bank can be used only for two purposes, either for allotment or for refund. Even if allotment is done, you can't use that money unless until you file form number what? PS3 with whom? ROC. And the PS3 should be filed within how many days of allotment? 15 days of allotment. Clear with this? As it is a private placement of securities, no company shall use any marketing channels or distribution channels or any agent for the purpose of offer of the securities. There cannot be any public advertisement. If there is a public advertisement, that is prohibited. It's considered as what offer? Deemed offer, deemed public offer. One more thing. Sir, how many offers I can make under private placement, sir? Any number. It is left to you. You can do hundreds of offers. We don't care. But number should not go beyond how many? 200. Number ध्यान पे रखो. Number ತಲೆಯಲ್ಲಿ ಇಟ್ಕೋ. ಎಷ್ಟು? 200 ಅಷ್ಟೇ. Excluding whom? Qualified institutional buyers and employees under the ESOP. What if I made first offer? Before completing first offer, can I make one more offer? No. The first offer should be either completed or abandoned or cancelled or revoked. Then only you can make what offer? Second offer. How many persons in a financial year? 200. Now my question is, can I offer under private placement? Can I do private placement of securities? Listen, I'll give a list. You should tell me whether it is within the limit or beyond the limit. Are you guys listening to me? 100 equity shares. 150 preference shares. Is it within the limit or beyond the limit? Why within the limit? 200 per security. Equity is different. Preference is different. What if I offered convertible debentures of 100, partially convertible debentures of 100, fully convertible debentures of 100, non-convertible debentures of 100, 10% debentures of 100, 12% debentures of 100, 13% debentures of 100. Is it within the limit or beyond the limit? Why?
Because it is in quality of guidance.
Correct. Here the word is what? Security. Just think from the object of the law, right? If you allow this, what people will do, na? 1%, 1, 2%, 1, 3%, 1, like this, they will do what? Private placement of securities. To how many persons? 1 lakh people in one financial year. Without complying with what? Prospectus and listing argument, listing obligations. That is why it is for what? Each security, not for same kind of securities. Understood? This is your private placement of securities. You guys tell me the allotment should be done within how many days of receipt of application money? How many days? If not, how many days? 15 days. If not, pay interest of how much? 12% per annum. Clear with this? With this, we are done with chapter number 3. Prospectus and allotment of securities. We have covered 20 pages. How many? 20 pages. Understood? Any questions, any doubt in these topics, whichever I covered till now? No? Okay. Section 1, short title, extent, commencement. 2, definition. 3, formation of company. 4, MOA. 5, AOA. 6, act to override MOA and AOA. 7, incorporation of company. 8, section 8 company. 9, effect of registration of company. 10, effect of registration of MOA and AOA. 10A, commencement of business. 11, omitted. 12, registered office. 13, alteration of MOA. 14, alteration of AOA. 15, alteration to be included in the MOA and AOA. 16, rectification of name. 17, copies of MOA, AOA, agreement, resolutions to be given to the members. 18, conversion of company. 19, subsidiary company to not to hold shares in holding company. 20, 21, 22, execution of bills of exchange, promissory note, check and deeds. 23, public issue and private placement. 24, SEBI parts. 25, deemed prospectus. 26, contents of prospectus. 27, variation. 28,
Offer first.
29, dematerialization. 30, advertisement. 31, shell prospectus. 32, red herring prospectus. 33, abridged prospectus. 34, criminal liability. 35, civil liability. 36, fraudulently inducing a person to invest or make an agreement. 37, action by affected party. 38, punishment for personation. 39, allotment. 40,
Yes.
also underwriting. 41, GDRS. And 42, private placement of securities. We recalled the provision. At the same time, we also discussed few concepts wherever it is required, especially section number 42. Understood? Yes or no? Clear with this, everybody? Chapter number 4, share capital and debenture, section number 43 to 72. important chapter. Section number 43, kinds of share capital. See, section number 43 provides that the applicability of section number 43 may be exempted if articles of association of a private company or IFSC company expressly provides for it. Means private company and IFSC company can exclude the applicability of chapter number 4. Chapter number 4. Clear? Now, kinds of share capital. What of share capital? Kinds of share capital. We know this. There are two types of share capital. First of all, what is share capital? The capital which is mobilized by issue of shares are called as share capital. What is share? Share is a share in the share capital of a company and also includes stock. There are two types of share capital: equity share capital, preferential capital. What is preferential capital? It's a capital which carries preferential right with respect to payment of dividend. The dividend can be subject to tax or free from tax. It can be paid at a fixed percentage or a fixed amount. Should I include all these words? Preferential right with respect to payment of dividend. Dividend can be paid at a fixed rate or a fixed amount, and that can be subject to tax or free from tax. Now tell me, is dividend distribution in India, is it subject to tax or free from tax? Subject to tax. It is also taxable in the hands of the receiver also. Correct, right? And there is one more right available to preferential holders. They have a right to preferential right compared to equity shareholders to receive their capital in preference to equity share capital. They have a preferential right for the repayment of capital. Repayment of what? Capital. And also to participate in the surplus of the company if it is expressly agreed. That is why it is called as what capital? Preferential capital. What is preferential capital? It's a capital which carries preferential right with respect to payment of dividend at a fixed rate or a fixed amount, which may not be, which may be subject to tax or free from tax, and has a preferential right with respect to the repayment of capital at the time of winding up of the company. Correct, right? Whether there is a right to participate in the surplus of the our company or not. What is equity share capital? Which is not a preferential capital. Now, equity share capital can be classified into two types. One is normal equity shares, another one is equity share with differential right. It can be with respect to dividend or it can be with respect to voting right. Correct, right? If it is a listed company, the company must comply with the SEBI provision. If it is an unlisted company, what company? Yes. Then you should comply with the section number 43 of the Companies Act. Clear? A company can issue shares with differential right to any person. It can be promoters or it can be even to the outsiders through a private placement of securities. See, what is the advantage of private placement? Advantage is if you are offering equity share with the inferior voting rights, means generally one share is equal to how many voting right? One voting right. If you are saying 10 share is equal to one voting right, means there will not be any dilution of control or dilution of voting rights. Correct, right? Dilution of what? Voting rights. Startup company can raise the capital without dilution of control. Dilution of what? Control. That is the advantage of what? Shares with differential right. Clear with this? Yes or no? We have discussed the concept of shares with differential right detail mein in the class. Now we are revising the provisions of shares with differential right. A company, if it want to offer shares with differential right, it must satisfy the following condition. What is the first one? Authorization in the AOA of a company. क्या होना चाहिए? Authorization in the AOA of a company. Simple say simple. There should be a authorization in the AOA of a company. And the second one, company must pass a ordinary resolution in the general meeting of the company. If it is a listed company, through what ballot? Postal ballot. See, postal ballot is compulsory. We will discuss that under the section number 110 of the Companies Act. Okay? Next one. The portion of SDR shall not exceed 74% of the what?
Voting right.
Total voting power. The voting power of shares with differential rights shall not exceed 74% of the what? Total voting power. So what is the reason behind this, sir? Correct. What promoters can do, right? What they can do, they can allot shares to themselves at the superior right. And by that way, they can take over the control of the company. So इसीलिए the maximum percentage of voting rights of SGR is how much? 74% of the total voting power. Clear? Next one. This is what most important. Not defaulted in filing financial statement, annual return the last how many years? 3 financial year. It should have not defaulted in filing financial statement, annual return in the last 3 financial year. And most important, no subsisting default. There is a difference between this one and this one. Based on this, there can be MCQs in the examination. Getting it? Now, no substituting default in the payment of declared dividend or mature deposits or redemption of preference shares or debentures or payment on interest on deposits, debentures or dividend. Clear? So these are what? Declared dividend. Second one, mature deposits. Third one, redemption of preference shares or debentures. And the fourth one, payment of interest on deposits, debentures or dividend. Interest for the non-payment of deposits or debentures or dividend. If there is subsistent default, you cannot go for SDR. But whereas, if there is a default in these things, you cannot go for issue of SDR. For how many years? 5 years. From the date the default is remedied. Up to how many years? 5 years. That is in the payment of preference dividend. What dividend? If the payment of dividend to the preference shareholders is not done, or if you have not repaid the term loan taken from the financial institution, or interest on the loan, or any statutory dues like tax or PF or EPF, all these things, and transfer of money to which account? IEPF account. In this case, you cannot go for issue of SDR up to how many years? 5 years from the date the default is remedied. You just remember these things, okay? If they ask in the examination, remember these 4 things for which there should be gap of how many years? 5 years. What are these? Repayment of preference dividend, loan from the banks, interest on the loan from the bank. Next one, statutory dues, and next one, IEPF. In case of these default must be remedied, and there should be a gap of how many years? 5 years. Are we clear with this? And not penalized by a court in the preceding how many years? 3 financial year. Same like not defaulted in filing the financial statement and the annual return. No conversion, most important. You cannot convert equity shares into SDRs, SDR into equity shares. You can originally issue SDR. That's it. Cannot be any conversion. It shall enjoy all the rights like bonus, right issue, everything. It has pari passu with what? Other shares. It is also equity share. When company offers right shares, even SDRS holder gets the what right? Same right. The only thing is they would be having a differential right with respect to dividend or voting rights. That's it. Bonus shares, right shares, it is also given to whom? To the SDRS holder. Clear with this? Then next one, disclosure in the what report? Board report. What report?
Board report.
Company must disclose about the SDRS portions in the board report. Are we clear with this? Yes or no? These are the provisions with respect to issue of SDRS by a company. However, section number 43 not applicable to a public company, IFRS public company if AOA provides, and also private company if AOA provides and company has not defaulted in filing financial statement as well as the annual return. Clear with this? Next one, section number 44, nature of shares. Tell me, what is the nature of shares? Is it a immovable property or movable property? Transferable from one person to another person. That is why if there is a prohibition on the transfer of shares, it is not valid, because shares transfer cannot be prohibited. There can be restrictions, and that too only which company can provide restriction? Private company. There cannot be a prohibition. Clear? Next one, numbering of shares. What of shares? Every share should be numbered with a distinct number, but this is not applicable if the shares are held in what form? Demat form. Clear? Next one, certificate of shares. What of shares? Every company shall issue the certificate of shares by passing a board resolution. It is a prima facie evidence of what? Ownership of the shares, and certificate of share is applicable only if the shares are held in physical form. The certificate of shares should be issued in the form number SH1 on the surrender of letter of allotment or fractional coupon or letter of what? Acceptance of renunciation. The letter of renunciation will come into picture in case of what issue of shares? Right issue of shares. What issue of shares are? Now I offered shares to her, but she renounced it in favor of you. Now you should accept it by communicating the same to the company. On receipt of acceptance letter, company will allot shares to you and issue the what? Certificate of shares in form number what? SH1. Time limit for issue of certificate of shares in case of subscribers to MOA. The certificate of shares should be issued within how many months? From the date of incorporation. In case of allotment of shares, 2 months from the date of allotment. In case of transfer and transmission of shares, within 1 month of approval of allotment. In case of allotment of debenture, within how many months? 6 months of the allotment. Duplicate certificate of shares, if it is lost or destroyed or defaced or mutilated or torn, the company can issue the what certificate? Duplicate certificate. Company can also demand the indemnity bond. What bond? Indemnity bond. This is about certificate of shares, because it is bit outdated now, because we are shifting from what? To the dematerialized form of securities, and we know that dematerialization is compulsory for every company other than what company? Small companies, as per section number 29 of the Companies Act 2013. Clear? 47, 48 is what most important. Based on this, they ask questions many a times in the examination. Now, 47 says voting rights. What right? First one is equity shareholders. What shareholders? Equity shareholders. See, guys already know this provision, but let me put it in the words which you can use it in the examination. See, equity shareholders. What shareholders? Equity shareholders have a right to vote on every resolution placed before the members are placed before the company. So if they ask question about voting rights, what is the first line you write? You should write equity shareholders. What shareholder? Equity shareholders or equity shares has a right to vote on every resolution. What resolution? Placed before the meeting of the company or placed before the company. The voting right of an equity shareholder will be in proportion to his share in the paid up equity capital of the company. What of the company? Paid up equity share capital of the company. For example, out of 10,000, out of what? 10,000 equity shares, you are holding 1,000 equity shares. How many equity shares? 1,000 equity shares. What is your proportion? Your proportion is what? Is 1 by 10. 1/10. That is 10%. Clear? This is what you should write if they ask question about voting rights. So what is the voting right? You should say equity shareholders shall have a right to vote on every resolution placed before the company. The voting right of equity shareholders shall be in same proportion that of his share to the what? Total paid up equity capital of the companies. Clear with this? Next, in case of Nidhi company, what company? Even though you are holding shares, in case of Nidhi company, the voting right shall not exceed how much? 5%. No member shall have voting rights in excess of how much? 5%. Next one, preference shareholders. Most important, preference shareholders in general, preference shareholders does not have a right to vote on the resolution placed before the meeting of the members. However, they will have a right to vote only on the resolution which are altering the rights attached to what shareholder? Preference shareholders. Only the resolution which are altering the rights of preference shareholders are for the purpose of winding up. For the purpose of what? Winding up, or for reduction or repayment. Reduction of what? Repayment of both equity capital as well as what capital? Preference share capital. So reduction of share capital requires approval of whom? Even the preference shareholders. Repayment of equity share capital, nothing but reduction of share capital, right? If a company want to repay the equity share capital, that requires approval of NCLT. At the same time, that also requires the approval of preference shareholders. Why preference shareholders approval is required? Because as per the principle, very good, very good. As per the principle, you should repay what capital first? Preferential capital, but you're going against the principle, take their approval. So these are the resolution on which the preference shareholders has the right to vote. Correct, right? But however, if a dividend is not paid for how many years? 2 years, consecutive 2 years, then the preference shareholders will get a right to vote on every resolution placed before the before the company. Understood? If preference shareholders have a right to vote, then the proportion of voting right, what right? Proportion of voting rights of the preference shareholders will be in the proportion to the what? Equity shares to the voting rights to the preference shares shall be in same proportion as the paid up capital in respect of equity shares based to the what? Paid up capital in respect of what shares? Preference shares. Getting it? So the proportion of your voting right, preference shareholders voting right, will be in the proportion of equity capital to what capital? Preference share capital. Now, for example, let's say a company is having 1,000 equity shares. How many equity shares? And 2,000 preference shares. How many preference shares? So total how much? 3,000 is the preferential. Now, out of 2,000, one person is holding 500 shares, 500 preference shares, and one person is holding how much? 250 preference shares. Sorry, 200 equity shares. Now, what is the voting percentage in this case? If both of them are having what right? Voting rights. Okay, I will do the complete it. One more person is holding 1500 and one more person is holding what? 800. So what is the voting percentage in this situation? Because both of them are having what? Voting rights. Now you tell me, what is the proportion of equity to the preferential capital?
1:2.
1 is to what? 2. Correct, right? So out of 3,000, out of what? 3,000, what is the proportion of equity capital? 1,000. What is the proportion of preferential capital? 2,000. So can we say 1 by 3 and 2 by 3? 1 by 3 is the what capital? Equity share capital proportion, and 2 by 3 is what capital? Preferential capital. Correct, right? Now we should calculate for individual person. What person? Individual person. In this case, A is holding how many shares? 200 shares. So what is 200 here? Can we say 20 by 100?
Yes, sir.
No. Or we can say 2 by 10. Correct, right? So Mr. A is holding, see, A's proportion of is holding to equity capital is how much? 2 by 10. No. 2 by 10 into what? What is the proportion of equity capital to preferential capital? 1 by what? 3. So what is the percentage you get out of this? Do calculation fast. 2 by 10 into 1 by 3. What is the percentage? 2 by 30. Correct. 1 by 15. What is 1 by 15? 6.66%. Is it? This is the voting percentage of Mr. A. Next one, Mr. B. What is Mr. B? 8 by 10 into what? 1 by 3. What is the percentage of Mr. B? Is it 26.67?
Yes, sir.
20. Okay, sir. Okay. 26.67. 26.67. 26.67. Correct, right? Yes or no? Now we should come to the what? Equity, preferential capital. What capital? Preferential capital. 2020 is done. So it is 5 by 20, right? 5 by 20 into what? 2 by 3 or 1 by 3? 2 by 3. So what is the answer for this? What is the answer? What is the answer? 16.67 percentage. Next we have one more is there. That is 2020 is done. That is one 15 by 20, right? Correct, na? 15 by 20 into by what? 2 by 3. So what is the percentage? 15 by 20 into 2 by 3. What is the percentage? 50%. So add everything. Now this person is X person is having 16%, Y is having 50%. Total is how much? 66.67% plus 26.67% plus 6.67%. Total it is how? Should be 100%. 100%. This is how you should do the calculation of what? Voting rights when both the persons are having the what? Voting rights. You will take into consideration number of vote cast in favor of the resolution and against the resolution. Accordingly, you will decide whether the resolution is passed or not passed. If it is special resolution, what resolution? Special resolution. If A and X and Y, if these three persons vote in favor of the resolution, is the resolution is passed or not passed? A is holding 6.67%. Special resolution. It's a meeting of members, right? It can't be a board resolution. Possible or not possible? Why? Because it is how much? Should be minimum how much? 75%. Are we clear with this? If in the same case, if it is a Nidhi company, none of them will have voting rights exceeding how much? 5%. Calculations is done. So if it is a Nidhi company, it should not exceed how much? 5%. Are we clear with this? Now you tell me, we know the calculations now. How to write in the examinations. If they ask any question on section number 47, you start with the provisions like according to section 47 of the Companies Act 2013. A equity shareholder have a right to vote on every resolution placed before the company. The voting right of equity shareholders shall be in the same proportion to that equity share capital, to his share equity share capital to the paid up equity share capital of the company. Clear? However, in case of a member of an Nidhi companies, it shall not have a voting rights exceeding 5% of the total voting power. Next, in case of preference shareholders shall have a right to vote only on those resolutions for alteration of rights of the preference shareholders or any resolution which directly affects the rights of preference shareholders or for reduction or repayment of share capital or for winding up of the company. However, if the dividend is not paid for a continuous period of how many years? 2 years, they shall have a right to vote on every resolution where both equity and preference shareholders have a right to vote. The proportion of voting right of equity and preferential holders shall be in the same proportion to that of the equity capital to the total paid up capital of the company or preferential capital to the total paid up capital of the company. आपको proportionate करना पड़ेगा. Are we clear with this, everybody? Let's go to section number 48. 48 is a simple provision. Section number 48 deals with what? Variation of what right? Shareholders right. Now it is only about shareholders rights, not about debenture holders right, not about other type of holders rights. Now in this situation, if you see, we can say that, or we can presume that only if a company has a different class of shares. What of shares? Different class of shares. That is in case of private company, company can have other than these equity shares and SDR, they can also have some other type of equity shares also. If articles of private company provides, they can exclude the applicability of section number 43. It means they can create a different types of equity share. Which companies? Private company. In that scenario, if they want to alter right attached to the equity shares, separate class of equity shares, or if they want to alter the rights of the preference shareholder, what shareholders? Because shareholders means what shareholders? Both equity as well as what? Preference shareholders. That can be done only if there is a authorization in the what? AOA. Only if there is authority in the AOA which authorizes the company to change the what? Voting rights. What right? Voting rights. Company can change the voting rights. Not voting rights. Variation of right. It can be dividend right or it can be voting right also. Any right attached to the shareholders can be varied only if there is a what? Authorization in the AOA. Most important, the company should take the consent in writing. What in writing? Consent in writing at the 3/4 of the holders of such class of shares. If I'm altering a preference shares, what share? In that there will be different classes. 10% preference shares is different from 12% preference shares, and 10 preference shares having first charge is different from preference shares having the second charge. Clear? They're all considered as what classes? Different classes. So if a company want to alter the rights attached to the any class of shareholders, that can be done either with the consent in writing of 3/4 of that class of security holder or shares holder, or by a special resolution. What resolution? In the meeting of that particular class. Now you can ask me a question, sir, what is the difference between these two, sir? Do they sound same or different? What is the difference? What is 3/4?
75%.
What is special resolution meeting of the particular class? 75%. Correct, right? Then what is the difference? Okay, that can be one point. See, one more point is, see, when I say consent in writing, let's say there are 3 persons who are holding shares, preference shares worth of 1 lakh. Right. If I want to change the right attached to these 3 preferential holders, separate class of preferential holders, I should take the approval of the members who are holding at least how much? 75% of that preferentials. Correct, right? Now, if you both are holding 75%, I need only you both approval. Or if you are holding 75% of the preferential holders, only one person approval is sufficient, because I should take consent of person, that is holder or holders holding how much? 75%. How much? Nothing but 3/4 in value. 3/4 in what? Value. When it comes to resolution, when I say special resolution, it is not about who is holding what. It's about how many are present, out of how many who voted in favor of resolution and who voted against the resolution. Now let's say you 3 are holding share. Correct, right? You are holding 10,000 shares, she is holding 10,000 shares, he is holding 10,000 shares. 100%. He is absent. Only two are present. Quorum is there. Out of 20,000 shares now, how many shares or how many vote should be in favor? 75%. Not out of 30,000. Why? Because when we decide resolution, we'll take into consideration only the vote cast in the meeting. Based on that, we will decide how many are in favor, how many are against it. That is the difference between passing resolution in the meeting and taking the consent in writing. It is our option. Company can decide any one of this. Clear with this? What is the first option available? Consent in writing of the holders of how much? 3/4 of that class or by a special resolution in the meeting of that particular class. Understood? Next one, variation effects. See, if the variation of one class affects the rights of the other class of holders, then you should take the consent of even 3/4 of a particular class. For example, let's say you are a preference shareholders. I'm a preference shareholders. My dividend is 10%. Your dividend is 10%. Now, company want to alter my dividend right. What right? To 12%. How much? 12%. Will that affect your right? Will that indirectly affect your right? Yes. Because I will get more, then only they will pay it to you. Then I should take consent of whom? Even the other preference shareholders. Got it? Or let's say we both are equal, but now they want to give priority for one preference shareholder over whom? Other preference shareholder. That require consent of whom? Both. So if variation of rights of one class requires the consent of affects the rights of other class, the consent of both the class must be obtained for the purpose of what? Variations. I hope you guys are clear with this. See, variation of right attached to a particular class of shareholders can be done only if there is a authorization in the AOA, and that can be done either with a consent in writing of 3/4 of that class of shareholders or by a special resolution in a separate meeting of that class of shareholders, not equity shares, that class of shareholder whose rights you want to alter. Clear? Now, if any person dissent to it, they're not happy with that. What they can do? They can approach the NCLT. But however, they must be holding minimum how much? 10%. Minimum how much? 10% of that particular class of shares. They can approach the NCLT, and if they approach the NCLT, the alteration will have an effect. Excuse me. Alteration will have an effect only when it is confirmed by whom? NCLT. Confirmed by whom? NCLT. Are you guys clear with this? Next one. Calls on shares to be made on what basis? Uniform basis. Now you guys tell me what is uniform basis, guys? Same. Now, only if it is a same class. For example, let's say there is one equity shares on which 5 rupees is paid up. There is one equity shares on which 7 rupees is paid up. Are the same class or different class? Different class. Now, when I'm calling the money from this 5 rupees paid up equity shareholder, I should call equal money from everybody. It is not like just because you are close to me, I will call 3 rupees from you. And just because other person is not close to me, I will call entire 5 rupees. It can't be done. Call should be made on what basis? Uniform basis from the same class of shareholder. Understood? Section number what? 49. Section number what? But you should decide what type of class. Class will be different from one class to another class. Correct, right? Based on the paid up value, based on the rights. Next one, company to accept unpaid share capital, although not called means calls in advance. Calls in what? Advance. Only if it is authorized by articles. Keep this in mind. A company can accept calls in advance only if it is authorized by articles. And in this case, even though company has taken the calls in advance, the shareholder will not be having the what? Right to vote on that uncalled portion. Correct, right? And at the same time, interest can be payable only if it is permitted by the what? AOA. If there is no provision in the AOA, there is no question of interest on the Interest on the what? Calls in advance, and even company cannot pay dividend on the calls in advance. Are we clear with this, everybody? Now you guys tell me, can a company accept calls in advance? Yes, only if it is authorized by what? AOA. Can company pay interest on that? Yes, only if it is permitted by the what? Articles of Association. Articles of what? Association. Section number 52, not 52, 51. Important. See, company, as per section number 123 also, company shall always pay dividend on what value? Face value. What value? Correct, right? Dividend is always declared and paid on what value? Face value. But however, company, if it is authorized by articles of association of a company, it can pay dividend on what value? Paid up value. What value? Are you guys getting it? Generally, as per section number 49 of the Companies Act provides that company can, so not 49, section number 51 provides that company can pay dividend on what value? Paid up value, only if it is permitted by the articles of association. Company can pay dividend in proportion to the amount paid up only if it is authorized by articles of association. Understood, everybody? Next one, section number 52. Based on this, they asked question in the last examination. Simple question. Whenever a company issues shares at a premium, an amount equal to the nominal amount equal to the value of premium should be transferred to which account? Security premium account. Everybody listen here. Listen to me now. Concentrate. Okay, listen. Whenever a company issues shares at a premium, she said what? Premium, an amount equal to the premium shall be transferred to a separate account called as the securities premium account. What account? Securities premium account. Correct, right? Whether the company has received the sale in cash or not. Means even when a company issues shares for a consideration other than cash at a premium, an amount equal to the premium should be transferred to which account? Securities premium account. The amount in the security premium account can be used only for the following 5 purposes. What are they? First one, issue of fully paid bonus shares. Second one, to write up the preliminary expenses. Third one, any expenses, commissions, or discount on issue of shares or debentures. Next one, premium payable on what? Redemption of preference shares or debentures. Last one is what? Buyback under section number what? 68. However, if you are complying with the Ind AS, what is Ind AS, then you cannot use it for how many purpose? Two purpose. First one is what? To write up the preliminary expenses, and one more is that to pay premium and redemption of preferential. Clear with this? Yes or no? Unless specifically mentioned, you should always write all the 5 points. Clear with this? Next one. Prohibition on issue of shares at discount. A company shall not issue shares at what? Discount. Shares at discount, not debentures at discount. Company cannot issue shares, both equity as well as what? Preference shares. At what? Discount. Not allowed. At premium? Allowed. Are there any exception? Yes. Two exception. One is what? Shares, that is sweat equity shares, and one more is what? Conversion of debt into equity. In these cases, company can offer shares at what? Discount. Only for these two reasons. What is the first reasons? Sweat equity shares. Second one, conversion of loan into shares by way of resolution plan sanctioned by the RBI or for internal reconstruction. Conversion of loan into equities. Clear with this? Next one, section number 54. Sweat equity shares. What shares? What is sweat equity shares? The equity shares which are given to the employees or directors of the company at a discount or for consideration other than cash for providing know-how or value additions or intellectual property rights. That is called as what? Sweat equity shares. What shares? First of all, it should be equity share. What shares? Given to whom? Directors or employees at a what? Discount or consideration other than cash, providing their know-how, right in the IPR, or any value addition. For example, you are an expert in the industry. Your name itself will add some value to my company. Now, for that, I will give some shares to you. That is called as what shares? Sweat equity shares. What shares are? Sweat equity shares. Are we clear with this? Yes or no? In this, the most important concept is how the treatment is done when the allotment is made for providing the know-how and value addition. If it is takes the form of an asset, that goes to the balance sheet. If it does not take the form of an asset, it will be booked as what? Employee benefit expenses. What expenses? Employee benefit expenses. Are we clear with this, everybody? Conditions for issue of sweat equity shares. To whom it is issued? Employees of the company. Should be permanent employees of the company, whether working in India or outside India, or to director, whether is old-time director or not. Employees or director of a holding company or subsidiary company in India or outside India. These are the persons who are eligible for what? Sweat equity shares. Are we clear with this? The following conditions to be satisfied for the purpose of issue of what shares? Sweat equity shares. What is the first one? Shares of that class must be already issued. You cannot create a new class of shares. Should be an already existing class of shares. What of shares? Existing class of shares. Clear? Next one. What is the next one? Special resolution is valid for how many months? 12 months. Means you need to complete all the formalities within how many months? 12 months. Listed company. What company? Must satisfy what regulation? SEBI regulations. And limit is what most important. Based on this, they can ask practical question in the examination. In the question bank, I have given a practical questions for the calculation of this limit. Correct, right? Now, in a financial year, the limit of sweat equity shall not exceed how much? 15%. How much? 15% of the paid up equity capital of the company, I 5 crore rupees, whichever is higher. Whichever is what? Higher. At any time, it shall not exceed 25% of the total paid up equity capital of the company. Correct, right? If it is a startup company, what company? Twice, 50%. Up to how many years? 10 years. Most important, based on this, they ask MCQs. From the date of incorporation till 10 years, they can use. They can offer sweat equity shares up to how much? 50%. Post that, they cannot do. Which companies? Startup companies. Same thing is there even for deposits also. Up to how many years? 10 years. Remember, convertible note. Not considered as deposit. Up to how many years? 10 years. Next one. Disclosure in what report? Board report. And most important, there should be a lock-in period of how many years? 3 years. And the valuation should be done by whom? By the registered valuer. Treatment of non-cash consideration. If a company is allotting shares to the employees of the company for consideration other than cash, in that situation, if it is in the form of depreciable asset, it goes to a balance sheet. If in other cases, it is considered as what? Expenses. In P&L account as a employee benefit expenses. Are we clear with this? And the same to be disclosed in the board report, and companies shall maintain the register of sweat equity shares in the form number what? SH3. What is the form number? SH3. Correct, right? And what is the lock-in period? 3 years. Minimum 3 years. Understood? Yes or no? Next one. Issue and redemption of preference shares. Most important issue and redemption of preferences. More than issue, the important topic is redemption of preferences, because issue of preferences you can issue either convertible preferences, non-convertible preferences, redeemable preferences, but not irredeemable preferences allowed. Now, the maximum redemption period is 20 years, but infrastructure companies, 30 years. And after the expiry of 20th year, the company should redeem minimum how much? 10%, so that it becomes nil by the end of 30th year. Correct, right? And for, yes. Now, for issue of preference shares, there should be authority in the AOA of a company. What of a company? AOA of a company. Company must pass what resolution? Special resolution. There should not be any subsisting default in the redemption of what shares? Preference shares or payment of dividend due. Correct, right? Yes or no? If you have any existing default in the redemption of preference shares, first redeem them. Then you go for what? Issue of preference shares. Next one, return of allotment to be done within how many days? 30 days. In the form number PS3. Certificate of shares within how many months? 2 months. It remains the same. See, when you incorporate a company, if you have mentioned only equity shares, what's it? Now you should reclassify your share capital by alteration of MOA. For issue of preferences, company must have preferences. For that purpose, you should have mentioned the preferences where in the MOA of a company. If not mentioned, you have to reclassify your capital. Then you can go for issue of preference shares. Clear with this, everybody? Now, redemption of preference shares. Company, after the expiry of fixed period or on the happening of a particular event or at the option of shareholders, can redeem the preference shares. Redeem the what? Preference shares. Most important, funds for redemption of preference shares. Out of what funds the company can redeem the preference shares? Out of what? Profits available for distribution of dividend or out of the fresh proceeds of what issue? Fresh issue of shares. Now my question is, can I offer preferences to redeem preferences?
No.
Yes, possible, but I cannot start. Now, redemption of preferences. The preferences can be redeemed at a fixed time or on the happening of a particular event or at the company's option or shareholders options. Out of what? Profits available for distribution of dividend or out of the proceeds of what issue? Fresh issue of shares. Now here they mentioned as shares, means you can offer preferences to redeem the what? Preference shares. But for buyback purpose, we cannot do. Why? There's a logic also. See, in this case, you're not going to extinguish the shares, right? In buyback, your object is to cancel it. When you want to cancel it, you offer it one hand, cancel it other hand. It is better to not to do anything now. But in this case, it is not like that because redemption is mandatory. If you don't redeem the preference shares, what happens? There are many consequences. If you are defaulted in the redemption of preference shares, you cannot go for issue of SDRS. Correct, right? That is why. Excuse me, company can issue preference shares for the purpose of what? Redemption of preference shares allowed. Next one, if the company redeems the preference shares out of profits of the company shall transfer an amount equal to the nominal value of preference shares brought back to which account? To the CRR, capital redemption reserve, which can be used only for the purpose of payment of, only for the purpose of issue of bonus shares. What shares? Bonus share. Correct, right? Next one. Uh, Premium payable on redemption of preferences can be paid out of profits of the company. If not complying with accounting standards, it can be paid out of security premium account as well. Correct na? We can use the balance in the security premium account even for what? Payment of premium on redemption of preferences, provided the company is not required to comply with the Ind AS. Are we clear with this? Last one. This is the most crucial point based on which they ask practical questions many times in the previous examination. If a company is not in a position to redeem the preferences which are due for redemption, company with the consent of 3/4 of that class of preference shareholders and with the confirmation of NCLT can offer further redeemable preferences. Further, the dissenting shareholder shall be given an opportunity to exit from the company. Means they should be paid immediately. I repeat, if a company is not in a position to redeem the preferences which are due for redemption with the consent of 3/4 of with the consent of the holder holding 3/4 of that value of that preference shareholders and with the approval of NCLT can offer a further redeemable preference shares. On the issue of such further redeemable preference shares, the earlier preference shares are deemed to be having redeemed. And that one who has dissent into that such issue of new preference shares should be paid immediately. Their preference shares must be redeemed what? Immediately. And these are the provisions with respect to issue of what shares? Preference shares as well as redemption of the preference shares. Are we clear with this? These 2 points are most important. Based on these, they already asked questions in the previous examination. Clear with this? Next one, 56, transfer of shares. What of shares? Tell me, is it possible to transfer the share? Yes. Any person holding shares of a company are transferable. He can transfer his shares. Private company, subject to restriction. Public company, there can't be any restriction. If I am holding share, I should execute what? Form number SH4. What is the form number? SH4. By executing a contract in the form number SH4, the transferor can transfer shares to whom? To the transferee. Once this form is executed, that should be filed with whom? Company, either by transferor or transferee within how many days? 60 days. How many days? 60 days. Correct, right? However, if a person make an application for transfer of partly paid shares, what share? Everybody, what shares are partly paid shares in that situation, and if the application for transfer is filed by the transferor, that is shareholder, a company should give an intimation to the transferee to raise any objection within how many weeks? 2 weeks. If no objection is received within 2 weeks, the company shall register the transfer of shares. And in case of government company, this provision is not applicable. What is transmission of shares? In case of death of a person, what of a person? Death of a person, or in case of insolvency of a person, the shares are transferred to whom? To their legal representative. What representative? The legal representatives, by providing the inheritance certificate, can get the shares transmitted to their name. In case of transfer of shares, there is a requirement of transfer deed and payment of stamp duty. In case of transmission of shares, there is no requirement of what duty? Stamp duty, because there is no contract involved over there. It is by operation of law. What of law? Operation of law. Most important point, if there is a MCQ, there will be MCQ based on this. In case of joint shareholders, what shareholder? If one of the joint shareholder dies, the rights will vest with whom? With the surviving joint holder, not with the legal heads. For example, X and Y are there. Who are there? X and Y. If X dies, shares goes to whom? Y. Not to the legal heads of whom? X. No, that is what we have joint holders. Clear? In case of joint holders, what holder? Everybody below, what holder? Joint holders. The survivor or survivors, only the person who are identified as the what? By the law, and not the legal heads. What heads? Legal heads. Are we clear with this, everybody? Next, we have section number 57. Section number what? 57. Punishment for personation, similar to what we have discussed it already. In this case, it is for transfer of share. What of share? That is for allotment of share. This one is for what? Transfer of shares. Correct, right? So if any person deceitfully, means what? With the intention to cheat, deceitfully personate as a owner of any security or interest, as the owner of any shares, warrant or a coupon, and obtains or attempt to obtain, even attempt is punishable, deceitfully representing as a owner of shares or any interest, you try to obtain any money or a share, then you will be punishable with the imprisonment not less than how many years? 1 year, but up to how many years? 3 years, and a fine which is not less than 1 lakh rupees, but up to how much? 5 lakh rupees. This is the punishment for personation. Section number what? 57. 58 is a simple provision, easy provision, which says that, listen everybody, listen. See, when you apply for registration of transfer of shares, the board of directors, either they will approve the registration by passing board resolution, or they can reject it. If they reject it, they should reject it on the valid grounds. If there is no valid grounds, you can approach whom? NCLT. I have applied for transfer of shares or transmission of shares. By applying to whom? Company. But company rejected my application. In that situation, do I have any remedy available? Yes, I can approach whom? NCLT. And if NCLT says register karo, company must register it. Clear? Now there is a time limit for this. Now once I make an application, that if it is a private company, company should respond within how many days? 30 days. How many days? Once I receive the rejection from the company, I should go to the NCLT within how many days of receipt of notice? 60 days. Not 60 days, 30 days. Next 30 days. If notice is not received, what is not received? In that situation, I can appeal within how many days of application? 30 days of, sorry, 60 days of application. See, listen. I make application today. I will explain. Listen. I make application today. If I receive notice of rejection from that date, I have how many days of time? 30. 30 days. What if notice of rejection is not received? Then law says I can go to the NCLT within how many days of application? 60 days. How many days? I will wait for 30 days. If there is no response from the company, I can go to directly to whom? NCLT. Within how many days? 60 days of application. If it is a public company, what company? Everybody, what company? Public company. And if the public company does not provide the notice of rejection within how many days? 30 days. I can appeal to the tribunal within how many days of receiving notice? 60 days. How many days? 60 days. If notice is not received, appeal can be made within how many days? 90 days from the date of application. Are you guys clear with this? On the application, NCLT may direct the company to what? Order to register the transfer or transmission of shares. Artha aita? Private company it is what? 30 plus 30 or 30 plus 60. Sorry, 30 plus 30 only. Right. Either 30 plus 30 or from the date of application it is what? 60. Second one, public company 30 plus 60 or 90 from date of what? Application. Notice is received 30 plus 60 or notice is not received 90 from date of application. Understood? Next one. Section number 59. Section number what? 59. Rectification of registrar members. Everybody, registrar members. Every company shall maintain registrar members in the form number what? MGT1. What is the form number? MGT1. Now tell me, if any person name is entered without lawful justification, having been entered, if it is not removed after a person ceases to be a member, or if there is any entry of name of a person by under wrongful reasons, in that situation that aggrieved person can approach whom? NCLT for rectification of registrar members. On the order of NCLT, the company should rectify the registrar members. I repeat, listen everybody. First one is what? Delay in entering the name. Second one is what? You have entered the name but you are not removing it even though I cease to be a member, or you have wrongfully entered my name in the registrar members. In all these cases, an aggrieved person can approach whom? And the NCLT can order the change of registered of members of the company. In that situation, company shall rectify the registrar members within how many days? 10 days of the order. How many days? 10 days of order. Are we clear with this, everybody? Next one, section number 60. Section number 60. Publication of authorized, subscribed, or paid up capital of the company. Listen. Whenever a company publish authorized capital, it should publish what capital? Issued and paid up capital. Why? Because it will be deceptive in nature. Because if you mention only authorized capital, let's say your company's authorized capital is 10 crore. What illiterate people will think? They think your capital is how much? 10 crores. Correct, right? That is why wherever you mention your authorized capital, you should mention your issued and paid up capital in an equally conspicuous letter. What letter? Equally conspicuous letter. Means equal importance letter. If it is bold letter with the same font size. Section number what? 60. Section number what? 60. Section number 61 deals with what? Alteration of share capital. What of share capital? Alteration of share capital. Can a company alter its share capital? Alteration of share capital. Alteration is allowed. What is alteration of share capital? When you change the number of shares, when you change the face value of shares, or when you change the amount of share capital. We mention all these things in which capital clause? Which clause? Capital clause. Okay, what clause? We mention the authorized capital. In the authorized capital, we mention number of shares, face value, as well as the amount. If I want to change the amount, alteration. I want to change the face value, alteration. I want to increase or decrease the number of shares, alteration. Conversion of shares into stock, alteration. Stock into shares, alteration. Reclassification of share capital, alteration. And that can be done by passing what resolution? Ordinary resolution. What resolution? ordinary resolution, and there must be authorization in the what? AOA of a company. What of a company? AOA of a company. And once a company alters its share capital, the intimation should be given to the ROC in the form number what? SH7. What is the form number? Any alteration of share capital should be informed to ROC in the form number what? SH7. Within how many days? 30 days. Everybody, how many days? 30 days. Are we clear with these? Yes or no? Next one. Further issue of share capital. Bolo? This covers right issue, preferential allotment. Then we also have this ESOP. Employee Stock Option Scheme. What scheme? Employee Stock Option Scheme. Listen everybody, based on right issue, there was an MCQ question in the last examination. Now what is right issue of shares, sir? Whenever a company go for further issue of share capital, they can do the further issue of share capital in the following ways. What is the first one? They can issue the shares to whom? To the existing members of the company. What are the company? Existing members. I hope you guys are clear with section number 61. Increase in authorized share capital, consolidation, division, conversion of shares into stock, subdivision into smaller denomination, cancel the word capital, unsubscribed capital, reclassification of capital. All these are things are considered as what? Alteration of share capital, not reduction of share capital. Section number 66. Got it? Very good. Next one. Further issue of share capital. What is the first one? Right issue. What issue? What is right issue? Issue of shares. So right issue is done only for what? Shares, not for debentures. Issue of shares to whom? Issue of shares to whom? Existing shareholders. What shareholders? Equity shareholders, not preference shareholders. Right issue is made only to what shareholders? Equity shareholders. But what shares are issued on right basis? Can we issue equity shares to the existing members? Can we do preference shares to the existing members? Yes, no prohibition at all. But preference shareholders does not have a
Right to get
right issue option. See, what is the provision? Right issue of shares. Shares includes what? Either I can do equity shares or what? Preference shares. See, simple. The concept of right to issue is like you are offering shares to the existing shareholders in proportion to their existing share capital or existing shareholding. Simple as that. That is called as what shares? Right issue of shares. What is issue of shares? Right issue of shares. Keep this in mind. Right issue of shares requires only a board resolution. What resolution? Board resolution. Unlike ESOP, unlike sweat equity shares, which requires what resolution? Special resolution. What resolution? So right issue requires only what resolution? Board resolution. Once board resolution is passed, the company sends offer letters to all the members who are entitled for the what? Shares of the company. This offer letter can be dispatched either by registered post or by speed post or through any electronic means or a couriers or any mode having the proof of dispatch. Why? Because in future member may come and dispute it, right? So you should have a proof that the offer was made to whom? All the members of the company. Clear? Now, if I send notice today, send what? Notice today to accept this offer, I should give some time to the members. Correct, right? If I send notice today, offer will open after 3 days. How many days? The offer will open after 3 days from the date of what? Sending of notice. Sending of what? Notice. Clear? And the offer should be kept for minimum how many days? 7 days. Maximum how many days? 30 days for acceptance. It was 15 days, but has been amended to increase to how much? Sorry, decrease to how much? 7 days. So the offer shall be kept open for acceptance by the member for a minimum 7 days, maximum 30 days. However, in case of private company, if 90% of the members, they ask this question, MCQ, if 90% of the members have given consent in writing or in any other form before the issue can be open even for less than how many days? 7 days. Or this offer can open immediately also. Clear? So this section number can be exempted by the company if it is holding how much? Members are holding 90% of the members have given the consent. Are we clear with this? Yes or no? Every right issue always carry right of what? Renunciation. Unless article provides otherwise, a right issue carries what? Right of renunciation. What is renunciation? Transfer it to any other person. That transfer can be made to the existing members or to an outsider or to any other person. Understood?
Yes,
Either you can renunciate whole of the shareholding or part of your shareholding. Understood? Next one. If the offer is not accepted, board of directors can dispose them. Beneficial to whom? Company. Provision is not applicable to which company? Nidhi company. What company? Nidhi company. Even preference shares can also be offered on what basis? Right basis. But only to what shareholders? Equity shareholder. But you should comply with what? In that situation, section number 62, section number what? 55. Because you're offering what share? Preference shares now. So there is no prohibition on offering preference shares on right issue basis. Understood? Next one. Second one is most important. See, whenever you offer increase the share capital of the company, you need to pass resolution and must inform this to whom? ROCs. However, if your share capital is increased as a result of conversion of loan into shares, and if that loan was approved or conversion was approved at the time of issue of or borrowing the loan itself, in that situation there is no requirement of passing the what? Resolution. Just intimation is sufficient. I am taking loan from you with a condition that you can convert this loan into shares after 5 years. When the event happens that after 5 years, there is no requirement of passing what? Resolution. Because resolution is already passed. So there are two exceptions. What are two exceptions? Increase in subscribed capital through debentures or a loan conversion, provided it was approved by a special resolution at that particular time of issues. Or there is a government directions for conversion of debentures or loans into shares in the public interest. Whose interest? Public interest. Company aggrieved can always appeal to whom? Tribunal. Within how many days? 60 days of order of the central government. If central government orders for conversion of any of its loan into capital, there is an increase in capital, that can be done only by passing resolution. But in this case, what is not compulsory? Resolution is not compulsory. These are the two cases where resolution is not mandatory. Understood? Clear with this? Next one. ESOP. What is ESOP? Very good. It's an option given to the employees of the company. What of the company? Employees of the company to purchase shares of the company on a future date at what price? Predetermined price. What price? Predetermined price. That is called as what? ESOP. Called as what? ESOP. It is given to whom? Director, officers, or employee of the company, or its holding company, or what companies? Holding company. That gives the director, officer, or employee the benefit or a right. Either you can take benefit or you can take the what? Shares. Benefit or the right to purchase or subscribe to shares of the company. What of the company?
Yes.
On what date?
Future date.
At what price? Keep this in mind. The two important points in ESOP is minimum vesting period. 1 year. How many year? 1 year. Lock-in period is not mandatory. Government can prescribe lock-in period. Resolution. Private company. OR. Public company. Special resolution. What resolution? Special resolution. And employees includes all employees, same like sweat equity shareholders. But however, promoters are not eligible for what? ESOP. Promoters cannot give ESOP to whom? Themselves. He may be employee of a company. You're a promoter. You're an employee of a company, director of a company. You are not eligible for what? ESOP. Promoter and promoter group, it is promoters' family members are not eligible for ESOP. And also a director who is already holding how much? 10%. Holding how much? 10% of the outstanding equity share capital of the company is not eligible for what? ESOP. But however, this condition is not applicable for start company up to how many years? 10 years. How many years? 10 years. Next one, authorized by what resolution? Special resolution. But private company, OR is sufficient. Are we clear with this? However, if allotment of ESOP is made to any employee in excess of how much? 1%, you need to pass a special resolution for that. See, generally what I do, I approve for every member. I say 10% to employees as ESOP. But if I'm giving 1% to one person, one employee, that should requires a separate resolution to be passed in the general meeting of the company. Understood? Next one, price to be fixed as per the what? Accounting policies. What policies? Accounting policies. Minimum gap of how many year?
1 year.
A vesting period is minimum how many year? 1 year. Company may prescribe what period? Lock-in period. But in case of sweat equity shares, what is the lock-in period? 3 years mandatory. What is the limit?
3 years.
Correct. What is the limit on maximum sweat equity shares? At any time, 15% or 5 crore rupees, whichever is higher. In a year, 15% or 5 crores, whichever is higher. At any time, how much? 25%.
Equally.
Paid up equity capital. Very good. Awesome. Next one. What happens until the right is exercised? There is no question of payment of what? Dividend. Correct, right? Amount paid by employee at the time of grant of options may be forfeited or may be refunded. Maybe what? Refunded if he does not fulfill the what period? Vesting period. What period? Vesting period. Option granted shall not be transferable, cannot be pledged, cannot be hypothecated. Clear with this? In case of death,
Vest immediately.
there is a requirement of fulfilling the vesting period. It will vest with whom? With a legal heirs. If there is a permanent incapacity, what incapacity? Permanent incapacity. In that case as well, the shares will vest with him when immediately. There is no need to complete the full vesting period. I hope you guys are clear with this. I hope you guys are clear with vesting period, exercise period, this exercise price, grand price, all these things. Are yes or no? Are we clear with these? Everybody understood? Next one. Company shall maintain. Who shall maintain? Company shall maintain the register of ESOP in the form number SH6. But this one, sweat equity shares, SH3. Clear? Issue of shares on preferential basis. What basis? Now, what is the difference between private placement and preferential basis, sir? See, in case of preferential basis, you can only offer equity shares or convertible securities. And for offer of preference shares, certificate of valuation is required. You must obtain a certificate from whom? From a registered valuer. What valuer? Registered valuer. And you should pass what resolution? Special resolution. If you want to offer debentures, the only option available to you is what? Private placement or public issue if you're a public company. Understood?
Yes, sir.
Yes or no? Next, we have bonus shares. What shares? What is bonus shares? Conversion of your reserves into capital is called as what? Bonus shares. What shares? Nothing but issue of shares to the existing members of the company in proportion to their what? Existing shareholding is considered as what? Bonus shares. Tell me, can bonus shares be given to equity shareholders? Preference shareholders? No. Only for which shareholders? Equity shareholders. They are the one who is entitled for what shares? Bonus shares. What shares? Bonus shares. Do SDR holder has the bonus shares, right?
Yes.
Because they're equal to what shares? Equity shares. What shares? Very passive, correct. Company should pass what resolution? Ordinary resolution. What resolution? And most important, there shall be authorization in the what? AOA. And you can take the funds out of what? Free reserves, SP account, and also capital redemption reserve. CRR can be used only for the purpose of issue of. Understood, everybody? Next one. Authorized by what? AOA. No default in the payment of interest or principals on deposits or debt securities. First you pay the interest before going for bonus issue of shares, and no default in the payment of statutory dues to the employees, contribution to the PF, gratuity or bonus. Any employee dues not paid, then you cannot go for issue of what shares? Bonus share. Are we clear with this, everybody? And most important, this you would have done in your CA foundation level. If there are any partly paid shares, what shares? Partly paid shares. Those partly paid shares should be converted into what? Paid, fully paid before you go for issue of bonus shares. Either you may call for them or you use the money to convert them into fully paid out of reserves. Then you go for bonus issue of shares. Understood? And once announced, cannot be withdrawn. Bonus shares shall not be issued in lieu of what? Dividend. In lieu of what? You can issue bonus share as a dividend, but it should not be paid in lieu of dividend. Once dividend is declared, it should be paid in what? Cash, not in kind. You cannot say like, I have declared 10% of dividend, I will give 10% of bonus shares. Not allowed. In general, bonus shares is nothing but a dividend. You are converting your reserves into what? Shares. Instead of paying cash, you are giving it in what? Shares. Is it allowed or not allowed? Allowed. But however, you cannot pay shares or you cannot give shares in place of dividend declared. Understood? Can a Section 8 company do bonus issue of shares?
No,
Why no?
prohibited.
Prohibits the distribution of dividends to its members. Understood? 64. Any alteration of share capital, notice should be given to whom? ROC. Within how many days? 30 days. In the form number what? SH7. Next one, conversion of unlimited company into what company? Limited by share. In that situation, company shall create what capital? Reserve capital, and that capital can be used only at the time of liquidation of the companies. Are we clear with this, everybody? Next one, reduction of share capital. What of share capital? Reduction of share capital. Most important. See, whenever a company repays its capital to equity shareholders, it is considered as what capital? Reduction of share capital. Reduction of share capital can be done only with the permission of whom? NCLT, because you are going against the principle of repayment. Instead of paying preference shareholders first, or instead of paying creditors first, you are going for what? Equity shareholders. That is why when you go for reduction of share capital, you must take approval of creditors as well as preference shareholders. Then only who gives approval? NCLT gives approval. Why do we need consent of both of them? Because you should pay first to them, right? But you're paying to the equity shareholders. Take their approval, and even NCLT will check whether the interest of creditors and preference shareholders is properly secured or not. Only if it is properly secured, NCLT gives approval. Otherwise, it does not give the approval. I hope you guys remember methods of reduction of share capital. What is the first one? Extinguishment of liability. You are liable to pay 10 rupees to me. 5 rupees is already paid. Remaining 5 rupees is not paid. I will say, okay, don't pay remaining 5 rupees. I will cancel it. Now the face value is only how much? 5 rupees. Does this require approval of NCLT? Yes. Reduction of share capital. Extinguishment of liability of any shareholder requires approval of NCLT. Second one, cancel any paid up value. What value? Not represented by asset. Company incurred losses. Incurred what? Losses. To the extent of loss, if you reduce the value of the preference shares, it is also considered as what? Reduction of share capital. What of share capital? I explained this with the help of example in the class. Remember? For example, let's say, see if it is a balance sheet. In the balance sheets, there will be having liabilities. Let's say 1 lakh shares of 10 rupees each. Clear? What is the value? 10 lakh. Let's say I have an asset worth of furniture worth of 50 lakh, and I have a loss worth of how much? 50 lakh. This is a fictitious asset. What asset? Means my shares, I've already lost the value of how much? 5 rupees. Now what I will do? I will reduce the shares into how much? 5 rupees, and I will show it as how much now? How much? 50 lakh rupees, and I will remove the loss. This is called as what? Reduction of share capital. What of share capital? Reduction of share capital, and this can be done only with the approval of whom? And also approval of whom? Creditor, and also approval of whom? Preference share holders. Next one, payoff. This is the most common method of repayment or reduction of share capital, where company repays the paid up value. What value? That also requires approval of NCLT. And most important, no reduction of share capital if the company is in what? Arrears of repayment of deposits and interest thereon. Understood, everybody? Arey sir, no. If you have any arrears of deposit, arey first deposit payment karo na, creditor se wo. If you have any arrears of deposits or interest on deposits, don't go for what? Reduction of share capital. Understood? Clear? Procedure apply to whom? NCLT. You should give a list of creditor. Certificate from the auditors that list of creditor is correct. Certificate by the auditor that no arrears in the repayment of interest or deposit. Why? Because if there is the arrears, you cannot go for what? Reduction of share capital. Very good. Certificate of auditor stating that reduction of share capital is in conformity with what standard? Accounting standards and any other relevant document. NCLT can direct the issue of notice to the ROC, SEBI, giving how many months of time to them? 3 months of time to raise any objection. Notice is also mentioned in the newspaper, and also if notice is not required to be given to whom? Creditors. If the creditor has been discharged, means payment has been done to the creditors, or if it is what? Secured, or given consent in writing. If there is any objection received by the company, the same to be forwarded to whom? To the NCLT. To whom? NCLT. Then NCLT will give the approval. Now what if some of the creditor's name is not mentioned while applying for approval of NCLT? In that case, if the company is already owned up, NCLT can prepare list of contributaries and ask them to contribute the money to pay the creditor. If company is not owned up, in that situation, members on the date of reduction shall be liable to pay for it. This is the consequences of not mentioning the name of any of the creditor while giving the list of creditors to the home, to the NCLT. Understood? These are the provision with respect to reduction of share capital. Now see, section number 52 says that the balance in security premium account can be used only for 5 purposes. It doesn't mean you cannot use it for any other purposes. You can use it. We can use the balance in security premium account for other than those 5 purposes, provided I should take approval of NCLT, because using the security premium account other than those 5 purposes is considered as what? Reduction of share capital, and that requires confirmation of whom? NCLT. For example, let's say in my balance sheet I have losses, but there is a balance in SP account. Can I use that SP account balance to set up my losses?
Yes.
With approval of whom? NCLT. But for those 5 purposes, no approval is required. Got it, everybody? Section number what? 66. Section number 67 is ICAI ka favorite topic. Dear topic. Based on this, there are questions many times in the examination, but trust me, it is one of the simple concept. There are 2 subsections in this. First subsection says, no company, whether it is a private company or public company, no company shall buy its own share directly or what? Indirectly. Prohibited. You cannot buy your own shares in your own name, directly as well as indirectly. Why? There is no logic.
Provision is here.
But there are exceptional cases where it is allowed. I'll come to that one. Section number 67 says, restrictions by a company on the purchase of its own shares, at the same time giving loan to buy its own shares. There are two provisions here. One restricts purchase of its own shares. Second one, giving loans to what? Purchase its own shares of the company as well as its holding company. What company? Holding company. Clear? Now listen. First one is clear. What is the first one says? No company shall buy its what shares? Own shares, directly or indirectly. Second one, no public company shall provide financial assistance to buy or subscribe. What shares? Any shares, means equity as well as preference shares in the company or its holding company. What company? Holding company. But however, there are exceptions where public company can give loan to buy its own shares. What is the first one? Any bank providing a loan in the ordinary course of business. What course of business? Ordinary course of business. I'm a SBI bank. I give loan to you. How will I know whether you're going to buy my shares or not? Huh. Why will I ask the purpose? I'm giving a personal loan to you. Okay, you're a trader. You come and ask, give me a personal loan. I will give you a personal loan. If I ask what is the purpose, you will say, who the hell are you to ask for that purpose? But the section is restricted, right? For those conditions. Correct. See, if bank gives a loan to you, then bank is apart from bank, it is not allowed. If bank is giving a loan in the ordinary course of business, and that is allowed. Why? Because nobody will know what purpose you're gonna use the money. Correct, right? So banks can give the loan in the ordinary course of business, nothing but normal business. You come and you take loan. With that loan, if you buy my company shares, then I'm not punishable for the under section number 67. Clear? Second one and third one is what most important. Second one is what? Yeah. Why? Because if you provide a loan under a scheme which is approved by special resolution for the purchase of fully paid shares. See, both second one and third one is applicable for the purchase of what share? Fully paid shares for the benefit of employees in the company or holding company. So if a company provides a loan under a scheme approved by shareholders by passing special resolution to buy fully paid bonus shares as a trustee, as a what? Trustee for the benefit of employees. My company's employees. Is it allowed or not allowed? Allowed, but there is a limit. What is the limit? If it is a listed company, purchase can be made only through what exchange? Stock exchange, not by private offers or arrangement. Are you guys getting it? Second condition is that if it is not a listed company, the valuation of shares should be done by whom? Registered valuer. And the third condition, the value of shares to be purchased shall not exceed 5% of the paid up capital and free reserve. Most important, the value of shares to be purchased shall not exceed how much? 5% of the paid up capital as well as what? Free reserve. Understood, everybody? Yes or no? Next one. To employees of the company, you can also provide what? Loan to the employees of the company other than directors or KMP to purchase fully paid shares of the company or its holding company up to how many months salary? 6 months salary. These are the three cases where exemption is given from providing loans to purchase its own shares of the company or its holding company. Now you guys tell me, can a company purchase its own share? No. Not allowed, directly as well as indirectly. Can a public company provide loan to purchase its own shares or holding company shares? No. Are there any exception? Yes. Banking company in the ordinary course of business. What course of business? Ordinary course of business. Second one, under a special scheme approved by shareholders by special resolution for the benefit of employees of the company to purchase fully paid shares. But however, if it is a listed company, the share should be bought in the market, not by private arrangement. Second one, if it is an unlisted company, the shares to be purchased should be valued by whom? By the registered valuer. Third condition, the The shares to be bought or shares allocated shall not exceed how much? 5% of the paid up capital and free reserves. They asked practical question based on this in the previous examination. Or to employees of the company other than directors and KMP. Not exceeding how many months salary? 6 months salary. Fully paid shares in a company or in the holding company. What company? Holding company. Understood, everybody? Next one. Section number 67 is not applicable to a private company or what company? IFSC public company. Maja ab aayega. Section number 67, subsection 1, applicable to both private company and public company. Agree with this? Section number 67, subsection 2, applicable only for which company? Public company. Means private company can provide loan. However, this exemption says a private company can exclude the applicability of section number 67 if that company is not, means no other body corporate has done investment in that company. Second condition, the borrowing of the company, keep this in mind, this is also applicable for deposits, important here. The borrowing of that company does not is less than the twice the paid up capital or 50 crore rupees, whichever is less, and the company has not defaulted in the repayment of such borrowings. That means this type of company can provide loans, at the same time it can buy its own shares. As you said, what is the logic behind this? Like, how can a company hold its own shares? How do you show it in the balance sheet? I am only issuer, I am only holder. Is it possible? Not possible. Practically there are difficulties, but however law allows it. When law says section number 67 is not applicable for which company? Private company. Then there is no prohibition from I holding my own shares. But I will not hold shares in my own name. I've created trust for that. I will hold the shares in whose name? Trust name. Are we clear with section number 67? Based on this, they asked practical question in the previous examination. Are you guys clear with this, everybody? Next one, buyback of shares. What of shares are? Buyback of shares. Section number what? 68 is what? Buyback. Can a company buy its own shares? Yes. See, section number 67, section number 68, section number 66 should be read together. 67 is also reduction of share capital. Sorry, 68 is also what? Reduction of share capital, but that is allowed without whose approval? NCLT approval. But you tell me, what is the difference between 67 and 68? 67 allows private company to buy its own shares. 68 also allows any company to buy its own shares. Even 67 also possible. 67 is purchase or subscribe. Even I can buy the shares in the what? From any other person. Getting it? But the major difference, I'll tell you the difference. Listen, the difference is that in 67, you continue to hold shares of the company. In 68, shares are extinguished. Within how many days? 7 days. So 68 is effectively what? Reduction of share capital. 67 is not a reduction of share capital. Because your capital will not be what? Reduced. Are you guys getting the concepts here? So 67, 68, both are like, it's like, your company is buying its own shares. One case, it is extinguished. Other case, it is not extinguished. That is the major difference between section number 67 and section number what? 68. Sources of... Is there any MCQs?
related to buyback, how much you can buy back?
We can do. I think we have solved so many questions in the class also. Practical questions. We will solve one questions. Okay. Now tell me, what are the sources of buyback?
Buyback free reserves.
Free reserves, security premium accounts, and also free reserve.
Can issue news.
You can. There are three conditions to be satisfied. First one, funds. Second one, share. Third one, debt equity ratio. Correct, right? The number of equity shares to be bought back in a financial year should not exceed 25% of the outstanding paid up equity capital of the company. The equity capital to be bought back shall not exceed 25% of the paid up equity capital of the company. Amount to be drawn from the reserves for the purpose of buyback shall not exceed 25% of paid up capital, free reserves, and security premium account. Understood? Clear with this? But however, the board of directors can authorize the buyback only up to how much? 10%. And there is only one buyback allowed in a year. But now there is an amendment which is introduced in notify agilla. They introduced the bill now. Now they want to increase the paid up capital limit of small company to 100 crores. Small company to promote the startup India. And one more thing is they want to introduce the buyback in a 2 times in a year. How many years? 2 times. Because buyback has benefit of taxation. If company gives you cash in the form of dividend, you should pay what?
Tax.
Tax, DDT. But if you company buyback shares, buyback what? Shares. You're getting money. Correct, right? Are you going to pay tax on that?
Additional amount on that, yes, we will have to pay tax. For example, 1,050. Buyback having about 5%.
Correct. Will there be any double taxation?
No double.
That is the benefit. That is the benefit of what? Buyback. And there are few more. Why?
Because
First of all, double taxation itself is not correct. But so if it is not wrong, then it is allowed. Correct, right? So buyback is allowed. And one more advantage of buyback is that if company want to reduce the public holding, or let's say if there is a hostile takeover, to reduce those criteria situations, company can go for the buyback. And one more scenario is that company is having huge amount of cash. They don't want to invest any in business. They can go for what? Buyback. Understood? Now let us discuss sources of funds for the buyback out of free reserves, SP account, and also what? Proceeds of issue of what? Any shares or other securities other than what kind of securities? Same kind of securities. We discuss this, yes or no? Next one. Methods of buyback. You can buy it from the existing shareholders, open market, or employees. There should be authorization in the what? AOA. The board of directors can authorize buyback up to how much? 10% of paid up capital, free reserves, securities, premium account. Yes or no? Shareholders can approve by special resolution up to how much? 25% of paid up capital, free reserves, and what account? SP account. Correct, right? Quantum of shares to be bought back. How much? 25% of the paid up capital, free reserves, and SP account. Amount to be taken out of reserves. Then buyback of equity. Maximum how much? Of the paid up capital in any financial year. Debt equity ratio should be how much? 2:1. Is it pre buyback or post buyback? Post buyback. Remember when it is the calculation X antalla ಮಾಡಿ. Correct, right? And in case of accounts, you have the formula for calculation of the debt equity ratio. But for government company, it is how much? 6:1. Clear with this, everybody? Next one. Shares to be bought back should be what? Fully paid. You should convert the partly paid shares into fully paid before you go for what? Buyback. Next one, no buyback within a period of how many years? 1 year from the closure of what? Preceding buyback. But in the Amendment Act, now they're going to introduce, they're planning to bring how many buybacks in a year? 2 year. 2 buybacks in a financial year. Buyback should be completed within how many year of resolution? 1 year. Same 12 months. Private placement 12 months. ESOP 12 months. Correct, right? Next one. Extinguishment of securities brought back within how many days? 7 days. Buyback shall be open for minimum how many days? 15. Maximum 30 days. Register of buyback in the form number what? SH10. Custody of CS. Declaration of solvency. Before you buy back, director of a company who shall also be MD. Two directors, out of that one shall be what? MD of the company should give a declaration that company is solvent and company will not go into liquidation within 1 year of buyback. These are the complaints to be done. What to be done? Complaints to be done for the purpose of buyback of security. Understood? Everybody? Yes or no? I hope you guys know how to calculate this limit. Correct now? First, you will calculate the amount to be withdrawn. Second, you will calculate what? Outstanding equity shares. Then you will calculate what? Debt equity ratio. It is post buyback, not pre buyback. Understood? Next one. Transfer of amount to which account? Capital redemption reserve account. What account? Whenever the shares are brought back out of the reserve or out of the profits of the company shall create or transfer an amount equal to the nominal value of shares bought back to which account? CRR account. And that can be used. What can be used? That can be used only for the purpose of what? Issue of what shares? Bonus shares. Are we clear with this, everybody? Next one. See, and I hope you guys are clear with the clear. Hello. I hope you guys are clear with section number 69. Transfer of certain sums to the capital redemption reserve account. Which account? Capital redemption reserves account. Clear with this, everybody? Next one. Prohibition of buyback in certain circumstances. Now, what if the question comes like this? A company is going for buyback. First, they offered they offered some preference shares. They took some 5 lakh rupees. Out of that, they're gonna buy back 10 lakh rupees worth of equity share. 5 lakh, they want to buy back equity shares of 10 lakh. For that 5 lakh, they took it by issue of preference shares. Remaining 5 lakh, they are taking out of reserves. Now you should transfer an amount equal to the nominal value of shares bought back out of reserve or out of fresh issue. Reserves means you transfer only up to how much? 5 lakh rupees, not 10 lakh rupees. Based on this, there can be question in the examination. Understood, everybody? Next one. Prohibition for buyback in certain cases. What cases? Certain cases. A company which has done the default of the following things, they cannot go for what? Buyback. Correct, right? What is the first one? You cannot buy back through any subsidiary company or investment company if default is made by company in the repayment of what? Deposits or interest on deposits, redemption of debentures or preferentials, payment of dividend to any shareholders, or repayment of any term loan or interest payable thereon to any financial institution or banking company. In these cases, you cannot go for what? Buyback.
So, subsidiary means
Section number 19.
company should not hold sharing.
Which company?
Vice versa. Subsidiary should not hold in action.
Simple. If you cannot hold shares in my company, you cannot buy my company shares then. I want to buy back my shares from the public. These are my public. They're holding my shares. I can't say you go and buy the shares of my company. That is prohibited under section number 70 as well section number what? 19 also. Interlinking of section numbers. Clear with this? Understood? Yes or no? Are we clear with this, everybody? Understood? Next one is section number 7. Next one. Section number 71. Section number what? 71. What is section number 71? Debentures. Can a company issue debenture? See, only if it is secured debentures. What debenture? Or convertible debentures. What debentures? Convertible debentures. They come under the section number 71. If it is non-convertible deposits, you cannot offer irredeemable debentures. It should be convertible, redeemable. If it is unsecured deposits, debentures maximum period is 10 years. Infra 30 years. This also 30 years. Preferentials 20 years, debentures 10 years, infra both 30 years. Now, listen. Convertible preferentials, section number, convertible debentures 71. Secured debentures 71. Unsecured debentures 73. Non-convertible, but non-convertible secured debenture 71. Non-convertible unsecured 73. Understood? And you can offer convertible debentures only by passing what resolution? Special resolution. What resolution? Special resolution. Let's start, everybody. No company shall issue debentures carrying what right? Voting rights. Common sense. Correct, right? Because only equity shares can have what right? Voting rights. When preference shares are not having voting rights, then how can debentures have a voting rights? Next one, only secured debentures can be issued under these provisions. Unsecured debentures go for deposits. Next one, issue of secured debenture. Redemption period should be at least should not exceed how many years? 10 years. Company in infrastructure projects, NBFCs, not exceeding 30 years, but exceeding how many years? 10 years. Secured by creation of charge on the specific immovable property. Most important, you should create charge only on what property? Immovable property, not on the movable property. Yes, NBFCs can create charges on what property? Movable property. Appointment of debenture trustee. If debentures are offered for how many years? How many members? 500 persons. If debentures are offered to more than 500 persons, then in that situation, appointment of debenture trustee is compulsory. Should also execute what deed? Debenture trustee. If there is a MCQ question, they will ask question based on requirement of reduction of creation of what reserves? Debentures redemption reserves. A company shall create debenture redemption reserves. If it is an all India financial institution, for you guys, no DRR, because you will follow whose regulation? RBI regulation. But if you are a NBFC or HFC, housing finance companies, listed or unlisted, public issue or private placement, what is not required? DRR is not required. But what is required? DRF is required. What is DRF? Debenture redemption fund. You should deposit at least 15% of debentures maturing during the year to a separate account, to a scheduled bank or any liquid assets. That is called as what? Debenture redemption fund. Debenture redemption fund is compulsory, but not DRR. Debenture redemption reserves. Now listen, everybody. Other companies other than these NBFC and HFCs. What is HFCs? Housing finance companies. If you're listed company, what company?
Listed company.
Public issue. DRR is not required. DRF is required. What is DRF? Debenture redemption fund is required. Unlisted company. What company? Unlisted company. DRR 10% of debentures maturing in the current financial year, and DRF is also what? Required. So unlisted companies cannot go for public issue of shares. You know, right? Can they make public issue of debentures? No, because any public issue of securities required to be what? Listed. Arey, sir, no. So if you're an unlisted company, what company?
Yes.
What company? Unlisted company. A unlisted company wants to offer what? DRR. Bolo? Sorry, if they want to offer convertible debentures, then they should create a DRR of how much? 10% of debentures maturing during the current financial year, and they should also create what? DRF of how much? 15%. DRR 10%, DRF 15% should be created. Only for which company? Unlisted companies. Are we clear with this? Redemption fund, how much? Redemption fund is how much? 15%, right? DRR 10%. In case of partly convertible debentures, redemption reserve shall be created only on the what portion? Non-convertible portion. What portion? Non-convertible portions. Are we clear with this, everybody? Yes or no? Next one. Next one. Yeah. Other than convertible debenture, exceeds 100% paid up capital, free reserves, and SP account, you should pass what resolution? Special resolution. See, convertible debentures, special resolution. If it does not exceeds, see if it is normal debentures, up to 100%, we can issue by passing what resolution? Board resolution. See, debenture, you do it by way of what? Private placement only, na? You can only pass what resolution? Board resolution. Only board resolution is sufficient for issue of what? Non-convertible debentures. Convertible debentures can be issued only by passing what resolution? Special resolution. Debenture trustee, you guys tell me when the appointment of debenture trustee is mandatory, when it is offered to more than how many persons? 500 persons. The debenture trustee appointed shall not be holding any beneficiary holding shares in the company. Based on this, they asked question in the previous examinations. The debenture trustee appointed shall not be holding shares beneficially in the company, should not be a promoter, should not be a director, should not be a KMP, should not be an officer, should not be an employee of the company, holding company, subsidiary company, or associate company, beneficially entitled to any money, should not be indebted to the company, holding company, subsidiary company, or associate company, or given any guarantee to the company, or has any pecuniary relationship with the company amounting to how much? 2% or more of turnover or total income, or what income? Total income, or 50 lakh rupees, whichever is less during the two immediately preceding what year? Financial year. Should not be having any pecuniary interest in the companies. Last one, should not be a relative of any promoter, directors, or KMP. Correct now. Next one, if there is any vacancy in the position of debenture trustee, that should be filled by whom? Filled by whom? By the majority of whom? Debenture holders. Clear? Removal only if it is approved by what? 3/4 in value of debentures outstanding. Correct, right? A debenture trustee can be removed only with an approval of holders of 3/4 in value of debentures outstanding. Clear? Last one, filing a petition before tribunal by debenture trustee. If a company defaults in the payment of debenture amount, the person can approach to whom? To the NCL for proper actions. Who? Debenture trustee. Debenture trustee protects the interest of who? Debenture holders. And you guys tell me, Section 71 covers only what type of debentures? Secured and convertible debentures. What is the DRR required? 10% of deposits due for redemption during the financial year, and DRF 15% of deposits, not deposits, debentures due for redemption in the period. Are we clear with this? With these, we are done with the share capital and debentures. Now you guys tell me, what is 43? Kinds of shares. 44, nature of shares. 45, number. 46, certificate of shares. 47, voting rights. 48, variation. 48, 49, calls to be made on what basis? Uniform basis. 50, calls in advance. 51, calls in arrears and advance. Calls 51 is dividend to be paid on what value? Nominal value. Articles authorizes on the face value. 52, security premium account. 53, discount. 54, sweat equity shares. 55, preference shares. 56, transparent transmission of shares. 57, punishment for personation. 58, refusal to register the transparent transmission of shares. 59, publication of share capital. not publication. Rectification of registrar members, 60 publication, 61 alteration, 62 further issue, 63 bonus, 64 notice, 65 unlimited company, 66 reduction, 67 restriction on purchase of its own share or providing the loan, 68 buyback, 69 CRR, 70 prohibition on buyback, 71 debentures. With this, we are done with share capital and debentures. 72 deals with nomination. A person can appoint whom? Nominee for his shareholding. Yes or no? And the time is 4:27 now, and we have covered how many chapters? 4 chapters. Yes or no? Section number 1 to 71 sections are done. Chalo. Now we will start with a deposits chapter. What chapter? Deposits chapter, section number 73 to 76. So deposits. See, what is the difference between these deposits and bank deposits? Both are same. The only difference is that in case of bank, no. In case of bank, customers goes to the bank. In case of companies, company goes to the customers. Saying that dud kodi. Both are deposits, similar schemes.
Company can do that for it.
Because not every company can come to you. Only a eligible public company can come to you. Correct, na? Because you're a public, right? From public, who can accept deposits? Eligible public company. And now, because there are a lot of restrictions on acceptance of deposits from the public, it is not so famous. But earlier, before Companies Act 2013, it was very famous because that is the one easy way of cheating the customers. They used to offer higher rate of interest. People used to invest, companies used to become insolvent. People lost so much of money like that. That is why there are a lot of restrictions now. Company cannot pay more interest than what is prescribed by the RBI to NBFCs. So a lot of restrictions are there. Got it? Now, what is a deposit, sir? Law says any receipt of money by way of loan or deposit is called as what? Deposit. So here, to get a clarity on deposit, you should know what are not considered as what? Deposits. इसको मैंने in detail में discuss किया था by solving practical questions for every point. Now I will discuss it in brief. Let's start. What is the first one? Receipt from government. See, first says any receipt of money, if you receive money from anybody as a loan, is called as what? Deposit. Even if it is not called as loan, if you receive money from anybody, it is called as what? Deposit. Other than the following. What is the first one? Receipt of money from whom? Government. It can be Indian central government, state government, local authorities, or PSUs. It is not considered as what? Deposit. Second one?
Foreign government.
Receipt from whom? Foreign government or foreign authorities or foreign institutions, because are foreign person, because they are governed by what? Governed by the FEMA. It's a capital account transactions.
Yes, sir.
And it is called as ECB, external commercial borrowing. So you comply with FEMA provisions. Section number 73 to 76 is not applicable. Clear? Third one, any receipt of money from the bank is not considered as a deposit. Fourth one, any receipt from the public financial institutions, insurance company, or scheduled bank is not considered as what? Deposits. Clear? Next one. Money market instrument. What instrument? Money market. Any receipt of money by way of money market instrument like commercial papers is not considered as what? Deposits. Next, intercompany borrowings. If one company borrows money from which company? Another company, it's not called as deposit. But if one company takes money from LLP, it is called as what? Deposit. Are we clear with it? Yes or no? Application money. If a company receives any application money, the application money should be used for appropriation of what? Towards allotment of shares or for refund purpose. Correct, right? If the amount is not refunded within how many days of receipt of money? Within how many days? 15 days from the expiry of 60th day, it will be considered as what? Deposit. I repeat, if a company has received any application money, that should be used for allotment within 60 days. If allotment is not done within 60 days, the same could be refunded to the applicant within how many days? 15 days. If not refunded, it is called as deposits. Next one, next one, next one. Any money received from the what? Director of the company, provided that money should not be out of the borrowed funds or from accepting deposit from someone else, should be out of his own funds. Or relative of which company? Director of private company. Either by from directors of both private company and public company. From directors relative, only which company? Private company. Are you guys getting it? So if a public company accept deposits from relative of whom? Director, it is called as what? Deposit. From director, not deposit. Are you guys getting it? See, because it's clearly mentioned now. Director on a deposit. Second one, director of relative of whom? Director of private company. Expressly mentioned here. Express mentioning of one thing excludes the what? Other thing. So the exclusion is only for whom? Relative of director of private company. Public company directors relatives, it is considered as what? Deposit. Clear with this? Next one. Next one. Any amount raised by issue of what? Secured bond or debentures. Secured, that too by what charge? First charge. It is not considered as what? Deposit. Only on what asset? Tangible assets. First charge or pari passu charge. What charge? Pari passu or first charge, not second charge. Untangible assets. What assets? Tangible assets to cover both interest as well as the principal amount. It would not be called as, or it will not be called as what? Deposit. Called as what? Deposits. Are we clear with this, everybody? Yes or no? And convertible debentures within how many years? 10 years. Not called as deposits. However, even if it is non-convertible, even if it is unsecured, but if it is listed, not called as what? Deposits. Three categories are there. First one, convertible within how many years? 10 years. Not deposits. Non-convertible, secured. Not deposit. Secured by first charge, not deposit. Secured by untangible assets, not deposit. Secured by second charge, deposit. Unsecured, non-convertible, listed, not deposits. Are we clear with this, everybody? Next one, amount raised through issue of what? This is already done. Any amount of money received from whom? Employees up to the annual salary as security under the contract of employment is not called as what? Deposits. Next one, non-interest bearing security amount held in what? Trust is not considered as what? Deposits. Next one, advance from the customers. These are towards supply of goods or services. Any advance received by the company for supply of goods or services, if it is appropriated for supply of goods or services within how many days? 365 days is not called as deposit. If it is not appropriated within 365 days, it should be refunded within how many days? 15 days. Clear? Next one, any consideration received for sale of what property? Immovable property. If it is adjusted as per the terms of the contract, is not called as what? Deposits. If I want to sell a land, they will pay advance money, right? And that should be adjusted towards what? Final considerations, not considered as deposit. Next one, security deposit for the performance of what? Contract, not considered as what? Deposit. Any advance received for what project? Long-term project. What project? Is not considered as what? Deposit. Any advance for providing warranty services or annual maintenance services, provided the advance received should not exceed what? 5 years or whatever is in practice in the industry, whichever is less, whichever is what? If you receive it for more than 5 years, it will be called as what? Deposits. Any advance allowed by whom? Sectoral regulators. And last one, advance for publication. Advance for what? Publications is not considered deposits. Clear? And this is what most important. Based on this, they ask questions many a times in the examination. See, if you receive money from promoters, that is shareholders, is it called as deposits? Yes, it is called as deposits. But however, if promoter gives any money to the company as a condition of loan by a bank, loan by whom? Bank. Loan by whom? Bank. Till that amount is repaid to the bank or financial institution is not called as deposit. Any amount contributed by the promoter or his relatives or both as a stipulation of condition by the lending institution is not considered as deposit till the loan of that financial institutions or bank are repaid. Now SBI is giving a loan with a condition that SBI will give a loan only if the promoter gives a loan to the company. Because of that condition, promoter gave a loan to the company. Now in this situation, the loan given by the promoter, loan given by whom, will not be considered as deposit till the time I repay the what? Bank loan. Once I repay the SBI loan, it is considered as what? Deposit. I should repay this also. Either who can give, promoter can give, or his relatives can give. It will not be considered as deposit. But other than this exceptional scenario, if I take money from promoter or his relative, is it called as deposit? Is it called as deposit? Yes, sir. Only in this case it is excluded. We are discussing exclusions. Now you tell me. Now listen, one more question I'll ask. If I receive any money from director, is that called as deposit? Receipt of money from director, is it a deposit? No. Direct relative of director of private company? No. Public company? Yes. Very good. Next one. Any receipt of money by a nidhi company or chit fund company or by collective investment scheme company not considered as what? Deposits. Or any money received by issue of what note? Convertible note. What note? Convertible note by startup company. What company? Startup company. Not exceeding how many years? 10 years in a single tranche. What tranche? Single tranche is not called as a deposit. Yes or no? What note? Convertible note. By what company? Startup company. What company? Minimum how much? 25 lakh or more. Correct, right? In one tranche. Correct, na? Startup company. Up to how many years? 10 years. Is not considered as what? Deposit. What is convertible note? Which can be convertible into share on a future date. Or any amount received by AIF, DVF, received from AIF, DVF, IAF, RIT, mutual funds is not considered as what? Deposit. So these are the exclusions from the definition of what? Deposits. You guys tell me, I will ask some random questions to you guys. Everybody, tell me, I will ask some random questions. You answer whether it is called as deposit or not. Money received from bank, money received from another company, money from partnership firm, deposit. It is only intercompany borrowings. What borrowings? Intercompany borrowings. Money from shareholders. Answer. Money from shareholders. Money from shareholders. Deposit. Money from directors. Not deposit. Money from relative of director of private company. Money from relative of director of public company. Money raised by issue of commercial papers. Not a deposit. Money market instrument. Money received from employees of the company up to 1.5 years salary. 1.5 years of salary. Deposit. 1 year salary, not deposit. Only after the terms of the condition. ಅದು ಮೆನ್ಷನ್ ಮಾಡಿರಬೇಕು ಕಾಂಟ್ರಾಕ್ಟ್ ಅಲ್ಲಿ. Money received towards supply of goods or services. Not a deposit. Money for providing maintenance services or warranty services. If it is for how many years? 5 years, or as per industry practice, whichever is less. Money from promoter as a condition of loan by a bank. Once repayment is made, deposit. Understood? Convertible note by a startup company, which is 25 lakh or more in one tranche. Redeemable or convertible within 10 years. Is it deposit? No. Correct, right? For what company? Startup company. Now the question is, what is eligible company? What is eligible company? A company which has net worth of 100 crore rupees or more, a turnover of 500 crore rupees or more, And the company which has obtained the consent of the members by passing what resolution? Special resolution. It is 3 conditions, not only 2 conditions. First one hand. Net worth of how much? 100 crores. Turnover of how much? 500 crores. And which has obtained the approval of members by passing what resolution? Special resolution. However, if the company's borrowings does not exceeds 100% of paid up capital, free reserves, SP account, in that situation, it can pass only what resolution? Ordinary resolution for acceptance of deposits. Now we will discuss who can accept deposits from whom. Concept is clear. Private company, public company, both can accept deposits from whom? Members. From whom? Members. Members mean whom? Shareholders, both equity as well as preference shareholders. Other than members, that is from the public, who can accept deposits? Eligible public company. What company? Eligible public company. What is eligible public company? A company, public company. Must be what company? Public company. Having net worth of 100 crore rupees or more, or turnover of 500 crore rupees or more. Any one condition must be satisfied. What do you mean by net worth? Asset minus liabilities, or equity plus preference plus, equity plus preference shares plus free reserves plus security premium account. Understood? Clear with this? Now, what is the limit on acceptance of deposit? Simple, say simple. For the purpose of this, we can classify the companies into 2 categories. Listen, private company, public company. From members, how much private company can take as deposits? If private company is a startup company, what company? Up to 10 years, they can accept how much ever deposits they want. And that too without fulfilling section number 73, subsection 2, clause A2, subsection 73E. No circulars is required, no credit rating is required, no creation of deposit repayment reserve is required. If you are a private company, that to startup company, up to how many years? 10 years. If you're not a startup company, but a private company, what company? Private company. And if you fulfill 3 conditions, you should not be an associate or subsidiary of any other company. Your borrowings is less than twice the paid up capital or 50 crores, whichever is less, and you are not defaulted in the repayment of existing deposits or interest on them. Then for you also no limit and no need to comply with section number 73, subsection 2, clause A to clause E. Other private companies, 100% of paid up capital, free reserves and security premium account. If you are a public company, 35% of paid up capital, free reserves, security premium account. If you are an eligible public company, 10% of paid up capital, free reserves, security premium account. From members, from outsiders, 25% of paid up capital, free reserves, SP account. Government company, 35% of paid up capital, free reserves, security premium account. If you're eligible public government company, 35% of paid up capital, free reserves, SP account. For government company, the limit is both. There is no bifurcations. But for normal public company, what is the bifurcation? 35% only, 25% from the public, 10% from the members. IFSC companies, 100% of paid up capital, free reserves and SP account. I hope you guys are clear with this. For this, I have made a beautiful chart on the limit and I uploaded in the Instagram in my account LawBuddy360 or CS Rajesh CSR. You guys can go through it. Okay, then very good. Okay, next one. Are you guys clear with the limit on acceptance of deposit? Everybody, yes or no? Now, provisions with respect to acceptance of deposits. Resolution. What resolution is required? Or exceeds that 100%. Are correct, right? Next one. Circular. Are you supposed to issue circular only if you are what? Other than private company. Or you are accepting deposits exceeding how much? Other public companies. Correct, right? Now, in the circular, you must mention financial position of the company, credit rating obtained, total number of depositors, and amount due towards what? Deposits. should be mentioned in the circular. Mode of issue and form. This circular should be issued either by registered post, speed post, electronic mode, by filing form number DPT1, should be published in the what? Newspaper. Along with this circular, you need to attach a certificate of the statutory auditor that you are not defaulted in the what? Repayment of deposits. And a certificate there, if there was any default, the default was made good, and the period of how many years has elapsed? 5 years has elapsed. Means if there was a default in the repayment of deposits, you cannot accept deposits up to how many years? 5 years. Not for private companies. Private companies, they are exempt from what? Section number 73 to A to what? Section number 73 to E. Understood? Validity of the circular. Based on this, they ask MCQ in the examination. The circular approved by the members by passing resolution is valid till the end of 6 months from the end of financial year or the date of AGM in which the financial statements are approved, whichever is less. Whichever is what? Less. Filing with ROC, you need to file this ROC at least 30 days prior to the what? Filing it issue up to the public or to the members. Circular should be filed with the ROC at least how many days prior? 30 days prior. No. Company should create what reserves? Deposit repayment reserves of at least how much? 20%, and you should deposit on or before the 30th of April of that particular year. In which bank? Scheduled bank. No. Provisions for security. Company can create security for the repayment of deposits on the assets. Correct, right? On both movable as well as what? Immovable. Except what property? Intangible property. But debentures? Immovable property. What property? Immovable property. Are we clear with this, everybody? Now, repayment of deposits. This shall be repaid with what? Interest. Shall be repaid with interest. If a company fails to repay deposits or interest, then or depositor concerned may apply to whom? NCLT. Apply to whom? NCLT. NCLT will make a proper order. Correct, right? And one more important. Tenure of these deposits. No company shall accept deposits which are repayable within how many months? 6 months. Or on demand. And payable after how many months? 36 months. So minimum 6 months, maximum 36 months. But however, to meet the short-term requirement, company can accept deposits up to 10% of paid-up capital, free reserves, which are repayable within 6 months, but after how many months? 3 months. Understood? There is a ceiling rate on what? Interest and the brokerage payable on what? Deposits shall not exceed interest or brokerage prescribed by whom? By the RBI. You cannot pay whatever you want, because you will offer more rate of interest, but public will invest. And what you will do then? You will default. Escape. Clear? Next one, scam. Exactly. Filing up application form for making the what? Deposits. You should make an application form to the company. Company will accept it, and once they accept it, they will issue the certificate of a receipt of deposit receipt. Can you make deposit in the joint name? Yes. Maximum how many person? 3 persons. How many person? Can you nominate any person? Yes. And deposit receipt is issued within how many days? 21 days. Deposit register. What register? Within how many days of receipt of money? 7 days. This is the one topic which I wanted to discuss, in detail. See, whenever a person asks for premature repayment of deposits, in that situation, the company shall reduce the rate of interest by how much? 1%. How much? 1%. See, how does it work, sir? How does it work? Listen. How does this work, sir? Everybody, for example, let's say it is same like deposits. Listen, everybody. For example, let's say there's a scheme. The scheme goes like this. What is the scheme? 0 to 1 year, 10%. 1 to 2 years, 20%. 2 to 3 years, 30%. This is the rate paid by the company for keeping the deposit. Because why I am not given beyond 3 years?
Because
Not allowed as per the law. So now, if you keep deposits for how many years? 1 year. How much? 10%. If you keep up to 2 years, 20% interest you get. 3 years, 30%. Clear? Now, Mr. X has promised to keep a deposit of 50 lakh rupees. How much? 50 lakh rupees for Mr. X, 50 lakh rupees for let's say 3 years. How many years? 3 years. How much interest you will get, everybody? 30%. How much? 30%. But now this fellow comes, X comes, first case, he comes and say, sir, repay my deposit. Within 6 months he comes. ಇನ್ನು 6 ತಿಂಗಳಾಗಿಲ್ಲ, ಆವಾಗ್ಲೇ ಬಂದು ವಾಪಸ್ ಕೊಡಿ ಅಂತ ಕೇಳ್ತಾ ಇದ್ದಾನೆ. ನಾವು ವಾಪಸ್ ಕೊಡ್ತೀವಾ ಕೊಡಲ್ವಾ? ಕೊಡಲ್ಲ, ಕೊಡಕ್ ಆಗಲ್ಲ. Because deposits cannot be repaid within how many months of acceptance? 6 months. You should keep it for how many months? 6 months. First case, not possible. Can you ask after 6 months? Yes or no? Now he comes and say, sir, wapas kodi after 8 months. After how many months? 8 months. Case number 2. Is it possible or not possible? Possible. In this situation, what law says is we will reduce the rate of interest by how much? 1%. What is the original rate of interest if you keep money for up to 1 year? 10%. Now we will not pay 10% to you. We will deduct 1%. It becomes how much? 9%. Now he kept money only for how many months? Still it is considered as 1 year category. Because if it is 6 months or more, it is considered as what? 1 year. If it is less than 6 months, it is considered as what? It has to be ignored. So now here in this case, he will come into which category? 0 to 1. So he will get interest of how much? How much he'll get? 9%. Correct, right? 9% of how much? What is the interest? What is the amount he has given? 50 lakh. Do the calculations, everybody. 50 lakh into how much? 9% into. Will you just do 9% or will you also take into consideration month? Month. For how many months he has kept the money? 8 months divided by 12. Sir, why 8 by 12, sir? See, this treatment of 6 months as 1 year only to decide the what? Rate. Not for calculation of value of interest. So how much amount he will get in this situation, 8 months case? How much? 3 lakh rupees he get. Did you do 8 by 12? 3 lakh amount. Correct, right? Now what if he case 3 is that he want deposits back after 1 year 5 months. 1 year how many months? 5 months. Tell me what is the rate of interest he will get? Will he get 20% or will he get 10%? He kept the money for 1.5 months. He comes and says, sir, give it back to me. I will repay it to him. Now, what is the interest payable? 10% or 30%? Sorry, 20%. He kept the money for how many years? 1.5. If there is a fraction, if it is 6 months, consider as how many year? 2 year. Sorry, 1 year. Correct, right? Yes or no? But in this case, it is only how many months? 5 months. Ignored. Means it means what? Only 1 year. He comes to this category. Means he will get interest of only how much? 10%. How much he will get? 10%. Aresa, no. Because you will ignore the what? This 5 months. Case number 3. Now, what if it is case number 4? Let's say case number 4 is, let's say he keep the money for 1 year 8 months or 1 year 6 months. I'll make it easy for you guys. 1 year 8 months. Now tell me, everybody, in this case, what is the rate of interest? This will come into this category, 1 to 2 years. It is considered as 2 years now. Why? Because it is 6 months or more. So it is 20%. How much? 20%. Minus 1% earlier. So it becomes what? 19%. How the interest is calculated? It is like 50 lakh rupees into what? How much? 19% into how many months? How many months in this case? 1.8 means what?
0.8 is
18 months. Sorry, no, not 20 months. 20 by 12. Not 24. 20 by 12. Will you take into consideration 24? Do both calculations. You'll get to know. You do one thing. Do it for 1 year. First, do it for 1 year. How much it is? 19% into 50 lakh for 1 year. What is the interest? No, no. First, do it for 1 year. What is the amount? 9 lakh 50,000 rupees. Then do it for 8 months. 8 by 12. 33, 33. Now you do it. 50 lakh into 19% into 20 by 12. You do 20, 48. You said sir 24 months, right? Do 24 months. Which one is correct? Which one is correct? It is 12 month. How to do calculation of interest? How do you do calculation of interest? P into R into time, right? In case of time, do you take total number of months or you take into consideration 12 months? 12 months is fixed, irrespective of number of months. Array, sir, no. Or do one more thing. Do 50 lakh into 19% into 1.8 divided by 12. Huh? 50 lakh into 19% into 1.8 divided by 12. Oh, is it? Then that is wrong. It should become how much? 15 lakh 83,000 what? Because if it is for 8 months, if it is 3 lakh, obviously it should be more for the other things, right? This is how the calculation is done. Correct, na? You do 24 months or only 12 months? 12 months, right? ಅಕ್ಕನಾ FMI ಅಲ್ಲಿ ಇದೆ ಅಲ್ಲ ಕ್ವಶನ್ ಇದು. You do this calculation of interest, right? Simple interest, compound interest. I hope you guys got the calculations part here. Correct, right? What is the amount? 15 lakh 83,333 is the amount of interest payable. Clear? Now come to the provision now. Come to the provisions, everybody. I hope you guys are clear with the concept of calculation of interest. Calculation of what? Interest. Read this provision, everybody. If the debentures or deposits are repayable, deposits are what? Repayable after the expiry of how many months? After the expiry of how many months? 6 months. But before maturity, interest payable is reduced by how much? 1%. How much? 1%. While calculating, less than 6 months shall be excluded. 6 months or more shall be counted as how many years? 1 year. Correct, right? Next one, reduction at the rate of interest is not applicable if the repayment is made to comply with the what? Law. Comply with what? Law. Because your deposits are exceeding the prescribed limit. What limit? Because of that reason, if you do repayment of deposits, then this concept is not applicable for you guys. Yes or no? Or if reduction of rate of interest is not applicable, if the payment is made for providing the risk of war widows. What widows? War widows. Or a war risk. War declare agide. At that time you do make repayment, then the reduction of interest rate is not applicable. Correct, right? If you voluntarily close the deposits for the purpose of earning higher rate of interest, you get higher rate of interest only if you keep it for what? More number of years or more time than what is unexpired. If in our case, we kept it for how many years? 3 years. You redeem it for 1.5 years. And if you now want to redeposit to earn the higher rate of interest, because the rate of interest will keep on changing, right? At that time, you get the higher rate of interest only if you deposit for more than how many years? 1.5 years, unexpired period. Clear? Next one, if you fails to repay, you must pay interest of how much? 18% per annum. How much? Appointment of deposit trustee only if it is what? Secured deposits. Acceptance of deposit from the public, only which company? Eligible public company. Shall be sent to ROC along with return of deposit in the form. DPT 3 shall not be below the what grade? Minimum investment grade. Should obtain a credit rating from the credit rating agencies. If you are a eligible public company and want to accept deposits from the public. Done. Next one, charges to be created by the company which accepts the secure deposit within how many days? 30 days. Only on what assets? Tangible assets, whether it is movable or immovable, in favor of whom? Debenture trustee. What trustee? Debenture trustee. Are we clear with this? Who is deposit trustee? Sorry, not debenture trustee, deposit trustee. Who is deposit trustee? Anyone who is appointed to protect the interest of whom? Deposit holder. What holder? Deposit holder. Who cannot be appointed as deposit trustee? Director, KMP, officer, employee of the company, holding company, subsidiary company, or associate company, or depositor of the company. Because they have some interest in the company. Relative of the above, indebted to the company, holding company, subsidiary company, or associate company, or has any pecuniary interest with the company, or entered into what? Any guarantee. Removal of deposit trustee. Can they be removed? Yes. Consent of all directors present at the meeting of the board. If the appointment of ID is compulsory, one ID shall be present. Meeting of depositors. The deposit trustee shall call the meeting of deposit holders on the request of what? At least 1/10 of the depositors in value, or on the event of what? Any default. Any what? Default. Are we clear with the concept of the deposits, everybody? Trust me, if you go with this, you can answer any of the question they ask in the examinations. Last attempt they ask questions with respect to calculation of deposit. We have solved this question. I have given all the questions section wise, topic wise with respect to deposit. Understood? Yes or no? Clear with this? And we have covered each and every concept with the help of short notes. A short note say, but not a short notes. If you would have observed, it has every point of what is there in the material. I have not skipped a single topic. Important topic. Correct, right? We are covering everything, but only the keywords. If ICI material is around 300 pages, it is only how much? 100 pages for the purpose of revision one day before the examinations. Are we clear with this? With this, we are done with deposits. Yes or no?
Sir.
Chalo. Next one, next one, next. Yes. Chapter number 3, the Foreign Exchange Management Act 1999. As the chapter name itself indicates, it is a law to manage the foreign exchange. In this chapter, you would be studying what is a foreign exchange, why do we need a Foreign Exchange Management Act, what is foreign currency, what is foreign security, who is an authorized person, regulation of foreign exchange, current account transaction, capital account transaction. In current account transaction, we have Schedule 1, Schedule 2, Schedule 3. Schedule 1 provides prohibited current account transaction. Schedule 2 provides current account transaction which requires approval of RBI. Sorry, central government. Schedule 3 provides current account transactions which requires approval of the RBI. We'll discuss one by one in detail. Clear? So what is the chapter name? The Foreign Exchange Management Act 1991. Introduction. In the introduction, we have the need for FEMA. They may ask this question in the examination. Till today, they have not asked the question of what is the need for the FEMA or what is the need for this law called as Foreign Exchange Management Act. See, before FEMA, we had FERA. Before FERA, we had Defense of India rules. So before that, there was a question of foreign exchange. We were under the control of whom? British. They have diverted all our resources from India to what? England. And when the British left India, we were importing almost all the goods from other countries. Because of that, we had a huge balance of payment. And you guys know, if there is a balance of payment, what will happen? Our currency value will depreciate. Correct, right? So, post 1991, that is after liberalization, privatization, and globalization, during the Manmohan Singh period, they introduced this liberalization, privatization, and globalization. Till that time, foreign trade was highly regularized. Sorry, highly regulated. Few things were prohibited and few things required license by the central government. For example, import of gold. Because there was a license system for import of gold, there was a huge black market for the license, and many people were into smuggling of gold. Because of which regions there was a huge balance of payment. To overcome all these issues, they framed a law called they framed the what? LPG, liberalization, privatization, and globalization in the 1991. Post 1991, they felt there should be a law for management of foreign exchange for the orderly development of foreign exchange market in India. That is why they consolidated and amended this FERA to make a law called as what? Foreign Exchange Management Act. FEMA is not a prohibiting law, it's a facilitating law. It facilitates foreign exchange transactions, it manages the foreign exchange transaction. FERA is to regulate the foreign exchange, but FEMA manages the what? Foreign exchange. Clear? Understood? So, because of LPG, liberalization, privatization, and globalization, there was a cross border capital. What is cross border capital? You can take loan from the Indian bank. In the same way, you can take loan from whom? Foreign banks. FDI was allowed. Means foreign direct investment was what? Allowed. And even the foreign trade was allowed in certain sectors freely. Because of this, there was an increase in the foreign exchange. Because there was an increase in the foreign exchange, the need was felt that there should be a law to manage all these things. Because of that reason, government has enacted the law called as Foreign Exchange Management Act. They can ask this theory question for 5 marks. Clear? So what is the need for Foreign Exchange Management Act? First of all, it is a what law? It is a controlling law, but not a what law? Prohibitive law. With the evolution of globalization of capital and free trade access. What access? This happened because of LPG. Globalization of capital and free trade happened because of what? LPG. What is LPG? Liberalization, privatization, and globalization. There was a need which need was felt for the purpose of what? Management of foreign exchange. Because of that reason, FEMA was enacted. We had Defense of India rules. Defense of India rules were replaced by what? FERA. And FERA was replaced by what? FEMA, Foreign Exchange Management Act. FEMA came into force on 1st June 2000. So if they ask question about what is the need of FEMA, you should write this much. Are we clear with this? Enforcement of FEMA. For enforcement of FEMA, we have RBI as well as the ED. Management of FEMA is done by RBI, and enforcement of, like, if there is any frauds or if there is any contravention of provisions of the law, who comes into picture? ED, Director of Enforcement. Clear? Who manages the FEMA? RBI. Who enforces it? Director of Enforcement. Are we clear with this, everybody? Next one, preamble, extent, and application. Now, what is preamble, sir? Preamble is nothing but the preface, the introduction to the law. So, preamble provides what is the purpose of the law, for what reason this law was made. As I said, it's the law to consolidate and amend. What do you mean by consolidate? To bring together. We had two different laws, right? Defense of India rules and FERA, to consolidate everything at one place, everything which is dealing with foreign exchange, kept under which law? FEMA. And also to amend which law? FERA. With respect to the what exchange? Foreign exchange, with the object of facilitating the what trade? External trade as well as the payment and also external trade. So FEMA is not only about foreign exchange, it also includes what? Even the foreign trade. What trade? Foreign trade. And to promote, most important, orderly development. What development? Not a sudden development, a orderly development and maintenance of what exchange market in India? Foreign exchange market in India. So now based on this extent and application, they asked a practical question in the previous examination. FEMA is extend to what? Whole of India. Extends to where? Whole of India. I repeat, is this FEMA applicable to the whole of India? The answer is yes. It also applicable to AOB or BOA, books of accounts, all branches, offices or agencies which are outside India but which are owned or controlled by a person resident in India. FEMA is applicable to all the branches, offices, or what? Agencies which are outside India but which are owned or controlled by a person who is what? Resident in India. Resident in what? India. Are we clear with this, everybody? Yes or no? Next one is it is also applicable for any contravention committed outside India by any person to whom this act is applicable. Means you are a citizen of India, resident of India, you go to abroad, you do some filling activities, you come back to India. Punishable, not punishable? Punishable. Understood? Clear with this? Let's say a foreigner comes to India. Comes to where? India. He commits an offense under FEMA. Punishable, not punishable? Punishable. Because this law is applicable to whom? Whole of India. What of India? Whole of India. Are you guys clear with the extent and application of law? You guys tell me, is this law applicable to whole of India? Everybody. Applicable, not applicable? Yes or no? Is it applicable, not applicable? I hope you guys are clear with extent and application of FEMA. Correct, right? It is applicable to extent and application. FEMA is applicable to all over India. It is also applicable to the branches, offices, and agencies which are outside India but which are owned or controlled by a person resident in India. It is also applicable for any offences committed by any person outside India, but whom? What is applicable? FEMA is applicable. Clear with this? Extent and applicability. They may either ask questions based on preamble or based on extent and application. Understood? Next one. Definitions are most important. First one, foreign exchange. What exchange? Foreign exchange. Based on this, they can ask question in the examination. Simple, say simple. When I say foreign exchange means foreign currency. What currency? Foreign currency. Correct, right? Now tell me, what is your net worth? How much money you have? What you will say? How much money you have, Basit? How much money you have?
500.
Will you say only 500 or will you consider everything including your bank balance,
Bank balance.
currency note, coins? Because these are all equal to the currency note, right? Equal to currency, right? In the same way, foreign currency does not means only a foreign currency note. It also includes even the following. Clear? So what is foreign exchange? Foreign exchange means foreign currency. What currency? Foreign currency, and includes deposits. If you have any deposits, credits or balances which are payable in what currency? Foreign currency. That is also considered as what exchange? Foreign exchange. Next one, drafts, traveler checks, bills of exchange or letter of credit which are expressed are drawn in Indian currency but payable in what currency? Foreign currency. It's also called as what exchange? Foreign exchange. I hope you guys know what is letter of credit. Letter of credit means what? For example, you want to buy goods on credit basis outside India, or you want to take a loan from a bank which is outside India. You go to the Indian bank. You say, Indian bank, please give me a guarantee. The Indian bank gives a letter of credit saying that any person who is having this letter of credit, you can give a loan to him or you can supply goods to him. If he don't pay, who will pay? Bank will pay. So here, this letter of credit is equal to what? Foreign currency, right? Because who will make the payment? Bank will make the payment. That is called as letter of credit. This Nirav Modi did a scam, right? Nirav Modi did scam. He did scam based on this letter of credit. He used to take letter of credit from Indian banks. Punjab National Bank used to buy what? Diamonds from outside India, and he defrauded in the payment of the letter of credits. Clear? So the foreign exchange includes, everybody tell me what is foreign exchange? Means and includes. Bolo? Means and includes a foreign currency and includes any deposit, balances, deposits, credits, and balances payable in what currency? Foreign currency. It also includes any draft, traveler checks, bills of, letter of credit, bills of exchange, which is expressed in foreign currency, but sorry, Indian currency, but payable in what currency? Foreign currency. At the same time, it includes drafts, traveler checks, letter of credits, bill of exchange drawn by the banks or institutions outside India, but it is payable where? In India or in Indian currency. It is considered as what? Foreign exchange. Means two currencies are involved here. I hope you guys are clear with the meaning of foreign exchange. Everybody, yes or no? It should be in what currency? Foreign currency. Foreign currency must be involved. Then only it is considered as what exchange? Foreign exchange. Next one, definition of authorized person is important. Why? Because you should take foreign exchange and a transaction only through what person? Authorized person. If it is other than through authorized persons, it is prohibited. Under section number 3 of the FEMA. Now, who is authorized person, sir? Authorized person means authorized dealer, money changer, offshore banking unit of Indian banks, and any other person who is authorized by the RBI is considered as what person? Authorized person. What person? Authorized person. Arey, sir, no. Are we clear with this? Only an authorized person can undertake what transaction? Foreign exchange transaction. Now, I have some dollars. Whom I can give these dollars to get Indian rupee? Only an authorized person. If I give it to someone else, it is considered as what? Offense, punishable offense. That is like if I enter into any financial transaction in India as a consideration for purchase of property outside India, it is considered as Hawala transaction. It is prohibited under section number what? 3 of the FEMA. Are you guys clear with this? Till now, we discussed need for FEMA, we discussed preamble, extent of application of FEMA. We also discussed the definition of foreign exchange and definition of authorized person. What person? Authorized person. You tell me one last time what is foreign exchange? Foreign exchange means foreign currency and include deposits, credits, balances payable in what currency? Foreign currency. It also includes draft, traveler checks, letter of credit, bills of exchange, expressed or drawn in foreign currency, payable in sorry, correct. Expressed in foreign currency, expressed in Indian currency, payable in what currency? Foreign currency. Correct, right? Next one, drafts, traveler checks, letter of credits, bills of exchange, which are drawn by institutions which are outside India, but payable where in India. It's called as foreign exchange. And FEMA deals with what exchange? Foreign exchange. Who is authorized person? Authorized person means authorized dealer, money changer, offshore banking unit. It also includes any person licensed by the RBI. Money changer means what? We have Book My Forex, where you can exchange your foreign currency into Indian currency into what currency? Foreign currency. They charge some commission for converting this cash, and they are licensed by whom? By the RBI. Are we clear with this? Next one, currency. What do you mean by currency? Currency includes currency notes, postal orders, money orders, checks, drafts, traveler checks, letter of credit, and also bills of exchange, promissory notes, credit cards, or such other similar instruments which are notified by whom? Reserve Bank. Any instrument which are equal to currency is also considered as what notes? Currency notes. Are we clear with this, everybody? Most important definition. Based on this, there can be question in the examination. What do you mean by foreign security? What security? Foreign security. Are simple, say simple. Any security which is expressed in what currency? Foreign currency. It is considered as what security? Foreign security. Simple as simple. Listen, everybody. If any security is denominated, I'm using the word security because you know what is security means. Shares, debentures, bonds. Any shares, debentures, bonds, or stocks which are expressed in what currency? Foreign currency, and also includes securities which are expressed in foreign currency, but still payment of interest or dividend is payable in which currency? Indian currency. Still it is considered as what security? Foreign security. Why? Because it is expressed in what currency? Foreign currency. If it is denominated or expressed in foreign currency, even if interest or dividend is payable in Indian currency, it is called as what security? Foreign security. Keep this in mind. You can deal with foreign exchange or foreign security only through an authorized person. For that purpose, you should know what is foreign exchange and foreign security. I will not discuss the definition of person because you know who is a person. It includes natural person, HUF, company, firm, association of persons, and BOA. What is BOA? Branch, officers, and agency. अब आएंगे everyone's favorite topic, person resident in India. Now, what do you mean by person resident in India? Now, simple say simple. Person resident India means the one who has stayed for more than
182 days.
it means 183 days.
Yes.
If you have stayed for 180 more than 182 days in the preceding financial year, then you will be considered as what? Person resident in India, PRI. If not, you will be considered as what? PROI. But however, there are exceptions. Even though you have stayed for more than 182 days in the last financial year, but if you are leaving India or you are staying abroad, for any of the following purposes, you would be considered as person resident outside India. It does not include any person who goes out of India to take up employment where outside India. You are not considered as what? The moment you leave India, you are considered as what? Person resident outside India. Person resident where? Outside India. Or for carrying on any business or occasion outside India. You are from the day you leave, you are considered as what? Person resident outside India. Or if you go for any other purposes which indicates a situation of staying outside India for uncertain period. Example, if you go for education purpose. RBI has clarified that if anybody goes to education outside India, you are deemed to be what? Person resident outside India from the day you leave India. Unlike income tax, in FEMA, to decide residential status, we take into consideration the intention behind living India or coming to India more than stay. You have stayed for more than 182 days, but because you are leaving India to take up employment outside India, or for business or occasion purpose, or for uncertain period, you are considered as what? Person resident outside India from the day you leave. Again, any person who has stayed for more than 182 days in India is considered as what? PRI. But however, if a person comes to India, comes to what? India, he will not be considered as what? PROI. Even if he stays for more than how many days? 182 days. Other than for how many purpose? Three purpose. What are those three purpose? To take up employment where? In India. If a person comes to India to take up employment in India, employment where? Employment where? In India, then he will be considered as what? Person resident in India. The moment he comes to India, he is considered as what? PRI, irrespective of his stays in India. What if a person comes to a tourism purpose? What purpose?
Tourism.
He comes to India for tourism purpose because he was sick. He stayed beyond 182 days. Will he be considered as person resident in India?
Yes.
The answer is no.
This one
Why he came to India?
for some other purpose. But sir,
That is what?
it become clear like
No. If any person comes to India other than for these three purposes, even if he stays for more than how many days? 182 days. If you observe the definition carefully, who is PRI? Any person who has stayed for India for more than how many days? 182 days, but does not include, means what? Following persons will not be considered as what? Person resident in India, even if they stay for more than how many days? 182 days. Sir, apply the same logic, sir. You have stayed for more than 182 days in the last year, but you are leaving India. Leaving what? for employment purpose, you'll be considered as what? PROI immediately.
Sir.
In the same way, if you are coming to India for employment purpose, PROI.
Yes.
Sorry, PRI, person resident in India. If you are coming for employment purpose or business purpose or occasion purpose or for having an intention to stay for what period? Uncertain period. You are considered as what? PRI, person resident in India. But however, if you come to India on tourism purpose or medical treatment purpose, your intention of coming to India is for what purpose? Not for employment, not for business, not for uncertain period. You come to India, but because you will be PROI. But however, you stayed in India for more than how many days? 182 days. In that case, also you are not considered as PRI. You are considered as what? PROI. What was your intention of coming to India? What was your intention of coming to India?
Or
Huh? For tourism purpose. Correct, right? By mistake, you stayed in there for how many days? More than 182 days. Will you be considered as PRI? The answer is no, because your intention. See, simple, say simple. If you see here, listen, a person who comes to India, it does not what? Includes a person who comes to India. Are you guys getting it? It is saying, this one says person who has gone out of India. This one says what? Person who comes to India will not be considered as what? Person resident in India, even if they stayed for how many days? More than 182 days, except in these three scenarios. So if you come for tourism purpose, even though you stayed for how many days? 182 days, you'll not be considered as what? Resident of India.
so if you come generally into India, then
Not a PROI. Sorry, not a PRI.
more than 182 days. General,
That is what your intention depends. What is general purpose means? You'll get a visa, right? If you're a citizen of outside the country, to come to India, you need visa, na? In the visa, you'll mention, right? What is the purpose of your visit to India? You cannot say general purpose.
sir, your business, that is employment business or that three cases, if you come, same thing in PRI.
Correct.
All other cases PRI.
Correct.
So then, for what information will you consider that person resident in India is more than 182 days?
For Indian person,
So for it purpose, that is not applicable.
not applicable. Make sense? Yes or no? Sir, simple. If you are considering the person who is leaving India, from that day itself, you consider him as what? Person resident outside India. And if a foreigner comes to India, for these three purposes, he is considered as what? Person resident in India. But if he comes for any other purposes, even if he has stayed for more than how many days? 182 days. See, if you observe the wordings here, definition of word, during the course of preceding financial year, but does not include. Definition itself says, I don't include these people. One who comes to India, one who goes out of India. But however, one who comes to India, for how many purpose? These three purpose. Then will be considered as what? Person resident in India. So in the FEMA, we don't take into consideration the number of days. Obviously, number of days is important, but what is most important is intention of coming to India, intention of going out of India. That is what most crucial. Understood? I will give an example. Now you tell me, you're going for an abroad. You are a citizen of India. You're there in India for 365 days in the last year. Now today you are leaving India for employment. PRI, PROI. Keep answering.
Today PRI.
You are leaving, you left today. From today's date, you will be considered as what? PROI. The moment your departure happens, you will be considered as what? PROI. The moment you leave India, moment that stamp is put, you cross the borders of India, you will be considered as what? PROI. Left India means what, Basit? That is what? When you live in India, when you are considered to be left India, they put that stamp, right? Passport stamp they will put, na. From that moment, you are considered as what? Person resident where? Outside India. Understood? Got it? At the same time, when you will be considered to arrived in India, visa on arrival. Have you heard visa on arrival or stamp on arrival?
Sir.
They put a stamp on your passbook, right? It means you have arrived in India. Understood? Clear? Now I will give certain examples. You guys should tell me whether it's PRI or PROI. Are we clear with this, everybody? Now listen. I stayed for India last year 365 days. I am leaving India for employment purpose. PRI, PROI. PROI. For business purpose.
PROI.
For education purpose.
PROI.
A person comes to India. Okay. Person comes to where? Yes, ma'am. So I hope you guys are clear with person resident in India. Who is PRI? The one who has stayed for more than 182 days in the preceding financial year, but does not include the person who has gone out of India or stays outside India for employment purpose or for business purpose or with an intention to stay for an uncertain period, but does not include any person who comes to India other than for what purpose? For employment purpose or for carrying business or professions or any other purpose where he has an intention of staying for what period? Uncertain period. Then he will be considered as what? PRI from the day he arrives to India. Clear? Next one, any person or a body corporate registered where? In India, it will be considered as what? PRI. Considered as what? PRI. And also includes any branch or office or agency which is incorporated where? Outside India, but controlled by whom? Person resident in India. It also includes any office or a branch or agency outside India owned or controlled by a person resident in India. Office, branch or agency in India. Even if it is controlled by where? Outside India. It is considered as what? PRI. Office, branch, agency outside India, but it is controlled by a person what? Resident in India. It is also considered as what? PRI. Clear? But who is PROI? Person who is not resident in India. If you remember PRI, you can remember what? PROI as well. Are we clear with this, everybody? Yes or no? Understood? समझ में आ गया? Foreign Exchange Management Act. Are you finding it difficult to understand and remember the exemptions and modifications applicable to IFSC companies and Nidhi companies? Don't worry, all your confusions and doubts end with this video. All you have to do is just watch this video till the end and refer to the PDF where I have grouped all the section numbers chapter wise and also the exemptions and modifications. So let's start. There are a few exemptions and modifications which are notified by the central government for IFSC company and Nidhi company. First of all, what is an IFSC company? IFSC company means it is a company which is incorporated in the International Financial Service Center. Means IFSC company must have its registered office in the IFSC Center. We have Gujarat Gift City, that is Gujarat FinTech City, which is the first international financial service center. So, if any financial company is established in that Gujarat FinTech City, is considered as an IFSC company. IFSC company must have its object to provide financial services. So, what is IFSC company? A company which is incorporated and having a registered office in the International Financial Service Center is called as an IFSC company. At the same time, there are few exemptions and modifications applicable to Nidhi companies as well. Now, what is a Nidhi company, sir? Nidhi company are a mutual benefit society are nothing but a company which is notified as such by the central government in the official gazette. Before 2022 Amendment of Companies Act, a company which is formed with promotion of object of thrift and savings amongst the member were called as Nidhi company. There was no requirement of notification of Nidhi company as a Nidhi company by the central government. Because of some irregularities and fraudulent activities, now the government mandates that a company can be called as Nidhi company only if it is notified as such in the official gazette by the central government. So a Nidhi company does not comes into existence just by incorporation. That has to be notified in the official gazette by the central government. So there are a few exceptions and modifications which are listed in your ICA material as well. So I have listed all those exemptions and modifications chapter wise. And also further I've classified them into sections wise. In the chapter number 2, as per your syllabus, chapter number 2, incorporation of company and matters incidental thereto, there are few exceptions and modification which are applicable to IFSC company. First one, section number 3. As we know, section 3 of the Companies Act deals with formation of company. As per section number 3, a company can be formed for a lawful purpose by subscribing their names to the memorandum of association by 2 or more persons if it is a private company, 7 or more person public company, 1 person as a 1-person company, that is a private company. In these company, the liability of the members may be limited by shares, limited by guarantee, or it can be unlimited. But in case of IFSC company can be formed only as a company limited by shares. Keep this in mind. Other companies, they can be either limited by shares, limited by guarantee, or it can be unlimited companies. But IFSC company must be a company limited by shares. First modification. Second one, section number 41A. Section 4 deals with Memorandum of Association. 41A deals with name clause. We know that a name of a company shall end with the word private limited if it is a private company, limited if it is a public company, and OPC private limited if it is a 1-person company. But in case of IFSC company, it must have a suffix called as the International Financial Service Company or a IFSC company. Either you will mention the full name, that is International Financial Service Company, or you will mention as a IFSC. This is the one more modification with respect to the International Financial Service Center companies. Next one, section number 41C, that is which deals with object clause in the memorandum of association. In the object clause, we specify the object or the purpose for which the company is incorporated. Correct, right? So other companies can have different objects. Correct, right? They can carry any of the objects. Correct, right? But in case of 1-person company, cannot carry the non-banking financial activities, including investment in the body corporate. But IFSC company must have its object to do the financial services activities. Mandatory. Section number 41C. Next, section number 12, subsection 1. As we know, section number 12 deals with registered office of the company. A company can have a registered office, and that is the what decides the jurisdiction of ROC and jurisdiction of EGM and jurisdiction for keeping the registrar members and various other documents. But IFSC company shall have registered office only in the IFSC center. Then only it is called as IFSC company. It must have a registered office in the IFSC center. Next one, section number 12, subsection 2. Verification of registered office. Every company shall have registered office within 30 days, and they must file a verification of registered office in the form number INC 22 verified by a CA, CS, CMA or advocate in practice. But in case of IFSC company, the time limit is how many days? 60 days from the date of incorporation of the companies. Next one, section number 12, subsection 5. Section number 12, subsection 5 deals with shifting of registered office. A company can shift registered office within the same city, town or village, or outside the same city, town or village by passing special resolution, or from one ROC to another ROC by passing special resolution with the approval of RD, or from one state to another state. But IFSC company can change its registered office within the IFSC center. Because it is IFSC company. IFSC company must have its registered office within the what? IFSC center. Next one, section number 21. Section number 21 deals with authentication of document. In case of normal companies, the document must be authenticated either by KMP or by a director or by an officer or by an employee who is duly authorized by a board resolution. But in case of IFSC company, there is one more provision called as any other person. It can be other than employee as well. This is the one more modification for which company? IFSC company. This is with respect to chapter number 2 of the companies in your corporate laws. Then chapter number 3 Chapter number what? 3. That is Prospectus and Allotment of Securities, which covers section number 23 to 42. In these, there is only one modification. Section number 42 deals with private placement of securities. What of securities? Private placement of securities. Correct, right? So, in case of private placement of securities, section number 43, subsection 3 is not applicable for IFSC companies. We know that a company shall not make a fresh offer unless the existing offer of private placement is completed or abandoned or cancelled or it is withdrawn. But this provision is not applicable for the IFSC company. Next one, time limit for allotment of securities. We know that a company should do the allotment of securities within 60 days from the date of receipt of money. If not, she'll refund the money within 15 days. But for IFSC company, the time limit is how many days? 90 days instead of 60 days. So these are the two modifications for IFSC company in chapter number 3. In our material, because there are no exemptions in the chapter number 1, it is preliminary. I just mentioned as 1, 2, 3. That's it. So as per your material, it is chapter number 3. And these modifications are not mentioned in our ICA material. This is only for knowledge purpose. Okay. So there are chances are very less that they'll ask question based on chapter number 3. That is Prospectus and Allotment of Securities. Next one, these exemptions or modifications are there in the material, that is share capital and debenture, section number 43 to 71. Here, section number 43. Section number 43 is not applicable to IFSC company where articles of association of such company expressly provides for it. Means IFSC company, same like private companies, can exempt the applicability of section number 43. Means they can have a different types of share capital. Which companies? IFSC companies. Next one, section number 46 deals with certificate of shares. What of shares? Certificate of shares. We know that a company shall deliver the share certificate. What certificate? Share certificate within how many months of allotment of shares? 2 months of allotment of shares. Correct, right? Within 2 months. Even for the subscribers to MOA, within how many months? 2 months. Correct, right? But for IFSC company, they shall deliver, in every cases, they shall deliver certificate of shares within how many days? 60 days from the date of particular action or corporate actions. Next one, section number 47, similar to private companies. IFSC companies can exempt the applicability of section number 47, which deals with voting rights. We discussed about voting rights of equity shareholders, voting rights of preference shareholders. IFSC company can exempt the applicability of section number 47. Next one, right issue. Section number 62, we have a right issue of shares. What is right issue of shares? Issue of shares by a company to the existing shareholders in proportion to their existing shareholding is called as what? Right shares. So in case of IFSC public company, time period for acceptance of offer, you know that normal company should provide minimum 7 days, maximum 30 days as a time period for the acceptance of offer. But however, that can be reduced below 7 if 90% of the members, 90% or 95%, 90% of the shareholders who have a right to vote has given their approval in writing. The members who are holding 90% of the shares having voting rights, if they have given approval, then you can keep the offer open for what? Lesser than how many days? 7 days. Same provision is applicable even for the IFSC public companies. Next one, section number 62, ESOP. In case of ESOP, if it is a IFSC public company, normal company should pass special resolution. Private company and IFSC public company, only what is sufficient? Ordinary resolution is sufficient. Next one, section number 67. Section number 67 deals with what? Restriction on purchase of its own shares or not to provide loan to purchase its own share. This section number is not applicable to which company? IFSC public company, subject to fulfillment of how many conditions? 3 conditions. Same like private companies. The second point, that is, no company shall purchase its own shares or provide loan to purchase its own shares. There are 2 prohibitions. But section number 67 is not applicable to a private company if no other body corporate has invested in that company or the company's borrowing is less than twice the paid up capital or 50 crore rupees, whichever is less. And the last one, the company has not defaulted in the repayment of deposit. Correct, right? In the same way, if IFSC company satisfy those 3 conditions, section number 67 is not applicable. Means IFSC company can buy its own shares or it can provide loan to buy its own shares. Next one, acceptance of deposits by companies. We know that IFSC, in case of private company, what is the limit on acceptance of deposits? Startup company, no limit. Private company satisfying the three conditions, no limit. I have private company not fulfilling any of those two criteria, 100% of paid up capital, free reserves and security premium account. Correct, right? So, in case of IFSC company, condition shall not apply to IFSC public company which accepts from its members money is not exceeding 100% of paid up capital, free reserves and SP account. Correct, right? Means IFSC company, IFSC public company can accept deposits from its members up to how much? 100% of paid up capital, free reserves and SP account, not to without fulfilling those conditions. 73 to A to 73 to E. IFSC public company can accept deposits up to how much? 100% of paid up capital, free reserves and securities premium account. Done. Next one, registration of charges. There are no exemptions or modification. Management and administration. A IFSC company similar to private companies. See, these exceptions and modifications are given even for which companies? Private companies. Correct, right? So IFSC companies can exclude the applicability of these section numbers by specifically mentioning it in the Articles of Association. If Articles of IFSC company expressly provides section number 100, that is EGM provision. In case of IFSC company, EGM can be held at any place within or outside India. We know that EGM should be held where? Within India. But for IFSC company, the EGM can be held even where? Outside India with the consent of whom? All the shareholders. 101, in case of IFSC company, IFSC public company, section number 101 is not applicable if the articles provide. So as per section number 101, every company should give notice of how many clear days? 21 clear days. But private company and public company, they can give a shorter notice also. But that has to be mentioned in the where? Articles of Association. Next one, section number 102 is not applicable to IFSC company if it is expressly mentioned in the Articles of Association. Section number 103, in case of public company, IFSC public company shall not apply if the articles provides otherwise. Means they can provide different quorum in case of IFSC company. Section number 104, chairman. The provisions of chairman is not applicable to IFSC company if the articles expressly provides. Next one, section number 105, again proxy provisions not applicable to IFSC public company if it expressly provides. 106, restrictions on voting rights. Even these provisions are not applicable if the articles of IFSC company expressly provides for it. Next one, section number 109, demand for poll. We know the demand for poll, right? Even the proxy can also demand for the what? Poll. This provision is not applicable to IFSC public company if the articles expressly provides. 117, filing resolution with ROC. This is what most important. Based on this, there can be MCQs and examinations. Every company shall file the special resolutions and the board resolution which are passed under section number 179 within 30 days from the date of passing of resolution in the form number MGT 14 with ROC. But however, for IFSC company, the time limit is how many days? 60 days. Normal company, it is how many days? 30 days. So IFSC company, 60 days. Next one, minutes of the meeting shall be prepared and signed at or before the next meeting. General meeting minutes, in case of normal company, should be signed with the chairman of the meeting, same meeting. If chairman is not available, then any person or any director who is authorized by the board can sign the minutes. But in case of IFSC company, what company? The board, the meetings, minutes of the general meeting can be signed by the chairman within the what board meeting? Next board meeting. Shall be prepared and signed at or before the what board meeting? Next board meeting. Section number 118, secretarial standards are not applicable to which company? IFSC public companies. Clear? These are the exemptions for IFSC companies with respect to meetings, management and administration. Declaration and payment of dividend, no exemptions. Then accounts of the company, there are a few exemptions. The first one is financial year. This is most important. There can be question based on this. In case of IFSC company, a IFSC company can follow a same financial year that of its foreign holding company without the approval of central government. If Indian company, which is subsidiary of a foreign company or associate of a foreign company, and if it is required to consolidate financial statements, then it can follow a different financial year by applying with approval of central government. But such approval is not required for which companies? IFSC company. So a IFSC company which is a subsidiary of foreign company, and if that foreign company is following a different financial year, even the IFSC company can follow different financial year without approval of central government. One more exception. Last one, section number 135, most important one. CSR is not applicable for a period of how many years? 5 years from the date of commencement of business. For which companies? IFSC companies. Next one, audit and auditor. Removal of auditors. If no decision is communicated within how many days of application? 60 days of application. It is deemed that CG has given the approval in case of IFSC company for removal of auditor, because we know that for removal of auditor, whose approval is required? Central government approval. If approval is not given within how many days? 60 days. Or if there is no communication within 60 days, it is deemed to have been approved. So these are the exemptions or modifications applicable to the IFSC companies. Simple as that. There is no need to break your head by referring to these exemptions and modification every time you read the provisions of Companies Act. Just go through this PDF. You'll be thorough with all the exemptions and modifications. Next one, Nidhi company. As I said, Nidhi company is nothing but a mutual benefit society which has notified as such by the central government in the official gazette. Correct, right? Now, are there any modifications or exemptions for Nidhi companies? Yes. First one, incorporation of company and matters incidental thereto. In that, section number 7. Section number what? 7. Section number 7 provides that there should be a declaration by central government under section number 406. Shall be obtained by the company before commencing the what? Business. So Nidhi company shall not commence the business unless until that company is declared as Nidhi company by the central government in the what gazette? Official gazette. Next one, section number 20, subsection 2, service of document. Remember? Service of document, mode of service of document. Company can send it either by hand, by delivery, or by registered post, or a speed post, or by electronic mode, or courier services. Correct, right? But in case of Nidhi company, the service notice or documents are sent to a member of a company only if he is holding at least how much? Shares of 1,000 in face value, or more than 1% of total paid up capital of the company, whichever is less. If not, to other members who is not holding at least 1,000 rupees face value of shares or 1% of total paid capital of the company, for such person, the documents are served by publishing in the what paper? Newspaper, and the same shall be displayed in the website of the company as well as in the notice board. Next one, prospectus and allotment of securities, no modifications or exemptions. Share capital and debenture, section number 47. If you remember, we did calculation also for this. In case of Nidhi company, no member shall exercise the voting right on poll in excess of what? 5%. On poll, the voting right of member in a Nidhi company is limited to or restricted to how much? 5%. That's it. 5% of the total voting rights of the equity shareholders. Section number 62. Further issue of share capital shall not apply for which company? IFSC company. Which company is IFSC companies? Next one, section number 67. Sorry, not IFSC company, Nidhi company. Restriction on purchase of its own share. Most important. For Nidhi company, section number 67 is applicable. The only thing is, if a member, in case of Nidhi company, Nidhi company can provide loans only to those members who are holding shares in the company. She has taken a loan from the company. And for that, before she take a loan, she should be member of a company. She bought some shares. Now she repaid the loan. Because she repaid the loan, she want to exit from the company by selling her share. Now, because she is exiting from the company buys her share. Is it allowed or not allowed? Allowed in case of Nidhi companies. Important, based on this, there can be question in the examination. When shares are purchased by the company from a member on ceasing to be a depositor or a borrower, it shall not be considered as what? Reduction of share capital. And there is no requirement of following section number 66 or 67 of the Companies Act. Clear with this? Most important, based on this, there can be an MCQ question or a descriptive question in the examinations. Done. Next one, acceptance of deposits by the companies. Based on these, there are no questions asked in the previous examinations, and there are no provisions also in your material. Exemptions or modifications are not there. Registration of charges, no provisions. Management and administration. Section number 108. Nidhi companies are not required to provide what facilities? E-voting facilities. Next one, declaration and payment of dividend. Based on this, there can be questions. Payment of dividend. In case of section number 123, subsection 5, any dividend payable in cash may be paid by crediting the same to what? account of the member if the dividend is not claimed within how many days? 30 days. Instead of transferring it to the unpaid dividend account, what company can do? Company can directly credit the amount to the which account? Members account, because they will be they would have taken the loan from the company, right? They would be having an account with the companies. So even if they're not given other details like details of account for the purpose of receipt of dividend, what company can do? Directly credit the amount to their account. Punishment for failure to pay the dividend. In case if dividend payable to a member is 100 rupees or less, it shall be sufficient compliance of the provision of section number 127 if the declaration of dividend is announced in the what? Local language in one local newspaper of wide circulation, and announcement of the said declaration is also displayed on the what? Notice board of the nidhis for not less than for at least how many months? 3 months. So even the dividend is not paid, it is deemed to have been compliant. Company would not be responsible, provided company has given the what? Notice in the newspaper and also in the notice board, at least for how many days? For how many months? 3 months. Accounts of the companies, important section number 136, right of the members to copies of what? Financial statement, audited financial statement. So this audited circulation of audited financial statement is compulsory for all the companies, correct? At least 21 days before the date of meeting normal companies. But in case of members, in case of Nidhi company, circulation of audited financial statements happens only if he is holding shares of at least more than how much? 1000 rupees in face value, or more than how much? 1% of the total paid up share capital of the company, whichever is less. Correct, right? If not, if he is not holding this, then it is considered as sufficient compliance if the same has been published in the what? Newspaper. Got it? So these are the exemptions and modifications applicable to Nidhi company as well as the IFSC companies, and these exemptions and modifications are there in your ICI material. I have listed only those exemptions and modifications which are given in the ICI material for the purpose of examination. There are a few other modifications and exemptions as well, but we are discussing only those exemptions and modifications which are there in the ICI material and which are applicable for the examinations. So one day before the exams, you should go through this PDF so that you'll remember that modifications and exemptions, and you can write the answers if they ask any MCQs or case scenario based questions. So these are the exemptions and modifications for IFSC company and Nidhi companies. Thank you. Let's start with the Foreign Exchange Management Act 1999. See, the name of the act itself indicates it is a law to manage the foreign exchange. In this chapter, we will learn what is a foreign exchange, what is a foreign security, who manages the foreign exchange in India, and who enforces the provisions of Foreign Exchange Management Act in India. Then we have the definition of person resident in India, person resident outside India. Then we have current account transaction, then the capital account transactions. In the current account transactions, we have the 3 schedules: Schedule 1, Schedule 2, Schedule 3. Schedule 1 provides the prohibited current account transaction. Schedule 2 provides the transaction which requires approval of central government. Schedule 3 provides the transactions which requires approval of the RBI. Clear? So let's start with the rapid revision of the Foreign Exchange Management Act 1999. First one, introduction. In the introduction, the main concept is the need for FEMA. Till now, they have not asked questions based on need for the FEMA or the object of FEMA. Based on this, there can be a question in the examinations. Clear? So they may ask, what is the need for the FEMA or object of the FEMA? So FEMA is a law to manage the what exchange? Foreign exchange. Nothing but the foreign currencies. Correct, right? So wherever the foreign currency is involved, then it is considered as what transaction? Foreign exchange transactions. Correct, right? So FEMA is not a prohibitive law. And before FEMA, we had Defense of India rules. After Defense of India rules, they made FERA, that is Foreign Exchange Regulation Act. Post 1991, that is LPG, liberalization, privatization, globalization, they have enacted the law called as the Foreign Exchange Management Act. See, when the British left India, India had a huge balance of payment because we were importing almost all the goods. They used to manufacture here. So they used to send raw materials from India to outside India. They used to manufacture it outside India in the England, and they used to bring it back to India. Means we were importing almost all the goods. Because of that, there was a huge balance of payments. Means Indian currency was devalued. So after the British left India to increase the foreign exchange reserves, what government did, they put a lot of restriction on the foreign trade as well as the foreign exchange transactions. There was a black market for the foreign exchange of foreign currency. At the same time, even for importing the goods, there was a requirement of license. If you want to import gold from outside India, there was a requirement of license. Because it was highly regulated, people started importing the goods, importing the gold in a unlawful ways, that is by smuggling the gold. Because of this, again, there was a huge balance of payment and there was a no proper mechanism for foreign exchange. In the year 1991, the then Prime Minister, then the Finance Minister, that is Manmohan Singh, proposed the concept of liberalization, privatization, and globalization. Because of this liberalization, privatization, and globalization, there was a globalization of capital. Now, what is globalization of capital, sir? Means Indian companies started mobilizing the capital from outside the country. We have the FDI, foreign direct investment. We have the ECBs, external commercial borrowings. You can take loan from Indian banks. If you are getting a better rate, if for example, if Indian banks are charging 8% rate of interest for borrowing the loan, and if there is a USA bank or Japanese bank which is charging only 3% rate of interest, what you will do? You can borrow from the what? Foreign countries. So there was a globalization of capital. What is globalization? The free investment, free flow of investment as well as free trade. So because of this free trade and globalization of capital, there was an increase in the foreign exchange. Increase in the what? Foreign exchange. And that is why there was a need for the law called need to manage the foreign exchange. To meet that need, they have enacted the law called as the Foreign Exchange Management Act. So you should write in the examination, if they ask what is the need for the FEMA, FEMA is a controlling law, not a prohibitive law. Unlike FERA. Unlike what? FERA. It does not prohibit the transactions. Capital account transactions are prohibited unless permitted. But current account transactions are what? Freely permitted. Next one, with the evolution of globalization of capital and free trade access. What is globalization of capital? You have an access to the capital of the globe, the entire world. You can take money from even outside the countries, correct? Right? You can borrow loan from the foreign banks. You can take investment from the foreigners. So there is a globalization of capital as well as the free trade access under the foreign trade policy. Many goods can be traded freely. The export and import of the goods are what? Freely allowed. Because of these reasons, there was a necessity for the what? New law to manage the foreign exchange. Manage the what exchange? Foreign exchange. To facilitate the cross-border trade and cross-border capital, nothing but globalization of capital and free trade over the all over the countries, not only the country, all over the globe. Initially, foreign exchange was controlled by the Defense of India rules. Later, it was controlled by the FEDA. And after liberalization, to manage the foreign exchange, they enacted the law called as what? Foreign Exchange Management Act. You should keep these two words in your mind. The need for managing the foreign exchange was felt because of globalization of capital and free trade policies. Because of these two reasons, there was an increase in the foreign exchange. Because there was an increase in the foreign exchange, there was a requirement to manage the foreign exchange. For that reason, Foreign Exchange Management Act was enacted in the year 1999, and this came into force on 1st June 2000. I repeat, Foreign Exchange Management Act came into force on 1st June 2000. Clear? Enforcement of FEMA. The FEMA is enforced by whom? By the RBI as well as the ED. So overall control over the foreign exchange transactions are exercised by the RBI, but enforcement of FEMA, especially these contraventions of the provisions of the FEMA, those are enforced by the what? By the Director of Enforcement, nothing but ED. Clear? Next one, third one, the preamble, extent and application of the law. Now, what do you mean by preamble, sir? Preamble is nothing but the preface or introductory statement to the law. Preamble set out the aims and aspirations of that law or the object of the law. What is the object of Foreign Exchange Management Act? It's an act to consolidate. What is consolidate? Bring together. Before Foreign Exchange Management Act, we had which act? FERA, Foreign Exchange Regulation Act, as well as the Defense of India rules, to consolidate all these laws at one place, and also to amend which law? FERA, the law with respect to foreign exchange, with the objective of facilitating the trade as well as the payment, and promoting the orderly development, not quick development, a orderly development and maintenance of foreign exchange market in India. What was enacted? FEMA was enacted. What was enacted? FEMA was enacted. Clear? Next one is most important. Based on this, they asked questions in the previous examination. To what extent the law is applicable? Foreign Exchange Management Act is applicable to what? Whole of India. The FEMA is applicable to whole of India. The act is applicable even to BOA, books of accounts, Allah, branches, offices and agencies, branches, offices and agencies outside India, but it is controlled or owned by the person resident in India. Even though that branch or office or agency is outside India, but if it is controlled by a person who is resident in India, even to that branch, what is applicable? FEMA is applicable. And most important, the last one. What is the last one? Any contravention thereunder committed outside India by any person to whom this act is applicable. Which act is applicable? FEMA is applicable. Even to that person it is applicable. Means even if the offense is done outside India, but for that person what is applicable? FEMA is applicable. Then the consequences, is it punishable or not punishable? Punishable. Now a resident of India, you go to abroad on a tourism purpose. There you do some frauds, which are do the money laundering activities, or you do contravention of Foreign Exchange Management Act. Will it be punishable or not punishable? Punishable. That is called as extraterritorial jurisdictions. Are we clear with this? It is applicable to all over India. It's also applicable to branches, offices or agency which are outside India but controlled by a person or owned by a person who is resident in India. It's also applicable for any contravention committed outside India by any person to whom this act is applicable. This is called as extraterritorial jurisdiction. Are we clear with this? Next one. Definitions are important. If you want to understand the provisions properly, you must know the definitions of the word used in this act. Correct, right? What is the first one? Foreign exchange. What exchange? Wherever you find the word foreign exchange, the one word should pop up in your mind. That is, foreign exchange means what currency? Foreign currency. Not only foreign currency, it also includes few other things. Same like when I say how much cash you have or how much money you have. If I say how much cash you have, that is a different thing. If I say how much money you have, what you will do? You will say cash balance as well as the bank balance. Because bank balance is also a money, right? In the same way, foreign exchange means a foreign currency and includes deposits, credits, and balances which are payable in what currency? Foreign currency. It also includes a draft, traveler checks, letter of credit, and bills of exchange, which are expressed or denominated in which currency? For Indian currency, but payable in the foreign currency. I hope you guys know what is draft. Nothing but demand draft. Traveler checks. What checks? Traveler checks. If you going abroad, you can use the word check. Traveler checks. Letter of credit. Letter of what? Credit. What is letter of credit? It's a guarantee given by the Indian banks to the importer of goods, saying that if the importer defaults in the payment of money, who will make the payment? Bank will make the payment. It says, this is my promise to this to the exporter, saying that if the importer of India fails to make the payment, who will make the payment? Bank will make the payment. Clear? So this demand draft, letter of credit, traveler checks, bills of exchange, if they are expressed or drawn in Indian currency, but payable in what currency? Foreign currency. It is also considered as what? Foreign exchange. Next one, it is also includes drafts, traveler checks, bills of exchange, then letter of credit, which are drawn by the institutions or the banks outside India, but payable in which currency? Indian currency. It is called as a foreign exchange. Repeat with me. What is foreign exchange? Means foreign currency, but includes deposits, credits, and balances, which are payable in which currency? Foreign currency. It also includes demand drafts, traveler checks, the letter of credit, bills of exchange expressed or drawn in Indian currency but payable in the foreign currency. It also includes drafts, traveler checks, bill of exchange, letter of credit, which are drawn by the banks and institutions outside India but payable in Indian currency. It is called as what? Foreign exchange. Clear? And this law is all about foreign exchange. Next one, authorized person. As we know, a transaction, you can undertake any foreign exchange transactions only through an authorized person. What person? Authorized person. If you want dollars, you cannot buy it from a private individual. You should buy it only from whom? Authorized person. If you want to receive any payment from abroad, you should receive only through what person? Authorized person. Authorized person means and includes whom? Authorized dealer. Or dealer? Authorized dealer. Most of the authorized dealers are banks, and the banks are classified into AD category 1 bank, category 2 bank, category 3 banks, like this, based on their powers and based on the permission of how much money they can receive. So authorized person means authorized bank, authorized dealer, nothing but banks. Then money changer, we have book my forex, they change the money currency of one country, currency of one country into currency of another country. Next, offshore banking unit of Indian companies, sorry, Indian banks. For example, SBI is having branch in USA also. That USA branch is also considered as what? Authorized person, or any other person who is authorized to deal in what exchange? Foreign exchange or foreign securities. Then it is called as what? Authorized person. You can undertake foreign exchange transactions only through the authorized persons. Are we clear with this? Next one, currency definition. I hope you guys remember currency definitions. It includes currency notes, postal orders, money orders, checks, traveler checks, letter of credit. All these things are considered as what? Currency. Considered as what? Currency. Next one, most important one, foreign security. What security? Foreign securities. This definition is equally important like foreign exchange. Now, what is foreign security, sir? Simple, say simple. You know what is security, right? Security means what? Shares, debentures, bonds. Correct, right? All these are considered as what? Security. A security which is expressed are drawn in which currency? Foreign currency. It is called as what security? Foreign security. Keep this in mind. Even if the interest or dividend is payable in Indian currency, because it was drawn or expressed in which currency? Foreign currency. It is called as what security? Foreign security. Just remember, foreign securities are denominated in which currency? Foreign currency. Even if the dividend or interest is payable in which currency? Indian currency. Understood? Clear with this? Next one, definition of person. Definition of what? Person. Who is a person? You know, person includes individual, HUF, company, firm, association of person, every artificial judicial person, and agency, office, or a branch. That is books of accounts. Allah. Branches, offices, and agencies. All these are considered as what? Person. Similar to the income tax definitions, correct? Right? See, the definition of person will changes from person law to law. In companies, that person means only natural person and artificial person. Income tax, it includes everything. Similar to the definition of income tax, correct? Right? Next one. Fifth one is one of the important definition. Based on this, there are chances of asking the practical questions. They asked practical questions many a times in the previous examination. Person resident in India. What in India? Now, who is a person resident in India? Simple definition. Listen, everybody. Person resident in India means any person who has stayed for minimum how many days? Not minimum, for more than 182 days. Don't think it is minimum. It is what? More than 182 days means 183 days. More than 182 days during the course of preceding financial year. What financial year? Preceding financial year. However, there are few cases where even though a person has stayed for more than 182 days, still he is not considered as resident of India. What are those cases, sir? First one, if a person is gone out of India or he is staying outside India, there are few cases where a person is not considered as resident in India, even if he has stayed for how many days? More than 182 days. What are those cases, sir? The first case is that he has gone out of India or he stays outside India for employment purpose or for business or occasion purpose or for having an intention to stay outside India for a what period? Uncertain period. In these cases, he is considered as what? Person resident outside India, but not a person resident in India. The moment he leaves India, he is considered as what? Person resident outside India. For example, I am leaving India for education purpose. Means I have an intention of staying outside India for what period? Uncertain period. Moment I leave the airport of India, I am considered as what? PROI. What is PROI? Person resident outside India. For the purpose of what? FEMA provisions. Are we clear with this? At the same time, it also does not include any person who has come to India. You have come to India and you have stayed for more than how many days? 182 days. Will you be considered as person resident in India? No. Only if it comes to what? Three purposes, then will be considered as what? Person resident in India. If you're a foreigner, you come to India for employment purpose or business purpose or having an intention to stay in India for what period? Uncertain period. Then you will be called as what? Person resident in India from the day one itself. Clear? But however, other than this, if you come for any other purpose, for example, you are a foreigner, traveler, you come to India, and because you got sick or for some other reasons, you stayed in India for more than how many days? 182 days. Will you be called as person resident in India? No. Because as a foreigner, if you come to India, you will be called as person resident in India only if you have stayed for more than how many days? Only if you come for how many purposes? Three purposes. What are the three purposes? Employment or for business or occasion or for the having an intention to stay for what period? Uncertain period. I will give an example. Now tell me, if I was staying in India for 365 days, last year I was in India for the entire financial year. Clear? Now this year, on the 1st April, I am leaving India for employment purpose. Am I resident or person resident outside India? From the 1st April itself, I'm considered as what? Person resident outside India. Now, what happens? I stay in Dubai for 6 months. I work there. I come back to India for the birthday of my parents to stay in India for, let's say, 1 month. Am I called as resident in India? Yes or no? No, because I came back to India for what purpose? Particular purpose, not for employment, not for business, not for having an intention to stay for what? Uncertain period. Now, what if I return back? I worked there and I'm coming back to India to stay in India. I am I have gone out of India for what purpose? Employment purpose. Now I'm coming back to India just to stay in India. The moment I arrive to India, I'm considered as what? Person resident in India because I'm having intention to stay in India itself, right? I'm an Indian. If I come back to India having an intention to stay for what period? Uncertain period. And I deemed to be what? A person resident in India from the date of arrival to India. It depends upon intention of the person. What of the person? Intention of the person. Are you guys clear with this? Now, quickly tell me, who is a person resident in India? A person who is residing in India for more than how many days? 182 days in the preceding financial year. What financial year? Preceding financial year, but does not include any person who has gone out of India or who stays outside India for employment purpose or business purpose or under circumstances which indicates that his intention to stay for an uncertain period outside India. Also does not include any person who comes to India otherwise for what purpose? Employment purpose, business purpose, or under circumstances which shows his intention to stay in India for what period? Uncertain period. It also includes any person or a body corporate registered or formed in India. Any body corporate or association formed in India is considered as what? Person resident in India. For example, foreign companies establish foreign subsidiaries in India. Those subsidiary companies are deemed to be what? Person resident in India. Next one, any office, branch or agency, AO, BOA, branches, office and agency where in India, owned or controlled by a person resident outside India, still deemed to be what? Anything and everything which is in India is considered as what? Person resident in India. It also includes any branches, offices, or agency which are where? Outside India, but they are controlled by a person resident in India. Resident where? In India is deemed to be a person resident in India. Are we clear with the definition, everybody? Next one. Who is person resident outside India? Anyone who is not a person resident in India is considered as what? Person resident outside India. They ask this question of import and export. What is import and export? When the goods leaves or services leaves the country is considered as what? Exports. Import, arrival, it is considered as what? Import. Whether it is for consideration in cash or other than cash, doesn't matter. Once the goods leaves the country, it is considered as what? Export. Comes to India, it is considered as what? Import. Based on this, they ask on MCQs in the examinations. Clear? Next one, regulation and management of foreign exchange. As I said, Foreign Exchange Management Act. Foreign Exchange Management Act regulate what transactions? Foreign exchange transactions. It provides that you should not deal with foreign exchange or foreign securities other than through what person? Authorized person. What person? Authorized person. I expect a question based on section number 3 of FEMA. Section number 3 deals with the Regulation and management of what? Foreign exchange. Simple says simple. Listen, everybody. Point number 1A says no person shall deal in or transfer, because it includes both foreign exchange as well as what security? Foreign security. Simple. You should not deal in, you should not transfer any foreign exchange or foreign security other than through what person? Authorized persons. Complete prohibition. You want to deal with foreign securities? Deal with authorized person. You want to sell, you want to purchase foreign exchange? Deal only with what person? Authorized person. So deal or transfer any foreign exchange or foreign security only through what person? Authorized person. Clear? And if you want to make any payment, should make only through what person? Authorized person. I repeat, if you want to make a payment to or the credit of any person resident outside India, if you want to send money outside India, not money outside India, you should do it only through what person? Authorized person. Either I can make directly or indirectly. What is credit? Indirectly. On behalf of you, I will pay it to her. That also I can do it only through what person? Authorized person. Any payment outside India, only through what person? Authorized person. Then comes receipt. Any receipt should be done only through what person? Authorized person. What person? Are you guys getting it? Receive otherwise through an authorized person any payment by or on behalf of any person resident outside India. Are you guys getting it? First one is what? Deal or transfer. Second one is what? Payment. Payment. Two, or for the credit of any person who is resident outside India. Third one is what? Receive any what? Payments by or on behalf of any person resident outside India. Correct, right? Are you guys able to remember it? And the last one is what? Enter into a financial transaction, nothing but Hawala transactions. Enter into any financial transaction in India as a consideration for the acquisition of any immovable property outside India. Where? Outside India. Means, for example, I want to buy a flat in Dubai. I will say, Mr. X, I will make payment to your wife in Bangalore. What you do? You make payment on behalf of me. Then you both settle the transactions. This is considered as what transaction? Hawala transactions. Or there will be dealers in between us. Because I don't want to exchange the foreign currencies. What I'm doing here? We are doing the exchange of transaction. I'm entering into a financial transaction in India as a consideration for what? Purchase of property outside India. Is it allowed or not allowed? Not allowed. All these things can be done only through what person? Authorized person. What person? Now you guys tell me, what is section number 3 says? It says four things. What are the four provisions covered? Deal or transfer foreign foreign exchange or foreign security other than through what person? Authorized person. Second one, make any payment to or to the credit of any person who is resident outside India other than through what person? Authorized persons. Through authorized person, you can make payments. Third one, receive any payment from or on behalf of the any person resident outside India other than through what person? Authorized persons. And the fourth one is most important, Hawala transaction. Enter into any financial transaction in India as a consideration for the payment, as a consideration for acquiring the assets outside India. Correct, right? By any persons. These are all regulated. These are all what? Regulated. Are we clear with section number 3, everybody? Next one. Section number 4. Restrictions on holding foreign exchange. Most important. You are not supposed to hold foreign currency. If you are on some foreign currency, you should sell it to the government, and you should get it converted or sold to the authorized persons. For example, you have gone abroad, you're coming back to India. Can you keep dollars? No. Either you should sell it to the bank, get it converted into Indian rupees, or you can open a separate account called as the we have this exchange earners foreign currency account, and we also have this resident foreign currency account. In that account, you can keep it with the bank. You should not keep it in the form of what? Cash. Clear? You're not supposed to possess any foreign exchange. If you possess any foreign exchange, it is punishable offense. Up to 2000 US dollar is allowed. How much? 2000 US dollar. That too, if you have drawn the foreign exchange for a trip outside India and you return back and you have an excess money and you want to keep it, you can keep it. Otherwise, you should sell your foreign exchange to whom? To the banks. That is authorized person. Clear? So except as given in this act, no person shall acquire, hold, possess, transfer any foreign exchange or a foreign security or a movable property where outside India. Allowed or not allowed? Not allowed. Section number what? 4. Next, your favorite topic, current account transaction. What transaction? Correct, right? See, simple. Current account transaction means what? Any transaction other than what transaction? Capital account transaction. If you want to understand current account transaction, you must learn what is capital account transaction. Now, what is capital account transactions? See, capital account transactions means any transaction that alters. Keep this in mind. That what? Alters or creates any asset or liability, including contingent liability outside India for a person resident in India. That is called as what transaction? Capital account transactions. What transaction? So it should either create or alter any what? Asset or a liability, including contingent liability outside India of a person resident in India. For example, am I resident in India? Everybody, am I resident in India? Yes. Now, if I do some transaction, it can be any transaction. Just keep this in mind. It can be purchase of land, purchase of building. It can be anything. Just think, if I do this transaction, is it going to create any asset for me? Not in India, outside India. Is it going to create any liability for me? Is it going to create any contingent liabilities for me, like guarantees? Then it is considered as what? Capital account transactions. I repeat, any transaction that creates or alters, creates or what? Alters an asset or liability, including contingent liabilities where outside India of a person resident in India, or any assets or liabilities in India of a person resident where outside India. For outside person, it only covers assets and liabilities, but an Indian person, it covers what? Assets, liabilities, including the contingent liabilities. For example, let's say I import machineries on cash. It is what transaction? Current account transaction. Why? Because I paid the cash, I bought the machinery. Where is the question of liability outside India? Are you guys getting it? Think. Simple say simple funda. Only if it creates an asset or liability outside India, it is called as what transaction? Capital account transactions. If it does not creates or alters any assets, liability, including contingent liability outside India, it is not considered as what transaction? Capital account transaction. For example, if I buy goods on cash, what transaction? If I buy goods on cash, see, if you make cash, will there be any liabilities outside India? Then it is considered as what transaction? What transaction? Current account transaction. If I buy the goods on credit basis, what transaction? What transaction? Capital account transaction. Because I am supposed to make the payment to him, right? Now I have a liability towards somebody outside India. It is what transaction? Capital account transaction. If I buy machinery on cash basis, current account transaction. Because there is no asset or liability which is created outside India for a person resident in India. That is the difference between accounting transactions and FEMA transaction. What the definition says? Only if it creates an asset or liability where outside India. If I buy a machinery on cash basis, is it creating any liability for me outside India? No. Asset for me outside India? No. It is current account transaction. I buy a flat outside India. If I buy a flat outside India, it is what transaction? Capital account transaction, because it is created. If I buy machinery to install in the factory which is outside India, then it is considered as what? Capital account transaction. If I import machinery from there, I am creating asset in India, not outside India. If I buy a land in foreign country, USA, what transaction? Capital account transaction. If I take a loan from a bank which is outside India, capital account transaction. If I take any investment from a person who is outside India, capital account transaction. Payment of dividend to a person who has done investment in India, current account transaction. Interest payment, receipt of interest, receipt of dividend, loans from a bank, current account transactions. Loans from a bank outside India, capital account transaction. Short-term credit is considered as current account transaction. What credit? Short-term credit. Import of machinery, On credit basis, capital account transaction. Cash basis, import of goods on cash basis, current account transaction. Import of services on cash basis. Buying a flat in Dubai, buying a land outside India, investing in shares of foreign company, capital account transactions. If foreigner invests shares in the Indian company, capital account transaction, because for him it is creating a what? Asset. I buy an insurance policy for my foreign company, capital account transaction, because insurance is an asset, right? Yes or no? So only if a transaction creates or alters an asset or liability, including contingent liability, means, for example, I have given some guarantee for payment of money by Indian to a foreign bank. Is it a current account transaction or capital account transaction? Why? Because if he defaults, then I should make a payment, right? It's a liability for me, contingent liability. So any liability, including contingent liability, which is created outside India for a person resident in India, is considered as what? Capital account transactions. Are we clear with this? So you tell me, what is current account transaction? A transaction other than capital account transaction is called as what transaction? Current account transaction. It includes what? Any payment in the what course of business? Ordinary course of foreign trade or other services such as short-term banking, credit facilities in the ordinary course of business. Any payment in the form of interest on loan or interest from investment is also considered as what transaction? Current account transactions. Correct, right? But if you take a loan, capital account transactions. If you take any investments, capital account transaction. Interest on loan, current account transactions. Interest on and payment of dividend on equity shares, current account transactions. Remittances for living expenses of parents, spouse, children, current account transaction. Next one, expenses in connection with the foreign travel, education is also considered as what transaction? Current account transactions. Are we clear with this, everybody? Current account transaction means transactions other than capital account transaction. What are capital account transaction? Means a transaction which alters assets liability, including contingent liability outside India for a person resident in India, or assets or liability for a person in India for a person resident outside India is considered as what transaction? Capital account transactions. Keep this in mind. Current account transactions are freely allowed unless it is prohibited, but current account transactions are prohibited unless it is permitted. There are more restrictions for what transaction? Capital account transactions than what transaction? Current account transaction. Clear? Understood, everybody? Yes or no? So central government has the power to make regulations for overlooking the what? Current account transactions, and government has made regulations for the current account transactions. And there are 3 schedules. How many schedules? How many schedules? 3 schedules. I repeat, see, RBI makes regulations. Government makes what? Rules. Central government has the power to make the rules and to put reasonable restrictions on current account transactions in consultation with the RBI. And the central government has made the Foreign Exchange Management Current Accounts Rules 2000. As per Foreign Exchange Management Current Account Transactions Rules, there are 3 schedules. How many schedules? 3 schedules. First schedule prohibits the current account transactions. Second schedule allows the certain current account transactions with the permission of central government. Schedule 3 allows certain current account transactions with the permission of the RBI. Let us discuss one by one. What is the first one? Prohibited current account transactions. Everybody, prohibited current account transaction. These type of current account transactions are prohibited. You cannot do these kind of current account transactions. If you do, punishable, not allowed. What are they? First one, remittance out of lottery winnings. You bought a lottery ticket in Kerala, you won it, and you want to send that money where? Outside India. Allowed or not allowed? Not allowed. See, foreign exchange is a precious resource. If you keep drawing foreign exchange, what will happen? Our currency value will depreciate, and to import necessary goods, things becomes costly, right? If I have to pay 100 rupees for 1 liter of petrol, for $1, because we always pay it in the what? Dollars, right? So if our currency is weak, then things becomes costly for us. We'll not be in a position to import the what? Necessary goods. That is why foreign exchange is a what resource? precious resource, valuable resource. That is why it is not allowed for remittances of money out of what? Lottery winnings. You have earned some salary in India, then you can remit. We don't have any issues. That is a genuine transactions. But remittances out of lottery winnings is prohibited. Clear? Any type of lottery winnings. Second one, remittances of income from what? Racing, horse riding, any other hobbies, same like similar to the gambling only, correct, right? If you have earned any money from racing or any hobby or any other riding activities, it's also prohibited. Third one, if it is remittance to purchase a lottery ticket outside India, for example, Dubai, they conduct lottery. So buy that lottery ticket. If you want to remit a foreign exchange, allowed or not allowed? Not allowed, prohibited. Or banned or prescribed magazines, football, pools, and sweepstakes. These are nothing but similar to IPL games. So they have a different games. And to do the betting for that, if you want to remit money, not allowed. First one is what? Remittance out of lottery winnings. Second one, remittance out of income from racing, riding, or any other hobbies. Third one, remittances for the purchase of lottery tickets, band magazines, or football pools and sweepstakes. Fourth one, fifth one, sixth one, seventh one, eighth one is based on which they generally ask questions in the examination. See, fourth one is simple. Say simple. See, if I'm exporting goods outside India, listen everybody. If I export goods, I want to export goods to USA. Listen. I want to export goods to where? USA. If I want to export goods to USA, because I don't have an access to USA persons, right? I need somebody who is an intermediary in USA. Because this person know the market of what? He knows the market of USA. I access to this person. I say, Bhai, I need your assistance. I want to sell my goods in the USA. I will export the goods. Please facilitate this export. Be my agent. Be my what? Agent. For you, I will pay a commission of 10%. I will export goods. Export the what? Goods. You please identify the buyers in the USA. And for this export of goods, if you, let's say in 1 year, if you give me a export worth of 1 lakh, I'll pay you 10% commission. Is it allowed or not allowed? Allowed. Allowed. I can always pay commission for the what? Export of goods. No restriction as such. Otherwise, how will I do export of goods? Why will somebody give pre-services as an agent? Correct, right? Export of goods, payment of commission for the export of goods is allowed. And I should be paying the commission in what currency? Foreign currency, because he's a foreign agent. Correct, right? But however, payment of commission on export towards equity investment. Here, it is not a genuine export. It is a what? Export for equity investment. I have made some investment in a company. For example, let's say I want to start a company in USA. Company in where? USA. XYZ company. Clear? Which company? ABC company is investing in which company? XYZ company. Clear? Now, this ABC company purchased shares worth of how much? Let's say 3 lakh rupees. How much? Or 3 lakh US dollars. Getting it? Now, I have two options here. Either I can pay 3 lakh US dollar in cash, or what I will do, I'll make an arrangement with this company saying that, Dekho bhai, you are giving me shares worth of 3 lakh rupees. I will not give you cash. What I will do, I will export goods to you. So now this company, ABC company, is sending a goods worth of how much? Goods worth of US dollar how much? 3 lakh rupees for what investment? Equity investment. What investment? In return, he will not pay me cash. What he will do? He will give me the equity shares. Possible, not possible? Possible. Correct, right? Now, for this, listen. For this export of 3 lakh rupees worth of goods, do I need any agent? Do I need any agent, or do I need any services of an agent? No, because there is no actual export, right? There is already an agreement where I am supposed to, I've made an investment. It is my own subsidiary company. What company? Subsidiary company or a joint venture company means we already have an arrangement. Where is the question of intermediary? And for this purpose, if I'm exporting a goods, see if it's a normal export of goods, can I pay commission to an agent? Yes, you should pay commission to an agent. But if it is an export of goods towards what investment? Equity investment in a wholly owned subsidiary or a joint venture company outside India, you cannot pay commission. Normal cases, can I pay commission? Obviously, you should pay commission. Otherwise, why will somebody give services to you? Understood? So payment of commission on the exports made towards what investment? Equity investment in a joint venture or a wholly owned subsidiaries where abroad of Indian companies allowed or not allowed? Not allowed. It is prohibited. Other purposes allowed. For export made towards equity investment, not allowed because it is not a genuine export for earning the foreign exchange. Understood? Next one, remittance of dividend. Tell me, if a foreign company do investment in my company, listen everybody. What company? Foreign company. What company? Foreign company. Let's say XYZ company. If XYZ company invest in my company, which company? ABC company. They have invested US, they have done the investment in the equity share. What shares? Equity shares. Tell me, am I supposed to pay? This is USA, okay? Am I supposed to pay return on investment to this USA company? Yes, I should pay them the dividend. Correct, right? Can I pay dividend to this XYZ company? Is payment of dividend allowed to the foreign company? Answer is yes. You should pay dividend to them. But however, there is a concept called as dividend balancing. See, there are a few sectors where 100% FDI is allowed without the permission of government or RBI. But there are few sectors where RBI and central government permission is required. When permission is given, government may give permission subject to conditions. Subject to what? Conditions. In this case, let's say government has given permission to ABC company to obtain the investment from which company? XYZ company, subject to a condition that you should do dividend balancing. What balancing? Only if you are doing dividend balancing in future, I will give permission. Otherwise, I will not give permission. This is the condition of whom? Central government. Company agreed for this. Now, what is dividend balancing, sir? Dividend balancing means when I pay dividend, there will be what? Outflow of foreign exchange. Correct, right. I should meet that outflow of foreign exchange with what? Inflow of foreign exchange. Means if I want to pay dividend of 5 lakh US dollar in this year, I should have earned 5 lakh US dollar in that year by what? Foreign exchange, by exporting the goods or services. Only if I have earned any foreign exchange, I can declare dividend. Otherwise, I cannot pay dividend because I should balance out my dividend payment obligation through what? Foreign exchange earnings. Now you tell me, in this current year, I have earned 2000 US dollars. I'm a company. I'm a what? Company to which dividend balancing is applicable. If it is a normal company, no restrictions, sir. You can do whatever you want. Like you can draw foreign exchange and you can make the payment. It's not prohibited. It is permitted. Payment of dividend. Now, what if I'm a company? For me, dividend balancing is applicable. And this year, I have earned only how much? 2000 US dollar. How much? How much dividend I can pay? 2000 US dollar. That's it. Beyond that, can I draw foreign exchange? No. If you go to government saying that, sir, give me money, give me what? Foreign exchange to pay dividend. Will government give it to you? No, prohibited because you are a company to which what is applicable? Dividend balancing is applicable. If I'm a normal company, government should give me the money. They should give foreign exchange. Government here means authorized person. Understood? So payment of dividend, payment of what? Dividend by any company to which the requirement of what is applicable? Dividend balancing is applicable. What is applicable? Dividend balancing is applicable. Only for those companies it is prohibited. Understood everybody? Again, payment of commission, payment of what? On exports. Is it allowed or not allowed? Allowed. But again, one more exception is there, but it's not allowed. First exception, remember? What is the first exception? Commission on the export made towards what investment? Equity investment. This one, payment of commission on the export under what scheme? Rupee state credit route. Under this route, if you have done the export, you cannot pay what? Commission in the foreign currency. Because first of all, you are doing the export in which currency? Indian currency. There is no inflow of foreign currency here. Yes or no? That is why you should not pay commission. In what currency? Foreign currency. If you are doing export through which route? Special rupee state credit route. But however, you can pay commission in the foreign currency up to 10% of the invoice value of export of what? Tea and tobacco. Only these two exceptions are there. First of all, tell me, can you pay commission on the exports made through special state rupee credit route? In the foreign currency? No. Indian currency you can do. See, this question is drawal of foreign exchange. The question of prohibition will come into picture when you only what? Foreign exchange. Nothing for the foreign currency. Correct? Na? You cannot draw foreign exchange for the purpose of payment of any commission on the export through what route? Rupee state credit route. Sir, you are going to earn in rupee. How can you pay commission in the foreign currencies? But however, there is an exception. What is the exception? For tea and tobacco. Up to how much? 10% of the invoice value. Next one, payment with respect to what? Callback services. Because there was a difference in the exchange of currency notes. If you just have an arrangement with a foreign person saying that, you will make a payment to him for giving the callback to Indian persons. Allowed or not allowed? Not allowed. Prohibited. And the last one, remittance of incomes on the funds held in the which account? Non-resident special rupee scheme account. What account? If you come to India, if you're a non-resident of India, if you have kept the rupee in what? Separate account, and if you have earned some interest on that, can you send that interest back outside India? No, should be spent where? In India itself. You're a foreigner, comes to Bangalore, you have a dollars, you go to the authorized dealer, you exchange that into what? Rupee. Is it possible to carry cash everywhere? What you can do? You can open an account and you can keep it in the what? Non-resident special rupee scheme account. When you keep that money in the account, will you get any interest? Can you send that money back to the outside India? No, you have to spend it where? In India itself. Understood? So these are the 8 transactions which are expressly prohibited under what? Under the FEMA, under Schedule 1 of the current account transactions. Are you guys clear with this? What is the first one? Remittance out of lottery winning. Second one, hobbies, racing, and any other hobbies. Third one, to buy lottery tickets, band or fixed rate magazines, football pools, and sweepstakes. And fourth one, commission on exports to our equity investment. Fifth one, dividend, payment of dividend where dividend balancing is applicable. Sixth one, commission on the exports made through what route? Rupee state credit route, except tea and tobacco to the extent of 10% of the invoice value. Next one, callback services. And the last one, remittance of interest income on the funds held in which account? Non-resident special rupee scheme account. Clear with this? Next we have Schedule 2. Schedule 2 is one of ICAI favorite topics. They generally ask questions out of what? Schedule 2. The transactions which requires whose approval? Central government approval. The following transaction, what transaction? Following transactions requires approval of whom? Approval of whom? Central government. Correct, right? What are the transactions which requires approval of government, sir? See, cultural tours. What tours? Everybody, concentrate. I will make you guys remember and understand all these concepts. Listen, everybody. Cultural tours. What do you mean by cultural tours? There are groups who go outside India to spread the culture of India outside India, right? Like Bharatanatyam dancers, or let's say A.R. Rahman concerts, or Ilayaraja concerts. If they're going outside India as a troop, and for that purpose, if they want foreign exchange, they need approval of whom? Ministry of Human Resource Development. What development? Ministry of Human Resource Development. Are you guys clear with this? Yes or no? So cultural tours by dance troops, artists who wish to undertake tours abroad for cultural purposes requires approval of whom? Ministry of Human Resource Development. And you will not go as an individual here. You always go as what? Group. And if an Indian company want to sponsor that cultural tour, that requires approval of whom? Central government to draw a foreign exchange. Clear? Second one, advertisement in the foreign print media. Keep this in mind. This second point, third point, and the fourth point are applicable only for government and PSUs. Government and what? PSUs. If you see the notes here, in the notes I have marked this second point, third point, and fourth point in a different color. Why? Because these conditions are applicable only for whom? Only for the government and department of the government or PSUs. Clear? Especially second one. Second one is applicable only for the state and state PSUs. What is state? State of Karnataka, state of Tamil Nadu, like this. So if a state or state PSUs want to give any advertisement where outside India in a print media, what media? Print media, for any purpose other than for promotion of trade or promotion of investment or promotion of international bidding, exceeding how much? US dollar 10,000 requires approval of whom? Central government, that is Ministry of Finance. For example, state of Karnataka want to promote FDI investment in government companies or in Karnataka. For that, they want to give advertisement in the foreign print media. Does that require approval of central government? No. Any advertisement in the foreign print media for what purpose? Promotion of investment or tourism or international bidding. What is international bidding? For example, let's say the, our state of Karnataka, they want to build a bridge over Hebbal Lake. For that, they want to bring in international companies to construct that Hebbal. So they want to promote the international company to bid in that particular project. For that purpose, if they give any advertisement outside India, do they need approval of central government? No, you can draw any foreign exchange. But other than these three purposes, if you want to spend money, foreign exchange, for a advertisement in the print media exceeding US dollar, how much? 10,000. Up to 10,000, no problem. Exceeding 10,000, that requires approval of whom? Ministry of Finance. Are we clear with this? This is applicable only for whom? State and PSUs, not for the central government. Because why will central government take its own approval? Because they are the one who is giving approval, right? Its approval is only for whom? State and state PSUs. If they want to give advertisement in the print media outside India exceeding how much? 10,000 US dollar requires approval of Ministry of Finance. Other than how many purpose? Three purpose. Three purpose you can do it freely. Understood? Next one. Third one. Remittances of a freight of a vessel chartered by whom? PSUs. Now, if there is a public sector undertaking, for example, let's say HAL. Who? HAL. HAL needs some goods from what? From the USA. Heng the goods USA in the HAL? Ship. There are two options now. Either you can hire a ship of Indian company having an Indian flag, or you can hire a ship of a what? USA company having a USA flag. If you're hiring a ship of a USA country with a USA flag, you should pay charges, that is freight. In what currency? USA currency. And you are a public sector companies, you should always try to reduce the what? Foreign exchange withdrawals. Correct, right? That is why to promote usage of Indian flagged companies, if you are a PSU and if you want to pay a freight, pay what? Freight. To whom? Vessel. For what purpose? Vessel chartered by the PSUs that requires approval of whom? Ministry of Surface Transport. What transport? So if a public sector undertaking like HAL, if they want to pay any freight to a ship or a vessel chartered by it, requires approval of whom? Ministry of Surface Transport. And the reason behind this approval is to promote usage of what? Indian vessels. Clear with this? Understood? What is the third one? Remittance of freight of a vessel. What of a vessel? Chartered by whom? PSUs. This restriction is only for again whom? PSUs, not for normal companies. Normal companies, they can, there is no need of approval of whom? Central government. Clear? Next one. And here PSUs includes both Indian as well as the foreign, state as well as the central PSUs. Next one. Payment of import through what? Ocean transport. What transport? By a department or a PSU on what basis? CIF basis. What basis? CIF basis. What is CIF basis? Cost, insurance and freight. See again, listen everybody. Listen. I want goods from USA. If I am a normal company, what company? There is a question of this approval. See, condition number 2, condition number 3, condition number 4 are applicable only for whom? Government and PSUs. First one applicable for everybody. Getting it? Second one, third one and fourth one is only for whom? Government and PSUs. Now let's say HAL is a PSU. Agree with this? They want to import some goods from where? USA. Now when this person sell the good, there are different types of arrangement. If USA person, what person? USA person, what he will do? He will load the goods to a ship. Load the what? Goods to the ship. And he hires the ship of USA. Ship of what? USA. So for this he will pay what? Freight. Correct, right? Plus he would have charged some cost of the goods. Cost of the goods is how much? Let's say 1 lakh US dollar. How much? 1 lakh US dollar. Freight is 10,000 US dollar. How much? 10,000 US dollars. Plus he has taken an insurance policy for this. If there is any damage to the goods, or if there is something happens to the ship while transporting it. He has taken an insurance policy worth of how much? 10,000 US dollars. So in total, what is the amount which HAL should pay? Cost, insurance, freight. How much they should pay? 1,20,000 US dollar is the amount to be paid by whom? HAL. For payment of this, it requires approval of whom? Central government. What government? Central government. Again, which ministry? Ministry of Surface Transport. Why? Because in this situation, there is a more outflow. There is one more concept called as free on board. What on board? Now, what is free on board, sir? This USA person will not arrange the vessel. He just comes, load the goods to a ship chartered by whom? HAL. That is called as free on board. Now, in this case, HAL take insurance policy. HAL take the freight. If HAL hires Indian vessel, what vessel? And Indian companies to provide insurance, we will pay in what currency? Indian currency. There is a less outflow. Then there is no question of approval of whom? Central government, Ministry of Surface. Are you guys getting it? Only if a PSU want to import the goods, on what basis? CIF basis. What is CIF basis? Cost, insurance, and freight. Then you require approval of whom? Ministry of Surface Transport. And again, this condition is only for whom? Government, government, and the government department and the PSUs. If it is a normal person, there is a question of approval of central government. Normal companies. Are you guys clear with this? What is the first one? Cultural goods. Which approval? Which ministry? HRD. Second one? Advertisement in the foreign print media. Third one? Remittances of freight of a vessel chartered by the PSUs. Correct, right? Exceeding how much dollar for print media? 10,000 US dollar. Other than how many purposes? 3 purposes. Then any freight payable on the vessel chartered by the PSUs. And the fourth one is payment of import through what basis? CIF basis. If it is FOB basis, not applicable. Are you guys clear with this? What is CIF and FOB basis? Next one. This fifth one and sixth one, seventh one, eighth one, and ninth one. It can be for whom? Any person. It can be for whom? Any person. The next one, fifth one. Now, what is fifth one, sir? Listen, you are an Indian person. What person? Indian person. You facilitate export of goods. Export of what? Goods. You arrange the ship for me till USA. From the USA, again, you will arrange a road transport. What transport? Road transport to the destination of importer. So you are providing what services? Multimodal transport services. What services? If you want to provide multimodal transport services to me, obviously you must have agents outside India. You have a ship in India. What in India? Ship in India. Plus you have a road transport facilities wherein outside India. Obviously you should have some agents where? Outside India. To that agent, are you supposed to pay any commission to them or amount to them? If somebody is transporting your goods in USA, are you supposed to pay money to him? Yes. In what currency? Foreign currency. So if you're a multimodal transport operator and if you want to pay any money to your agent where outside India, to the outside India agent, that requires a registration, not a permission. You need what? Registration. From which department? Director General of what? Shipping. Take a registration before you make any payment to whom? To an agent where? Outside India. Because you're operating what transport? Multimodal transport operator. Are we clear with this, everybody? Next one, remittances of hiring charges of whom? Transponders. Who is transponders, sir? These are the companies who provides uplinking and downlinking services. See, let's say now we are recording this video. Recording this what? Video. I want to broadcast this video to all over world, all over India or all over the world. How it is done? First, we will send these signals to what? Satellite. But the moment when we send the signals become weak by the time they reach what? Satellite. Easily what happens? There will be intermediary called as what? Transponders. What they will do? They make the signal strong again. These uplink the signals, uplink the what? Signals. The transponders will uplink the signals to whom? Satellite. Again, satellite will distribute the signals to whom? Transponders. That will distribute it to whom? To all the households. Correct, right? And these transponders, will they give these services at free of cost? No, they will charge what? Fees. Correct, right? And if you are paying that in the foreign currency. If you're hiring a transponder who is a foreigner, who is a what? Foreign companies. For that purpose, you need approval of whom? Central government. What government? Central government. So if any charges payable, what charges payable? Hiring charges payable to the transponders by a TV channel. What channel? Or internet service providers, that requires approval of whom? Ministry of Information and Broadcasting or Ministry of Communication and Information Technology. Artha aita? What charges? Hiring charges of whom? Transponders. Usually who hires the transponders? TV channels as well as what? Internet service providers. Clear? That requires approval of the Ministry of Broadcasting. Next one, remittances of container detention charges. What charges? Container detention charges. Have you seen containers in the port? You would have seen in the movies, right? There will be so many containers. Those containers are given by whom? By the shipping companies. That come with a charge. They charge for that. Nobody gives anything at free of cost, right? So if I'm importing some fruits or importing some material, they will not load that material AC in the ship. They will load it in the what? Containers, separate containers, right? So when the containers comes to India, they will give certain time. Within that time, if you return it back, there are no charges. But what if you keep it beyond whatever it's prescribed? Then you should pay what charges? Container detention charges. What charges? But you can pay container detention charges. But if you want to pay container detention charges exceeding the rate prescribed by whom? DG of shipping. DG of what? Shipping. That requires approval of whom? Ministry of Surface Transport. Ministry of what? Surface Transport. Remittance of container detention charges. Everybody, container detention charges. What is container detention charges? If you retain the content beyond the prescribed period, you should pay charges for that. If they say 2 days, return within 2 days. But for some reason, you cannot return the containers within how many days? 2 days. Because of some legal issues or some issues. Now there is a war going on because of those issues. And that situation, you should pay what? Detention charges. Up to the rate prescribed by the DG of shipping, no approval is required. If you want to pay more than that, then you need approval of whom? Ministry of Surface Transport. Based on this, they not ask questions till this time, they can ask question based on this. I hope you guys are clear with the concept of container detention charges. Next one, remittance of prize money or sponsorship of sports activities abroad by a person other than international or national or state level sports bodies. If you want to sponsor any games or a prize money exceeding how much? US dollar 1 lakh. That requires approval of HRD. But if you're a nationals or international sporting body, and if you want to sponsor any games, you can do that without approval. For example, BCCI, they can sponsor any game outside India without whose approval? HRD approval. But other than that, as an individual or a company, you want to sponsor a sports outside India or a prize money outside India, that requires approval of which ministry? Ministry of Human Resource Development. That too exceeding how much? Up to 1 lakh, no approval is required. Clear with this? Next one, remittance for membership of what? P&I club. What is P&I club? Protection and Insurance Club. Correct, right? Protection and what? Insurance Club. This is the club of importer and exporter which provides the insurance for the members. Insurance for whom? Members. It gives some protection to the members. Correct, right? To become member of that club, you need to pay some certain charges. That requires approval of Ministry of Finance. Ministry of what? So these are the 9 transactions which requires approval of central government. Nothing but certain specified ministry. First one, cultural tours. Second one, exceeding 10,000 US dollars. Other than for 3 purposes. Third one, freight of a vessel hired by the PSU. Fourth one, import for the ocean transport on CAF basis. Next one, multi-modal transport. If you want to make any payment to the agent, you should have a registration certificate with that Ministry of Surface. Director General of Shipping. From that, you should obtain the certificate. Next one, transponders. Hiring charges of the transponder by the TV channels and the internet service providers. Then next one, container detention charges exceeding the rate prescribed by the DG of shipping. Next one, remittance of prize money or sponsorship exceeding how much? 1 lakh US dollars other than state or national? National as well as the state level sports bodies. Correct, right? And the last one, remittance for membership of the P&I club. These are requires approval of the ministries, certain ministries. Clear? Last one, Schedule 3, the transaction which requires approval of RBI. See, for individual under LRS scheme, what scheme? Liberalized remittance scheme, you can draw US dollar 2,50,000 per financial year. For what year? Financial year. Without whose approval? RBI approval. Keep this in mind. This 2,50,000 US dollar can be used both for current account transaction as well as the capital account transaction. There is no restrictions on usage. I repeat, you can use the 2,50,000 US dollar which you have withdrawn under the LRS scheme both for current account transaction as well as the capital account transaction other than a prohibited transaction. Are you guys clear with this? And you can also club it with the other family members, but not for what transaction? Capital account transactions, unless you are purchasing that property or asset in the joint names. What name? Joint name. For example, husband and wife, they can buy a flat in Dubai together. And for that, what they can do? They can combine their foreign exchange drawal and they can remit how much? 5 lakh in total. Provided that property or investment in the partnership firm should be held in what name? Joint name. What name? So if you want to do capital account transactions and if you want to club it, can you club it? Yes, only if it is in what name? Joint name. And this limit of 2,50,000 US dollar is what? Per person per financial year. It's what? Per person per financial year. What is the limit? 2,50,000 US dollar. And you can use it for what purpose? You can use it to any country except what? Nepal and Bhutan, because Nepal and Bhutan you can use the same currency, Indian rupees. This is called as Nepali rupee over there. Rupee is allowed now, Nepal and Bhutan. That is why. You cannot draw exchange over there. Next one, gift or donations, going abroad for employment, immigrations, maintenance of close relatives abroad, travel for business, attending a conference and all these things. Expenses in connection with what treatment? Medical treatment, studies abroad, any other what transactions? Current account transaction. Clear? It is overall cap. Means for all these transactions, you can use 2,50,000 US dollar. Not for individual transactions. Overall is how much? 2,50,000 US dollar per person per financial year. Are we clear with this, everybody? Next one. The limit of US dollar 2,50,000. This is done. And there is one more exception for this. In case of 3 transactions, how many transactions? 3 transactions, there is no approval, means you can draw more than 2,50,000 without the approval of RBI. If you provide a valid document to the authorized person. What are those 3 purposes? Education purpose, medical treatment purpose, and one more is that immigration purpose. For these 3 purposes, you can draw foreign exchange without any exceeding 2,50,000 US dollar without whose approval? RBI approval. You can just take the approval of authorized dealer himself. For example, your medical treatment, the quotation given by the hospital for medical treatment is 5 lakh US dollar. But as per Schedule 3, you can only draw how much? 2,50,000 US dollars. Now you need approval of RBI, but because it is a medical treatment, you can draw foreign exchange without whose approval? RBI approval. Clear with this? And one more situation where you can remit more than 2,50,000 US dollar as a person resident in India is if you are a person resident in India, but not a person permanently resident in India. Now, who is a person resident in India but not a permanently resident in India is the one who has comes to India on an employment basis, but he has not stayed for more than how many years? 3 years. Then he is considered as what? Person resident in India but not ordinarily resident in India. So, if you are a citizen of any country other than Pakistan, and if you are or an Indian citizen who is on deputation to a foreign company's office, branch or subsidiaries or a joint venture in India may make remittance up to his net salary. What salary? So it's about only for the remittance of salary. Net salary means what? After payment of taxes and all these PF and everything. Without any approval of whom? RBI. Approval of whom? RBI. I repeat, a person who is citizen of any country other than Pakistan or Indian citizen who is on deputation to the India on an employment basis, he can remit up to the net amount of his salary without RBI approval. Whose approval? RBI approval, provided he is a person resident in India but not a permanently resident in India. Understood? Yes or no? And what is the number of years? 3 years. Once it exceeds 3 years, then same restrictions applicable for you as well. Got it? Next one. Facilities for person other than individuals. Based on this, they generally ask practical questions to do the calculations for you guys. Correct, right? If a person, see, LRS is available for only a individuals. Only for whom? Individuals. For other than individuals, like body corporates, there is a similar scheme to LRS, but it's not called as what? LRS. LRS is only for whom? Individuals, natural persons. Then, if it's a other than individual, other than what? Individual, if they want to draw foreign exchange for the following purposes, that requires approval of whom? RBI. Approval of whom? RBI. Listen, everybody, what is the first one? Donation. What is the first one? So if an Indian company or a body corporate or association of persons, if they wants to donate anything exceeding 1% of their foreign exchange earning or US dollar 50 lakh, whichever is higher, sorry, whichever is less. First one is only less, remaining everything is higher. Whichever is less for creation of chairs in educational institutions. That is, in the Oxford, you want to create a chair and you want to donate for that. How much you can donate? 1% of your foreign exchange earnings in the last how many years? 3 years. Or US dollar how much? 5 lakh. Sorry, 50 lakh, whichever is less. Nothing but 5 million. Correct, right? Or for contribution to the funds or contribution to the technical institutions or bodies or association in the field of activity of the donor company. That requires approval of whom? Up to that, no approval. Beyond that, requires approval. Whose approval? What is the approval required? Exceeding donations exceeding 1% of your foreign exchange earnings in the last how many years? It is not average. 1% of last 3 years foreign exchange earnings. Add everything, do 1%. Or 50 lakh US dollar, whichever is less. Compare with that. If the donation is exceeding that amount, take approval of RBI. Otherwise, you can freely remit that amount. Next one, commission. Second one and third one is not most important. That is ICAI favorite topic. That's it. Commission for per transaction to agents. Per transaction to what? Agents abroad for sale of residential flats. What flats? Or commercial plot in India. See, this is for per transaction, not per agent. That is what transaction? Per transaction. Means per sale of one flat is one transaction. Two flat is what? Two transactions. Per transaction for agent means there can be more than one agent. It's not like one agent, this is the limit. It is what? Per transaction. Per transaction to the agent abroad for sale of residential flats or commercial plots in India. What flats? Residential flats or commercial plots. What plots? Commercial plots in India exceeding US dollar how much? 25,000 or 5% of the inward remittance received, whichever is more. Understood? So first you will take how much? 5% of inward remittance. Then you will compare it with what? 25,000 US dollar, whichever is more. Then you compare with the amount to be paid to the agents abroad for the sale of plots in India. Done? Commercial flats, sorry, residential flats are commercial plot. Per transaction, not per agent. Done? Third one, remittances exceeding US dollar. How much? 1 crore. How much? 1 crore per project. If it is infrastructure project, because they are project, right? What is infra project like? A bulb, flyover, bridge, flyover or bridge, whatever it is, skydeck. They are building skydeck near Kengeri. So for those infrastructure project, if they take any consultancy services from a company which is outside India, you can pay how much? Up to 1 crore US dollar. 1 crore or 1 crore, nothing but 10 millions or 100 millions. 10 million. Correct, right? 10 million US dollar For any other services or other projects, how much? 1 million, nothing but 10 lakh US dollars. Infra, 1 crore. Infra, 1 crore US dollars. Normal projects, 10 lakh US dollars. Clear? Understood? Last, exceeding that, you need approval of RBI. These are all exceeding that particular limits. Last one, remittances of preliminary expenses exceeding how much? 5% of the inward remittance, or US dollar how much? 1 lakh, whichever is higher. Whichever is what? Higher. Keep this in mind, only the first one is lower. Last three is what? Higher. First one is how much? 1% of 3 years inward remittances are 1 crore. 5 lakh, 50 lakh, whichever is lower. Then for commission, 25,000 US dollar or 5% of inward remittance, whichever is more. And next one, infrastructure, US dollar 1 crores. Normal projects, 10 lakh. And for reimbursement of preliminary expenses, 5% of inward remittances or US dollar how much? 1 lakh. Clear? These are the transactions for other than individuals which requires approval of whom? RBI. Are we clear with this, everybody? Procedure. What is the procedure required? You're supposed to follow the what? Liberalized remittance scheme. What scheme? Liberalized remittance scheme. If transaction is not listed in any of the above three schedules, then it can be taken what? Freely undertaken. If a transaction does not come within any of these three, it can be freely undertaken. No approval is required. Are we clear with this, everybody? Next one. This is what most important. Again, there is one more exemptions. Listen, everybody. If the remittance is made out of resident foreign currency account, as I said, I was outside India. I came back to India. Came back to where? India. I have some dollars. I can keep that in an account called as the resident foreign currency account. I'm resident now, but I want to keep that foreign currency. Out of that foreign currency, if I want to make any remittances outside India, do I need approval of RBI? No, I can freely remit it. Not for a prohibited purpose, other than prohibited purpose. So if I want to make a payment for cultural visit or for any other purposes out of resident foreign currency account, do I need approval of RBI? No. Out of RFC account, no approval of who is required? RBI approval is required. Clear? See, RFC is for individuals. EFC is for what? The one who does the export and import. Even when I export goods, I will earn some foreign currency, right? I can keep it in which account? Exchange earner foreign currency account. Which account? Exchange earners foreign currency account. So even if I want to make any remittances out of EFC, do I need any approval of RBI or central government? No, these are freely permitted. But there are three transactions. For those, you need approval of whom? Approval of RBI or a particular class. Even if it is out of what? EFC account. What is the first one? Remittance for membership of P&I club. Approval is required. Next one, commissions for per transaction to the agent abroad for sale of residential flats or commercial plots in India exceeding how much dollar? US dollar 25,000 or 5%. For this, whose approval is required? RBI approval. Even the C point, whose approval is required? RBI approval. So for these three transactions, even if you make payment out of EEFC account, whose approval is required? RBI approval is required. Yes or no? Everybody, yes or no? Say yes or no in the comment box. Next one, fourth one, liberalized remittance scheme. What scheme? Liberalized remittance scheme. Are LRS scheme, you know, per person, per financial year, not per transaction, per person, per financial year. How much? 2,50,000 financial year. April to 31st March. Gatalla financial year. Remittances under this scheme can be consolidated. Means what? Combined in respect of what members? Family members, not friends. Only the what? Family members, subject to individual family members complying with the terms and conditions. However, clubbing is not permitted by the other family members for capital account transactions such as opening a what account? Investment, purchase of property, if they are not the co-owners or co-partners. Co-owners, is it allowed? Yes. For capital transaction, it is allowed. Are we clear with this? These are the provisions with respect to what transactions? Current account transactions. Then comes our capital account transactions. What transactions? What are capital account transactions? I already discussed. A transaction which alters assets liability, including contingent liability outside India for a person resident in India. Assets liability in India for a person resident outside India is considered as what transaction? Capital account transaction. Capital account transactions are highly regulated. Okay, let us discuss now. FEMA allows any person to buy or sell foreign exchange for capital account transactions subject to whom? RBI and central government regulations. Clear? Debt instruments are regulated by RBI. Keep this in mind. If I want to take ECB is a what transaction? If I want to take loan from the foreign countries, is it a current account transaction or capital account transaction? Capital account transaction. So ECBs are governed by whom? RBI. Debt instruments are governed by RBI. Non-debt instruments are governed by whom? Central government. Both makes regulations. Central government makes the foreign trade policy. What policy? Foreign trade policy. And FDI rules. What rules? And ECB regulations. Because regulations are made by RBI. So debt instruments, RBI. Non-debt instruments, central government. FDI rules. What is FDI? Foreign direct investment, equity. Who governs it? FDI is governed by whom? RBI. RBI makes the, sorry, not RBI, central government makes the rules for FDI. Because it's the equity investment. Other than debt instrument, it is central government. Debt instrument, RBI makes. Both governs this capital account transactions. Now, section number 6, subsection 2 provides that RBI, in consultation with whom? Central government, decide which debt transactions are allowed. Because debt come under whose jurisdiction? RBI. Fix foreign exchange limit for such transaction, impose the conditions. However, RBI should not put any conditions for amortization of loans. What is amortization of loans? Repayment of loans or depreciation of direct investment. In what course of business? Ordinary course of business. They should repay the debt, interest, right? Or loans, right? For that, there cannot be any restrictions. Done? Next one. Section number 6, subsection 2, clause 8. Central government, in consultation with the RBI, prescribe classes of capital account transactions not involving what instrument? Debt instrument, set limit and conditions. 100%, 80%, 90%, like this. There is a limit by whom? By the central government. For FDI, there is a FDI rules. What rules? So for equity, who makes the rules? Central government. Under section number 6, subsection 2, A. Under section number 6, subsection 2, who makes the regulations for debt instruments? RBI. Clear with this, everybody? Next one, holding an asset by a person resident in India. What in India? Resident in India, but outside India. Where in India? Outside India. Can you purchase, hold, or transfer any asset, a property outside India? Allowed or not allowed? Allowed, subject to approval. Subject to what? Approval. See, unlike current account transactions, unless the transaction comes in Schedule 1, Schedule 2, Schedule 3, we can do any transactions freely. But in case of section number 6, capital account transaction, unless it is expressly permitted, it is prohibited. Means it requires approval of whom? RBI or government. Special cases. Are you guys getting it? Now section number 6, subsection 4 provides that can a person hold asset outside India? Holding asset means what? You already acquired it. You want to hold it. You are a resident of India, but you want to hold asset outside India. Allowed or not allowed? Allowed in the following cases. Listen, everybody. A person resident in India may hold, own, transfer, invest in foreign currency, foreign securities, immovable property outside India if they were acquired while the person was non-resident or they were inherited from a non-resident. For this, you don't need approval of any government or RBI because you purchase them whenever outside India. I can continue to hold those assets or I got them as an inheritance. Getting it? Resa, no. For example, a person is in India. His parents are outside India. After death of their parents, the assets transferred to whom? Legal heads. Even though he is non-resident of India, he can hold those assets because he acquired them when he was non-resident of India, or he got inherited from the person who are resident outside India. Are you clear with this? Section number what? 6 subsection 4 provides that a person resident in India, everybody, person resident in India may hold, own, transfer, invest in foreign currency, foreign securities, immovable property where outside India if they were acquired while the person was what? Non-resident. No restrictions. Or if they were inherited from a non-resident. Clear? The explanation, RBI has given some clarifications on what comes under this transaction. First one, foreign currency accounts opened and maintained by such person when he was what? Resident outside India. You can continue to hold that asset. Next one, income earned through the employment or business or vocation where? Outside India. Can you continue to hold that? Yes. Next one, income from investment made while such person was what? Resident outside India. Allowed. Income from gift or inheritance received while such person was resident outside India. Once you become resident of India, if you want to receive any capital account, any capital account transaction, that requires approval of whom? RBI. You want to receive a gift of property outside India. After you have become what? Resident of India. Does that require approval of RBI? Yes. Capital account transaction. It only allows you to hold, transfer, or invest any asset or any currency or any security which you have acquired when you are person resident outside India or which you have inherited from person who is non-resident. Only these two are allowed. But if you want to receive a gift after you become what? Resident of India, capital account transaction, unless permitted, requires approval of whom? RBI. Simple, say simple. Clear? Now, if I want to buy a immovable property outside India, flat, individual, can I buy it? Yes. Up to how much? 2,50,000 US dollar. Approval of whom is not required? RBI is not required. That is also allowed. Understood? Next one. What is the next one? Foreign exchange including any income arising therefrom and conversion, replacement, accrual to the same held outside India by a person resident what? In India. Now, for example, I have some building. I have given that building on a rent basis. I acquired that building when I was resident outside India. If income comes from that building, for earning that income, do I need approval of RBI? No. To reinvest it, do I need approval of RBI? No. To make fresh investment out of money from India, I need approval of whom? RBI. Got it? Any person resident in India may freely utilize all their eligible assets abroad for making payments or fresh investments abroad without approval of whom? RBI. Because there is no outflow of foreign exchange, why will RBI interfere? I have earned some money when I was what? Resident outside India. I have kept that money outside India. I want to reinvest in outside India. Do I need approval of RBI? No. But if I want to make a fresh investment out of money in India, do I need approval of RBI? Because there is an outflow of foreign exchange. Understood? Section number 6, subsection 4 provides that a person resident in India may hold, acquire, transfer, or invest in foreign currency, foreign security, or foreign any asset outside India. Correct, right? Yes or no? Provided he has acquired them when he was resident outside India or he inherited from the person resident outside India. Yes or no? Section number 6, subsection 5 deals with holding an asset by a person resident outside India in India. If a person resident outside India, if he wants to hold any asset in India, allowed or not allowed? Allowed. It's a capital account transactions. Correct, right? In that situation, a person resident outside India may hold, own, transfer, invest in the Indian currency or Indian securities like shares, bonds, etc. if they were acquired when they were resident in India or they were inherited from a person who is resident in India. Other than this, it requires approval of whom? RBI. And if it is a repatriation of this is what most important. Based on this, they asked question in the previous examination. Holding is not issues, but if you want to repatriate it, what is repatriate is take from India to outside India. You got, let's say, a lady got married to a person who is citizen of India. He dies. She inherit all his assets. Can she hold those assets in her name? Yes, no restrictions. But if she want to sell it and she want to take that money out of the country, does it require approval of RBI? Yes. Based on this one small point, they asked question in the previous examination, and this question is there in my question bank. The last question. New Zealand, that you want to take the money to New Zealand, that requires approval of whom? RBI. Clear? Then this point number 3 is easy. They just say what type of capital account transactions are allowed for person resident in India, person resident outside India, and what transactions are prohibited. Out of these 3, the last one is most important. The transactions which are prohibited for a person resident outside India. There are few transactions which a person resident outside India cannot undertake in India. Capital account transaction. Let's discuss transactions which are permissible in respect of person resident in India. Where? Outside India. Where? Outside India. Permitted capital account transactions for a person resident what? In India. Where he can do it? Outside India. First one. Investment by a person resident in India in what securities? Allowed or not allowed? Allowed. Foreign currency loans raised in India and abroad by a person resident in what? India. Foreign currency loan. Allowed. Transfer of immovable property outside India. Allowed. Guarantees given in favor of person resident outside India. Allowed. Export or import and holding foreign currency. Allowed. Loans and overdraft by a person resident in India from a person resident outside India. Allowed. Maintenance of foreign currency accounts in India and outside India by a person resident in India. Allowed. To take insurance policy by a person resident in India from a person resident outside India. Loans and overdraft by a person resident in India to a person resident outside India. All these derivative contracts, these are allowed. These are what? Allowed for the person resident in India. Next one, Schedule 2, permitted capital account transactions for the person resident where? A person resident outside India can undertake the following capital account transactions. What are they? What is the first one? Investment in India by a person resident. It includes in issue of securities to him or any investment in the capital of partnership firm, LLPs, and also sole proprietorship, acquisition of any immovable property. What property? Immovable property in India. Guarantees to a person resident outside India in favor of, on behalf of the person resident in India. Import and export of foreign currencies, deposits between the Indian person and the person resident outside India, foreign currency accounts in India of a person resident where? Outside India. Allowed, right? Next one, remittance outside India of capital assets in India of a person resident outside India. A foreign national sells property in India and remit the sales to where? Abroad. Allowed or not allowed? Allowed, subject to approvals. Or you can undertake the derivatives contracts. What contracts? Derivatives contracts. Transactions which restrictions cannot be imposed. We already discussed this, right? On these transactions, both RBI and CC cannot impose any restriction. Amortization of loan or depreciation of direct investment in the what course of business? Ordinary course of business. Last topic and most important topic, withdrawal of foreign exchange is prohibited for the following transactions. What are the following transactions? First one, general prohibition. No person shall undertake or sell or draw foreign exchange to or from an authorized person for any capital account transaction unless permitted. Unlike current account transactions, everything is permitted unless prohibited. But capital account transactions, everything is prohibited unless it is permitted. So the first prohibition is that you should write, if they ask question about prohibition of capital account transaction, you should write, no person shall undertake, draw, sell foreign exchange to any person for authorized person for any what transaction? Capital account transaction. Most important, this one, second point. A person resident outside India cannot invest in any form, whether it is equity, partnership, or anything, in an Indian entity engaged in the following sector. Who? Person resident where? Outside India cannot invest in any form, whether it can be equity, shares, debentures, whatever it is, cannot invest in any form in the entities if they're engaged in the following businesses. What is the first one? Chit fund. What is the first one? Chit fund. Other than registered one. Registered one, allowed. Second one, Nidhi company. What company? Not allowed. Third one, agriculture or plantation activities. Not allowed. FDI in agriculture or plantation activities not allowed. If they allow, what farmers will do? They start protesting it. There will be a huge protest in India. Sensitive areas. No government will allow FDI in what? Agriculture and plantation activities. But they have allowed it to some extent. In case of tea plantation, they have allowed up to 40%. If I'm not wrong, they have allowed it. Okay. So what is the first where the FDI is not allowed? Sorry, any investment is not allowed. An entity which is engaged in chit fund. Second one, Nidhi. Third one, agriculture or plantation activities. Fourth one, in real estate business or construction of what houses? Farmhouses. But however, if it is in the construction of residential or commercial premises, roads, bridges, real estate investment trust, then it is allowed. Only real estate business like buying and selling of land, then that business not allowed. Construction of farmhouses not allowed. But if it is a construction of residential or commercial premises like Shobha developers, you can invest in Shobha developers because they construct the flats. Apartments build karta hai na, that is allowed. ಅರ್ಥ ಆಗ್ತಿದೆಯಲ್ಲ, ಅಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡಬಹುದು. ನೆಕ್ಸ್ಟ್ ಒನ್ ಪ್ರೊಹಿಬಿಷನ್ ಇನ್ ನೆಕ್ಸ್ಟ್ ಒನ್ ಟ್ರೇಡಿಂಗ್ ಇನ್ ವಾಟ್ ರೈಟ್ಸ್? Transferable development right. If a company is dealing with transferable development right, that is the government gives certain rights for giving the property on behalf, on in return government gives certain rights to that builder. So if a company is dealing with transferable development right, in that company you cannot invest. That is prohibitions for investment in entities which are engaged in the following activities. Second one. Third one, prohibitions on transactions with what Korea? North Korea. You should not undertake any transactions with what Korea? North Korea. Citizens are resident of North Korea, prohibited. And the last one, there was an exit clause. They are given some time limit to exit from whatever investments you already had. With whom? North Korea. So there are 4 prohibitions. What students does in examination? No, they only remember these points, like this second point, and you write only this part. If you write only this part, you'll get only 3 marks if it is for 5 marks, or 2 marks if it is 5 marks. Because all these are prohibitions. First, general prohibition. Second one, investment in entity which are engaged in certain business. Third one, North Korea. And the fourth one, exit clause. And these are the provisions of FEMA, Foreign Exchange Management Act. And with this revision, with the question bank questions, whatever I've shared, if you go to the examination, you can answer any of the question they ask out of this chapter. Simple chapter. Then with these we are done with Foreign Exchange Management Act. Next, chapter number 6, charges, section number 77 to 87. So in this chapter, you should know it's all about charges, right? Like how the charges are registered, within what time, what happens if the charge is registered, what happens if the charges are not registered. We'll spend hardly 15 minutes to 20 minutes for this chapter. That's it, not more than 15 to 20 minutes. Important chapter. I will give certain practical insights, or there are minute details based on which they can ask questions in the examinations. Only I'll discuss those concepts. I'll not go into the theoretical concepts or the details of certain other aspects. Done? Okay, first of all, what is a charge? Charge is an interest or lien created on the what? Property or assets. Now the question is, what do you mean by property, sir? Property can be tangible property as well as intangible property. We can create a charge on the goodwill, trademark, patents, copyright, and what not, even the assets of the company. Now what do you mean by assets of the company? Simple, say simple, anything which is recorded as an asset in the balance sheet is called as what? Asset of the company. And all those assets we can create a charge. See, in case of deposits and debentures, we have certain restrictions. We know that in case of deposits, you should create charges only on the tangible asset. What assets? Tangible asset. Correct, right? And in case of debentures, only on the immovable property, not on the what property? Movable properties. Other than that, for rest of the things or for rest of the loans, you can create a charge on the what? Property as well as the assets of the company. Correct, right? Now, what do you mean by assets of the company? It can be financial assets, non-financial assets. It can be any asset. It can be, for example, let's say I have done some FD of 5 lakh in the bank. On that FD, I can create a charge. Create a what? Charge. Or let's say I have some calls in arrears. Calls in what? Arrears. Is calls in arrears is considered as a deposit? Sorry, is an asset? Calls in arrears. Is it an asset or liability for the company? Asset. They owe the money to me. It's an asset for me. On that also I can create a charge. Debtors. Can I create a charge on the debtors of the company? Yes. It is also considered as what? Charge. Sorry, asset. So charge can be created by the company either on its property or assets of the company or any of its undertakings. Any of its what? Undertaking. That is, it can be on the subsidiary company or any other holding company, whether that property is in India or outside India. And it also includes what? Mortgage. And what is the reason of creating this charge or a lien? As a security for the repayment of debt. Correct, right? So any charge is an interest or a lien which is created on the property or assets of the company or any of its undertaking as a security and includes a mortgage. Includes what? Mortgage is also considered as a charge. Clear? This is the one concept, one area where you guys should be careful with. Okay, so if it is asset, you can create a charge. You can create a charge on your assets as well as your subsidiary or holding company assets. Allowed. The asset can be in India or outside India. I have discussed in detail fixed charge as well as the floating charge. So what is fixed charge? Which is created on a specific asset, and in case of fixed charge, company cannot deal with that asset. Means you cannot sell that asset without whose approval? Charge holders approval. Whose approval? Charge holders approval. Tell me, if I take a loan from a bank, SBI bank, I'm a company, SBI is a bank, I'm taking a loan from SBI bank by creating a charge on my company asset. I am called as what? Charge creator. Bank is called as what? Charge holder. And the duty is on the charge creator. Again, it is registration of charges, and companies that is applicable only for whom? Company. Only if a company creates a charge, registration is mandatory. As per which act? Companies Act. For example, let's say a partnership firm takes a loan from bank. Is partnership firm required to get that registered as per the Companies Act? No, because Companies Act is applicable only for whom? Companies. But if a partnership firm convert it into company, once it becomes a company, it should get the charges registered in whose name? Company's name. Because section number 77 to 87 are applicable only for whom? Companies, not for partnership firm, not for LLPs. Understood? Clear? And what is fixed charge? It is fixed. Company cannot deal with the asset. And what is floating charge? The company can deal with the asset. It is fluctuating in nature. What in nature? Fluctuating in nature. Are we clear with this? And in case of fixed charge, assets are identified. In case of floating charge, they'll be in what nature? Fluctuating in nature. Generally, the fixed charge is created by via mortgage. For example, land, building. Created by what? Mortgage. In case of floating charge, created by what? Pledge or hypothecation. What is the difference between pledge and hypothecation, sir? In case of pledge, the possession will be with whom? With the lender. And in case of hypothecation, the possession will be with the charge creator. That is nothing but company. For example, if a company wants to take a loan on the raw materials or a finished goods, they do the hypothecation of that goods. And company can deal with that goods. Correct, right? There are few cases where a charge get crystallized. A floating charge becomes a fixed charge. When a floating charge becomes a fixed charge, it is called as crystallization of charge. What of charge? Crystallization of charge. A charge get crystallized in the following cases. What are the following cases? First one, conditions of floating charge are what? Violated. If the charge creator violate the conditions of the conditions of the loan, then the fixed floating charge becomes what charge? Fixed charge. Second one, ceases to continue its business. Obviously, if it continues ceases to carry the business, floating charge becomes a fixed charge. Company cannot deal with that asset anymore. Third one, company goes into what? Liquidation. Obviously. And the last one, creditor enforce the charge because you did not pay the return, interest or any repayment of installments. Then the charge holder can enforce the charge, and that time a floating charge becomes what charge? Fixed charge. Clear? Now, section number 77. Duty to register the what? Charge. Now you guys tell me, just let's discuss based on question and answers. Okay, who should get the charge registered? Is it charge creator or charge holder? Charge creator, nothing but the company should get the charge registered within how many days? 30 days from the date of creation of charge. If company fails to get charge registered within 30 days, company can get it registered within 60 days. from the date of creation of charge. Observe the wordings carefully. Within 60 days from the date of creation of charge by paying the additional fees. What fees? Additional fees. But however, for any sufficient reasons, if the company could not get the charge registered within how many days? 60 days. It can get it registered within next 60 days. Next how many days? 60 days by paying additional fees as well as the ad valorem fees. However, there should be a declaration, there should be an application made to the ROC to seek the extension. To seek the what? Extension. Means ROC will allow the registration of a charge within next 60 days. Only if a company has a sufficient cause. What cause? Sufficient cause. And that should be supported by a declaration signed by whom? CS or a director, stating that the delay in registration does not adversely affect the what? Intervening creditors. Intervening what? Creditors. And at any cases, registration of charge beyond how many days? 120 days is not allowed. Beyond how many days? 120 days is not allowed. Are we clear with this, everybody? Charge must be registered within how many days of creation of charge? 30 days. 30 days, normal fees. Beyond 30 days, additional fees. Up to how many days? 60 days. If not, next 60 days with additional fees as well as ad valorem fees. So maximum how many days? 120 days for the purpose of registration of charge. Clear with this? Now what happens? Sir, let's take a practical scenario. I created a charge. A company created charge, but it fails to got the charge registered within how many days? 120 days. Is there any possibility of it getting charge registered? Not possible, but they can get it registered. If they, in this scenario, practically what they can do is they can ask the bank to execute a new contract. That is the only possibility, right? Because beyond 120 days, no registration is allowed. Nobody can extend the time. Power is not with ROC also. Got it? Next one. Section number 77. Verification of instrument of charge. What of charge? Instrument of charge. That instrument creating the charge should be verified by the following persons. One from the company side, one from the charge creator side. If a property is situated outside India, partly in India, partly outside India, in that situation, from the company side, whose side? Who will sign it? Director or a CS? Director or what? CS. Correct, right? From the charge holder side, authorized officer of the charge holder or some other person who is interested in the charge. What is the charge? Interested in the charge. That is how it is verified. Clear? There are three parties in case if the property is situated where? Outside India. Situated where? Outside India. Where the property is situated in India, whether wholly or partly. Wholly or what? Partly. I should correct this. If it is wholly or partly in India, only two options. Property is wholly outside India, then three options are there. Director or CS, or by authorized officer of the charge holder, or some other person who is interested in the charge, like trustee and lender's agent. Clear? Where the instrument or deed relates to the property in India, whether wholly or partly, then by a certificate issued by a director or a CS or authorized officer of the home charge holder. So that extra one person is not there here. Verification of instrument of charge. Issue of certificate of registration. ROC issues the what? Certificate of registration. This application for registration of charge should be made in the form number CHG1. Normal securities CHG1. Debentures CHG9. Clear? Next one. Consequences of registration and non-registration. Important. This is the important provisions. See, if a charge is registered, it acts as a what notice? Constructive notice. What notice? Because the registrar is supposed to maintain the register of charges in the electronic form and anybody can access to it. So if you're dealing with the company, you are deemed to be aware about the charges created. Without knowledge of the charges created, if you enter into any transaction with the company, you cannot claim the doctrine of indoor management and company is not responsible for that. Clear with this? So it acts as a what notice? What notice? Constructive notice, and everybody who deals with a company is deemed to be aware about the charges created and registered with the ROC. If a person enters into any transaction with the company without any inquiry and suffers a loss, he cannot claim losses from whom? Company. Correct, right? This is the consequences of not knowing the charges created. You should write this point. If a person enter into a transaction with the company without inquiry and suffers a loss, he cannot claim that loss from the company. Why? Because a registration of charge act as a what notice? deemed notice or constructive notice. Non-registration of charge. What are the consequences? I repeat. Listen, everybody. Yeah, charge which is not registered within the prescribed time, then liquidator will not take into account what charge? Unregistered charge. It is void against the unregistered charge. Creditor will be considered as what creditor? Unsecured creditor. Debt is valid. The only thing is you will be considered as unsecured creditor. You will not get any priority even though you are a secured creditor. Any unregistered charge are void against the liquidator. You will be considered as what? Unsecured creditor. Amount is valid, agreement is valid, you can go to civil court and you can recover the money, but however you will be considered as unsecured creditor for the purpose of repayment of money in case of liquidations. Clear? And debt is valid, you can recover it by civil suit. However, charge holder loses the priority. Means if you don't get the charge registered within how many days? 30 days. How many days? And if someone else, the second person, like first I took a loan from her, getting it? I took a loan from her, and second time I took a loan from you. She should get it registered within how many days? 30 days. If she get it registered within 30 days, she get the priority. If she don't get it registered, but you got it registered first, then you get the priority. She'll lose the priority because she did not get her charges registered. Now the question is, sir, it is a duty of company, sir, to get the charges registered. What if company doesn't register it? That is why there is an option called as what? Where charge holder can also make an application for what? Registration of charge. If a company fails to get the charge registered within how many days? 30 days. Who can apply for it? Charge holder can apply with the instrument of what? Charge. In that situation, what ROC will do? On the receipt of application, ROC gives notice to the company to respond within how many days? 14 days. How many days? If there is no objection received within 14 days, ROC allows the what? Registration. Company itself can register the charge or show sufficient cause if application is rejected. Correct, right? Charge holder can recover the fees from whom? Company. Fees from whom? Company. Who can recover the fees from the company? Charge holder, because he pays the charges, right? Fees, right? Yes or no? This is where the charge holder can apply for registration of the charge. If a company fails to get the charge registered within 30 days from the date of creation of charge, charge holder can apply with the instrument of charge for registration. On the receipt of application, the ROC shall give a notice to whom? Company. And company does not show any cause within 14 days, ROC can register it, and in that situation the charge holder can recover all the fees from whom? Charge company, that is charge creator. Clear with this? Next one, acquiring property subject to charge and registration. Whenever you acquire a property which is subject to a charge already, the new company should get that charge registered in his name. X company is there, Y company is there. Listen everybody, X company, Y company. Y company has taken loan from which bank? SBI bank, 3 lakh rupees. Correct, right? Now Y company sold this to whom? X company. Now X company acquired the property subject to what? Property is subject to what? Charge. Now Y company should take whose approval? SBI approval. Whose approval? Only with the approval they can sell it. So first what will happen? This charge comes to an end. There will be a novation. There will be a new contract with whom? SBI and X company. Correct? Now the X company should apply for what? Registration of charge. Y company files satisfaction of charge. X company files what? Registration of charge. Reza, no. So it should also be registered within how many days? 30 days. How many days? 30 days. Modification of charge. See, modification is different. Satisfaction is different. What is satisfaction? Full amount is paid. That is called as what? Satisfaction of charge. When the payment is not done, only terms are changed. For example, repayment period is changed, interest rate is changed, or sanction limit is changed. All these are called as what? Modification of charge. Is modification required to be informed? Yes. Satisfaction of charge, section number different section numbers. Modification of charge, different section numbers. But both should be informed. Are you guys clear with this? Yes or no? Example, variation in the what? Terms and conditions, enhancing or decreasing the limits, or modification by crediting the what? Pari passive charge. Now listen everybody. I take loan today. See, have you heard about overdraft facility? Overdraft facility is also what? Loan. If I take overdraft facility on my raw materials, on my what? Let's say sanction is done today, but money is used after 1 month. And what date I should get registered? Sanction date. What date? Sanction date. And if that sanction limit is reduced or increased, it is called as what? Modification of charge or satisfaction of charge? Modification of charge. Are you guys clear with this? Yes or no? But however, change in the bank rate. What rate? Is not called as modification. What is bank rate? Basic. It will keeps on changing, right? London Bank, Interbank operating rate. So Mumbai Interbank operating rates. So interbank operating changes, it is not considered as what? Not a modification of charge. Clear? Next one. Partial release of asset is also considered as what? Modification or satisfaction? Modification. Next one, DM notice of charge. इसको हम लोग already discuss किया था. Once a charge registered, it becomes a public document. It is everybody who deals with the company is deemed to be aware about it. If a person enters into any contract with the company or anybody, and if it suffers a loss, he can't recover the loss from whom? Company, because he's deemed to be aware about the charge. Clear with this? Register of charges to be kept by whom? By the registrar. The registrar shall maintain the register of charges in the electronic form, and anybody can inspect it on the payment of fees. Correct, right? Next one. Company to report what? Satisfaction of charge. If a company repays the debt, repays the what? Debt. It has to be informed. What has to be informed? Satisfaction of charge. Within how many days? In the form number what? CAG4. But however, if it is not registered, it can be registered up to how many days? 300 days. Registrar may allow registration even up to how many days? 300 days. With what fees? Additional fees. However, registrar action on receipt of intimation, notice to charge holder. Notice to whom? Charge holder. See, whenever a person apply for registration of satisfaction of charge, ROC shall give a notice to whom? Charge holder, saying that they are saying that it is already satisfied. If you have any objection, please raise objections. If no objection is received within how many days? 14 days. Then ROC will register the charge. So to avoid this delay in time, what generally we do practically is we take the NOC from the bank and we attach the NOC of what? Bank along with the satisfaction of charge. By this way, we can avoid the what? Delay. Understood? Next one, register of decision. Enter the memorandum of what? Satisfactions. Correct, right? Next one, issue the certificate of satisfaction in the form number what? CHE5. See, this is the only situation where extension is allowed. You can register the satisfaction of charge even beyond what? 300 days with the permission of central government. Under section number 87. Clear with this? Up to 30 days, normal fees. Beyond the 30 days, up to 300 days, additional fees. ROC can allow. Beyond 300 days, that requires continuation of delay by the RD, Regional Direct. The section number 87. Done. Next one. Power of register to make entries of what? Satisfaction of charge. This is the section number which gives the power to whom? ROC himself to record satisfaction of charge by its own. See, 82 says company should make an application to whom? ROC to record the satisfaction of charge. What if company fails to intimate? Then section number 83 gives a power to whom? ROC to record the satisfaction of charge on its own motion. Clear? Registrar may make entries of satisfaction of charge and release of charges even if no intimation has been received by him from the company in the following cases. What is the first one? Property sold to which party? Third party. If the property is sold to which party? Third party. Or if the debt secured by a charge has been paid or satisfied. Paid or what? Satisfied. Or property or undertaking, charge is what? Released. In these cases, the charge ROC can register the satisfaction of charge. Next one, ROC shall intimate the affected parties within how many days? 30 days. Who should inform? Who should inform? ROC. Within how many days? 30 days from the date of satisfaction of the charge. Next one, certificates shall be issued in the form number what? CAG5. See, practically section number 83 is most important. Why? Because what happens now? Sometimes let's say I create a charge on movable property. If it is immovable property, company will be vigilant to take NOC from the bank because without NOC cannot deal with that asset. If it is movable property, if it is a floating charge, anyway, company can deal with that asset. Let's say I have taken a loan from the bank. I have repaid the loan. There is no loan in my balance sheet. But in the records of ROC, what is there? Loan is there. Getting it? I'm not taking an NOC from the bank. Bank has changed. Like now it has been 10 years. Nobody knows where is the records. Now, if I want to file satisfaction of charge, I should take an NOC from the bank, but there is no record in the NOC in the bank. At that time, what ROC will do? Section number 83 will come into picture. So ROC can record satisfaction of charge if it is satisfied that the debt has been paid. So to meet those practical difficulties, we have section number what? 83, where ROC can record the satisfaction of charge on its own motion. Clear? Next one, intimation of appointment of receiver or manager. What is appointment of receiver or manager? See, as the terms of the contract, if company defaults, the bank or the creditors can appoint a receiver to sell that asset and to recover the payment. Either as per the what terms of the contract. If it is not mentioned in the terms of contract, you can go to the court, get the order of the court, then you can appoint the official receiver or assignee for the purpose of what? Sale of asset and recover of money. Whenever you get the order of the court, or you make appointment as per the what terms of the contract, the same thing should be informed to whom? To the ROC within how many days? 30 days. And if there is a cessation also, like if you are appointed it, now he's no more an official receiver, even that has to be informed to whom? To the ROs within how many days? 30 days, along with a copy of the order of the court. 84. 85 is what? Register of charges to be kept by the company. Based on this, they ask MCQs in the previous examination. Every company shall maintain a register of charges along with the what? Instrument of charge at what office? Registered office. What office? Registered office shall include all charges, including what charges? Floating charges. Authentication of these should be done by whom? Director, CA, or persons authorized by the board for this purpose. Either by director or by CS or by whom? Persons authorized by the board. Correct, right? Next one, inspection during the business hours. Can a person inspect this register of charges? Yes. Who can inspect? Member or creditors without any payment of what? Fees. Any other person can he inspect? Yes, by payment of what? Fees. During what hours? Business hours. What hours are? Business hours. Most important, you should keep register of charges permanently. But instrument creating charge should be preserved for 8 years from the date of repayment or satisfaction of charge. How many years? 8 years. Are we clear with these, everybody? Next, last one. Punishment for contravention. You can go through it. 447 is applicable in case of fraud. 87 deals with rectification of register of charges. See, if there is any mistake in the register of charges, like you have filed application form for registration of charge, you have made any omissions or errors which are inadvertent or unintentional. To get those mistakes corrected, you can apply to whom? Central government. That is nothing but RD. With the approval of RD, you can get those things corrected. At the same time, if the satisfaction of charge is not registered within how many days? 300 days. It can be condoned by the central government. And it can be registered. And section number what? 87. Application by the company or interested person in the form number what? CHG 8. Grounds for application: failure to inform the register of what? Payment or satisfaction of charge, or errors or omissions in the what? Previously filed documents with the registrar. In that situation, central government can order for what? Rectifications or extension of time beyond how many days? 300 days. If the omission or misstatement was what? Accidental, or omission or misstatement does not prejudice the position of creditors or shareholders of the company. Yes or no? In these cases, what government can do? Can grant the extension. Clear? With this, we are done with what? Charge. Section number 77 to 87. Chances are more that they will ask questions, either MCQ questions or the descriptive questions. One question we can accept out of this chapter, and is easy question, easy chapter. Either they will ask consequences of registration, or non-consequences, or register of charges, or register of satisfaction of charge, or modification of charge. Theory question or practical question. Done. With these, we are done with the charges. Section number 77 to 87. So chapter number 7, management and administration of companies. In this, we covered section number 88 to 122. Yeah, this chapter is all about members, their registrars, then declaration of beneficial interest. Then we also have some provisions on annual return. Then we have the meetings chapter. Okay, so let's discuss one by one in detail. Section number 88 deals with the register of members. We know that every company shall maintain the register of members in the form number MGT1 and register of debenture holders MGT2. Contents of register of members should enter the name, address, email ID, date of becoming member, date of cessation, and date of on the which he has given the amount of guarantee. The question of amount of guarantee comes into picture only in case if he is a member of company limited by guarantee. Entries to be made. Every entry should be made in the register of members within how many days of allotment? 7 days of approval of allotment. If securities are listed, then you should also enter details of pledge of securities or charge on securities or in securities created by the promoters. Not all persons, created by whom? Promoters on their shares. And this entry must be made within how many days? 15 days. Based on this, there can be MCQs in the examinations. How many days? 15 days. Place of keeping register. The register shall be kept at the what office? Registered office of the company. What of the company? Registered office of the company. We know this exception. It can be kept anywhere outside the registered office, but within the same city, town, or a village in which the registered office of the company is situated by passing what resolution? Special resolution. Correct, right? But outside the city, town, or village, you can keep this registrar by passing what resolution? Special resolution. There is one more condition: minimum 1/10 of that members, total number of members, should reside in that particular place. See, generally at what office? Registered office. Outside the registered office by passing what? Special resolution. But within the same city, town, or village, if you want to keep it outside the city, town, or village, in that situation, you need to pass a special resolution, and minimum 1/10 of that member should stay in that particular place. Clear? Next one, index of registrar members. It is compulsory only if there are more than how many members? 50 or more. It is not more than 50. It is 50. Even if 50 members are there, what is compulsory? Index of members starting May. Next one, in case of demat securities, register and index of beneficial owners should also be maintained by the depository. Preservation of register. The registrar member should be preserved what? Permanently. And in case of debenture holders, up to how many years? 8 years from the date of redemption. Based on this, there can be MCQs in the examinations. Next one, holders of joint holder. See, we know that in case of joint shareholders, the rights of joint shareholders is decided based on the what? Seniority of list of names. Correct, right? Whosoever name appears first, they are the one who gets all the rights, different right as well as the voting rights. Correct, right? So the rights of the members, joint holders, are decided based on the what? Seniority. And seniority is based on the what? Based on the order of names in the register of members. Register of what? Members. Clear with this? Next one, foreign register. What register? What is foreign register? Only if a company authorized by what? Articles of association can keep part of the principal register outside India. That is called as what register? Foreign register. I repeat, a company, if it is authorized by AOA, can keep part of the register outside India, called as the foreign register. What register? Foreign register, to record the details of what? Members or security holder residing in that country, only in that country. I am keeping part of my registrar members where outside India only if it is authorized by what? Articles of association, to record the details of shareholders. What holder? Shareholder or security holders residing in that particular country. For example, if I'm keeping that register in USA, I can record only details of what? Members in USA. Clear? And whenever I open this foreign register, I should intimate the same to whom? To the ROC. To whom? ROC, about the place where FR is kept in the form number what? MGT3 within how many days? 30 days. It is can also be open for inspection and may be closed. Before closing, company is supposed to give what? Advertisement in the newspaper. A copy of every entry in the any foreign register should be transmitted to the home registered office within how many days of entry? 15 days of entry. And the duplicate of that register should also be maintained at what office? Registered office. What office? And the entries of that foreign register should be authenticated by whom? By the CS or by any other person authorized by the board in this foreign duplicate of the foreign register. Are we clear with this? This is about the foreign register. Can a company open a part of it registered outside India? Yes, only if it is permitted by what? Articles of association, to record the details of members or security holders residing in that country. Whenever the entry is made, company shall transmit that copy to whom? To the register within how many days? 15 days. How many days? 15 days. There is no a notice to be, see, when you open it, you need to inform to the ROC. But whenever entry is made, that should be sent to whom? ROC alla, company ke. About opening a foreign register, you need to intimate to ROC within how many days? 30 days. But any entry in that should be transmitted to the India within how many days? 15 days. And you keep a duplicate register in India. Are we clear with this, everybody? Next one, declaration of beneficial interest in any share. See, section number 89 and 90, both are different section numbers. Both deal with the same concept, declaration of beneficial interest. But 89 deals with what? Declaration of beneficial interest in any what? Share. And section number 90 deals with what? Declaration of significant beneficial ownership. What ownership? Significant beneficial ownership. See, simple. What are the provisions of? The provisions is, let's say, I will give a situation. You guys should tell me what will happen in this case. Listen, everybody. Now, let's say I am trustee. There is a XYZ Private Limited. What limited? XYZ Private Limited. It's a trust. It's a what? So trust can be in the form of private limited as well. Okay. It's just a trust to manage the assets of somebody. Clear? Got it? This XYZ Private Limited. What limited? XYZ Private Limited is having a trustee. Who is a trustee here? Let's say Mr. A is the trustee. Who is the trustee? A is the trustee. Who is trustee? The one who manages the assets of the company. Correct, right? Assets of the trust, not the companies. Now, there is a Reliance company. What company? Reliance company. Now, in this Reliance company, the trust want to hold the share. As we know, a trust cannot hold shares in a company because it is not a person. Same like partnership firm. Now, on behalf of this trust, who will hold the share? Trustee will hold the share. Correct, right? Now, the trustee purchased 10,000 shares on behalf of whom? On behalf of the trust. Who is holding the shares on behalf of the trust? A. So, in the company register of members, register of what? Members, whose name appears? Mr. A. That he is holding shares of how much? 10,000. He is called as the registered owner. What owner? Registered owner. In our case, who is the registered owner? A is the registered owner. But however, who is the beneficial owner of these shares? Who gets the benefits? Trustee will not act for its benefits. Who gets the benefit? Trust gets the benefits. This trust is the what? Beneficial owner. What owner? Beneficial owner. Now, the law requires that if the registered owner and beneficial owners are different, then they both should make a declaration about this to whom? Company within how many days of acquisition of this interest? 15 days. How many days? 15 days. And in return, the company shall intimate this to whom? To the ROC within how many days? 30 days. How many days? 30 days. Are we clear with these, everybody? Not 15 days, it is 30 days. Okay. 30, 30 and 30. Clear? Now, who should intimate this here? Beneficial owner as well as which owner? Registered owner. Both inform to whom? Company. Company inform this to whom? To the ROC. Inform this to whom? ROC. Within how many days? 30 days. Only when declaration is filed. What is filed? Declaration is filed. Company can exercise the right. Means this trust can exercise the right. Otherwise, it cannot exercise the right. This is called as declaration of beneficial interest. What interest? Are we clear about declaration of beneficial interest by the beneficial owner? If the beneficial owner is different from the registered owner, both of them should give a declaration about this in MGT4, MGT5 within how many days? 30 days. From the date of receipt of declaration, the company shall intimate the same to the ROC within how many days? 30 days in the form number MGT6. Are we clear with this? Yes or no? Other provisions, contravention. No right under can be exercised by what owner? Beneficial owner. If you don't file this form number MGT6 or MGT4 and MGT5, you cannot exercise the what? Right available to that shares. Are we clear with this, everybody? Yes or no? And in case of IFSC public company and private company, within how many days? 60 days, not 30 days. In case of government company, section number 89 shall not apply, because in case of that also, on behalf of government, who's hold the share? President. There is no question of president giving declarations. Exemption is there. Other than that, if registered owner is different from beneficial owner, both of them should give declaration to whom? Company. Company should inform this to whom? To the ROC. Simple. Registered owner MGT4, MGT4. Beneficial owner MGT5. It is not MGT14, it is MGT4. Okay, there is a mistake here. Are we clear with this? Then company inform this to whom? To the ROC. Done with this, everybody? Next comes section number 90. Significant beneficial owners in a company. Nothing but individual. Government wants to find out who is the one who is hiding behind the corporate bodies and who is the one who actually has the control or holding of that share or securities. That is called as what? Significant beneficial owner. What owner? Significant beneficial owner. I will just give an example. Who is significant beneficial owner, sir? First of all, I hope you guys know who is beneficial owner. Who is beneficial owner? Means he is the one who is holding the shares in real, or he is the one who gets the benefits of those shares. Correct, right? A person is considered as significant beneficial owner. What owner? There will be two companies. Okay, one is what company? Significant beneficial owner, and next one is what? Next one is a reporting company. What company? Reporting company. What company? Reporting company. It is the duty of the reporting company. What company? Duty of the reporting company to report it to whom? To the ROC about the significant beneficial owners. What owner? Significant beneficial owner. A person is considered as significant beneficial owner. What owner? Significant beneficial owner, whether he is directly, that is what? Directly or indirectly, or what? Indirectly, whether acting alone, acting what? Alone, or in concert, or in what? Concert, or jointly, as what? Jointly. If he exercise any of these three rights, how many rights? These three rights. How many rights? Three rights. That is, he has direct holding, along with what holding? Who's indirect holding? What holding? Everybody, what holding? Indirect holding, along with what holding? Direct holding. What holding? Direct holding in a reporting company is how much? At least 10%. Is it more than 10% or at least 10%? 10% of what? Voting rights, or 10% of what? Dividend right, or what right? Dividend right, or 10% of what? Share capital. What capital? Share capital. Correct, right? 10% of share capital. What capital? Share capital, or 10% of or any influence over the company. What of the company? Influence over the company. If he has any of these, then he is considered as what owner? Significant beneficial owner. So in these cases, what is mandatory? Indirect holding is mandatory. What is mandatory? Indirect holding. So if you have only direct holding, it is not considered as significant beneficial owner. But even if you have 1% indirect holding, but along with direct holding, if it amounts to how much? 10%. What is compulsory? Declaration of that beneficial interest is compulsory. Now Mr. X, if he has any of these things in the reporting company, he will be considered as what owner? Significant beneficial owner. It is the duty of the company to identify that person and report the same to whom? To the ROC. Now the question is, what about this indirect holding, sir? Keep this in mind. He must be having what holding? Indirect holding. Bolo, what holding? Indirect holding. Now what is indirect holding, sir? See, if he himself holds shares in the company, it is called as what holding? Direct holding. If he holds some shares through intermediary, it is called as what holding? Indirect holding. For example, a partner is there. So let's say X, who? X is holding 51% of voting rights of a XYZ company. XYZ company is holding shares in which company? ABC Reporting Company. What company? Reporting Company. Which company? Reporting Company. Now tell me, this holding of XYZ company in the ABC company is considered as what holding? Indirect holding, of which whom? Mr. X. Because he's not holding shares directly in ABC company, he's holding through whom? XYZ company, where he has a control, means he's holding more than 50%. What if he's holding only 50%? It is not considered as what holding? Indirect holding. What if this intermediary is a HUF? Then it should be what? Karta. If it is a partnership firm, he should be a partner. If it is a trust, if he is a trustee, should be what? Trust. If trustee is holding shares, then trust is considered as what? Beneficial holder. Correct. The members of the trust are beneficiary of a trust. Beneficiary of what? Trust. Beneficiary of the trust will be considered as what? Considered as the significant, that indirect holding of a particular person. Understood? So indirect holding along with the direct holding amounts to how much? 10%. He will be considered as what owner? Significant beneficial owner, and the same should be disclosed to whom? To the ROC. The main purpose of this disclosure is to identify individual who is actually having the control or having the voting rights or having the benefit, so that there will be a prevention of money laundering activities or any other fraudulent activities. Otherwise, what is to happen? Company never is to get to know who is the individual who has done the investment in the company, because they used to invest through what? Body corporate. A holding is considered as indirect holding only in that body corporate. You are having if you are having more than how much? 50%. If it is a partnership firm, you are a partner. If it is a HUF, you are a what? Karta. If it is a trust, you are a trustee or a beneficiary. Understood? So along with indirect holding, you are holding in direct holding of how much? 10% of shares, or 10% of voting rights, or 10% of dividend rights, or having a right to take part in the control of business decisions or any other decision, then you will be considered as what owner? Significant beneficial owner. Aresa, no. Individual deemed to have indirect holding in the following cases. What cases? Following cases. What is the first one? Body corporate other than LLP holds a majority stake in the company or ultimate holding company. What company? Ultimate holding company. Correct, right? Reza, no. If he is holding majority stake in the company or the ultimate holding company, means I control you, you control her. I'm holding 51% in your company, but you are holding how much in her? 51%. She is holding some shares in the other company. I'm not holding in her. I'm holding in you because I'm the ultimate, you're the ultimate holding company, right? So if I control the ultimate holding company, then rest of the subsidiary company holding is considered as what holding? Indirect holding. Understand? Yes or no? Next one, reporting requirement. Who should report it? Reporting company. Identify whom? SBO shall give notice in the form of what? Ben 4 to the SBO. Individual shall give declaration within how many days? From the date of receipt of notice in the form number Ben 1. The company shall file declaration with ROC within how many days of receipt of declaration? 30 days. Company shall maintain register of what? SBO. This is what most important. Company can apply to tribunal within how many days? 15 days. Tribunal can order for restrictions on the transfer, means if a person fails to provide the information, like company asks for information about his significant beneficial ownership details. If he fails to provide the details, company can go to whom? NCLT. NCLT can pass the following order. They can ask question based on this. What orders NCLT can pass if a person fails to provide details about his significant beneficial ownership? What is the first one? Restrictions in the transfer of shares, suspension of the right to receive dividend, suspension of voting rights, or any other restriction. Who can pass this? NCLT. Non-applicability of SBO rules. SBO rules not applicable to whom? IEPF, holding company which has declared what? In Ben 2. If, listen, a company want to start one more subsidiary company. What company? One more subsidiary company. Fully owned subsidiary company. But private company should be minimum how many persons? 2 persons. So to comply with that, one of my director, he's holding shares on behalf of the company. In that scenario, SBO provision is not applicable. It's not applicable. SBO provisions are not applicable. Next one, central government or state government. Investment vehicles regulated by whom? SEBI. Investment vehicles regulated by whom? Sectoral regulators. For these people, section number 90 is not applicable. Done. Next one, section number 91, closure of what? Registrar member. Can a company close registrar members? Yes, by giving notice in the newspaper. At once, cannot exceed 30 days. At any time in a year, should not go beyond how many days? 45 days. For various actions, corporate actions, the company can close its register of members at any time, not more than how many days? 45. Sorry, in a year, 45 days. At once, 30 days. But before closing the register of members, the company should give a notice in the newspaper. But giving this notice in the newspaper is not compulsory for which company? Private company. But however, you should give a notice in prior to how many days? 7 days. How many days? 7 days. Are you guys clear with this? Yes or no? Closure of register of what? Members. At once, you can close for how many days? Maximum 30 days. At any time in a year, 45 days in total. You cannot go beyond 45 days. Are you supposed to give a notice in writing to the members or to the persons? Yes. At least how many days prior? 7 days prior. Next one, annual return. What return? Annual return. You are supposed to file annual return in the form number what? MGT 7. What is section number? 92. What is 9 minus 2? 7. What is the form number? MGT 7. You should file annual return in the form number MGT 7. What is the form number? MGT 7. Signing this annual return should be signed by director and CS of the company. If there is no CS, by CS in practice. Exception, OPC and small companies, if there is no CS, what is not compulsory, should be signed by the director of a company. See, annual return should be signed by how many directors? Two persons. One is director and one is CS. But however, small company and one person company, they can get their annual return signed by whom? Only two directors. How many directors? CS is not mandatory. See, in case of normal companies, should be signed by either director plus CS in employment. If there is no CS in employment, by CS in practice. But if it is a small company and OPC company, signing by CS in practice is not mandatory. Done. Listed company. What company? Listed company or a company having paid up capital of 10 crore rupees or more or turnover of 50 crore rupees or more, then certificate in the form number what? MGT 8 is mandatory. Filing of annual return, AGM is held within how many days? 60 days. How many days? You should file the form number MGT 7 within how many days? 60 days from the date of AGM. If AGM is not held, then also you should file it within how many days? 60 days from the last date on which what should have been held? AGM should have been held. Clear with this? Section number 93, omitted. Section number 94, place of keeping and inspection of what? Register or returns. Tell me at what place you should keep register of members or register of charges and all these things. At the what office? Registered office. What office? Registered office. Can you keep in any other place? Yes, provided at least more than how many stays in that place? Is it at least or more than? More than. There also more than, na? More than how many persons stay? 1/10 of the members reside, and what is passed? Special resolution is passed. Any member, debenture holder, other security holder, beneficial owners can inspect without any payment of fees, but other members on the payment of what? Prescribed fees. This is about place of keeping the registrar as well as the return. You should keep at what office? A registered office. What office? You can keep it any other place if at least how many persons stays over there? 1/10 of the total number of members entered in that registrar stays in that particular place. Are we clear with this? With these, we are done with the place of keeping and inspection of register or returns. 95. Register to be considered as what? Evidence. Whatever is entered in the register is deemed to be what? Evidence of a transaction. Done. Our meeting provision starts from section number 96. Section number what? 96. 96 annual general meeting. Correct, right? So name section number itself provides the hint for us to remember the provisions. Every company except one person company should hold the first AGM within 9 months from the end of the financial year. For holding the first AGM, there is no extension. And you know what is financial year for this purpose, right? What is financial year? The period ending on 31st March of the every year. However, if a company gets incorporated on or after 1st of the January, then the financial year means the period ending on the 31st March of the following year. Clear? Now, in case of subsequent AGM, after the first AGM, the subsequent AGM should be held within 6 months from the end of the financial year. But however, for ROC, for extraordinary cases, can grant an extension up to how many months? 3 months. AGM should be there. One AGM must be conducted in every calendar year. It is mandatory. Next one, gap between the two AGM should not exceed how many months? 15 months. You should take into consideration all these criteria when you do calculations for the date of AGM. First criteria is what? 6 months of end of financial year, if it is subsequent AGM. Second criteria, you should check whether the AGM is happening within the same calendar year. Third condition is that the gap between the two AGM should not go beyond how many months? 15 months. OPC is not required to hold AGM, common sense, because there is only how many person? 1 person. Hours of AGM, the AGM should be held during the business hours, that is 9 a.m. to 6 p.m. Only starting of AGM is required between 9 a.m. to 6 p.m. It can go beyond 6 p.m. also. Conclusion can happen at 12 p.m. also, but starting should happen between 9 a.m. to 6 p.m. It can be held on any day other than national holiday. Means it can be held on Sunday also. Correct, right? Place, it should be held at the registered office or within the same city, town, or village of the registered office. Correct, right? So the AGM should be held within what office? Same city, town, or village within which what is registered associated? Registered office of the company is situated. For example, Infosys should hold AGM either at the registered office or within Bangalore. They cannot hold AGM in where? Mysore. Clear? But unlisted company, what companies? Unlisted company can hold AGM any place in India, not outside India, any place in India, if consent of all members in writing is taken in advance. Consent of which members? All the members. But government company can hold AGM at a place specified by the government. Clear? These are the provisions with respect to AGM. So first AGM should be held within how many months of end of financial year? First AGM, 9 months. Subsequent AGM, 6 months. Then what is the place of AGM? A registered office or within the same city, town, or village where registered office is situated. But however, if it is unlisted company, any place within India with the approval of the with the approval of all the members of the company who are entitled to vote. Okay. Next one, powers of tribunal to call the AGM. Can AGM be called by tribunal? Yes, if it is impracticable for the company to hold the AGM. In that situation, on the application of any member of a company, what of a company? Member of a company, NCLT can now call the AGM. Most important, when the NCLT orders for holding the AGM, it can also make a provision saying that even if one member present is deemed to be the what? Quorum. General cases, quorum cannot be less than 2. But if NCLT orders for holding AGM or AGM, the court can say that even if one member present, how many members present? One member present, then it is also considered as what? Quorum. Are we clear with this? Next one, power of tribunal to call the what? Meeting of members. Nothing but EGM. So if it is impracticable to call the meeting of company, the EGM of a company for any reasons. For example, let's say quorum is not there in the board meeting. Board is the one who calls EGM, but board of directors say illa. In that situation, or if there is a deadlock between the board of directors, in those scenarios, what NCLT can do? Either suo motu. What is suo motu? On its own motion or on the application of any director or member of a company who would be entitled to vote at the meeting. Only the members who are entitled to vote at the meeting can apply for what? Calling of EGM by the tribunal. What is the first situation? Where it is impracticable to hold the meeting for a company for any reasons, or either on suo motu or on the application of any director or a member of a company who would be entitled to vote at that meeting, then the NCLT can order for meeting of the company to be held, give such ancillary or consequential directions, including the direction that even if one member of the company present, it is considered as what? Considered as a quorum, whether by person or by proxy. Understood? Clear with this? When tribunal can order for holding the EGM, when it is impracticable for the companies to hold the EGM for any reasons, or either on its own motion or an application by director or any member who is entitled to vote, it can order that the meeting to be called And even if one person or one member present, either by person or proxy, it is deemed to be a quorum. Clear? 99. If a company fails to hold the AGM within the prescribed time limit, is there any punishment for that? Yes, company is punishable with a penalty of how much? Up to 1 lakh rupees, and per day it is how much? 5,000 rupees. There is a mistake here. It is not 5 lakh rupees, 5,000 rupees per day for a continuous default. Clear? Next one, calling of EGM. Can a company call EGM? Can a company call extraordinary general meeting? Yes, there are two situations. First one, board of directors can call the EGM for various reasons. The board of directors are the one who has the right to call the EGM. But there are cases where even the members can request for calling of EGM. See, section number 100, section number 111, section number 115. All of these are giving powers to whom? Members to request something. Section 100 gives the power to the member to request for holding the what? EGM, meeting itself. To call or to request a meeting of members of a company, you must be holding 10% of the voting right. Under section number 111, to request a resolution, you should be holding at least how much? 1/10 of paid up capital. Carrying what right? Voting rights. But for resolution requiring special notice, section number 115, you should be holding at least 1% of the voting rights or shares in which how much is paid? 5 lakh rupees is paid up. Getting it? Yes or no? So, but all of them are giving right to whom? Members to request the company to do something. Are we clear with this, everybody? Yes or no? Now, can a member or members request the company to call an EGM? Yes, but that member or members should be holding at least how much? 10% or more of the what rights? Voting rights or requisitions deposited at the what? At the registered office, and the board shall proceed to call the meeting within how many days? 21 days, and call the meeting within how many days? 45 days of requisition. If the board fails to conduct the meeting within how many days? 45 days, the members can call and hold the meeting in the same manner, and the notice of at least how many days to be given? 21 days to be given to all the members whose name appears in the MGT1 in the preceding how many days? 3 days. Based on this point, they asked MCQs in the previous examination. Whoso a name appears in the preceding 3 days, to those members you give a what? Notice. How many days notice? 21 days notice. Who should give this notice? Requisitionist. If the board fails to hold the meeting within how many days? 45 days. In that situation, who can request? Requisitionists themselves can hold the meeting. Yes or no? Contents of notice, they should mention the place, date, day, and hour of the meeting. Expenses of calling the meeting to be reimbursed by whom? Company, and company can recover from whom? Director in default. Not in default, director in default. If the quorum is not present within how many minutes? 30 minutes. What happens to the meeting? Meeting stands cancelled. In case of whose meeting? Requisitionist called meeting. Are you guys clear with EGM? Simple provision. See, the beauty of this short notes is it covers every point, important point. There is no, and it will be easy to revise. I'm not like I've jumbled it. It is in the order also. Like if just have to add some other English words to complete the sentence. See, first one is what? Board can call the EGM on suo motu. Second one, board may at the request of whom? Members holding 10% or more of voting rights. 10% are what? Voting rights. So you should write it like this. Members holding 10% or more of voting rights can request the company to call the EGM by depositing their request at what office? Registered office. In that situation, the board shall proceed to call the EGM within 21 days and shall call the meeting within how many days? 45 days of requisitionist. If the board fails to hold the meeting within 45 days, the requisition themselves can call and hold the meeting in the same manner. They should give notice to all the members at least 21 days before the meeting. So all the members whose name appears in the register of members 3 days before. How many days before? 3 days before. The notice should specify place, day, time, and hour of the meeting. Expenses of calling the meetings to be reimbursed by whom? Company. And company can recover it from whom? From the director in default. Correct, right? If quorum is not present, what is not present? Array, what is not present? Quorum is not present in the requisitionist call meeting. Within 30 minutes, the meeting stands cancelled or terminated. Clear with this? This is with respect to EGM. Next comes notice of the meeting. What of the meeting? Notice of the meeting. A company shall give notice to all the members. What member? All the members. Now, what do you mean by every member of a company? Every member means shareholder. What shareholders? Both equity as well as the preference shareholders. What is the length of the meeting notice? The notice shall be given how many days prior? 21 days prior. That is clear days, excluding the date of sending the notice and the date of the meeting. By what? By post. If you are sending it by post, we discussed this now. It is there in section number 20 also. If a notice is sent by post, you need to add extra how many hours? 48 hours. Notice is deemed to have been sent after how many hours? 48 hours. In case of section 8 company, it should be 14 clear days. Clear? Shorter notice. Based on this, they can ask question in the examination. A company can call AGM or EGM by giving shorter notice if they have taken a consent in writing of 95% of the members who are entitled to vote if it is AGM, or majority in number and holding at least how much? 95% of the voting right. There are two conditions here for EGM. So EGM can be held at a shorter notice if majority in number and holding at least how much? 95% of the voting right has given the consent. Contents of the notice. The notice shall state the place, date, day and hour of the meeting. What are the meeting? Place, date, day and hour of the meeting. We discussed all these things now. Can EGM be held on any day other than what holiday? National holidays as per secretarial standards. Okay. Contents, it shall state the place, or we discuss this. Persons who are entitled to receive the notice. We discussed every member. If member is dead, is legal representative. If he is insolvent, official receiver, auditors, directors, debenture trustee. And we know that in case of Nidhi company, notice is given only if he is holding more than how much? 1,000 rupees in face value or 1% of the paid up share capital, whichever is less. Correct now. Mode of sending the notice: general cases by hand, ordinary post, speed post, a registered post, or by email. E-voting and postal ballot. Most important. If e-voting facility is given, the notice can be sent only by what post? Registered post, speed post, or by email. For e-voting facility is given, you should give notice only by what? Registered post, speed post, or by email. If there is accidental omissions, it is valid. If there is intentional omission in giving notice, the resolutions are not valid. Section number what? 1, not 1. There is one more provision with respect to sending of notice in email. In case of email, if a notice is sent by email, it can be sent as an attachment or as a in the form of text. If you are sending it as an attachment and if it's in the PDF form, you should also share a link to download that software. Clear? Next one, explanatory statement. Based on this, I expect them to ask questions in the upcoming examination. Section number 102, explanatory statement. See, keep this in mind. Explanatory statement means explanatory statement. सेक्शन नंबर 102 से आपको अनेक्स करना पड़ेगा, अटैच करना पड़ेगा. You should attach an explanatory statement. What statement? Explanatory statement concerning the nature of, concerning each item. What item? It should give an explanatory statement for every item, not for entire items. Like you will not give one explanatory statement for every business. So you should give an explanatory statement containing nature of, containing what? Each item of special business should be annexed to the what? Notice. Annexed to the what? Notice. That explanatory statement should provide the following details. It should state the following material fact. What is the first one? Nature of concern or interest. Nature of what? Concern or interest in respect of each item. What item? Of every director, manager, KMP or the relative. Nature of interest or concern in respect of each item of every director, manager, KMP or relative. Any other information which enables the members to make what decision? Informed decision. What decision? Informed decision. All these things should be disclosed in the explanatory statement. Correct, right? There is one more scenario where the special business relates to or affects any other company. In that situation, the extent of shareholding of a promoter, director, manager, KMP, if the shareholding is not less than how much? 2% shall also be disclosed. And if there is any document referred, what referred? document is referred, the time and place where such document can be inspected should also be mentioned. These are the information to be disclosed in the explanatory statement. The first point you write in the examination is explanatory statement, giving the or concerning the each item of special business to be annexed to the notice. For this purpose, you used to know what is special business. Any business other than what? Ordinary business is called as what? Special business. What is ordinary business? If these four activities are done in EGM, because they are common, they are general in EGM, it is considered as what business? Ordinary business. Example, adoption of financial statement or annual return. Second one, declaration of dividend. Third one, appointment of auditors. And the fourth one, appointment of directors and reappointment of directors or auditors. These four activities are considered as what business? Ordinary business. Other than this, rest everything is considered as what business? Special business. If you are transacting special business, you should attach an explanatory statement concerning each item of special business to the notice of the meeting. The explanatory statement shall contain nature of interest or concern of every director, manager, KMP, and their relatives with respect to each items of business, correct, right? Or any other informations or documents or a statement which enables the members to make a what decision? Informed decision. However, if the special business relates to the any other company, the extent of shareholding of promoter, directors, manager, or KMP should also be disclosed if it is not less than 2%. Or any other items, if it refers to a document, the time and place where such document can be inspected. These details should be given in the what? Explanatory statement. Understood, everybody? Next one, section number 103, quorum. What is quorum, guys? The minimum number of persons who are required to be present in the meeting is called as what? Quorum. What is the quorum for private company? Minimum 2 persons personally present. Quorum for the public company depends upon number of members. Up to 1,000 members, 5 members personally present. 1,000 to 5,000, 15 members personally present. More than 5,000, 30 members personally present is the quorum for the company. See, without a quorum, any resolution passed is not valid. There must be a quorum. Understood? Can AOA provide a larger quorum? Yes. I'll ask a question to you guys. Now, let's say Articles of Association says there should be 10 in case of private company as a quorum. Law says how much? 2. Now, how many should be present in the meeting to call it as a valid quorum? 10. Because section number 103 says articles may provide what number? Higher number. If article provides higher number, we should have that number of members. Now, what if, I'll give a peculiar situation now, listen. AOA says 10 members, but company had 10 members. Out of 10 members, 3 members sold their shares to the existing members and they quit the company. The company is having only 7 members. In this case, how many should be present in the meeting to call it as a valid quorum? 7. Means all should be present. Understood? Clear with this, everybody? Next one. Only one member present, person shall be what? In person shall be what? Counted. Means only the persons who are present in person shall be counted. If they are present to the proxy, is it counted or not counted? Not counted. But however, representatives of the body corporate or a president or a governor shall be what? Counted. We discussed this now. Section number 112 and 113 provides that representative of the body corporate and the governor shall be considered as what? Members personally present. Correct, right? Next one individual can be represent more than how many body corporate? And he will be counted as what? Such number for the purpose of quorum. For example, if one person is a representative of 2 body corporate, is considered as how many persons personally present? 2 persons personally present. Correct, right? Next one, in case of joint shareholders, they'll be considered as how many member? 1 member. Next one, proxies cannot be counted for the purpose of what? Quorum. We know this. Next one, quorum shall be present while transacting the business. If there is no quorum, the business is not valid. It is not like quorum is present at the starting of the business. Quorum should be present throughout the meeting. At any time, if the quorum is not there, then you should not transact any business. Understood? Next one. Members who have voted via remote voting still have the right to attend the what? General meeting, and we count them for the purpose of quorum. Clear? Even though you have voted through the electronic mode, even if you are present, you will be counted for the purpose of quorum, but you cannot vote again. Clear with this? Quorum rules does not apply to a business transacted through what? Postal ballot. Obviously, why? Because there is no physical meeting in that scenario. Clear? At the same time, a member who is not entitled to vote on a particular item of business shall still be counted for the purpose of quorum if he present at the what? Meeting. One man meeting. You know what is one man meeting? Where only one person is present. It is allowed in case of section number 97 or section number what? 98. If the quorum is not present, interesting case, if the quorum is not present within half an hour from the dot time, adjourn to the same day, same time, same place. If the date, time, and place is changed, then you should give a 3 days prior notice individually or in the newspaper. Correct, right? If in the adjourn meeting also quorum is not present, within how many hours? Half an hour, that is 30 minutes. Members present who are not less than 2 shall be considered as quorum. But as per ICA, they asked this question in the previous examination, where even though one person member present, it will be considered as quorum. As per secretarial standards, in every situation, there should be minimum how many? 2. But however, Companies Act says whoever present in the meeting is considered as what? Quorum. And ICA has taken that provision. As per that, they had given the answer also in the MCQs. They said there was a meeting of the members. They called the meeting. Quorum was not present. They adjourned the meeting to the next day, next week, same time, same day, and that only one member is present. And he passed resolution. What is the position of resolution? Is it valid or not valid? Valid. That is what the answers they had given. So you should go with ICA answers. But as per secretarial standard, which is mandatory, there should be minimum how many persons? 2 persons at any case. Clear? And if it is a requisitionist called meeting, if a meeting is called by requisitionist and if the quorum is not present, what happens to the meeting? Meeting stands cancelled. There is no adjournment in case of requisitionist called meeting. Are we clear with this, everybody? Next one, chairman. As I said, this 101, 103, 104, all these section numbers can be modified by which companies? Private companies, by specifying the other rules in the articles of associations. Done. Next one, chairman. Who is chairman? The one who takes the chair and conduct the what? Proceedings of the meeting. What of the meeting? Proceedings of the meeting is called as what? Chairman. If a chairman is not present within how many minutes? 15, not 15 days, 15 minutes. Change kar lena, that is wrong. 15 minutes. How 15 days? 15 minutes, again 15 minutes. If the chairman is not present within 15 minutes, please everybody correct it. कुछ गलत हो गया है. It happens. ನಾವು ತಪ್ಪು ಮಾಡ್ತೇವೆ. So it's a clerical error. 15 minutes are unwilling to act, then whoever director present will be considered as what? Can elect any one of them as the chairman. Now what if directors are not present? Or if they are present, but nobody is willing to act as what? Chairman. Within how many minutes? 15 minutes. In that situation, the members present shall elect any one of them as a what? Chairman. By show of hands. If empowered by articles, most important, only if articles provides, chairman shall have what? Casting vote only when there is an equality of vote. Clear? Based on this, they asked practical question in the previous examinations. In case of what? In case of what? Chairman shall have a casting vote. What vote? Casting vote only if he is authorized by what? Articles of association of the company. Understood? Next one, proxies. Who is proxy? The one who acts on behalf of the home members is called as what? Proxies. Is it applicable to a company not having share capital? No. The provisions of proxy not applicable to IFSC company as well as the company not having the share capital. There is no question of appointment of proxy in these companies. Next one. Even in case of sectioned company, a person who is entitled to attend and vote, only remember this, only a person who is entitled to attend and vote at the meeting can appoint whom? Proxy. So that is why preference shareholders cannot not appoint proxy. Only who can appoint proxy? Equity shareholders. Because only a person who is entitled to attend the meeting and vote at the meeting can appoint a proxy. And my question is now, you are equity shareholder. You have already casted your vote to electronic mode. Now you want to attend the meeting by yourself. Can you attend the meeting? Yes. And you will be counted for the purpose of quorum. What if you have done the voting already and you want to appoint proxy for that to attend the meeting? Is it possible to appoint proxy? I repeat, an equity shareholder has already casted his vote. Now he wants to attend the meeting through a proxy. Allowed or not allowed? Not allowed. Why? Because you are no more entitled to vote. What is the use of that proxy? See, first of all, proxy cannot speak, not considered for the purpose of what? Quorum. If you cannot even vote, what is the use of he coming to the meeting? Clear? Next one. A proxy shall not have right to speak at the meeting. A single person cannot act as a proxy on behalf of the members. How many members? Not exceeding 50 members are holding in aggregate how much? Not more than 10% of share capital. That is the maximum limit. We have discussed all these things in detail, right? Next one, proxy shall not have right to speak at the meeting. It can only vote. It cannot vote by show of hands. It can only vote by poll. Correct, right? Is he counted for the purpose of quorum? No. Proxy must be deposited within how many hours of the meeting? 48 hours of the meeting. Listed companies, e-voting facilities, no need to appoint a proxy. There is no need to appoint what? Proxies. Listed companies providing e-voting facilities, there is no need to appoint whom? Proxies. Because when there is option to vote electronically, where is the question of you appointing a proxy? Vote it at home only, na? Next one, members entitled to vote can also inspect the proxy form by giving how many days notice? 3 days notice in writing 24 hours before the meeting till the conclusion of the meeting. This is the inspection time. You should give a notice 3 days prior. And the inspection is open 24 hours before the meeting till the conclusion of the meeting. If a meeting is adjourned, a fresh requisition must be submitted for inspection. These are the provisions with respect to proxies. Now my question is, let's say I appoint a proxy. If both proxy and members are present in the meeting, who will vote? Member. Because once a member is present, it is deemed that proxy has been revoked. Can any member inspect the proxy of other member? Yes, but he must give a what? Notice. Give a what? Notice. And again, members entitled to vote is only entitled to inspect the what? Proxies, not the other member. A member entitled to vote is the only one who is having right to inspect the what? Proxy form, not any other person, not any other creditor. And for that, you should give how many days notice? 3 days prior notice. And inspection starts 24 hours before the meeting until the conclusion of the meeting. In case of, see, any person can be a proxy, but Section 8 company, only a member of the company can be a proxy. And in case of listed company, if it is providing e-voting facilities, there is no question of what? Appointment of proxy. Understood? Next one, section number 106, restrictions on what right? Voting rights. Can a company restrict the voting rights of members? The answer is yes, only if articles provides. And that too for only 2 reasons. How many reasons? 2 reasons. Under section number 106, a company can restrict the voting rights on the members per the calls not paid or exercise the lien on the shares. What are the shares? Lien. Only if it is authorized by the articles of the company. Where the articles of the company do not contain any provision restricting the exercise of voting rights of members, then the member cannot be restricted from exercising the what right? Voting rights, even though calls or other sums are payable by him have not been paid or company has exercised any right of lien over his shares. ಅರ್ಥ ಆಗ್ತಿದೆಯಾ? ಇದರಲ್ಲಿ ಒನ್ ಮೋರ್ ಪ್ರಾವಿಷನ್ಸ್ ಬರುತ್ತೆ ವಿತ್ ರೆಸ್ಪೆಕ್ಟ್ ಟು ಜಾಯಿಂಟ್ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್. ವಾಟ್ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್? ಇನ್ ಕೇಸ್ ಆಫ್ ಜಾಯಿಂಟ್ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಹೂ ಎಕ್ಸರ್ಸೈಸ್ ದ ವೋಟಿಂಗ್ ರೈಟ್ಸ್ ಆರ್ ಡಿವಿಡೆಂಡ್ ರೈಟ್, the first member, whosoever name appears first. Clear with this? Section number what? 106. Then we have 107, 108 and 109 which deals with, and 1110 which deals with what? Voting rights. What rights? Voting. See, we know that section number 107 deals with voting by show of hands unless the poll is demanded or voting is carried out what? Electronically. Other than these two cases, generally voting is done by what? Show of hand. But if a company is providing e-voting facility, then there is no question of voting by show of hands. Then, and in case of voting by show of hand, the declaration made by the chairman and the entry made in the minutes of the meeting, it's deemed to be a conclusive evidence. What evidence? Conclusive evidence. Next one, voting by electronic means, section number 108. Important one. Based on this, they can ask what is the applicability, to whom it is applicable. You should remember this point. They don't ask procedural aspects as such. Just remember to whom e-voting facility is compulsory. Obviously, listed company, and every company having 1,000 or more members, what is compulsory? E-voting facility is compulsory. Remember, while discussing the list of exemptions, everybody who is watching this marathon, if you have not seen that video, there is a video, separate video of exemptions and modifications for Nidhi company and IFSC company. Go watch that. Correct, right? Because we have discussed in case of Nidhi company, there is no requirement of providing the e-voting facility, even if it is having how many members? 1,000 or more members. So e-voting facility is mandatory. A company shall provide e-voting facility if it is having at least having how much? 1,000 or more members. Exemptions from e-voting, Nidhi company are companies whose only debentures or preferences are listed, are company listed on SME trading platform and institutional trading platform. These are also listed companies, but for them, what is not compulsory? E-voting facility is not compulsory. What are the procedures to be followed for the purpose of e-voting? Appoint whom? NSDL or CDSL or other agency for providing what facilities? E-voting facilities. They act as intermediaries. They provide facility of e-voting where every member can log in and they can cast their vote. Second one, appoint one or more scrutinizers for e-voting or ballot process. Decide the cutoff date for the purpose of reckoning the names of members for e-voting. Notice to be sent to whom? All members. The notice shall be placed on the what? Website of the company. The notice shall indicate the process, the manner of e-voting, time schedule, e-voting details of login ID, process to generate the password. Notice shall be published in the form of advertisement at least 21 days before the meeting. Remote e-voting shall remain open for not less than how many days? 3 days, but shall close at 5 p.m. on the date preceding the date of general meeting. Not less than 3 days and shall close at 5 p.m. on the preceding date of what meeting? General meeting. At the end of the remote e-voting period, the facility shall forthwith be what? Blocked. So it should end at least 1 day prior. At what time? 5 p.m. Should be open for minimum how many days? 3 days. You can provide for more than 3 days also. Minimum 3 days. The declaration of results of voting by the scrutinizers shall give a report not less than 3 days before the meeting. Chairman or person authorized by him in writing shall declare the what? Results. So within 3 days. Within how many days? 3 days. On the date of what? Meeting should give a report. Should give what? A report. And who will declare the result? Chairman will declare the results. This is how what is done. E-voting is done. E-voting is compulsory for which company? Listed company, and every company having how many members? 1,000 members, but it is not mandatory for which company? Nidhi company. Clear? And in case of e-voting facility should be open for minimum how many days? 3 days, and must end at least 5 p.m. It's in the data meeting. Demand for poll. Who can demand for poll? Any person or persons, either by person or proxy, present by person or proxy, holding not less than 1/10. What is 1/10, guys? 10%. Or holding not less than 5 lakh rupees is paid. Correct, right? Anyone. Either you should be holding 1/10 of the voting power, or you should be holding what? Share. On which how much is paid? Not less than 5 lakh rupees is paid up. You can request for calling the poll, voting by poll. Demand for poll, it can be done after or before or on declaration of results by show of hands. In that situation, they can also withdraw it at any time. Correct, right? Time limit for adjournment of meeting or appointment of chairman. The demand for poll should be taken immediately by the chairman. For any other reasons, within how many hours? 48 hours. Based on these small points, there can be MCQs in the examinations. In case of scrutinizers, chairman shall appoint a scrutinizers. Chairman shall get the poll process scrutinized. Scrutinizer shall submit the same within how many days of poll? 7 days of poll. The result shall be placed in the website of the company. This is what is done. Demand per poll or voting by poll. Remember that the box, voting box should be sealed and closed in the presence of two witness. Then he will open in the presence of two witness. He will count the vote, then give the report to the chairman. Then chairman declares the result. Understood? Next one, postal ballot. What ballot? Postal ballot. Remember, we discussed voting by postal ballot is mandatory in few cases. For example, alteration of object in the prospectus of the company shall pass resolution only by what ballot? Postal ballot. See, this postal ballot is not applicable for which companies? 1% company. This provision is most important. Based on this, there can be practical question in the examination. Voting by postal ballot is not mandatory for which company? 1% company. And other companies having members up to how many members? 200 members are not required to transact any business through the what? Postal ballot. What ballot? Postal ballot. A resolution passed by postal ballot shall not be rescinded otherwise than by a resolution passed subsequently through what ballot? Postal ballot. Once a resolution is passed by postal ballot, if you want to cancel that, again, mark this important. A resolution passed by postal ballot can be cancelled only by a resolution passed in what ballot? Postal ballot, not by normal meeting resolution. Company may adopt voluntary for any other business except for what business? Ordinary business. Keep this in mind. Again, this is also important. A company can adopt voting by postal ballot voluntary for any business. Other than what business? Ordinary business. Ordinary business must be done at what? Meetings itself. Clear? And business in respect of which directors and auditors have a right to be heard, like the removal and all those matters. I repeat, company can voluntarily adopt the voting by postal ballot for any business other than ordinary business, and in a business in which directors or auditor have a right to be heard. Clear with this? Resolution passed by postal ballot cannot be rescinded other than by way of what? One more resolution passed by postal ballot. Clear? Procedure, you guys can go through it. Items of business to be transacted only through the postal ballot. Based on this, there can be question in the examination. See, the important topic in this is that to whom it is applicable. To whom it is applicable? Listed company, and every company having how many members? 200 members. Postal ballot, it is for 200 members. E-voting is for how many members? 1000 members. It is not applicable for 1% company. Other company having members up to how many? 200 are not required to transact any business through what ballot? Postal ballot. Other than this, it is compulsory for every company. Wherever it is mentioned. What are those business which can be done only through the postal ballot? First one is what? Alteration of object clause, conversion of company, change of place of registered office from one city, town or village to another city, town or village, changes in object for which company has raised the money from public through issue of what? Prospectus, issue of SDRS, change of rights of shareholder, buyback, election of directors, sale of business, and giving loans or guarantees. Correct, right? But these things you should pass resolution only by what ballot? Postal ballot. But however, wherever postal ballot is mentioned, if it is not if you have an e-voting facility, you can do the same through what facility? E-voting facility. See, what is postal ballot? In case of postal ballot, what you will do? First, you send letters to all the members, pre-stamp, by giving how many days of time to them? 30 days. 30 days of time to respond by voting in favor or against the resolution. So instead of going for post, you can go for what? E-voting also. But you should also give how many days of time? 30 days of time for only these items. E-voting will be open only for how many days? 3 days. But this one should be open for how many days? 30 days. Even if you give what facility? E-voting facility. Because it is an alternative. Instead of sending the physical letters, you are giving the facility of what voting? E-voting. So you should keep it open for how many days? 30 days for these transactions. You guys tell me, voting by postal ballot is not mandatory for which company? 1% company, and having how many members? 200 members. Clear with this? Next, section number 111 and 115 are most important. See, section number 111 and 115 both give the shareholders a right to request something in the company because it company belongs to them. 111 requires a resolution. Generally, who sets the agenda of the meeting? Board of directors. If a member wants to propose any agenda to the upcoming meeting, or if you want to propose any resolution, he can do that. Section number what? 111. But for that purpose, he should be holding at least how much? 10% or more of the paid up share capital, carrying what rights? Voting rights. If a member want to require a resolution in the upcoming meeting or any statement to be given to the members, for that purpose, he can request the members. He can request whom? Members. He can request whom? Sorry, members can request the company. Members can request the whom? Company, but they should be holding at least how much? 10%. 10% or more of what right? Paid up share capital carrying the voting rights. Section number 115 also gives the right to propose a resolution. But under that section number, you are just required to hold only how much? 1% of the total voting power. Or shares on which not less than how much is paid up? 5 lakh rupees is paid up. So that is giving more right to the members, right? This one says member should be holding at least how much? 1/10 of the paid up share capital, carrying what rights? Voting rights. Whereas under that section number should be holding only how much? 1%. Because those are sensitive issues. Under section number 115, there are only 4 resolutions which you can propose by giving a special notice. But under section number 111, other than those 4 resolutions, if you want to propose, you should be holding at least how much? 1/10 of the paid up capital, carrying what right? Voting rights. And this request for resolution in the upcoming meeting should be presented at least how many weeks before the meeting? 6 weeks before the meeting. Not less than 2 weeks before the meeting, and not more than how much? 6 weeks before the meeting. Correct, right? That is in case of section number 115. See, listen. There it is 3 months. Time limit. Not less than 6 weeks before the meeting in case the requisition requiring what? Notice of resolution. If you want to give a notice to all the members for that resolution also, then you should give requisition before how many weeks? 6 weeks of the meeting. If it does not require a notice, in that situation, not less than 2 weeks before the what? Meeting. If you want a notice to be given to all the members about that resolution, then you must give that requisition 6 weeks before the meeting. If you don't want the notice to be given to all the members, then 2 weeks before the meeting. Once the company receives the request, the notice shall be given to all the members. Exceptions from circulation of any statement made to secure what publicity? Needless publicity. If a member makes any statement and he asks the company to circulate it, and if company finds that they're just trying to get a what? Publicity stunt. In that situation, company may refuse to send the statement to all the members. Clear? Who can propose resolution or request the company to circulate the statement? Member of a company. What of a company? Member of a company. Correct, right? But it should be holding at least how much? 1/10 of the paid up capital, carrying what right? Voting right. What right? Voting rights. Clear? 112, 113. I hope you guys know already. What is 112? A representative of the president or the governor is considered as personally present. Personally what? Present. In case of body corporate. What corporate? Body corporate. See again, one more thing. Based on this, what they will ask now? Listen. They'll ask, can representative of body corporate appoint proxy to attend the meeting? The answer is yes. Because the author representative of the body corporate is considered as what? Body corporate itself. And they would be having all the rights of whom? Body corporate. Means a normal person, normal member. See, a proxy cannot appoint one more proxy. If I appoint you as a proxy, she cannot appoint one more person as a proxy. But a representative of the body corporate has all the rights of whom? Body corporate. Means it can also appoint a whom? Proxy. They can ask this question in the examinations. Understood? Body corporate can authorize any person or his representative and exercise the same rights and powers, including the right to vote by proxy and by postal ballot. Section number 113. 114 resolutions OR as well as the SR. What is OR resolutions? Ordinary resolution, where the number of vote cast in favor of the resolution exceeds the number of vote cast against the resolution. It is called as what resolution? Ordinary resolution. We discussed now what is resolution. First of all, a motion which has obtained necessary majority of the vote in favor. It is called as what? Resolution. Resolution can be of how many types? Two types, ordinary and special. What is ordinary? If the number of vote cast in favor of the resolution exceeds the number of vote cast against the resolution, it is called as what resolution? Ordinary resolution. Then we have special resolution. What resolution? Remember, you should remember these. I have repeated these in the many times in the class. Don't say special resolution means 75% of the vote. That is gone, done. Now you're a professional. You should say where the intention to pass resolution as special resolution is mentioned in the notice of the meeting. If it is not mentioned, not a special resolution. Second thing, the notice was duly given to all the members, and where the vote cast in favor of the resolution are three times the number of vote cast against the resolution, including what vote? Casting vote. It is considered as what resolution? Special resolution. 115. Can a member require a special notice for the purpose of proposing resolution? Yes, a member can give a special notice requiring a what? Resolution to be passed for how many purposes? Four purposes. What is the first one? Appointment of an auditor. Other than what auditor? Retiring auditor. We know that auditors retires every 5 years once. If you don't want him to be reappointed, what you can do? You can propose a resolution. Second one, or retiring auditor shall not be reappointed. We're not saying you want to appoint someone else. You are saying I don't want the same to be reappointed. For these two purposes, you can propose a resolution. Or third one, removal of director before the expiry of his what? Period. Or appoint another person as a director in the place of his director, remove directors. For these four purposes, any person or any member or members, either individually or together, holding not less than how much? 1% of the voting power, or not less than how much is paid up? 5 lakh rupees is paid up. Either you are holding shares in which not less than 5 lakh rupees is paid up, or you are holding 1% of the voting power of the company, then you can apply for these resolutions. What are the four resolutions? Retiring auditor shall not be reappointed, or to appoint some other person other than the what? Retiring auditor, removal of director, and the last one is another person as a director in the place of whom? Removed director. Time period should give at least how many days before? 14 days before date of meeting. Correct, right? Once the company receives this notice, company shall give this notice to all the members at least how many days? 7 days before the meeting. Where it is not practicable to call the hello, where it is not practicable to give a notice, should be published in the what paper? Newspaper. Understood? Section number 115. Section number what? 115. Then comes section number 116. Section number 116 deals with the resolution passed in the urgent meeting. What meeting? Urgent meeting. A resolution passed in the urgent meeting is deemed to have been passed. Deemed to have been what? Passed. In which meeting itself? Urgent meeting itself, not in the original date. Correct, right? Not earlier. 117 deals with resolutions and agreement to be filed with whom? ROC. Remember, we discussed this concept of constructive notice there, and also section number 7 provides that, 17 provides that a company shall provide a copy of MOA, AOA, resolution, and agreement which are required to be filed with whom? ROC under section number 117 within how many days? 7 days. Section number 117 mandates a company to file certain resolutions with whom? With the ROC within how many days? 30 days in the form number 1 MGT 14. But however, we discussed this IFSC public company, private companies exception what? How many days? 60 days. How many days? 60 days. Resolutions and agreement to be filed with whom? Registrar, as per section number 117. Following are the resolutions or the agreement which are required to be filed with ROC. What is the first one? Special resolution. Wherever you find special resolution, आँख बंद करके लिख लेना. It is mandated to file what? MGT 14. Resolution requiring SR but passed with what approval? Unanimous approval to be filed. Appointment of MD, resolution of class of member, resolution for winding up, and there are a few resolution section number 179 which are passed by the board of directors that to be filed with the ROC. So these resolutions are to be filed with the ROC in form number MGT 14 within how many days? 30 days. How many days? Reza, no. Non-applicability resolution passed by the board, private company as well as what company? IFSC public company. There are exemptions. I will discuss this in separately in the exemption categories. Next one, 118 minutes of the meeting. What of the meeting? It's an official recording of the proceedings of the meetings are called as what? Minutes of the meeting. Every company shall prepare and sign and keep minutes of every meeting. Not only board meeting, even the general meeting and class of shareholders meeting. Within how many days of the meeting? 30 days. In case of IFSC company, it is how many days? 60 days. Contents should contain a fair and correct summary. Appointments made, directors present and dissenting from it. Distinct minutes to be maintained for each meeting. It is not like you'll enter everything in one book. There has to be a separate minute for each meeting. Board meeting minutes are different, general meeting minutes are different. Next one, signing up minutes book should be signed. If it is a board meeting minutes, should be signed by the chairman of the same meeting or the chairman of the which meeting? Next meeting. Correct, right? If it is a general meeting minutes, should be signed by whom? Chairman of the same meeting. If he is not available in the event of death or if it is inability because he is going abroad, in that situation, a director authorized by whom? Board can appoint, change the minutes of the meeting. In case of postal ballot, same. Chairman of the same meeting, or if he is not available, any director authorized by the board on this behalf. And this minutes should be kept permanently at what office? Registered office of the company in the custody of whom? CA. Place of keeping the minutes of board or committee meeting, same again. What place? Registered office of the company or any other place which who decides? Board of director decide. What meeting? Especially the minutes of the what? Board or committee meeting. Inspection of minutes of the meeting. So keep this in mind. The minutes of the meeting, only the general meeting minutes are available for what? Inspections. Board meeting minutes are not available for inspection. And this inspection can be done only by the members, not by the outsiders. Clear? Only the minutes of general meeting is allowed during the business hours, not less than 2 hours in each business day. Fees not exceeding the what? 10 rupees per page. Members minutes of the proceeding how many years? 3 financial year. At what cost? Free of cost. Section number 120, maintenance and inspection of documents in what form? Electronic form. So what are the documents we discussed till now? See, all these documents can be maintained in what form? Electronic form. And even the inspection can happen in what form? Electronic form. Report on AGM. Report on the what? AGM. Every listed company, what company? Every listed company shall give a report on its AGM signed and dated by the chairman of the meeting or by 2 directors of the company and also with what secretary? Company secretary within 30 days from the date of conclusion of AGM. But this is not a compulsory for unlisted company, only listed company. Applicability of this chapter to 1% company. 1% company, section number 96 to 122 is not applicable because there is only how many member? 1 member. However, wherever resolution is required to be passed by the 1% company, a resolution is deemed to have been passed if the same has been communicated to the company and entered in the what? Minutes of the meeting. Just to maintain a record. Clear with this? And with these, we are done with the management and administration. Section number 88 to section number 122. 88 registrar members. 89 declaration of beneficial interest. 90 closure of no, so 90 is significant beneficial owner, 91 closure of registrar members, 92 annual return, 93 is omitted, 94 place of keeping the registrar and minutes, 95 inspection, and 96 AGM, 97 AGM called by tribunal, 98 AGM called by tribunal, 99 penalty, 100 EGM, 101 notice, 102 explanatory statement, 103 quorum, 104 chairman, 105 proxy, 106 restrictions on voting rights, 107 voting by show of hand, 108 electronic means, 109 demand for poll, 110 voting by postal ballot, 111 circulation of members resolution, 112 representative of the president or governor, 113 the 113 is corporate bodies or any other companies, 114 resolution, 114 is resolution, 115 resolution requiring special notice, 116 urgent meeting, 117 resolution to be filed with ROC, 118 minutes, 119 inspection, 120 maintenance in the electronic form, 121 report on AGM, and 122 applicability of provision to the 1% companies. With this, we are done with the meetings chapter. What chapter? Meetings chapter. Done. What is dividend? Section number 123 to 127. In this chapter, we will discuss what is dividend, types of dividend, who can declare what type of dividend, and what are the sources out of which we can declare the dividend, what is the time limit for payment of dividend, and what happens if the dividend is not paid, and the punishment for failure to pay the dividend within the prescribed time limit, and also transfer of funds to the IPF account. Okay, so what is dividend? The law says dividend includes what dividend? Interim dividend. In general, dividend is nothing but an appropriation of profits to the members according to their shareholding is called as the dividend. Keep this in mind, dividend is always paid on the face value. What value? Or nominal value of shares. But however, if articles of the company provides, the company can pay dividend on the paid up value of the company, paid up value of the shares. Dividend is always recommended by the board of directors in the board report and declared by the shareholders in the annual general meeting if it is a final dividend. Interim dividend, it is approved by the board of directors themselves. Correct, right? Any dividend which is declared during the financial year is called as what? Interim dividend or dividend, interim dividend. Clear? Next one. In the general meeting, the shareholders cannot exceed the rate of dividend. Who recommends the rate of dividend? Board of directors recommend the rate of dividend approved by the shareholders, but shareholders can reduce it but cannot increase it. And this is a discretion of the board of directors. Members cannot compel the board of directors to declare the dividend. It's a discretion of whom? Board of directors. Correct, right? Only if it is proposed by the board of directors, members can approve it. They can reduce it, but they cannot increase it. Correct, right? Dividend is not a liability. It becomes a liability of the company only once it is declared. Unless until it is declared, it is not a liability of the company and company is not liable. But once declared, it's a liability. If not paid, company should pay interest on that. Done. Next one. What is the next provision? Dividend is always paid as a proportion to the what value? Face value. But if articles provides, the company can pay even to the paid up value of the shares. Types of dividend, there are interim dividend and what dividend? Final dividend. I hope you guys know what is the difference between interim dividend and final dividend. What is interim dividend? It is declared and approved by whom? Board of directors. What is final dividend? It is declared by the shareholders, proposed by the board of directors, but declared by the shareholders in what? Annual general meeting. Before preparation of financial statement and after preparation of financial statement, which one can be declared before preparation of financial statement? Interim dividend. Which one is declared after preparation of financial statement? Final dividend. That is why without adoption of financial statement, a company cannot declare the dividend. Which dividend? Final dividend. But interim dividend can be declared what? Even during the financial year. Correct? Can it be revoked? Yes, with the consent of whom? All shareholders. It cannot be revoked. Which cannot be revoked? Final dividend cannot be revoked, but interim dividend can be revoked with the consent of all the shareholders. Are we clear with this? Now, provisions applicable for declaration of interim dividend. What dividend? Interim dividend. You guys tell me, who declares interim dividend? Board of Directors. Or directors? Board of Directors. Sources of declaration of interim dividend. Keep this in mind for the purpose of calculation. Interim dividend can be declared out of current year profit or surplus in the P&L account. That is, profits of the previous year. What year? Previous year. Interim dividend cannot be declared out of reserves. You can take money either out of current year's profit or out of the previous year profit, which is there in the surplus. Yes or no? You cannot take out of what? Reserves. Reserves can be used only by whom? Shareholder, for the purpose of declaration of final dividend. Got it? Frequency, there can be any number of interim dividend in a financial year. However, if there is a loss in the preceding quarter, what quarter? Now, if I want to declare dividend in the second quarter, but in the first quarter, there is a loss. In that situation, the rate of dividend shall not exceed what? Average rate of dividend declared in the preceding 3 financial year. Clear? And once you take the money, the provision shall be made for what? Depreciation for the full year, tax on the profit of the company, other anticipated losses, and loss if any. Only after making provisions for all these things, a company can declare the what dividend? Interim dividend. What dividend? You should make provisions for the whole depreciation and also losses if any. Only after making the provisions for that, we can declare the dividend. I anticipate a question based on this concept called as why depreciation is to be provided. Why? Because depreciation provides the true value of assets of the company. If a proper depreciation is not provided, the assets may be overstated. If the assets are overstated, the company may look robust and strong on the books of the company, but when company goes into liquidation, it may not be having sufficient funds to pay to whom? To the creditors of the company. That is why company should provide for depreciation before declaration of dividend. Is it mandatory? Not mandatory? Mandatory. Both interim as well as the final dividend. Declaration and payment of what dividend? Final dividend. First one, sources. Out of what you can declare the final dividend? Out of the current year profit or out of the profits of any what year? Previous year, after providing what? Depreciation, or both of the above, or any money received from whom? Central government. You should use all these provisions. If they ask question of section number 120, they should say a company can declare dividend out of the profits and in the current year after providing depreciation, or out of the profits of any previous year or previous years after providing depreciation, or both of the above, or any provision of money by central government. What government? Central government. But however, before declaration of dividend, any carry forward losses and the depreciation should be set off. Transfer of money to reserve, is it mandatory or optional now? Optional now. It is not mandatory to transfer the money to the reserves. Additional conditions for declaration of dividend out of reserves. Based on this, they ask questions in the examinations. Correct, right? If a company has inadequate profit or there is no sufficient profit, the company can declare dividend out of its reserves subject to 3 conditions. What is the first condition? The rate of dividend shall not exceed 10% of the average rate of dividend declared in the what year? Preceding 3 financial year. Second one, the amount to be withdrawn, not 10%, shall not exceed the average rate of dividend of the preceding how many years? 3 financial year. And the second condition is that the rate of dividend shall not, the amount to be drawn from the reserve shall not exceed how much? 10% of the paid up capital, free reserves. Correct, right? Paid up capital and what? Free reserves. And for this purpose, we add even the surplus, the pre-reserves. And the last one, the balance of amount in the reserves shall not fall below how much? 15% of the paid up share capital of the company. And most important, when you withdraw the money out of the reserves, out of what? Reserves. Second condition is that what is the amount you can take out? 10% of the paid up capital and free reserves. The amount withdrawn should be first used for the purpose of what? Set off the losses. So you should satisfy all the three conditions for the purpose of declaration of dividend. Clear? And this dividend amount should be deposited in a what account? Separate account. In a what bank? Scheduled bank. Within how many days? 5 days. And payment should be done within how many days? 30 days. To what holder? Register holders, only in cash and not in kind. Prohibition on declaration of dividend, most important, if a company has defaulted in the payment of what? Repayment of deposits, or Section 8 companies cannot declare the dividend. There are how many conditions? 3 conditions to be satisfied to take money out of the free reserves. Done. Unpaid dividend account. If dividend is declared but not paid within how many days? 30 days. Then it should be transferred to which account? Unpaid dividend account. Within how many days? 7 days. Company should also prepare a statement of what? Unpaid dividend account. Within how many days? 90 days. And prepare a statement providing the names, address, amount unpaid in the website of the company and the website approved by the central government. Nothing but in this IPF website. Next one, default in transfer and payment of interest of how much? 12% per annum. If you don't transfer it to the unpaid dividend account, within how many days? 7 days. You're supposed to pay interest of how much? 12%. If the amount is not claimed for how many years? 7 years. Then you should transfer that amount to IPF account. If dividend is not claimed for all of these 7 years, then along with dividend, even the shares must be transferred to which account? IPF account. Are we clear with this? Next, 125, IPF. What is IPF? What amounts are credited to this? IPF fund. We discussed all this inside. IPF fund can be used for what purpose? Promotion of investors' activities, all these things. It consists of grants by central government, donation by central government, state government and companies, amount in unpaid dividend account, general reserve revenue account, investments, amount received through what? Disgorgement or disposal of any securities. If the person has applied for shares in a fictitious name, court can recover that money and can distribute to the members. Then mature deposits, interest, all these things which are not claimed, all these are transferred to which account? IPF account. 126, right of dividend, right to shares to be held in abeyance pending registration of what? Transfer. A person sold the shares, apply for registration of transfer of shares. Pending registration of transfer of shares, the company should keep that amount in abeyance and also write shares as well as the bonus shares. Once registration is done, that will be allocated dividend to the transferee. Unless the transferor has specifically mentioned that the benefit should be given to whom? To the transferee in the application itself. Understood? Punishment for failure to distribute the what? Dividend. If a company fails to make the payment of dividend, then what is the punishment applicable? Up to 2 years, fine of how much? 1,000 per day. Company is liable to pay simple interest of how much? 18% per annum. But however, if following reasons, if the company could not pay dividend, company is exempt from, like, they will not be responsible for it. What are the reasons? If the payment could not be done by operation of law because of the law provisions, government prohibits it or anybody prohibits it. Directions cannot be complied. Next one, in case of dispute or in case of calls in arrears or in case of any other reason, means the amount was adjusted to the calls in arrears. In these cases, what is not compulsory? Who is not punishable? Directors and company is not punishable. Because it is not the fault of company, it's the fault of whom? The shareholders. These are the provisions of what? Dividend chapter. Simple chapter. They'll ask practical questions in the what? Examination. See, if yes, for the purpose of calculation of what? Dividend. Keep this in mind. Can a company take out the money out of reserves? Can a company take the money out of reserves for the purpose of distribution of dividend? Yes. When company can take money out of reserves? When a company is having insufficient profit or no profit, it can take the money out of what? Reserves. Correct, right? Now, at that time, company must satisfy how many conditions? 3 conditions. What are the 3 conditions? First one, the rate of dividend. Everybody, what of dividend? Rate of dividend shall not exceed average rate of dividend declared in the last how many years? 3 financial year. Second condition is that amount withdrawn shall not exceed how much? 10% of the paid up capital and free reserves. Now listen everybody, how to calculate the rate of this dividend. See, if a company has not declared dividend in the any of the 3 financial years, then it is not applicable. For example, let's say last 3 years ಅಲ್ಲಿ 2 years ಮಾತ್ರ ಡಿಕ್ಲೇರ್ ಮಾಡಿದ್ದಾರೆ. 1 year 0%, second year 10%, third year 10%. Now what is the average year? 20/3. 0 plus 20 plus 20 plus 3 divided by 3. If it is only 1 year, 1/3. If there is no dividend in any of these 3 years, no need to calculate that particular conditions. Understood? Now when we calculate the reserves, right? Sorry, when we calculate this amount to be withdrawn from the what? Reserves. Amount to be withdrawn from the what? Reserves. See, first I'll tell you guys what. Listen. You should take paid up capital. What capital? Paid up capital plus free reserves. This also includes even the what? Surplus. Not security premium account. It is what? Surplus. Surplus means what? Previous year's profit. See, reserves are different, surplus is different. Agree with this? Only when we transfer this surplus into reserves, it becomes what? Reserves. So this how much we can take? 10%. And once you take the money out of this should be used for what purpose? To set off the losses. Correct, right? And then one more situation is there. Now the balance of reserves. Balance of what? Reserves. That is paid up capital, sorry, free reserves as well as what? Surplus. The balance of reserves should not be followed below how much? 15% of paid up share capital. Now what I say paid up share capital, it means what? Both equity as well as preferential capital. So once you decide what is the maximum amount, out of that, first you should pay preferential capital, preferential dividend. Then you should decide what is the remaining amount, what is the percentage dividend to be given. Correct, right? And we have solved this question in the class with respect to calculation of the amount of dividend. We have we have solved this one master questions where it has covered all the provisions with respect to distribution of dividend out of the reserves of the company. Out of the company, reserves of the company. Clear with this? With these, we are done with the dividend chapter. Most important is these conditions. What are the sources out of which company can declare dividend? What is the first one? Out of current year's profit or previous year profit after providing depreciation, or both, or by the sum received by the government. Company may also declare dividend out of its reserves in case of no profit or inadequate profit, subject to how many conditions? 3 conditions. Amount withdrawn first should be used for what purpose? To set off losses and to provide for depreciation. Amount of dividend declared should be deposited in what bank? Scheduled bank. Within how many days of declaration? 5 days. Should be paid within how many days? 30 days. If not paid, should be transferred to which account? Unpaid dividend account. Within how many days? 7 days. Prepaid statement within how many days? 90 days. Upload it to the website. If not, pay interest of how much? 12% per annum. Correct, right? Yes or no? Most important is the 3 conditions. 10% of our average rate, not more than the rate of dividend should not exceed average rate of dividend prescribed, declared in the last 3 financial years, and amount to be withdrawn shall not exceed 10% of paid up capital and free reserves, and the balance of reserves shall not fall below how much? 15% of the paid up share capital, and amount drawn should be first used for setting up of losses and the payment of preference dividend. Then you can go for payment of dividend to the other members. And also this section number 127 is important, where company will not be held responsible for non-payment of dividend. Those exceptional cases. And also section number 126, keeping the preference shares, bonus shares in abeyance until unless what is done? Registration is done. This is your declaration and payment of dividend. Done. Make sure you guys do solve question bank questions. That will give more and more conceptual clarity for you guys. We have solved all those questions in the class itself. One who is watching this marathon video, make sure you guys solve these questions with the help of question bank. Done. Okay, next up. Chapter number 9, accounts of the company, section number 128 to 138. Section 128 provides the provision with respect to maintenance of books of accounts. Correct, right? What is books of accounts? First of all, records to be maintained by the company with respect to receipts and payment. Nothing but your cash book, sales and purchases, nothing but your P&L account, or trading account, assets and liabilities, and items of cost. Clear? It is mandatory for every company to maintain the books of accounts as per section number 128. The books of accounts to be maintained on what basis? Accrual basis, not cash basis, and a double entry system of accounting, and they must show the true and fair view along with the supportive documents. Not true and correct view, it is what? True and fair view. Next one, place of maintenance. Most important, based on this, there can be an MCQ question. The books of accounts shall be maintained at what office? Registered office. But however, the board of directors may decide to maintain at any place within India by passing what resolution? Board resolution. In that situation, the board shall intimate the same to the ROC within how many days? 7 days. Done. Next one, maintenance of books in the electronic form. What form? Electronic form. The books should be maintained in what form? May be maintained in the what form? Electronic form. But now maintenance of books is what? Mandatory to maintain in what form? Electronic form. Now, if you are maintaining the books in the electronic form, what form? Electronic form, then it should satisfy few conditions. Correct? Right? First one, the books should remain accessible where? In India. The accounting software must have what? Audit trail and edit log, and the edit log should not be disabled. They cannot be disabled. Correct? Right? Having audit trail and edit log is mandatory now. Now, next one, retain in the what form? Original and accurate form. There should be a proper system for the storage as well as the retrieval of information. Next one, capable of being displayed in the what form? Legible form. So, these are the rules applicable if a company is maintaining the books in what form? Electronic form. What form? Electronic form. But you should keep your books of accounts on what basis? Accrual basis. Under what system of accounting? Double entry system of accounting. And that should show a true and fair view along with the supportive documents. Correct? It should be capable of being displayed in the visible form. Shall be kept in the servers which are physically located where? In India. And the backup, most important, the backup should be kept in India on a what basis? Daily basis. What basis? Daily basis. Correct? Right? Next one, shall be kept in servers which are physically located in India. What in India? Physically located in India. Correct? Right? Yes or no? They shall intimate to the registrar on annual basis in the form number what? AOC4, the name of the service provider, IP address, location, address of the cloud, and the person who is in control of that software. All these details to be intimated to the ROC along with what at the time of filing of AOC4. That is accounts of the company. In the form AOC4, you give details about what? Details about what? The service provider. Name of the service provider is IP address, location, address of the cloud. All these details to be given to whom? To the ROC. Clear with this? Next one. Branch account. What account? A summarized written or sent on a periodical basis to which account? What office? Registered office. What office? The board shall decide the time frame for sending the what? Periodical statement. But in case of foreign branches, they should send it on what basis? Quarterly basis. What basis? Quarterly basis. Correct, right? Next one. Inspection of books of accounts. If the books are maintained in India, who can inspect it? Any director can inspect during what hours? Business hour. If it is outside India, director must report to the company and company shall provide the information within how many days? 15 days. If director cannot inspect the books of what companies? Subsidiary company unless is authorized by the board resolution of the subsidiary company. Next one, financial information shall be sought by director himself and not through whom? Agent or etc. Correct, right? So the power to inspect the books of accounts of the company is available only to the director in his personal capacity, not in the representative capacity. Next one, period of maintenance for how many years? 8 years from the end of what? Financial year. If there is investigation going on, then till the completion of investigation, you need to maintain the what? Books of accounts. Next one, if a person is who are the person liable for the non-compliance of this provision? Means if a company fails to maintain the books of accounts, who would be held responsible? MD, whole-time director in charge of finance, CFO, or any other person authorized by the board for this purpose will be held responsible. Next one, financial statement. I hope you guys know what is financial statement. What is financial statements? Financial statement means and includes balance sheet at the end of the year, then P&L account or income and expenditure account for the financial year, then statement in cash flow statement, statement in the changes of equity if applicable, and any other explanatory note attached to it. Correct, right? Preparation of financial statement shall give a true and fair view. Accounting standards shall be prepared as per which schedule? Schedule 3. Schedule 3 does not apply to which companies? Insurance company, banking company, company engaged in what? Generation or supply of electricity, or organization under a separate act of the parliament. And these financial statements shall be laid at what? At the EGM of the company. Correct, right? Financial statement shall be approved in the what? Annual general meeting. By whom? Members. Consolidation of financial statement. Is consolidation financial statement is compulsory? We'll ask question based on exceptions when consolidation is not mandatory. Correct? Now, if a company is having one or more subsidiary companies and associate companies, then the company shall consolidate its financial statement along with what? Subsidiary company as well as the associate companies. Yes or no? Is it mandatory or optional? Mandatory. However, there are exceptional cases where consolidation is not mandatory. If a company satisfies how many conditions? 3 conditions. What is the first condition? Company is a fully owned subsidiary or partly owned subsidiary, and its members, including preference shareholders, has given no objection for non-preparation of cash this CFL, consolidated financial statement, and the company does not have any what securities listed or having an intention to get the securities listed, or the ultimate or intermediary holding company files a consolidated financial statements. Then what is not compulsory? Consolidation is not mandatory. Deviation from accounting standards. If there is any deviation in the preparation of a deviation from accounting standards in the preparation of financial statement, is it required to be disclosed? Yes. Next one, person responsible for the maintenance of financial statement. Who are the persons responsible? Managing director, all-time directors, CFO, and any other person authorized by the board. If there is nobody is available, then who will be considered as responsible? All directors will be held responsible. 129A, power of central government. Central government may require certain class of public companies from preparation of what? Financial statement for a particular period. As I said, now listed companies prepare the financial statement on quarterly basis, but there are many unlisted big companies. So to make a periodical review of their financial statements, the central government has the power under section number what? 129A to make a rules with respect to mandating the unlisted public companies to prepare the financial statement on what basis? Periodical basis, nothing but quarterly or half yearly basis. Clear with this? Who can do that? Government may require companies to prepare financial statement for any period in the form of what? Prescribed. Also, to obtain the approval of the board, complete the audit and file the same within how many days? Of the relevant period. Next one, section number 130, reopening of the books on whose order? Court or tribunal order. See, 130, 131. 130 deals with what? Where there is a fraud in the company or there is a mismanagement in the company. In that situation, any of the authorities like ROC or the central government or the income tax department, they can apply to the NCLT, and the NCLT may offer for what? Reopening and recasting of books of accounts of the company. Section number what? 130. But however, if a company has made any mistakes in the financial statements or the board report, then company can also approach the NCLT for a voluntary revision of financial statements. Correct, right? So financial statement and the board report can be revised only to the extent of non-compliance with section number what? 129 and 134. Correct, right? Only for that purpose there can be revision of financial statements. Correct? Yes or no? So central government, IT, SEBI, regulatory body or person concerned can apply to whom? Tribunal for reopening the books of accounts if the accounts are prepared in a fraudulent manner. What manner? Fraudulent manner. The affairs mismanaged, casting a doubt on the what? Reliability. Casting a doubt on the what? Reliability. In that situation, they can apply to the NCLT. The NCLT may order for what? Reopening of the books of accounts. But this is only for how many financial year? 8 financial year, immediately preceding the financial year. Why? Because maintenance of books of accounts and financial statement is mandatory only for how many years? 8 years. Voluntary revision, if appears to the directors of the company that financial statement does not comply with section number 129 or board report in not in accordance with section number what 134, they can apply for revision of financial statement or board report for the last how many years? Preceding 3 financial years. Correct, right? Procedure shall not be prepared or filed for more than how many times in a financial year? Once in a financial year. Application to be advertised at least how many days before? 14 days before the date of hearing. How many days? 14 days. The tribunal shall issue the notice to the auditor. The tribunal may pass appropriate order on receipt of approval. General meeting to be called for the purpose of what? Adoption of revised financial statement or the board report, and that revised financial statement or the board report should be filed with whom? ROC. Within how many days? 30 days of approval in the general meeting. So first you should take the approval of NCLT. Once you obtain the approval of NCLT, then pass a resolution, approve it, then file it with whom? ROC. This is voluntary revision of financial statements. Okay, we have discussed many case laws for this in the class. Correct, right? Next one, 132. What is 132? Formation of what? NFRA, National Financial Reporting Authority, functions to oversee the quality of auditing by the professionals. We have the NFRA, National Financial Reporting Authorities. This oversees the auditing of listed company, unlisted public company having how much? Paid up capital of 500 crore rupees, turnover of 1000 crore rupees, outstanding debt of how much? 500 crore rupees. Our insurance company, banking company, electricity company, or body corporates, or companies referred by which company? Central government or foreign subsidiaries of which companies? Indian companies. Correct, right? Yes or no? You guys can go to the functions and duties of whom? NFRA, National Financial Reporting Authority. Next one, central government to prescribe what standards? Accounting standards. Central government will prescribe the accounting standards based on the recommendation of whom? NFRA. NFRA makes the recommendations based on the consultation with whom? With the ICI. Next one, financial statement and board report. Based on signing of financial statement, they ask questions many a times in the examinations. The financial statement of a company should be signed before submitting to whom? Auditor for audit reports. It's simple, say simple. First, company prepares the financial statements. Once financial statements are ready, it should be approved by the board of directors. Signed by whom? Board. Then it goes to whom? For what purpose? Auditing purpose. Once it is received from the auditor, company shall prepare the board report. And once the board report is ready, they will submit this to whom? To the members in the meeting for approval. Once it is approved, the same should be filed with ROC within how many days? From the date of AGM. There's a date of what? AGM. Who should approve this? The financial statement shall be approved by whom? Board. Correct, right? By passing what resolution? Board resolution. It should be signed by the chairperson of the company if there is authorized by the board. If there is no chairperson, should be signed by how many directors? 2 directors. One shall be what? MD. Minimum 2 directors. Out of the 2 directors, one shall be what? MD. And should also be by the whom? CEO and CFO and company secretary of the company. So these are the persons who are required to sign the what? Financial statements or board report. Done. So approved by whom? Who should approve this? Board of Director. By passing what resolution? Board resolution. Before they submit this financial statement to whom? To the auditor for his audit report. But should be signed by whom? Chairperson of the company. But they should be authorized by what? Board or by 2 directors. Out of that, one should be what? MD if there is MD. If there is a MD, 2 directors. Plus CEO if there is a CEO. Plus CFO if there is a CFO. Plus by company secretary of the company if a company is having a company secretary. Next one, OPC shall be approved only by whom? 1 directors. What directors? 1 directors. Attachments to the financial statements. Every financial statement shall have an attachment of what? Audit report as well as the report made by the board of directors, because these financial statements to be submitted to whom? To the ROC as well as circulated to the members of the companies. Next one, circulation. The signed copy of every financial statement, notes to accounts, and the auditor's report and the board's report shall be sent to whom? All the members of the company. Only audited financial statement can be sent to whom? Sent to the members. Next one, board report. What report? Who reports the board report? Board of directors. Based on the what report? Audit report. Because board of directors are supposed to give a report on the qualifications and reservations and comments made by the auditor of the company. It is mandatory. That is why The board report is always prepared based on the what report? Auditor report. What report? Auditor report. What are the contents of board report? Financial summary, change in nature of business, appointment and resignation of director and KMP, opinion of the board on independent directors, names of subsidiaries, joint ventures, associate companies, details of deposit accepted, deposit not in accordance with the chapter number 5, orders passed by regulators or courts or tribunals, adequacy of financial control, maintenance of cost record, or internal complaints committee. We have this internal complaints committee, right, for the prevention of sexual harassment of women at the workplace. So regarding this, the board shall give a report. Board shall give a what? Report. To whom? To the members. To whom? Members. Next one. This is most important. The company's board report shall contain a statement on the following. What is the first one? A statement that company has complied, or the financial statement of the company are prepared as per the applicable accounting standards. The board shall give a declaration that the financial statements are prepared as per the what? Applicable accounting standards, and they should also give a declaration that they have selected and applied the applicable accounting policies consistently and made judgments and estimates that are reasonable and prudent. They should give a declaration that they have selected the accounting policies and applied them consistently, and also they made judgment and estimate that are reasonable and prudent, because we make estimates, right? Material transactions, immaterial transactions, correct? Nah, you don't record immaterial transactions. Next one, taken a proper and sufficient care for the maintenance of adequate accounting records, for safeguarding the assets of the company, and also for what? Detecting fraud or any other irregularities. And also declaration that the company has prepared the annual accounts on what basis? Going concern basis. What basis? Going concern basis. And the last one, in case of listed company, what company? Listed company. A declaration that the company has laid down the internal financial controls. What controls? It also devised a proper system to ensure the compliance with what laws? Applicable laws. All these declarations to be made in the what? In the board report. What report? Especially this director responsibility statement is important. Based on these, the last questions are many times in the examinations. Next one, signing up board report should be signed by whom? Chairperson of the meeting. What of the meeting? Chairperson of the company, authorized by the board or by two directors. How many directors? Two directors, out of which one shall be what? Managing director. What director? Should be signed by minimum two directors, out of which one shall be what? MD. But financial statement should be signed by any chairman authorized by the board, two directors, out of which one shall be what? MD, plus also by whom? CEO, CFO, and CS of the company, if the company has appointed a CS. Clear? Next one, CSR. Now, you guys tell me, for which company CSR is mandatory? A company which has turnover of 1000 crore rupees or more, net worth of 500 crore rupees or more, or net profit of 5 crore rupees or more. If any one condition is satisfied in the preceding financial year, then what is mandatory? Contribution to CSR is mandatory. Company shall contribute. Company what? Shall contribute minimum how much? 2% of the average net profit made in the preceding 3 financial year. Clear? So when CSR is compulsory? When a company is having net worth of how much? 500 crore rupees or more, a turnover of how much? 1000 crore rupees or more, or a net profit of how much? 5 crore rupees or more. If a company satisfy any of these conditions in the preceding financial year, then the company shall have CSR committee. Shall have what committee? CSR committee. At the same time, the company shall contribute to what activities? CSR activity. How much? 2%. How much? 2% of the average net profit of the preceding 3 financial year. Correct, right? Next one, CSR activities means what? Activities undertaken by the company as per section number 135, but other than the activities which are undertaken in the normal course of business. Means if you are a medicine company, if you produce medicine, it is not considered as what? CSR activities. Next one, activities undertaken outside India, except for train in the Indian sport personnel representing the nation or state. Next one, contribution to what party? Political party. Are activities benefiting the what? Employees of the company. So if the activities benefit only employees of the company, it is not called as CSR activities. Activities supported by the companies on a sponsorship basis, marathon sponsoring, and they do marathon sponsoring, right? Those are not considered CSR activities. Activities carried out to fulfill the statutory obligations like employees PF contributions, ESI contributions, these are not considered as the CSR activities. Most important, the administrative overhead, whatever it, administrative overhead shall not exceed how much? 5% of the total CSR expenditure. That is the maximum permissible administrative overhead under the Companies Act. How much? 5% of the total CSR expenditure. If amount is 1 lakh rupees, you can spend only how much? 5,000 rupees as a what overheads? Administrative overhead. Remaining 95,000 rupees should go to what activities? CSR activity. Are we clear with this? And what do you mean by net profit? Is it profit before tax or profit after tax? Profit before tax. Keep this in mind. We did calculations also. It is what? Profit before tax. And most important, the profit does not includes any dividend received from the what? Indian company complying with the CSR activities. What activities? CSR activities. And also any profit arising from any overseas branch. What branch? These two are to be excluded for the purpose of calculation of the net profit. What profit? Net profits. Are we clear with this, everybody? In case of ongoing project, what project? What is ongoing project? It lasts for how many years? 3 years. Other than the year in which it begins, it is considered as what? Ongoing project. Correct, right? So in case of ongoing project, if the money is not spent, what is not spent? Money is not spent, you can carry forward for next how many years? 3 years. Right now? Yes or no? Now CSR committee. What committee? CSR committee. CSR committee is not compulsory, where CSR amount to be spent does not exceed how much? 50 lakh rupees. Most important one. Clear? If the amount to be spent on CSR activities does not exceed 50 lakh rupees, then the same can be undertaken through what? Board itself. Board can only make the provisions for that. We have discussed all these things in detail. Next one, composition of CSR committee. If company is having 3 or more directors, there should be how many directors? Company must have 3 or more directors. Out of that, one shall be what? Independent directors. Private company, only 2 directors. Foreign company having 2 directors. One shall be what? Resident of India. So this CSR committee frames a CSR policy, recommend to the board amount of expenditure, monitors the CSR policy of the company, and formulate and recommend to the board annual action plan. What plan? Annual actions plan. Clear with this? Amount and form of CSR expenditure. Most important. Based on this, there can be practical questions in the examinations. Listen, everybody. Company should spend in every financial year 2% of the average net profit of the company in the 3 immediately preceding financial year. How much? 2% of the average net profit of the company of the 3 immediately preceding financial year. The net profit before tax to be taken. I mentioned it here. See, should always take into consideration what profit? Net profit before tax. It is not after tax. Then companies shall give preference to what areas? Local areas. Administrative overhead shall not exceed how much? 5% of the total expenditure. Next one, surplus arising out of CSR activity should be flowed back to what? CSR activities. It cannot be considered as part of normal income of the company. Correct? Next one. If there is any excess spending on CSR activity, if a company spend any excess amount in any financial year, the amount can be carried forward up to how many years? 3 years. Correct, right? But however, this surplus does not includes any income earned by CSR activities. Correct, right? Any profit earned by CSR activities is not considered as what? Part of excess spending. Correct, right? Any excess spending on CSR activities should be carried forward for how many years? 3 years. Failure to spend minimum prescribed amount. In that situation, who shall specify the reasons for that? Board. In the board report. Other than ongoing project, means if a company could not spend the money which is required to be spent on CSR activities. If it is a other than ongoing project, in that scenario, the amount should be transferred to which account? Transferred to which fund? CSR fund. What fund? As per which schedule? Schedule 7. Within how many days? Within 30 days. How many days? It is 6 months or 30 days. We have to check this one. Check in the normal material. I think there is mistake in this. Ongoing, other than ongoing project. Within how many days it has to be transferred? It will be in the CSR money. If it is ongoing project, it has to be kept in the unspent CSR account. Is it 6 months? Okay, 6 months. Transfer to the funds in a schedule 7 within 6 months from the end of the financial year. Correct, right? But if it's an ongoing project, what project? Then it has to be transferred to a separate account called as the unspent CSR account within how many days? 30 days from the end of financial year. Should be utilized within how many years? 3 years. If it is failure to spend, should be transferred to which fund? CSR fund. Within how many days? 30 days from the end of the third financial year. This is for ongoing project. Normal project within how many months of end of financial year? 6 months. Done. CSR implementation, it can be done by the company itself or through any charitable entity or a entity established by government or statutory entity or any charitable entity with how many years of experience? 3 years of experience. Keep this in mind. How many years? 3 years. Every company having average CSR obligation of how much? 10 crore or more, or should conduct an independent evaluation of impact of CSR expenditures. Which company should undertake this? Company having an average CSR obligation of what? 10 crore rupees or more. Impact assessment of expenditure having an outlay of how much? 1 crore or more. So if the impact assessment should be done for a project or an expenditure of how much? 1 crore or more. That's right. This impact assessment expenditure can be booked towards what expenditure? CSR expenditure up to how much? 2% of CSR of that year or 50 lakh rupees, whichever is higher. Clear? As we discussed, in case of IFSC company, not applicable for how many years? 5 years. This we have discussed separately in the list of exemptions and modifications for IFSC company as well as the Nidhi companies. Understood? Next one. Section number 136 is what? Right of a members to copies of audited financial statement. A company shall send the audited financial statements to whom? Members. At least how many days before the meeting? 21 days. Along with the what? Notice of the meeting. Yes or no? It is sent to whom? Member, trustee, as well as the other persons entitled. When? 21 days before the meeting. Less than 21 days can be given if it is agreed by what? Majority number, and representing how much? 95% of such. Say, remember we discussed shorter notice. Correct? No? 95% is shorter notice. But for right issue, 90%. Don't get confused. For notice of the meeting, it is 95%. And in case of EGM notice, a majority in number and holding at least how much? 95%. This should be placed on the what? Website of the company. Section number 137, filing up copy. There is one more provision with respect to financial statements of the foreign company. We were discussed in the normal classes. Remember, if it is not in the English language, a translated copy should be placed on the what? Website of the company. Based on that, they can ask question in the examination. Next, 137. These financial statement should be filed with whom? ROC. Within how many days of end of how many days of AGM? 30 days. If the AGM is not held, the unapproved financial statement should be filed with whom? ROC. Within how many days? 30 days from the last date on which the AGM should have been held. Based on this, they ask MCQs in the previous mock test paper. The recent mock test paper. Next one. Company having foreign subsidiary attach the accounts of its what? Subsidiary. XPRL is mandate. Means XPRL is mandatory. Filing a financial statement in the extensive business reporting language is compulsory for following types of company. What is the first company? Listed company. Second one, the subsidiary. Second one, company having a paid up capital of 5 crore rupees or more, or company having a turnover of 100 crore rupees or more. All companies required to prepare financial statement under the what? Ind AS, and also for the NBFCs. What is NBFCs? Non-banking financial companies. Clear? Next one, internal audit. Based on this also they asked questions in the previous examination. Internal audit is compulsory for which company? Listed company and public companies. What companies? Public companies having a paid up capital of how much? And turnover of 200 crore rupees or more. During the preceding not at the end of the financial year, during, at any time if they have this much, then what is compulsory? Appointment of internal audit. We have solved this one question for this, right? You asked that question based on this. It is during the financial year. At any time, if they satisfy any of this condition, then what is compulsory? Appointment of internal audit is compulsory. Outstanding loans or borrowings from the bank or financial institutions exceeding how much? 100 crores or more, or outstanding deposits of 25 crore rupees or more during the what year? Preceding financial year. Private company. What company? A private company having a turnover of 200 crore rupees or more during the what year? Preceding financial year, or outstanding loans or borrowings from the banks or financial institutions exceeding how much? 100 crores or more should appoint a internal auditors. Who can be an internal auditor? A CA or cost accountant or such other professionals as decided by the board can be a internal auditor. Internal auditors. Are we clear? Sorry, internal auditors. Are we clear with this, everybody? So section number 128 to 138 deals with the accounts of the company. What is 128? Books of accounts. 129, financial statement. 130, accounting standards. Correct now? 131. What is 131? 131 is voluntary, sorry, revision of restatement of financial statement. 132, 130 is voluntary revision, na? 131 is 132 is the NFRA. 132 is NFRA. 133 is accounting standard. Accounting standards. 134 is board report. 135 is CSR. 136 is circulation. 137 filing with ROC, and 138 is internal audit. Okay. Next, chapter number 10. Chapter number what? 10. See, chapter number 10 is about audit and auditors. Audit and what? Auditor. See, I'll just give an idea of what is audit or how it is done. Every company shall get their financial statement audited by a person who is qualified to be an auditor of the company. The first auditor of the company is appointed by the board of directors within 30 days from the date of incorporation of a company. Subsequent auditors are appointed by the members in the general meeting by passing an ordinary resolution. Now, the name of the auditor is recommended by the board of directors to the members. But this recommendation flow will differ if a company is having audit committee, if a company is not having audit committee. Now, what is audit committee, sir? Audit committee is a committee of board of directors who are entrusted with a specific work of financial matters. Out of board of directors, we are forming a separate committee called as the audit committee to deal with the financial matters. This audit committee is entrusted with the work of identifying the persons who are qualified to be an auditor. And the audit committee, while selecting this auditor, should have a regard to the size and the experience of that auditor or audit firm in connotations are in commensurate with the what? Size of the company. For example, Reliance company cannot appoint an individual as an auditor because Reliance company is very huge, right? Like it's a big company. So the audit committee identify the persons who are eligible to be auditor of the company, having regard to the experience as well as the size or expertise of that audit firm to commensurate with the requirements of the company. Once they identify, they will make recommendation to the board. And these are always recommendatory in nature. What in nature? Recommendatory. Board may agree or may disagree. If board disagrees, it should send that recommendation back to whom? audit committee to reconsider it. Now again, audit committee may reconsider it, or they may insist upon the what? Original recommendation. When the audit committee insists on the original recommendation, then the board may reject the recommendation of the audit committee and they can make their own recommendation after recording the reasons for the same. So the recommendation of audit committee is what in nature? Recommendatory in nature. And audit committee is compulsory for every listed company and every public company having a paid-up capital of 10 crore rupees or more, or a turnover of 100 crore rupees or more, or having an outstanding deposits, debentures or bonds of exceeding how much? 50 crore rupees. Then what is mandatory? Having audit committee. Whenever a company has audit committee, whether it's a voluntary in nature or recommendatory in nature, mandatory in nature. Some companies, what they do, they form the audit committee voluntarily. If there is an audit committee for every appointment of auditor, including for casual filling of casual vacancy, for any appointment of auditors, the recommendations should start from a audit committee. It is not mandatory that board should agree with that, but recommendation is mandatory. Means they will recommend it. Board can approve it or they may reject it. If they reject it, they should record the reasons for that. And auditor is appointed at the what? At the AGM. An auditor is always appointed for a what term? And one term is of how many years? 5 years. So if an auditor is appointed in the first AGM, he will hold the office till the conclusion of the 6th AGM. Now the question is, if a person is appointed by the board as an auditor, it is not considered as one term. If board appoints, for example, the first auditor is appointed by whom? Board of directors in the what? Board meeting, correct, right? He will not be, that will not be considered as what? That will not be considered as one term. The same person can be reappointed by the members in the what? AGM for how many terms? One term of 5 years. One term of what? 5 years. And in case of government company, who appoints auditors? CAG. Within how many days? In case of normal auditor, it is 120 days from the date of commencement of financial year. Remember, in case of auditor of which company? Government company. What company? Government company. The auditor is appointed within how many days? 180 days from the date of what? Commencement of financial year. First auditor is 60 days, correct? Subsequent auditors are appointed by the CAG within how many days of commencement of financial year? 180 days till the conclusion of AGM. There is no term in case of government company auditors. Their rotation happens on yearly basis. Clear? Now, what is the term of auditor? What of auditor? Before you appoint, see how the appointment is done. Once the audit committee identify the person to be eligible for appointment, they make recommendation to whom? Board. Once board approves this, they send proposal letters to the auditor saying that you are being proposed to be auditor of the company. Please give your consent. Auditor should give a consent along with a certificate of eligibility declaring that he has not been disqualified, he is eligible for appointment, his appointment is within the what? Limit. 20 company limit is there, right? And also any proceedings pending against him and he satisfied the criteria section number what? 141. So certificate from the auditor is what? Mandatory before you appoint him as what? Auditor. So once he gives his consent and a certificate, then the board will recommend the name to whom? To the members in the AGM. AGM members will appoint him by passing the ordinary resolutions. Once the appointment is done, company must file ADT 1. What is the form number? ADT 1 within how many days? 15 days of appointment. How many days? 15 days. This ADT1 should be filed with whom? Filed with the ROC. Filed with whom? ROC. Now, as we know, term of appointment of auditors. Auditors are always appointed for how many terms? So, terms. Correct, right? If he is an individual, there is a one term of how many years? 5 years. Partnership firm, 2 terms of 5 years each. Correct, right? But this criteria is applicable. This maximum term of 1 term and 2 terms is applicable only for which companies? Listed companies, all companies, excluding which companies? 1% company and small companies, which are unlisted company. What company? having a paid up capital of 10 crore rupees or more, or a private limited company having a paid up capital of how much? 50 crore rupees or more. Our companies having borrowing from the public financial institutions and banks and public deposits of how much? 50 crore rupees or more. Only these companies cannot appoint an individual for more than how many terms? One term of 5 years, and a partnership firm of two terms of 5 years. After the expiry of one term of 5 years, there should be a cooling period of how many years? 5 years. See, what if we appoint a person for one term of 5 years, but he retires after 3 years? It is still considered as how many terms? One term. Then he is disqualified to be auditor of a company for how many years? 5 years. We always appoint you for one term of 5 years, but if you leave in between, it is still considered as what? One term. And there should be a cooling period of how many years? 5 years. If a person is an auditor of a company, he retires from the partnership firm, he joins the other firm. Even that other firm is disqualified to be what? Auditor of the company for how many years? 5 years. And if a partnership firm, there are two firms which are having a common partner. What partner? Common partner. And if the one of the firms tenure is expired, even the other firm is also disqualified for how many years? 5 years. However, a company may provide that a auditing partner, what partner? Auditing partner, and his team shall be rotated on a in a yearly basis. What basis? This is a stricter compliance. What compliance? Stricter compliances. Are we clear with this, everybody? Next one, procedures for appointment of auditor in case of what company? Government company. What company? In case of normal company, who appoints the first auditor? Within how many days? 30 days. If they fails to appoint, who appoints it? Members. In the what? EGM. Within how many days? 90 days. In case of government company, who appoints it? Within how many days? 60 days. If he fails, board can appoint. Within next how many days? 30 days. If board fails, it can inform the members, or members make the appointment within how many days? 60 days at EGM, and hold the office till the conclusion of what EGM? First EGM. CAG appoints within how many days from the commencement of financial year? 180 days till the conclusion of the AGM. Most important, vacancy, casual vacancy. What is casual vacancy? Any vacancy before the term is completed is called as what vacancy? Casual vacancy, by resignation or by death or by insanity, or if he attract any of the disqualification as per section number 141, then he is deemed to be vacated his office. It is called as what vacancy? Casual vacancy. In case of casual vacancy other than government company, who fills it? Board. Within how many days? 30 days from the conclusion of what? The board may fill the casual vacancy within how many days? 30 days. And that person will hold the office till the conclusion of which AGM? Next AGM. Not for the remaining period. Any person appointed to fill the casual vacancy will hold the office till the conclusion of what? AGM. And for him, it is not considered as a term. He can be reappointed for how many terms? One term. So any appointment made for filling of casual vacancy, it is not called as what? One term. Of how many years? 5 years. Vacancy caused by resignation. This is what most important. If a vacancy is caused by resignation, that needs to be approved by whom? Members. Within how many months of appointment? 3 months. How many months? 3 months. Board appoints it, but that has to be ratified by the members within how many months? 3 months. Keep this in mind. Whenever appointment is made, the same should be informed to whom? ROC. Informed to whom? ROC. Next one, casual vacancy. What vacancy? If any vacancy is arising before the term is completed. What is completed? Term is completed. That is called as casual vacancy. Correct? Right. Next one, reappointment of auditor. Retiring auditor. Remember, we discussed about this resolution requiring special notice that retiring auditor shall not be reappointed. See, if it is a normal company, what company? Can we reappoint the auditor who is retiring? I appoint you for a one term of how many years? 5 years. I'm a normal company. I'm not a listed company or unlisted company coming in that criteria. Can I reappoint you? Is it possible to reappoint the same person as auditor of a company for more than one term? The answer is yes. That disqualification is only for which companies? Listed company. Only those class of companies cannot appoint the same person. individual person's auditor for more than how many terms? One term. If I'm a private company, small company, can I appoint you for more than one term? Yes. Aresa, no, because I will appoint only for one term. I can appoint you for 2 terms or 3 terms. Appointment is always made for how many terms? One term of 5 years. After that one term of 5 years, you will retire, but I can reappoint you. But if I'm a listed company, that should be cooling period of how many years? 5 years. Every appointments are made only for how many terms? One term of 5 years. Fixed. Are you guys clear with this? But however, to fill the casual vacancy, you can appoint for what duration? Shorter duration. In that scenario, it will not be considered as what? One term. Clear? So retiring auditor may be reappointed at a what? AGM if he is not disqualified for reappointment, not given in notice in writing to the company that he is unwilling to be reappointed, or a special resolution has not been passed to be not to be reappointed. In these 3 cases, the same auditor can be reappointed. Correct, right? Where at an AGM, no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company. Yes or no? If reappointment is not done, what is not done? The existing auditor of a company continues to be the auditor of the company. Understood? Clear with this, everybody? Next one, section number 140. Section number 140 deals with what? Removal of auditor, resignation of auditor, removal by giving what notice? Special notice. You guys tell me, removal of auditor requires whose approval? Central government approval. First take approval, then you pass resolution. Correct, right? Yes or no? Company can remove an auditor by passing what resolution? Special resolution after taking the approval of whom? Central government. Procedure, call board meeting, make an application to RD, obtain the approval, then hold the general meeting, pass special resolution, then file it with whom? ROC. Correct, right? And the auditor must be given what? Should be given what? Opportunity of being heard. Resignation by auditor. Can a auditor resign from the company? Yes, by giving the what? Notice. The resignation must be addressed to whom? Board, not to shareholders. They may ask MCQs based on this. Next one, auditor shall file a copy with ROC within 30 days in the form number what? ADT 3. What is the form number? ADT 3. Government company shall file a copy with whom? With a CAG. Third one, special notice for appointing auditor other than what auditor? Retiring auditor. This we already discussed in section number 115. Resolution requiring a special notice that retiring auditor shall not be reappointed or to appoint some other person in his position. Correct, right? Who can request for this? Any person holding at least how much? 1% of the voting rights or the shares on which not less than how much is paid up? 5 lakh rupees is paid up. Correct, right? In this situation, auditor can make a representation in writing. And you can also request that this has to be notified to members of the company. And in that situation, company shall send such representation to all the members along with the what? Notice. If the representation is not sent, shall be read out at the what? Meeting. Correct, right? And these representation shall be filed with whom? With the ROC. Next one. Removal of auditor by tribunal for acting fraudulent manner or abated or included in a fraud. This is what I was referring to. If an auditor is removed under section number 140, he is disqualified to be auditor of any company for how many years? 5 years. But if a auditor is convicted of fraud by a court, then he will be disqualified to be auditor of a company for how many years? 10 years. As per section number 141. Section number what? 141. Are you guys clear with removal, resignation, and what was the one more? Resolution requiring what notice? Special notice. Next one, eligibility, qualification, disqualification. ICAI's favorite topic. Either they will ask MCQ questions or they will ask the descriptive question. Clear? Now, who are qualified to be auditor of a company? He must be a CA and he must have a valid certificate of practice. Should be a firm or a LLP where majority of the partners are what? CA. Disqualification of auditors. I think we have discussed this in detail in the class. Remember, I have classified this disqualification into 4 categories. First one, absolute disqualification. Second one, based on the relationship. Third one, based on conflict of interest. And the last one, services rendered. Now you guys tell me what the absolute disqualification. If it is a body corporate other than LLP, disqualified. Second one, if he is in full-time employment anywhere else, disqualified. Third one, is an officer or employee of the company, disqualified. Correct, right? Or a person or a partner of a firm at the date of appointments holds appointment as the auditor of more than how many companies? 20 companies. How many companies are? Maximum companies are allowed how much? 20. If you're already an auditor of more than 20 company, you are disqualified to be auditor of the companies. Maximum itself is 20 company, right? Arisa, no. And a OPC company for this purpose, the purpose of 20 companies limit. You should not count whom? OPC company, dormant company, small company, private company having paid up capital of less than how much? 100 crore rupees. Foreign companies and a branch of a company shall not be counted for the purpose of what limit? 200, these 20 limits. And the fifth one, the absolute disqualification. Fifth one, a person who is convicted by the court for an offense involving a fraud and 10 years have not elapsed since the date of what? Conviction date. Then also he is disqualified to be auditor. For how many years he is disqualified? 10 years. After expiry of 10 years, he can be auditor of a company. These are absolute disqualification. Next one, disqualification based on relationship. Because the person is having some relationship with the employees of the company or officer of the company, then he is disqualified to be an auditor. That is, a person who is a partner of officer of the company, a person who is an employee of officer of the company, a person who is in employment of officer of the company, a person who is in employment of employee of the company is disqualified to be auditor of the company. Correct, right? Or a person whose relative is a KMP or director, in that case also is disqualified to be an auditor based on relationship. Next one, disqualification based on conflict of interest. What of interest? So if you have conflict of interest, then you are disqualified to be a auditor of a company. What is the first one? A person or his partner holding any security. If you are holding even 1 rupee share, you are disqualified to be what? Auditor. Correct, right? But if a person relative is holding any security or interest in the company of a face value, not market value. What value? Face value. Exceeding 1 lakh. All these are exceeding in the company or his holding company or associate company or subsidiary company, then also is disqualified to be an auditor. Correct, right? Next one, however, at any time, if it goes beyond 1 lakh rupees, and if the corrective action is taken within how many days? 60 days, then the disqualification is not applicable. A person or his relatives or a partner is indebted in excess of how much? 5 lakh rupees. Then he is also disqualified. Or if he has given a guarantee to any indebtedness of the company to the third party, excess of how much? 1 lakh, disqualified. Next one, a person or the firm, whether directly or indirectly, has what relationship? Business relationship with the company. However, if that business relationship means relationship entered in the what purpose? Commercial purpose, except the following. What is the first one? Professional services like incorporation services or FEMA services. Those are not called as what? Business relationship. Correct, right? Or in the ordinary course of business of the company at what length basis? Arm's length price. That is not considered as a what relationship? Commercial purpose or business relationship. Then disqualification based on other services rendered. If an auditor directly or indirectly renders any of the services specified in section number 144, he is disqualified to be what? Auditor of the company. What are those services? Accounting and bookkeeping services, internal audit, design and implementation of financial information system, actuarial services, investment advisory services, investment banking services, rendering of outsourced financial services, management services. Now, what do you mean by directly or indirectly? Based on this, there can be question in the examination. If he is individual, either by himself or through his relatives or any connected person or organization, or through another entity in which such individual has a significant influence or control. What influence? Significant influence or control, or whose name or a trademark or a brand is used by whom? Such individuals. Same network persons. If they are providing any of these services, then he is disqualified to be an auditor. Correct, right? If it is a partnership firm by itself, or through its partners, or through its parent, subsidiary, or associate entity, or through any entity in which they have worked significant influence or control, or whose name or a trade name or a brand which such partnership firm uses. Correct, right? If an auditor satisfy or attract any of this disqualification, then he should vacate his office. Correct, right? He should not continue as auditor of a company. Who fix the remuneration of auditors? Board of directors. Correct, right? First auditor, board of directors. Subsequent auditor, fixed by the shareholders in the general meeting, or they can leave it to the board itself. Powers and duties of the auditor and auditing standards. So auditor shall follow what standards? Auditing standards while discharging his duty as an auditor. He has the right to access to the books of accounts of the company, vouchers, including minutes books. He can also inspect the minutes of board meeting as well as what meeting? General meeting. Then he should look into the what? Loans and advances properly secured or not, book entries prejudicial to the interest of the company, investments sold at discount, if so, what are the reasons for that? Loans and advances shown as what? Deposits instead of investments, personal expenses charged to the what? P&L account, and all these things you should make an inquiry and give a report to whom? To the shareholder. Correct, right? Sir, no, should also give a report on various these matters: disqualification of auditor, qualification, reservations, or adverse remarks, disqualification of director under section number 164, delay in transfer to IPF, dividend declared in compliance section number 123, use of accounting software having what trial? Audit trial facility, report on accounts of any branch office sent to him. All these things he should make an inquiry and give a report to whom? To the members. That is the way we appoint auditor, right? He should give an independent report to whom? To the members of the company. What of the company? Members of the company. Reporting of fraud by auditor. If the amount of fraud is 1 crore and above, you report it to whom? Central government. If it is less than 1 crore, you report it to whom? Board. And the board must explain it in his board report. The reasons for the fraud. Understood? Yes or no? Fraud involving amount of 1 crore or more. If an auditor has a reasons to believe offense is involving a fraud of an amount of 1 crore and above and committed against the company by officer or employee, the auditor shall report to which committee? Audit committee. Audit committee shall reply within how many days? 45 days. If reply is not received within 45 days, then he can forward his report within how many days? 15 days from the expiry of 45 days. If reply is received within 15 days of that reply, if reply is not received, 15 days of expiry of 45 days, he should report it to whom? To the central government in a sealed cover on a letterhead of the auditor. Correct, right? If it is less than 1 crore, he will report it to whom? Audit committee or the board, and the board shall explain the reasons for that in its board report. What report? Audit of government companies. Who does the audit of government companies? CAG. C and AG. Yes or no? CAG can conduct the test audit as well as a supplementary audit. What audit? Supplementary audit. Auditor to not to render what services? Certain services. We discussed it already. You should not render directly as well as indirectly. If an auditor is rendering any of these services, is he qualified or disqualified? Disqualified to be an auditor of the company. If he is rendering any accounting and bookkeeping services, internal audit, design and implementation of any financial information systems, actuarial services, investment advisory services, investment banking services, management services, any other kind of services. Correct, right? But however, listen everybody, section number 144 provides these things, right? If he is providing this service, if he is providing incorporation services or GST services, or let's say you are providing FEMA related compliance service in a professional capacity, are you disqualified to be auditor of a company? No. Only if you provide these services, accounting services, actuarial services, internal audit services, then you disqualify to be auditor of a company. Next one, section number 145, signing of audit report. Who does sign the audit report? Auditor, who has been assigned with the work of auditor. 146, auditor has a right to attend the meeting. The auditor shall appoint the meeting either by himself or through a person who is qualified to be what? Auditor of the company. And he should also have a right to speak, a right to be heard. Punishment for contravention, there is a punishment for not fulfilling the provisions of this act. 148, who can prescribe the cost audit? Central government. What government? Central government. The table thing is not there as per the amendment. Table has been removed, so table is not there, not applicable. Yes, for your May attempt, only this much is applicable for you guys. Okay. Applicability of maintenance of cost record, it is applicable only for the domestic or foreign company engaged in the production of what? Goods or providing services listed in the table A or table B, and overall turnover is how much? Equal to or more than 35 crores in the immediately preceding financial year. Then only what is compulsory? Cost records are compulsory. If cost records are compulsory, then what is applicable? Cost audit is applicable only if it exceeds how much? 50 crore rupees. How much? 50 crore rupees. Or and aggregate turnover of individual product is how much? 25 crore rupees. Overall 50 crore. From that particular product, it is 25 crores. Done. Exemptions from the cost audit, whose revenue from exports in a foreign exchange exceeds how much? 75%. Based on this, there can be MCQs in the examination. If a revenue from the exports exceeds 75% of its total revenue, then or which is operating from the special economic zones, or which is engaged in the generation of electricity for captive consumption through captive generating plant, means for the own consumptions, for these company, cost audit is not compulsory. Clear? Only a cost accountant can do the cost audit. Procedure is same as what? Appointment of auditor. Appointment is done within how many days? 180 days from the commencement of financial year. Tenure till the expiry of 180 days from the closure of what? Financial year, or till he submit the what report? Cost audit report. He will hold the office till the time of what? 180 days from the closure of financial year, or till he submits his what? Cost audit report. Based on this, they ask question in the last exam. Same point they ask question. Removal, who can remove it? Board by passing what resolution? Board resolution. Casual vacancy, board within how many days? 30 days. Cost audit report shall be submitted to the board within how many days of closure of financial year? 180 days. And company shall file it within how many days? 30 days to the CG. Based on this, also they ask questions in the examination. With these, we are done with audit and auditor. Section number 139 is what? Appointment of auditor. 140, removal, resignations and resolution requiring special notice. 141, qualification. 142, remuneration. Correct, right? 143, duties of auditor, powers and duties. 144, not to render services. 145, remuneration. 146, signing. 146, attend the AGM. 147, remuneration. Punishment. 148, the cost audit and cost audit. With this, we are done with audit and auditors chapter. So we have discussed all these things in detail in the class with the help of the question bank questions as well as the examples. Just a revision of whatever we have discussed. Keep this in mind, the disqualification of auditor. How many grounds are there? 4 grounds. Absolute disqualification, disqualification based on relationship, disqualification based on conflict of interest, and disqualification based on providing certain services. Done with this? Yes. See, chapter number 22 deals with companies incorporated outside India. Chapter 22 of Companies Act, not in your syllabus. So companies incorporated outside India are not required to follow Companies Act. Agree with this? A company which is incorporated outside India and operating outside India is not required to follow which act? Companies Act. Obviously, why will a foreign company follow Indian Companies Act? The question of following the Companies Act 2013 for a foreign company will arise only when that foreign company comes to India. Comes to where? India. In practice, in practicality, what are the modes in which a foreign company can come and do business in India? First one, they can establish a branch office. What office? Branch office. Physically, they can establish a branch office. In that branch office, they will hire employees and they'll do business. For example, we have Google. Google is a foreign company and they have a branch in India. Then we have GS, Goldman Sachs, correct, right? And also we have Dell, foreign company, Samsung, foreign companies. They have a place of business in India. They have branches in India. And that branches can be established by themselves or through whom? Agent. One more is they can also, instead of having a physical presence in India, what they can do, they can operate through website. They can develop a separate website for the Indians, or they can have a presence of business in India through what mode? Electronic mode. For example, we have the Instagram, correct, right? Instagram is the product of Meta, if I'm not wrong, correct, right? Facebook and Instagram both are related, right? WhatsApp also. All three are owned by the Meta. They're having place of business in what mode? Electronic mode. Amazon is having place of business in what mode? Electronic mode. And one more way is that. What's the one more way? They can start a subsidiary company in India. If foreign company starts subsidiary company in India, what company? Subsidiary company in India. What company? Subsidiary company in India. In that scenario, what company? Foreign company start subsidiary company in India. That subsidiary company is an Indian company. It requires to follow all sections number of Companies Act. All sections of what? Companies Act. Getting it? So the question of section number 379 to 393A will arise only if you are having a place of business in India in the form of branch or electronic mode. Getting it? So for this purpose, we should know what is a foreign company. What is a foreign company? A company which is incorporated outside India but has a place of business in India, either by itself or through an agent, and physically or through electronic mode, and conduct any business activity in India. That is called as what company? Foreign company. Most important thing is that it should be conducting business activity in India. Having a shared transfer department, a share transfer agency is also considered as what? Place of business in India. Understood? Clear with this? One more provision. If in that foreign company, not less than 50% of paid up share capital, including equity as well as preference, if it is held by citizens of India, or a company or a body corporate which is in India, in that situation, that is also considered as what company? It is deemed to be, or it should be considered as Indian company for the purpose of what? Companies Act of provision and section number 382, 386. 382 what? 386, along with section number, remaining section numbers also applicable to which companies? This foreign company. Normal foreign companies are supposed to follow what? 380 to 386. But in that foreign company, not less than 50% of paid up capital is held by the Indian citizens or Indian body corporates. They shall follow all the provision of chapter number 22 of the Companies Act. In this most important section number is 380, and there is one more section number, and that is prospectus to be filed with ROC. When a foreign company want to issue prospectus in India, along with the prospectus, there are few documents to be delivered to ROC. Based on that, they asked questions in the previous examinations. So once a foreign company comes to India to establish a place of business in India, the moment they establish place of business in India, within 30 days of establishment of place of business, they shall file form number FC1, the information attested by a copy of approval of whom? RBI, to whom they're supposed to file? Registrar of what? New Delhi. Any changes made in these information should also be informed to whom? ROC, in the form number what? FC2. Within how many days? 30 days. What document to be delivered? Charter. What is charter? The law. MOA, AOA, address of registered office, or a list of directors and secretary of the company, name and address of one person who is what? Resident in India to accept the notice, address of principal place of business in India, particulars of opening and closing of place of business in India, declaration about what? Conviction of directors or secretary, such other information as may be prescribed. All these informations are required to be filed with whom? ROC within how many days of establishment of place of business in India? 30 days. Accounts of foreign company. Accounts of what company? Foreign companies. Accounts of what companies? Foreign company. Every foreign company in every calendar year. Oh yeah? Every foreign company in every calendar year prepare what? Balance sheet and P&L account and deliver the same to whom? To the ROC. It should be prepared as nearly as possible in accordance with what? Schedule 3 with respect to its operations in India. To be filed in form number what? 3. Within how many months of end of financial year? 6 months. ROC can extend up to how many months? 3 months. Same to like 1% company. 1% company should file financial statement within how many days of end of financial year? Within how many months? 6 months. Audit should be done by whom? CA in India or FEMA or LLP. If the documents are not in English, a certified translation shall also be annexed. Display of name of a foreign company. I expect question based on this. Every foreign company shall display the name of the foreign company along with the country of incorporation in the English language as well as in the local language wherever they're carrying the business. On every bills, letters, bill heads, letter paper, they shall mention the name of the company, country of incorporation in the English language as well as the local language. If the liability of the members is limited, even the fact that the liability of the members is limited should also be displayed on the prospectus, business letters, bill heads, letters, papers, notices, advertisements, official publications, and conspicuously exhibited at place where it carries on the business. So wherever you mention the name of the company as well as the country of its incorporation, if a liability of the members is limited, you need to mention the fact that the liability of members is also what? Limited. If anybody want to send notices and documents to the company, how can we send it? At the registered address. What address? Registered address. And we also know that there should be one person to be nominated by the company who is resident of India to receive all notices and communications. Right. At the time of establishment of place of office, we mention one person name. Remember here, and address of one person resident in India to accept the what? Notice. And to that person we serve the what? Notices and documents. Resano. So address to any person whose name and address have been delivered to whom? Registrar. And when you deliver this, time of establishment of place of business in the form number what? FC1. Changes FC2. Accounts FC3. Annual return FC4. Every company shall file the annual return in the form number what? FC4 within how many days of end of financial year? 60 days. And the provisions of books of accounts, registration of charges, inspection, inquiry, investigation, all these are applicable even for the mutatis. Interpretation. We have one interpretation saying that having the share transfer agent in India is also considered as what? Place of business in India. What in India? Place of business. This one is what most important. As I said, right? Section number 387. Any prospectus to be issued by a company, whether it is having place of business in India or not, should be dated and should be signed. Content of prospectus, you need to mention the what? Constitution of the company, enactments or provisions under which the company is incorporated, certified translation of enactment and provisions. However, these three are not required to be mentioned if a company has formed. Company has what? Formed and carrying the business for more than how many years? 2 years of incorporation. Means if a company is offering prospectus in India for more than how many months? So it's been 2 years that you are already had a right to commence a business in India or outside India. Then these documents are not required. Because it's already 2 years, right? Then this information is not required. Date of incorporation as well as what? Address of principal office to be mentioned. Any condition in the prospectus to waive any of the conditions of this section is void. What is waiver? Give up. Application form to be issued along with the what? Prospectus. Remember, Abridged prospectus, same provisions. Are there any exception? Yes. If invitation is made to whom? Underwriter. Same thing. Abridged prospectus not applicable to whom? Underwriters. Are issued to whom? Existing members are debenture holders. Or it is issued to securities which are uniform with securities already previously issued and on the stock exchange. So if you have read section number 26 to 42 thoroughly, you can answer these questions also. Provisions with respect to expert statement. Can we include any expert statement? Only if he has given the consent and he has not withdrawn the consent before before filing it with whom? ROC. If he has withdrawn the consent, you cannot include his statements. Registration of prospectus. Are you supposed to register the prospectus with ROC? Yes. A copy of prospectus certified by chairperson of the company and 2 directors should be delivered to registrar. The prospectus shall state on the face of it that company has delivered it. Endorsement or copy of the consent of the experts. Document to be annexed with the whom? Consent of an expert, copy of contracts for appointment of a managing director or a manager, copy of material contracts not entered in the what course of business? Ordinary course of business, entered within the last how many years? 2 years. And also copy of underwriting. This is what the question they asked. What are the documents to be annexed to the prospectus of the company? In the previous examination, they asked this question. When you deliver the prospectus for the purpose of registration of prospectus, the following document needs to be attached. What is the first one? Consent of an expert. Second one, copy of contracts for the appointment of MD or a manager. Copy of material contracts not entered in the ordinary course of business but entered within the last how many years? 2 years. Copy of underwriting agreement. What agreement? Underwriting agreement or a copy of power of attorney if the prospectus was signed by whom? Agent of director. Understood? Next one, 390. Offer of Indian depository receipts should comply with what? SEBI and ICDR regulations. Application of section number 34 36 in case of any misstatement. What is applicable? 34 and 36. What is 34? Criminal liability. 35 civil liability. 36 is what? Punishment for fraudulently inducing a person to invest. 392, punishment for contraventions. You can go through it. Company fails to comply with these provisions of this chapter, not affect the validity of the contract, dealing, or transactions. Contracts are valid, but only you cannot file a suit. Same like partnership firm. Just because company has not complied with this doesn't mean that contract is void. It is valid, but company cannot sue. But others can sue company. Rule 12. Actions for improper use or descriptions as what company? Foreign company. They are liable for investigation section number what? 210. These provisions are not applicable for foreign companies and the companies notified by central government or a company which has issued securities for subscription or listing of securities in the what? IFSC center. What center? For those companies, these provisions are not applicable. Which provision? Provisions of companies incorporated outside India. Keep this in mind. The documents to be filed with ROC, the documents to be attached to the prospectus, then alteration to be made, within what time you are supposed to file the accounts of the company, as well as the annual return in what form number. All these details are important, and this effect of non-compliance of the act, is the contract is valid or not valid. Based on this, there might be a practical questions in the examinations. Are we clear with this? Next, we shall start with limited liability partnership. What partnership? Limited liability partnership. Shall we start with the limited liability partnership? Chapter number 2, Interpretation of Statutes. This chapter is all about rules or a guidance to understand the provisions of the law. To be honest, everyone should study this chapter first before they start studying the other laws. Because this is the law which teaches how to study the other laws or how to understand the laws in a right way or in the right sense. So the name of the act says Interpretation of Statutes. What is interpretation? Understanding. What is interpretation? Understanding. Correct understanding. What understanding? Correct understanding of the what? Statutes. What do you mean by statutes? The laws. And we know that the question of interpretation will arise only when there is ambiguity. Correct, right? Where the words are capable of only one meaning. When the provisions are clear, there is no question of what? Interpretation of statutes. So wherever there is an ambiguity or a confusion, to solve those confusions or ambiguity, we need interpretation of statutes. The work of interpretation of statutes is assigned to the courts. Legislatures makes the laws, judiciary interpret the laws for their proper implementation. Correct, right? So the judiciary, by applying the various rules which were developed over a period of time, decides the meaning of the words used in the statutes. That is what called as interpretation of statutes. Out of this chapter, they can ask question based on need for interpretation or rules of interpretation. There are two types of interpretation or two rules of interpretation. One is primary rules of interpretation, secondary rules of interpretation. Along with that, we also have the aids to the interpretation. What help we can take, through what we can try to understand the meaning of the words used in the statutes. Correct, right? We have internal aids of interpretation as well as the external aids of interpretation. What aids? Internal aids of interpretation as well as the external aids of interpretation. Understood? Yes or no? So let's discuss the concept of interpretation of statutes. First one, what is interpretation of statute? What is the meaning? It's a process by which the court seeks to ascertain the meaning of legislature through the medium of authoritative forms in which it is expressed. Interpretation is used in order to what? Resolve the ambiguity in a statutes, confusions in a statutes. It is the art of finding out the true sense of the words in which the legislature has used to give an effect to the intent of legislature. Clear? And what is the importance of interpretation of statutes? Because the process of making the law and the process of interpretation of law is done by the two different authorities. Because it is done by the two different authorities, there is a requirement of what? Interpretation of statutes. What of statutes? Interpretation of statutes. Clear? So they might ask, what is the need for interpretation of statutes? Based on this, there can be a question in the examinations. What is the first one? Impossibility of absolute precision. Obviously, because laws are made by whom? Legislatures. And who are legislature? Nothing but human beings. English language is not a language of mathematical precision. A means doesn't mean A only. There can be B also. Correct, right? That is why. So, because it is not possible, it is humanly impossible to attain the absolute precision in the words used in the statutes. There is a requirement of what? Interpretation of statutes. Because the words or the rules cannot be free from what? Ambiguity or absurdity. Second one, in case of inability of legislature to foresee all contingencies. Foresee what? Contingencies. If there is inability of the legislature to foresee all the conditions or contingencies, correct, right? For example, nobody thought about COVID-19. Nobody predicted this USA war with Iran. So to meet these kind of contingencies, there is a requirement of what? Interpretation of law to expand the scope of the laws. Correct, right? And also limitation of language. As I said, English language is not a language of mathematical precision. There is always a scope for ambiguity and confusion. Because of that reason, there is a requirement of interpretation. Next one, existence of ambiguity and multiple meanings. A word can be capable of having what meaning? Multiple meaning. For example, section number 101 says notice should be given to whom? Every member. What do you mean by every member? Shareholder. What shareholders? Equity shareholders or preference shareholder? Existing one or past one? There are a lot of like these kind of doubts may arise, right? So you need interpretation for that reasons. Done. Next one, incomplete expression of legislative intent. If the legislature fails to express its intent, then also to give an effect to the intent of legislature. For example, legislature wanted to convey something, but that intent is not conveyed in the language used in the statutes. So in that situation, to give an effect to the intent of legislature, what court does? It does the interpretation, keeping the object of the legislature, object of legislatures, and give the meaning to the words. For example, we have this, let's say, public place. What place? What do you think public place? Roads and all. So there was a provision which stated that no person should go out without wearing a mask. If you're in public place, you should wear the mask. A person was inside his car. He was alone and he was not wearing mask. And he was asked to pay the fine. He said, it is not a public place because I'm in car. Car belongs to me. But court said, no, because car is on what? Public place. Interpretations. And one more thing. There was a law which was made to prohibit solicitation of customers by the prostitutes standing on the roads. There was one area where they used to stand on the roads and to solicit the customers. They were creating too much of inconveniences to the public. Because of that reason, government made a law prohibiting them from soliciting the customers standing on the roads. So what they did, they started standing on the balconies and started soliciting the customers. Police arrested them. They argued that saying that what law says? I should not stand on the what? Road. But in this case, court did the purposive construction, said that is not the purpose of the law. Here, purpose of the law was what? To avoid the inconvenience to the public. That is why even soliciting the customers at the balcony was also held to be not valid, punishable offense. Clear? So these are the reasons because of which what is required? Interpretation is required. What is the first one? Impossibility of absolute precision. Second one, inability of the legislature to foresee all contingencies. Third one, limitation of language. Limitation of what? Language. Fourth one, existence of ambiguity and multiple meanings. If there is ambiguity and there is what meanings? Multiple meanings to the same words. Incomplete expression of what intent? Legislative intent. Then also what is required? Interpretation. Duty of the judiciary to what? Constructively interpret the statutes. So you cannot just blame the draftsman saying that it is not correct. If it is not correct, do proper interpretation. Give an effect to the legislative intent. Next one, need to consider social conditions and the what? Mischief. Because the problem changes with the society. There people start finding the different ways to avoid the provisions of the law. Correct, right? The problems changes with the what? Society. So you should try to interpret the provisions of the law keeping with the sociological society development as well as the mischief in that society. And the last one, the requirement of just and uniform decision. What decision? Because if there is a rules of interpretation, that makes the interpretation what? Uniform, and that makes the justice which is reliable and common. So these are the reasons, 8 reasons because of which What is required? Interpretation is required. What is the first one? Impossibility of absolute precision. Second one, inability of legislature to foresee all contingencies, limitation of language, existence of ambiguity and multiple meanings, incomplete expression of legislative intention, duty of the judiciary to constructively interpret the statutes, need to consider social conditions and mischief, and requirement of just and uniform decision. Then we have classification of interpretation. There are two authors who has done the classification of interpretation. Classification of what? Interpretations. Zolowicz is there, and next one is what? Fitzgerald. Who is Zolowicz? He is the author who has given the lectures on jurisprudence. He has classified the interpretations into legal interpretation, doctrinal interpretation. How many types? Legal interpretations and what? Doctrinal interpretation. What is legal interpretation? This refers to statutory or codified rule that legally binds the judge while interpreting the what? Provisions of them. They must follow these rules while doing the interpretation of them. What is called as what interpretation? Legal interpretation. For example, we have authentic as well as the usual interpretation. So if the rules of interpretations are directly from the legislature, for example, we have a General Clauses Act, and we also have a definition sections in every law. Those are made by whom? Legislature itself. Who itself? They are considered as what? Authentic sources of interpretation. Then we have usual interpretation, which are based on what? Precedents and case laws, judgment of the court. Court has interpreted certain words in this way in that particular case. The same meaning is applied in the what? Similar case. That is called as usual interpretation. What interpretation? Then comes doctrinal interpretation. What interpretation? Doctrinal interpretation, where the interpretation is done to discover the what? True and real meaning of the statutes. See, if interpretation is done as per the statutory or a codified law or a rule, that is called as what? Legal interpretation. It can be classified into how many times as per Zolowicz? There are two types. Authentic interpretation. Second one, usual interpretation. Doctrinal interpretation is what? Grammatical as well as the logical. If you interpret the words based on the what? Grammars, then the ordinary rules of grammar and language, it is called as what? Grammatical. Logical interpretation means what? You go beyond the literal meaning and try to find the intent of that legislature. It is called as what? Logical interpretation. What interpretation? Logical interpretation. Are we clear with this? These are the types of interpretation as per the what? Zolowicz. So Zolowicz classified the interpretations into what? Legal interpretations, doctrinal interpretation. Legal interpretation, what is the first one? Authentic interpretation and usual interpretation. Doctrinal one, grammatical interpretation and logical interpretation. Tell me if the interpretation is done as per the codified law of a legislature, like General Clauses Act. It is called as what? Authentic interpretation. That is legal interpretation. If it is based on precedents or decisions of the court, usual interpretations. If it is made to find the purpose of the law or intent of the law, it is called as what? Doctrinal interpretation. It can be again grammatical interpretations or logical interpretation. Are we clear with this? Next one, Fitzgerald. Next one is what? Fitzgerald. Fitzgerald classified the rules of interpretations into how many types? Two types. What is the first one? Literal interpretation. Second one is what? Functional interpretations. When the interpretation is done as per the verbal expressions of the law, nothing but what? Literal meaning of the words used in the statute, it is considered as what? Literal interpretations. He provides that the court should restrict themselves for what meaning? Literal or grammatical meaning of the word. The court does not look beyond the what? Language used in the statute. That is called as what construction? Literal construction. The primary duty of the court is to ascertain the intention of the legislature and then first guide for this the words used in the what? Law itself. When the words are plain, clear, unambiguous, they must be given the effect too, even if the result is what? Harsh or inconvenient. That is called as what construction? Literal construction. As for Fitzgerald, the court should always confine to what meaning? Literal and grammatical meaning of the words. And it is the primary duty of the court to ascertain the intention of the legislature based on the what? Words used in the law itself. Correct, right? Yes or no? So when you depart from the literal meaning of the words, to find out the real object. That is called as what? Functional interpretations. The court seeks other and more satisfactory evidences of the true intention of legislature. Then it is called as what? Functional interpretation. The emphasis is based on the object, purpose, and spirit of the statute. What are the statute? Spirit of the statute. The court may go beyond the literal meaning, where the strict interpretation would lead to absurdity or injustice. Who can go beyond the literal meaning? Court can go beyond the literal meaning, where the strict interpretation would lead to absurdity or injustice. The court determines the relative importance of the letter as well as the spirit enacted by the law. That is called as what interpretation? Functional interpretation. So there are two authors here. What are the two authors? Zolovics and Fitzgerald. As per Zolovic, there are two types of interpretation. What is the first one? What is the first one? Legal. Second one, doctrinal. Again, legal, how many types? Two types. Authentic, usual. Doctrinal, grammatical, and logical. As for Fitzgerald, what are two? Literal and functional. So based on this, they might ask questions in the examination. Next one, difference between interpretation and what? Construction. Which one is narrow in nature? Interpretation. Which one is broader term? Constructions. Correct, right? When you try to find the plain meaning of the words and the true sense intended by the author, it is called as what? Interpretations. Drawing a conclusion beyond the direct expression of the words, it is called as what? Construction. But in practical scenarios, the both constructions and interpretations are used interchangeably. Focus. Interpretation focuses on the what? Exact language used, whereas construction focuses on the what? Intention behind the text when the meaning of the word is unclear. Purpose. Interpretation is to derive the what? Literal and plain meaning of the statutes, whereas construction is to resolve the ambiguity and determine the what? Broader application of the text. What of the text? Broader application of the text. Nature. Interpretation adheres strictly to the letter of the law. What of the law? Letter of the law. Whereas construction explores the spirit and intent of the law. It explores the what? Spirit and intent of the laws. Next one, basis. When the language is plain, clear, and unambiguous, you go for what? Interpretations. When it is ambiguous, unclear, or not aligned with the true intention of the act, then you go for what? Constructions. Correct, right? Next one, relation. Interpretation is a subset of construction, whereas construction often involves interpretation but extends beyond it to include a what? Broader analysis. So interpretation is part of what? Construction. But construction involves interpretation, but it goes beyond interpretation as well to draw a conclusions. Resano, these are the difference between what? Constructions and interpretations. So our chances of question starts from here. Important definition. What is the first one? Statute. What is statute? It's a written will of what? Legislature, expressed according to the forms necessary to constitute the law of the state. Denotes an act enacted by whom? Legislative authority. The Constitution uses the term law, not the what? Statute. Article 13, Clause 3 of the Constitution of India uses the word law, not the word statutes. In short, statute signifies a written law in contradiction to what law? Unwritten law. Done. Now, this is where the questions are possible. What do you mean by document? Document means what? Any matter expressed or described upon what substance? Any substance by means of letter, figures, marks, or by more than one of these means intended to be used or which may be used for the purpose of recording that matter is called as document. Example, books of accounts, emails, but it does not include what? Currency note. Even electronic documents are also considered as what? Document. Simple. Any matter expressed on any substance with the intent of recording that matter is called as what? Document. Any matter on any substance, any what? Substance, by any means, by means of these letters, figures, and all these things, with the intent to record that matter is called as what? document. Keep this in mind. Any matter on any substance in any form, in any means, to record that matter, to keep it as a record, then it is called as what? Document. This interpretation of statutes chapter, not only for interpretation of laws, also of what? Documents. Also of what? Documents. Elements of documents, it has to be, there should be a matter to record that matter on any substance by what means? Any means. These are the essential elements of what? Documents. We discussed it based on definitions only, that given the essentials of documents. Next one, instrument. What do you mean by instrument? Instrument is a formal document which create or confirms a right or a record of a records a fact. See, all documents are not instrument, but all instruments are what? Documents. A document which creates or confirms a right or records a fact, it is called as what? Instrument. It means a legal document having the legal effect either as creating liability or as affording the evidence of it. What of it? Evidence of it is called as what? Instrument. Section number 2, subsection 14 of the Indian Stamp Act states that instruments includes every document by which any right or liability is or purports to be created, transferred, extended, extinguished, or recorded. It's called as what? Instrument. Are we clear with this? Next one, deed. An instrument in writing purporting to effect some legal disposition. Simply stated, deeds are instrument, though all instrument may not be deeds. However, in India, no distinction is made between the what? Instruments and deeds. All deeds are instrument, but all instruments are not deed. If an instrument is conveying the right, it is called as what? Deed. Are we clear with this? These are definitions. Next, rules of interpretation. Rules of what? Till now, what we discussed? What is interpretation? What is the need for interpretation? You should remember at least 5 to 6 points. Then, the classification of interpretation as per Jolowicz and Fitzgerald. Then we discussed the definition of interpretation, then definition of document, essentials of documents, then definition of instrument, definition of deed. Now we should discuss rules of interpretation. Rules of what? Interpretation. See, simple. I'll just give a brief of each rules of interpretation, then we'll go detailed. What is the first one? Literal construction. Simple. Every word in the statute should be assigned their natural and popular grammatical meaning. Unless such interpretation leads to absurdity or ambiguity. The words used in a statute should be given their natural and ordinary and popular and grammatical meaning unless such interpretation leads to absurdity or ambiguity. That is called as what mean construction? Literal construction. Go with literal meaning of the word. And we know that technical words should be understood in what sense? Technical sense. Clear with this? Next one, reasonable construction. What is reasonable construction? Where there are two constructions possible. One makes the provisions meaningless, other makes the provisions meaningful. Which one you prefer? The one which makes meaningful. That is called as what? Reasonable construction. It is better to make a provisions workable than make it futile or useless. Next one, harmonious construction. Where there is a conflict between the provisions of the statute, you should do the interpretation in such a way that effect is given to both. And for that purpose, the statute should be read as a whole. It should not read in isolation. And to give an effect to the provision, one provision, you can curtail the scope of the other provisions. Where even after all this circus, if it is not possible to reconcile the both, then the later provisions will prevail. It is called as what? Harmonious construction. Next we have purposive construction or Hayden's rule, where we take into consideration object of the law. Once we identify the object of the law, we do the interpretation of law. That is called as what? Hayden's rule. We have 4 questions to be answered to find out the purpose of the law. Once we find the purpose of the law, as per that purpose, we interpret the words and give the meaning of the words used in the statute. Next one, beneficial construction, a social legislation. What legislation? Social legislation should always be done or should always be understood in a liberal sense. If there are two interpretations possible, which gives more benefits, another one gives what benefit? Less benefit. You should go for the what? One gives the more benefits. That is called as beneficial construction. Then we have exceptional construction. What construction? May means may. Shall means shall. But we read may as shall and shall as may. It is called as what? Exceptional constructions. Or and is read as or is read as and. Exceptional construction. Then we have rule of ejusdem generis. What is ejusdem generis? When there is an enumeration of words which belong to a specific category, and that enumeration is followed. What is enumeration? Specification. That enumeration is followed by a general word. The general word should be interpreted within the scope of that specific word or that group or a species. That is called as ejusdem generis. Under this, you should learn when it is applicable, when it is not applicable. Then comes non-sister associates, means what? Known by its associates. They say, right, show me your friends, I will tell what you are. So the meaning of a word can be understood by what word? Accompanying word. That is called as non-sister associates. For example, the word entertainment has a different meaning when it is used with a different word. And last one, contemporanea expositio means what? Contemporaneous exposition is the best exposition. When you are reading an old law, you should understand the meaning of the word used in that old law as they were used or as they were referred when that law was made. Because the words will undergo certain changes over a period of time. That is called as what? Contemporanea expositio. Are we clear with these rules of what? Interpretation. Rules of what? We have primary rules of interpretation as well as the secondary rules of interpretation. Let's start. Primary rules of interpretation, secondary rules of interpretations. Let's start. Rule number 1, rule of literal construction. What construction? Literal constructions. What construction? Literal constructions. What is the rule of literal construction? It says it is a cardinal rule. What rule? First rule, remember this, it is a what rule? Cardinal rule, that the statute must be construed according to the what? Literally and grammatically. Simple. Literally and what? Grammatically, as per their what? Ordinary and natural meaning. Therefore, language used in a statute must be construed in what sense? Grammatical sense. Correct, right? The phraseology of a statute is clear and unambiguous. Remember, there cannot be any interpolation or extrapolation of data. If phraseology or the words in a statute is clear or unambiguous, capable of only one and only interpretation, it is not correct to do what? Extrapolate these words out of their natural and ordinary sense. Example, I give this: every director means what? Only present directors, not past directors. So if the phraseology is clear, don't do extrapolation. Just go with the what meaning? Ordinary meaning. Correct, right? When the language is statute is plain and unambiguous, you cannot do what construction? Hypothetical construction. See, remember these three words. First word is what? Literal and grammatical meaning. Second one, when the words are clear and unambiguous, there cannot be any extrapolation of the meaning. Third one is most important. You cannot do hypothetical construction, believing that or assuming that legislature has some intent. That is what called as rule of literal construction. It is based on the maxim absolute sententia expositore non indigent. Means what? An absolute sentence or a proposition needs not an expositor. What is expositor? Means explanation, or one who explains that law. If the words are plain, clear, there is no requirement of explanation. Narrow and broad interpretations. If there are two interpretations possible, how many interpretations? There can be cases where a choice has to be made between two interpretations, one narrower, other one is what? Wider or bolder. Such a situation, if the narrower interpretation would fail to achieve the manifest purpose of the legislation, one should rather adopt the what? Wider one. Clear? This is one more rule you should write. And the last one, technical word should be understood in what sense? Technical sense. These are the important points you should have in your answers for literal construction. What is the first one? Natural and grammatical meaning. Second one, no extrapolation of meaning of the word. Third one, no hypothetical construction. Two interpretations possible, liberal and one more is what? Broad, sorry, narrow and broader. You go for what? The broader one, which gives the effect to the intent of legislature. Technical words should be understood in one sense, technical sense. Understood? We have discussed this case. Now remember, betel leaves. A person wanted or claimed that to be what? Vegetables, but court held that no, that is not the natural meaning. You cannot go for the dictionary meaning of the words. Naturally, we don't consider what? Betel leaves as a vegetables. It is not considered as vegetables. Correct, right? We discussed all this case now. No? Next one, rules of reasonable construction. What construction? So it is based on the principle atras magis valet quam valet. Means what? The interpretation should be done in such a manner to make statute effective rather than what? Futile. Means meaningless. So no. And the rule of interpretations or constructions will arise only when the word is capable of what? Two or more meaning. How many meanings? Two or more meanings. In such a cases, that interpretation should be prepared which furthers the object of the statute. What are the statutes? Furthers the object of the statutes and avoids defeating or impeding its policy or purpose. Correct, right? While grammatical interpretation leads to manifest absurdity, inconsistency, or injustice, the court is justified in departing from the what? Literal meaning. What meaning? Literal meaning. Tell me when? Where the grammatical interpretation, what interpretation? Leads to manifest absurdity, or inconsistency, or injustice, the court is justified in departing from the what meaning? Literal meaning. They can go for what interpretation? Purposive interpretations. So next one, the principle is again found in the maxim interpretatio finder et us res magis. Wherever this word magis comes, go with this reasonable construction. Okay, magis. Reasonably to give effect to enactment rather than the what? Reduce it to futility. However, such interpretation must be reasonable accordance with the policy and object of the statute without resorting to the what? Conjecture, that is guesswork or surmise. Means what? See, in section number 244 of the Companies Act, it provides that there is a right to apply for oppression and mismanagement, provided it should be holding at least 1% of the voting right, should go to NCLT. But NCLT has the power to waive that requirement. Means even if you're not holding that much, the NCLT can take an application. Now, just because it is allowed to you, it doesn't mean it should be allowed to other person also. Because if NCLT start waiving this threshold limit for every cases, then this provision becomes meaningless, right? Whereas what is the question of having this threshold limit? It is true that NCLT have an exceptional power to admit a case even if you're not fulfilling the what limit? Threshold limit. It doesn't mean you will allow in every cases, and it should allow in every cases. If that interpretation is made, what happens? That provision becomes meaningless. So you should do interpretation in such a way that effect is given to the what? Provisions. So we can say that only in exceptional cases. What cases? What is allowed? What is allowed? The waiver is allowed. That is called as reasonable construction. What construction? Reasonable construction. Then we have harmonious construction. What is harmonious construction? Yeah, so it's simple. Expressions in a statute or a deed must be understood in a way that aligns with the what? Object or a purpose of the statutes. When two provisions or the provisions and the statute's objects are in conflict, keep this in mind. First, you should take into consideration object also. The provisions of a statute or a deed must be understood with the object of the law. Where two provisions of a statute or the object or provisions of the statutes are in conflict, that is when we go for what? Harmonious construction. You should do the interpretation in such a way that the effect is given to the what? Object of the law. What of the law? Object of the law. If a word has both technical and popular meaning, the court will choose the meaning that fulfill the what? Object of the statutes. What's the technical meaning? Clear? It is basic rule of interpretation that if possible to avoid conflict between the two provisions on a proper construction, then it is the duty of the court to construe them as they are harmony with what? Each other. For this purpose, the statute must be read in its entirety to ensure the what? Consistency. See, again, when this rule of harmonious construction is applicable, when there is a conflict between the two provisions of the same statutes or provision and the object. In that situation, the interpretation is done to give effect to the what? Object of the statute or effect to the both the provisions of the law. Correct, right? And it is a basic rule of interpretation that the conflict between the two provisions should be what? Try to avoid that conflict and give effect to what? Both the provisions. What provisions? Both the provisions. For this purpose, the statute must be read in its entirety to ensure the what? Consistency. Where it is difficult to avoid conflict. Difficult to avoid what? Conflict. Where it is not possible to give effect to both the provisions harmoniously, then the collision may be avoided by holding that one section which is in conflict with other merely provides for a what? Exception. We can consider as what? Exception. And a specific rule will override a what rule? General rule. Keep this in mind. We discussed this now. Specially generalia, specialibus, non-derogant means what? A general law cannot derogate the what? Special law. However, this rule can be adopted only when there is a real and not merely what? Apparent conflict between the provisions. So if there is a question on harmonious construction, what construction? Harmonious construction, you should write this is applicable when there is a real conflict between the two provisions of the same statutes or the object and provisions of the statutes. Effect should be done. So the interpretation should be done. Give an effect to what? Both the provisions and also the object of the statutes. If not possible, one provision is read as what? Exception to the other provisions. And it is always clear that a general law gives a way to the what? Special law. Clear? And for the purpose of this interpretation, the statute must be read as what? Whole, and they should try to avoid the conflict. This is called as what interpretation? Harmonious construction. Then I have discussed these words in detail so many times. Subject to means what? It is like qualifying provisions. You are saying I am subject to something else, means what? That provision is superior, dependent upon, subordinate to. If the legislature want to make a provision subject to something else or dependent upon something else, they use the word called as what? Subject to. For example, in Partnership Act, many provisions are subject to what? Agreement between the partners. If agreement provides something else, you're supposed to follow what? Agreement. Yes or no? Section number 13, subsection 2 is what? Alteration of memorandum of association. It is subject to what? Approval of the government. Approval of government. Correct, right? Change of name is subject to what? Approval of central government. Correct now? What is notwithstanding? It is also called as overriding provisions. When the lawmakers want to make a section number or a provision superior over other section numbers, they use the word called as what? Notwithstanding. It means in spite of, without being opposed. It has an overriding effect. What effect? It is also called as what? Non-abstentee clause. What clause? Non-abstentee clause. Clear? This can be in the form of notwithstanding anything contained in a section or subsection, or notwithstanding anything contained in the what? Other statutes, or notwithstanding anything contained in the specific sections or subsection, or all other provisions contained in any other statute, notwithstanding anything contained in any other law for the time being in force. These are called as non-withstanding clauses. The forms of notwithstanding clauses. Next one, without prejudice means what? Without affecting that. That will also be there. I will also be there. That is called as what? Without prejudice. If central government can revoke license, it can revoke license. It doesn't mean it will not be punished. It will also be punished. So without prejudice to the revocation of license, Section 8 company is punishable with punishment. If there is a fraudulent activities in Section 8 company. So when the lawmakers want the both section numbers to operate, they use the word called as what? Without prejudice, without dismissing or without damaging, otherwise affecting. They use the word called as what? Without prejudice. Section number 4 subsection 3 provides that Without prejudice to the provisions of section 2, companies shall not be registered with a name which contains certain, correct, right, certain names. That is, it should not be identical, resembles to the name of existing company, undesirable. Correct now. So without affecting the generality, if they want the provisions to operate, they use the word called as what? Without prejudice. Without what? Prejudice. Are we clear with this? So we discussed how many rules of interpretation now? What are three? Literal. Second one, reasonable construction. Then third one, harmonious construction. And the fourth one, Hayden's rule. What rule? Hayden's rule, you just have to find the purpose of the law. Once you find the purpose of the law, you try to interpret the words. To find the purpose of the law, you need to answer how many questions? 4 questions. What is the first one? What was the law before making the act? What was the mischief or defect for which the law did not provide for? What is the remedy that act has provided? And what was the reasons for that remedy? And we have discussed this beautiful case law. It's recent, this medical termination of pregnancy. This gives the clarity on how the interpretation is done based on the purpose of the law. What of the law? Purpose of the law. Are we clear with this? Rule of what case? Hayden's case or mischief rule. Sorry, what rule? Mischief rule. How many questions to be answered? 4. What was the first question? This is not for interpretation purpose. This is to find out the object of the law. Once you find the object of the law, then we'll do interpretation according to the object of the law. Because we always do the interpretation of words to give effect to the object of the law, right? If the words are not serving the object of the law. Clear? Next one. Case laws we already discussed. I'll not discuss the case laws now. Next one, rule of beneficial construction. What construction? Beneficial construction is not a strict ruler, but a method of liberal interpretation. It is applied to give effect to the what? Declared intent of the legislature. This method is used particularly in a statutes enacted for the improving the conditions of certain classes of people. You should write when this rule is used. When it is used? When it is used, when the law is made to improve the condition of certain classes of people under the unprivileged or who have not been treated as what? Fairly in the past. Nothing but for social reforms. For example, labor laws. In most of the labor laws, we do the beneficial construction. For example, Maternity Benefit Act. These maternity benefit was not given to the unorganized workers, daily labor workers. That was challenged in the Supreme Court, and Supreme Court held that you cannot give benefits based on marital status or like registration. It's a social security. They extended the maternity benefit even to whom? To the daily wages. So beneficial construction should be done with what interpretation? Liberal interpretation. What interpretation? It can't be applied where the language of the statute is what? Clear, plain, and unequivocal. Only when it is ambiguity is there, we'll apply this principle. Next one, rule of exceptional construction. What construction? The rule of exceptional construction stands for elimination of words in a statutes which defeat the real objective of the statute or make no sense. For example, in case of small company, before amendment, there was the word called as or, but the or was read as what? And. Now it is and only. But because it has been amended, till amendment we were reading or as what? And. Because both conditions must be satisfied. So that now or is eliminated as and used as what? And. That is called as rule of exceptional construction because it was making the provision senseless. Correct, right? Maxwell states that notwithstanding the general rule that full effect must be given to every word, yet no sensible meaning can be given to a word or a phrase if it would defeat the real object of the enactment. It may rather would be what? Eliminated. If you should give meaning to every word, but if giving meaning to that it becomes meaningless or senseless, you can eliminate that word. Eliminating that words which makes the statutes meaningless. That is called as what? What is construction? Exceptional constructions. Now, it also stands for construction of the words and or are, may, and shall, and must. Correct, right? And or. And is conjunctive in nature, or is disjunctive in nature. Correct, right? When we read on as or and or as and, it is called as what? Exceptional construction to provide for the manifest intention of the legislature. Correct, right? Reza, no. When we read or as and as or, it is called as what construction? Exceptional constructions. Are we clear with this? I have given examples also. You guys can go through it. Next one, income from business and profession. Now we read it as what? Income from business or profession. I'm not required to have both. Even though heading says income from business and profession, but it is read as what? Or. Otherwise, everybody will come and say, I don't have a business income. I'll not be taxable under this act. It is or. And is read as what? Or. That is called as exceptional construction. Next one, may and shall. There can be cases where may is read as what? Shall. Shall is read as what? May. May is discretionary in nature. Shall is what in nature? Mandatory in nature. But when we read may as shall and shall as may, it is called as what? Exceptional rule of interpretations. When we read may as shall, where and they may ask this question of difference between may and what? Shall. Shall cannot be condoned, means cannot be excused. May can be condoned. Would not, if you don't comply with, that will not be considered as violation of law. But this will be considered as what? Violation of law. For this, there is a discretion. But in this case, there is a what? Penalty and prohibitions. Next one, use of may and shall. Use of what? May and shall. What is may? Why? What is the meaning of the word may? Normally permissive and discretionary in nature. But however, there can be situation where we read it as what? Shall. When, in what situation we read may as shall? What is the first one? When the provisions lay down the what? Requisite condition that must be followed. Second one, when the power is conferred to the whom? Discharge a public duty. What duty? Public duty. When you have a public duty, but provisions is made, it is still considered as what? Shall. When the discretion is coupled with an obligation, that is power with duty. When there is a discretion, but it also have a duty. Now the discretion becomes what? Obligation. When legislative intent shows the compliance is essential. In these cases, may is read as what? Shall. This is what most important. If there is a question based on this, the last questions. And shall is read as what? May when strict compliance is not essential, when non-compliance causes no serious consequences, when the word is used in the procedural or formality context, not a substantive law contest. In that situation, shall is read as what? May. Next one, everybody's favorite, rule of ejusdem generis. What generis? Ejusdem generis. What does it mean? Of same kind or same species. This is not an absolute rule of law. Therefore, rule does not apply where the intention of legislature is clear. Just remember this word. When specific words with respect to particular class or category are followed by a general words, the general words are construed being limited to what? Things of the same kind of the specific words. What words? That is called as rule of ejusdem generis. What generis? Ejusdem generis. When it is applicable? When there is a statute contains a what? Enumeration of specific word. What is enumeration? List of specific words. Keep this in mind. List of what? Specific words. Subject of enumeration. That words are of a particular class or category. Third one, the category is not exhausted by enumeration. Means it is not closed. Fourth condition, general terms follows the what? Enumerations. And the last one, there is no indication of different legislative intent. If these five conditions are satisfied, then the rule of ejusdem generis is applicable. First one is what? It contains enumeration of specific words. Should be specific, not general. And this rule is not applicable when general word is followed by specific word. It should be like specific word followed by which word? General word. Statute contains an enactment, enumeration of specific word. Second one, subject of enumeration. Subject of what? Enumeration constitutes a class or a category. That class or category is not exhausted by the enumeration, means it is not closed. And that general terms follows the what? Enumerations. And there is no indication of different legislative intent. Then it is called as what? This ejusdem generis is applicable. When it is not applicable, they may ask this question in the examination. When it is not applicable. See, these provisions are very much clear here. If the preceding term is general, as well as that which follows the rule cannot be what? Applied. When both the words are general, the rule is not applicable. Yes or no? Yes or no? Next one. Where a particular words exhaust the whole genus. We already discussed, when that enumeration is exhausted by enumeration. For example, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. Can you add anything else to it? Other day means what? No other day. Because it's already exhausted. The enumeration is already exhausted. Then there is no what? The class or category is already exhausted. Then there is no question of ejusdem generis. Third one, where the specific objects enumerated are essentially diverse in what? Character. Means they are different in enumeration. They're not of same class or a category. And the last one, where there is an express intention of legislature that the general term shall not be read as what? Ejusdem generis is specific terms. What terms? Specific terms. For example, factories, workshops, warehouses, and any other place whatsoever. It's very generic in nature, right? Then it is not applicable. Are we clear with this? Next, secondary rules of interpretation. Non-sister associates. What is non-sister associates? Known by associates. Known by what? Associate. Means that where two or more words that are susceptible of analogous meaning. What is analogous meaning? Similar meanings are coupled together. They are understood to be used in their what? Cognate sense. Means what? Similar sense. Each word draws meaning from the what? Surrounding words. Correct, right? That is called as non-sister associate. As a result, as a what? Results, meaning of more general word is restricted to a sense of analogous to be the less general word. When there are two words, the meaning of one word which is general in nature is restricted to the meaning of which word? The specific word or the accompanying word is called as what? Doctrine of non-sister associates. Doctrine of what? And this helps us to ascertain the intention of legislature. What of legislature? Intention of the legislature. For example, fresh orange juice is not a fruit juice. Fresh orange juice is not a what juice? Fruit juice. If while dealing with the Purchase Tax Act, which is used the expression manufactured beverages including fruit juices and bottled waters and syrups, it was held that description fruit juices as occurring therein should be construed in the context of the preceding words, and that orange juice unsweetened and freshly pressed was not within the what? Descriptions. Correct, right? Here fruit juices, bottled water and syrups, these are all sweetened. That is not considered as fresh fruit juice. Understood? Next one, doctrine of what? Contemporanea exposito. This doctrine is based on the concept that statute or a document is to be interpreted by referring to the what? Exposition it has received contemporary authority. Means when the law was made. This means the law should be understood in the sense in which it was understood at the time when the law was passed. Correct, right? However, if the law was misunderstood, law was what? Misunderstood. And if there is a right interpretation possible, the court can depart from the earlier interpretation. See, for example, when I use the word carriage, as per Indian Contract Act, when they made this Indian Contract Act, the word carriage means what? Only the bullocks, horses, because it was made in the year 1872. But now the word carriage has a different meaning, right? Nobody goes in horses and bullocks, right? So the word has changed the meaning. You have to consider according to the what? Existing meanings. Clear with this? Next, we have, these are the rules of interpretation. Rules of what? Interpretation. So there are internal aids of interpretation. What is aid? The support for the purpose of understanding the meaning of the words used in the statutes. When you refer to the internal sources, means, for example, if you're reading Companies Act, if you take the help of Companies Act itself, it is called as what? Internal aids of interpretations. For example, company law has long title, it has preamble, it has headings, it has definitions. When you refer to these things, it is called as what? Internal aids of interpretation. What is the first one? Long title. Every law will have short title as well as the long title. Long title provides the object or the purpose for which the law has been enacted. Nowadays, long title and preamble both are combined. For example, we read FEMA. Remember preamble of the FEMA. What is the preamble of the FEMA? It's an act to consolidate and amend the law with respect to the foreign exchange with the intent to promote the what? Orderly, to facilitate cross-border investment and also trade, and for orderly development and management of the foreign exchange. So that shows us what is the purpose of FEMA. So to understand the purpose of the FEMA, you can understand the purpose of the law, you can refer to the what? Refer to the preamble. Clear? So preamble is comprehensive than what? Long title. What title? Long title. But nowadays, in the recent laws, preambles are nothing but the long title. Got it? And we can refer to these internal aids of interpretation only when there is what? Ambiguity. Only when there is what? The preamble expresses the scope, object, and the purpose of the act more comprehensively than long title. Preamble merely offers help in the matter of construction if there is any ambiguity in the law. Courts refer to the preamble as an aid to the construction in the following situation. What is the first one? Where there is ambiguity in the words. What in the word? Ambiguity in the words of an enactment. The assistance of the preamble may be taken to resolve the conflict. Resolve the what? Conflict. Where the words of enactment appear to be too general in scope or application, then court may resort to the preamble to determine the proper scope, limited application for which the words are meant. For example, Hindu law says marriage may be solemnized between how many Hindus? Two Hindus. This is the provision of the law. What of the law? Provision, preamble of the law. The preamble clearly provides that it is only between whom? Two Hindus. That's it. If one person is Hindu, other person is Christian, that is not solemnized as per Hindu law. It should go under the Special Marriage Act. Clear? Because this law, preamble clearly says only between whom? Two Hindus. To understand the purpose of the law, clear manifest intention of the legislature, we can refer to the preamble. Next one, heading and title of a chapter. We have heading and title, right? For example, chapter number 2 of companies that deals with what? Incorporation of company and matters incidental thereto. Correct, right? To understand the section numbers of the chapter, we can refer to the heading or title. As usual, heading and title cannot control the plain meaning of the words used in the statutes. What meaning? Plain meaning. Are we clear with this? Next one, marginal notes. What notes? The marginal notes are found at the what? Left hand side of the margin. But however, nowadays you don't find the margins. And margin cannot be referred as a source of interpretation of laws. That can be referred as source of interpretation of law only as per the Constitution of India. In Constitution, it is allowed. For understanding the Constitution of India, we can refer to the marginal notes. But other laws, marginal notes are not considered as aid of interpretation. Definitional sections. If there is a question based on aids of interpretation, they'll ask questions based on this. The definitions can be of how many types? Two types. We have various definitions in the Companies Act. Today we discuss definitions of FEMA, foreign exchange, foreign securities. So the lawmakers define certain words in the law itself. They are called as what? Definition. Sections are definition clause. These definitions can be what definition? Restrictive definition. What definition? Where the definition starts with the word means, it is called as what definition? Restrictive definition. That means only that. We cannot add anything to it. Restrictive definitions are exhaustive in nature. What in nature? Exhaustive in nature. But extensive definitions are what? Inclusive in nature. For example, body corporate includes. It includes what? Even other type of company like foreign company and LLP. Company means only company which is incorporated under this act or any other previous company law. Clear? So when it is not restricted to the meaning assigned to it, but has extensive meaning, it is called as what? Extensive definition. Next one is ambiguous definition. What is ambiguous? Definition itself is confusing. To understand the definition, you should refer to something else. For example, in the Indian Contract Act, which it says, what is contract? Agreement enforceable by law. Now, what is enforceable by law? To understand that, you should refer to section number 10 of the Indian Contract. Here, definition itself is ambiguous. In that case, we refer to other section numbers to understand the meaning of the law. Last one, definition subject to the contrary context. See, you cannot apply the meaning of a word for every situation. For example, the word person. Person is not same for every situation. Person as per Companies Act is different. Person as per FEMA is different. Person as per income tax is different. Based on the what? Context or the subject in which it is used. Done. Next one, you will have illustration. What are illustrations? The examples assigned to the section numbers. You find many illustrations in the Negotiable Instrument Act and Evidence Act and in the BNS. Illustrations gives an explanations for us or clarity for us. We can refer to the illustrations to understand the provisions of the law or the scope of the law. However, the illustrations cannot have the effect of modifying the language of a section and cannot curtail or expand the scope of the section numbers. Are we clear with this? Next one, provisos. Have you heard provisos? Provisos are nothing but an exception to the provisions of the law. To exclude something from the main provision, we use the word called as what? Provisos. Provisos will be in the form of provided that, provided further that, provided also that. For example, private company means a company having such paid up capital as prescribed and by its articles restrict the transferability of shares, except in 1% company limits the number of members to 200. But however, there are few categories of members should not be included in the what? 200 limit. So to exclude something, they use the word provided that. Remember, provided that two or more persons holding one or more shares jointly considers how many member? One member. So to exclude something or to make a condition or a stipulation, we use the word what? Provisos or provisos. It is used to introduce a qualification or a condition to the provision. The normal function of a proviso is to accept something, means exclude something out of the enactment or to qualify something stated in the enactment which would be within its purview of the provisions were not there. The effect of the proviso is to qualify the preceding enactment which is expressed in terms which are too general. To what? General. Next one. What is the next one? It will be in the form of what? Provided that, provided further that, provided also that. There is a difference between provisos, exceptions as saving clauses. What are provisos? A clause added to statute to accept something or exclude something out of it. It is called as what? Provisos. What is exceptions? To exclude something from the applicability of that provision. Except. Correct, right? What is saving clauses? Save as otherwise expressly provided. To reserve something or to save something. Exemptions are there, right? Nothing but exceptions. Saving clause means what? Remember section number 6. Section number 6 starts with a saving clause. Save as otherwise expressly provided in any other section numbers. Companies Act will have an effect, notwithstanding anything contrary contained in the MOA, AOA, resolution or agreement. Means Companies Act will have an effect on every situation, irrespective of any contrary statement. But save as otherwise expressly provided means there are few section numbers which expressly says I'm not applicable if AOA provides. Those are saved. Instead of putting a blanket ban, if I want to save something else from the shadow of this provision, I use the word called as what? Save as, otherwise provided. So saving clauses. The saving clauses will start with the word called as what? Save as, otherwise expressly provided. Exceptions excludes the what? Provisions from its full applicability. Example, nothing contained in this clause shall apply to. Small company means company, public company, other than public company, having paid up capital of 10 crore rupees or more, turnover of 100 crore rupees or more. But earlier it was 4 crore and 40 crores. But nothing contained in this clause shall apply to whom? That is exception, na? Clear? Next one, there can also be what? Explanations attached to the section numbers. Explanations is at times appended to section number to explain the meaning of the text of that section numbers. An explanation should normally be read as to what? Harmonize with or clear up any ambiguity in the main section number. The meaning to be given to an explanation will really depend upon the what? Terms and not of any area of its purpose. Object of adding explanation. What is the object of an explanations to a statutory provisions? To explain the what? Idana kelbodu. Question. The object of adding explanations. This was held in the Sundaram Pillai versus Pattabhiraman Fazal Ali. To explain the meaning and true intention of the act, to clarify any vagueness, to provide additional support, to fill up the gap. It can't take away any statutory right given to a main purpose. It can't act as an hindrance to the interpretation of the act. Ninth one, schedules. What are schedules? We have the schedules to the Companies Act, right? They provide the detailed information about a particular thing. Expressions in the schedule cannot or prevail over the expressions in the enactment. If there appears to be any inconsistency between the schedule and the enactment shall always prevail. If there is a what inconsistency between the enactment and explanations, what will prevail? Enactment. Sorry, schedule and enactment, what will prevail? Enactment. Statute should be read as whole. You cannot read it in isolation. You should read the entire statute as one. Then only will be the proper understanding of the law. And as we know, if there is a inconsistency between the object of the law and the provisions, or between the two provisions, to resolve that conflict, you should read the law as whole in its entirety. Understood? Resa, no. Next one. External needs of interpretation. Historical setting means how the law has been made. What is like for example, we have discussed FEMA today. In that we discussed before FEMA we had FERA. Before FERA we had what? Defense rules. When we understand all these things, it is considered as what? Historical settings. Consolidating statutes and previous laws. What is consolidating statutes? Combining statutes, correct, right? An act to consolidate the previous law. For example, our FEMA is a what? Consolidating law. It has consolidated all the previous laws, right? That we had FERA and we had the Defense of India rules. They may solve the doubtful points in the statute with the aid of such presumption in the intention, rejecting the what? Literal construction. What construction? Literal constructions. Correct, right? We can enact to consolidate the previous laws. In such a case, the court may stick to the presumption that it is not intended to alter the which law? Other laws. Only when it says to consolidate and alter, then there will be an amendment. What is usage? Practices. See, in case of certain trade transactions, there will be usages. You would have read this word in Sale of Goods Act 100 times. Conditions as to fitness by quality as fitness by usage of trade. What is usage? Practice. In certain trade there will be certain practices which are known to both the parties. They become part of the contract, a rule of law. So you can refer to those usages to understand the provisions of the law. Are we clear with this? Reza, no. Next one, earlier act and later act and analogous act. What is analogous act? Similar. If a law is dealing with a similar subject, for example, SEBI and Companies Act deals with the companies only. So we can refer to SEBI to understand the provisions of Companies Act. Our Companies Act to refer to what? SEBI. And we have Companies Act and we have Income Tax and Wealth Tax Act. But now there is no Wealth Tax Act. We can refer to both to understand the provisions of the laws. Correct, right? So the provisions of one law can be read with the provisions of other law to understand it. That is called as analogous act. Next one, earlier act. Explained by which act? Later act. In old law, explained by which law? New law. If both are there. A earlier rule, explained by which rule? New rule. Correct, na? A later act may be construed in the light of earlier act, dealing with the what subject matter? Same subject matter. Sometimes the later act itself furnishes a legislative interpretation of the what? Earlier act. If the language of the earlier act is clear and unambiguous, the later act cannot be used to alter the what? Explain its meaning. So earlier act can be used to what? For example, amendments. Amendment act provisions can be used to interpret the what? Existing law. Allowed or not allowed? Allowed. Reference to the repealed act. Now we have the Companies Act 2013. That repealed Companies Act 1956. When we refer to Companies Act 1956 to understand the provision of Companies Act 2013, it is called as what? Reference to the repealed act. These are all external. Like when you cannot understand the meaning of the words by the law itself, then you go for these help. In many cases, many author always quote Companies Act 1956, even today. But that gives some clarity. That is the reason. Next one, dictionary definitions. What definitions? We can go for the dictionary definitions, judicial decisions, for the understanding. Use of foreign decisions. What decision? Many cases advocate quote the decisions given by the foreign courts as a reference to prove their case for understanding of the provisions of the law. So foreign decisions can be referred for the understanding the provisions of the law. Next, interpretation of deeds and documents. What are deeds? which conveys the right, purports to give a right or proves the right. It is called as what? Deeds. And we discussed what is document. What is document? Any matter expressed on any substance in the by means of letters, figures, or by words, anything for the purpose of recording that matter. That is called as what? Document. How to interpret the documents? Reasonable man test. What test? The document must be interpreted as a what man? Reasonable person informed of the what? Surrounding circumstances. The focus is on the scope, intention, as well as the context of the deed or document. No cross reference to what? Other deed. You should not reference. You cannot read one document with the what? Reference to the other document. Done? Same word has what meaning? Same meaning, unless there is a clear intention to have a different meaning. Same word in the same document will have what meaning? Same meaning. Correct, right? Golden rule. Primary object is to ascertain intention of the parties. What are the parties? Words must be given their ordinary and natural meaning. This is the golden rule of interpretation of deeds and documents. Document must be read as what? Whole, not in isolation. The same thing we have discussed in case of interpretation of documents as well. Surrounding circumstances on the matter, circumstances in which the words were used must be considered. And the purpose of execution should also be considered. Preference for effective meaning. The words has more than one possible meaning. The meaning that gives the effect to all clauses should be preferred. A meaning that renders any clause ineffective or redundant must be avoided. Conflict between the clauses. Courts must attempt to harmonize conflicting clauses so that all are effective. All are what? Effective. If reconciliation is not possible, the earlier clause shall prevail over the which clause? Later clause. Understood? This is the same rule, na? If reconciliation is not possible, which clause will prevail? Later clause will prevail over which clause? Sorry, earlier clause will prevail over the later clause. In case of documents, in case of provisions, later provisions will prevail over the which one? Earlier one. They can ask this question in the MCQ. So simple chapter, but don't go with technicality of meaning, because nobody can write in the language of what is used in the ICA material. It's very difficult to use the Latin words and Latin language, but at least you should read these keywords to write answers in the exam. For example, I said in case of literal constructions, you should write natural and grammatical meaning, no hypothetical construction. You cannot do extrapolation of the meaning of the words when the meaning is clear. Then you should interpret technical word in a technical sense. If there are two interpretation possible, narrow and broader, and if the broader one gives a more meaning and give the intent effect to the purpose of the legislature, should go for the broader interpretations. Harmonious constructions, you should remember, like, what is the reason behind that rule. Understood? Simple chapter. Got it? Refer to the material, solve the questions. With that, you can go and write in this language itself, because keywords are most important. If those keywords are there, they'll give marks in the examinations. Understood? With these, we are done with interpretation of statutes. Got it? Dhanyavad. Limited Liability Partnership Act 2008. Simple chapter, and it has good weightage from the examination point of view. Last time they asked around 14 marks questions out of this chapter. We cannot expect the same weightage for the upcoming examination, but you should know simple provisions. Definition: what is body corporate means and includes company. It also includes LLP registered under this act, or LLP outside India, and a company incorporated outside India. It does not include a corporation sole, cooperative society, or any body corporate which central government specify by the notifications. Correct, right? For example, public trustees, C and AG. All these are called as the body corporate sole, because that continues irrespective of whoever comes and whoever goes. Correct, right? Next one. Second one, financial year. What do you mean by financial year? Period starting from 1st April ending on 31st March. But based on this one exception, they can ask question in the examination. If LLP starts on 30th of September, then the financial year ends on which financial year? Next financial year, following financial year. Yeah. And third definition is important, small LLP. What is small LLP? LLP whose contribution, here you don't call it as capital. In case of LLP, the members, partners' capital is called as contribution. contribution does not exceed 25 lakh rupees or such higher amount not exceeding 5 crores, turnover as per the over the statement of accounts and solvency does not exceeds 40 lakh rupees or such higher amount not exceeding how much 50 crore rupees. Such other condition as may be prescribed. Are we clear with this? Yes or no? So small LLP means what? LLP where the contribution does not exceed 25 lakh rupees or such an amount not exceeding 5 crores or turnover as per statement of accounts and solvency. Again, we don't call it as P&L account here. We call it as what? Statement of account and solvency does not exceed 40 lakh rupees or such an amount not exceeding 50 crore rupees. Such other conditions as may be prescribed. Clear? Then section number 5, important. Who can be a partner, who cannot be a partner? Who can be a partner? An individual or a body corporate can be a partners. But however, who cannot be a partner? Person who is found to be unsound mind by a competent court having jurisdiction and the finding is in force, undischarged insolvent, and one who has applied to be adjudged as an insolvent and his application is pending cannot be a partners. But otherwise, individual or body corporate can be a partner. Minimum number of partners 2. At any time, if the number of partners are reduced below 2, and if the remaining partner continues to carry the business for more than how many months? 6 months, he would be liable personally. Next one. 7th one, DP. Every LLP shall have minimum 2 DPs. Out of that, one shall be resident of India who has stayed for minimum how many days? Not less than 120 days during the financial year. During the financial year, not preceding financial year. Every year, it should be staying for how many days? 120 days. Got it? Next one. All partners are body corporate, then they'll appoint whom? Nominees to act as the designated partners. Correct, right? Next one. If incorporation document specifies such persons can be considered as what? DP. All persons can be considered as what? DP. Any partner can become or ceases to become DP as per the LLP agreement. You should take a consent of a DP before you appoint him as a DP in the form number 9. Every DP shall have what number? DP number. Now it is called as what number? GIN number. Once appointment is done, you need to intimate this to whom? ROC within how many days? 30 days. Liability of DP. Liability of whom? They are the one, based on this, they ask question in the examinations. DPs are the one who is responsible for the compliance of provisions of this act. Which act? LLP Act. I'll ask few questions to you guys. Listen, everybody. Certain minute details. LLP agreement is there, right? Is LLP agreement is a private document or public document? Private document. LLP agreement is not open for inspection, unlike MOA and AOA. In case of LLP, what? LLP. The name of the LLP shall end with a word called as what? LLP or Limited Liability Partnership. LLP is a glorified version of partnership. It's similar to partnership, but not a partnership, where the liability of the partners is limited. There is concept called as compounding of offenses. Any contraventions under this act which are punishable with fine only, if there is a punishment with fine only, those offenses can be compounded by the RD, Regional Director. What is compounding? Compromising. Understood? And even ROC has a jurisdiction over the what? LLPs, incorporations, and all those things happens with a register of companies. Then liabilities of designated partner, responsible for compliance of the provisions of the act, liable to all penalties imposed on LLP for contravention of the provisions. Changes in designated partner, any vacancy filed by LLP within how many days? 30 days. No DP is appointed. All partners are deemed to be a designated partner. Correct, right? Next one, incorporation of LLP and matters incidental thereto. You need how many partners for incorporation of LLP? 2 or more persons can start a business to earn the profit, subscribing their names to what? Incorporation document. Form Philip should be filed. What is Philip? Form for incorporation of LLP. Statement by professional and one subscribers to LLP document. All the requirements of Act rules have been complied with, similar to the companies. Next one, incorporation document shall contain the name, business, address of the registered office, name and address of DP, and such other information. Correct, right? Incorporation by registration, obviously, the LLP comes into existence only on registration with the ROC. Next one, registered office of LLP and change therein. LLP must have what office? Registered office. Correct, right? Where you can receive the communication as well as the notices. Address shall include postal code as well as the email address. In addition to registered office address, company may have any other address for service of document and intimate the same within how many days? 30 days. Service of documents, LLP, partner, DP, either by post or registered post or any other mode. At what office address? Registered office address. Means any communication to the LLP or to a partner or a DP is made by which mode? This mode. Next one, change of registered office within the same state. What state? How is it done? By following the procedure in the agreement. If agreement is done with the consent of whom? All the partners. Out of the state, again, as per the agreement, if agreement is silent with the consent of whom? All the partners, and the notice should also be given in the newspaper. And it should also consent of whom? All the secured creditors. Whenever there is a change, there need to be informed to whom? To the ROC within how many days? 30 days. Effect of registration, capable of being sued, acquiring any assets, have a common seal, such other act of the body corporate. Correct, right? Name of the LLP shall have a suffix called as what? Limited liability partnership, or the acronym called as a LLP, shall not be registered with a name which is undesirable, identical, or resemble to the name of an existing companies or registered trademark. Next one, reservation of name. What of name? Reservation of name, run. Reserved for how many months? 3 months. How many months are? 3 months. The name is reserved for how many months? 3 months. MCQ question. Rectification name of LLP. Same to same that of what? Section number 16 of Companies Act. Central government opinion on that company's name is identical, resemble to the name of an existing company, can order the LLP to change the name. LLP shall change the name within how many months? 3 months. If not, the central government can allot the new name. And once you change the name, you need to intimate the same to whom? ROC within how many days? 15 days. Next one, partners and the relationship. What relationship they have to each other? We know that partner is not the agent of other partner, but is the agent of LLP. For the act of partner, who is responsible? LLP, but not the other partner. If eligibility to partners, any person can become partner by subscribing their names to the incorporation document or as per the LLP agreement. Relationship of partners, mutual rights and duties. The mutual rights and duties of the partners of LLP governed by what agreement? LLP agreement. This LLP agreement should be filed with whom? ROC within how many days of incorporation? 30 days. In the form number 3. Any changes are also intimate in the form number what? 3. Within how many days? 30 days. Agreement should be in writing, made before the incorporation. See, if LLP agreement is made before incorporation of LLP, it has to be ratified once LLP is formed by whom? With the consent of all the partners by passing a resolution. Passing what? Resolutions. Are we clear with this? And that any LLP form or changes therein, LLP agreement or changes therein should be filed with ROC within how many days of alteration? 30 days. How many days? In the form number 3. Cessation of partnership interest. When a partner ceases to be a partner in a partnership firm. As per the agreement, if agreement is silent with the consent by not giving notice to whom? All the partners. Correct, right? Either you can cease to be a partner by giving notice to all the partners, or as per the agreement. Agreement is there as per agreement. Agreement is silent by giving notice to whom? By giving notice to whom? All the partners. Partner can cease to be a partner as per the LLP agreement in the absence of agreement by giving not less than 30 days of prior notice to other partners. A partner ceased to be partners on death, dissolution, declared to be unsound mind by the competent court, applied to be adjudged as an insolvent or declared as insolvent. Deemed to be partner unless notice is what? Given. This is same like continuing this partners unless until his notice is given, he continues to be partner and they would be held responsible to which parties? Innocent parties. What parties? Innocent parties. Are we clear with this? Next one, a person ceased to be a partner continues to be liable for the obligation incurred while he was a partner. Obviously. Next one, right on cessation. He has a right to receive the capital contribution made, share in the accumulated profits of the LLP. Same like partner. If he is going out, he has a right to receive the what? Contribution as well as the accumulated profits. Former partner has no right to interfere in the management of the LLP. Common sense. Registration of changes in partner. If a partner, if there is any changes in the partners, again, in case of partner, name means first name, middle name, surname. If there is any changes in this, you need to inform to whom? LLP. LLP will inform this to whom? ROC. So partner ceased to be a partner intimate to LLP within how many days? 30 days. LLP shall file notice of changes to ROC within how many days? 30 days. Changes in the name and address, he will intimate within how many days? 15 days. Then LLP intimates this to whom? Within how many days? 30 days. This is important. Person ceased to be a partner and he has a reasons to believe that LLP may not file notice to ROC, may himself file. ROC can get the confirmation from the LLP. Confirmation is not received within how many days? 15 days. It can register. Register can register it. Extent of LLP liability of partnership and partners. Partner as an agent. For the purpose of business of LLP, partner is considered as what? Agent of LLP, not of partners. Correct, right? LLP is not liable if a partner exceeds the authority and third party was aware about it. Correct, right? Is LLP liable for the wrongful acts of the partners? Yes, if they are done in the what? While carrying the business of the LLP. Obligation of the LLP is the obligation of LLP, not the partners. Correct, right? Liabilities of LLP met out of what? Property of the LLP. You should write all these provision if they ask question about liability of LLP. Clear? A liability of LLP is a liability of whom? LLP itself, not of the partners. Extent of liability of partners, not personally liable. Personally liable for his own wrongful acts or conduct, not personally liable for the wrongful conduct of the other partners. Yes or no? He's not personally liable, but he's personally liable for his own wrongful conduct and wrongs. But he's not personally liable for whose conduct? Other partner's conduct. Partner by holding out, he represent himself that a partner of the firm and partner of the LLP, and he is liable to innocent person. Even LLP is also liable. It's not like only one is liable. Who is responsible? Both of them would be held responsible. Are we clear with this? Next one, unlimited liability in case of what? Fraud. If LLP is formed with the purpose of intent to defraud the creditors or any person or fraudulent purpose, then liability is what? Unlimited. Correct, right? But LLP is not responsible if the fraud was committed by a partner without whose knowledge? LLP's knowledge. 31 is important, whistleblowing. There are two provisions in that. First one, protection to whistleblower. Second one, reduced or waiver of penalty or punishment. First thing, any person who gives any information which is useful in the investigation, the court or tribunal may waive or reduce the penalty waivable if such partner or employee of LLP has given some useful information during the what? Investigation, or any information given leads to the conviction of the accused. Protection to whistleblower cannot be discharged, demoted, suspended, threatened, harassed in any other manner, discriminated against the what? Terms and conditions. Clear? Contributions can be in the tangible assets, intangible assets, movable property, immovable property. If it is movable, if it is intangible assets, you should give a valuation certificate from the registered valuer. You can contribute either cash or in the form of what? Assets. All these are called as what? Contributions. Called as what? Contributions. Next one, obligation to contribute. Obligation of the partner to contribute as per the what? LLP agreement. Creditors of the LLP may enforce original obligation against whom? Partners. If LLP goes into liquidations and if a company LLP could not pay it, even if there is any changes without knowledge of whom? Creditors, they can still enforce it. Okay, means they can file, ask the partners to contribute as per the original agreement if they, even if they have made any changes. Financial disclosure, they should maintain the proper books of accounts on what basis? Accrual basis. Under double entry system, they can also mention on what basis? Cash basis as well. Preserved for how many years? 8 years. Prepare accounts and solvency within how many months of end of financial year? 6 months. And collect within how many days? 30 days from the expiry of 6 months from the end of financial year. Auditing of financial statement is mandatory only for a big LLP, not small LLP. What is small LLP? Contribution does not exceed 25 lakh and the turnover does not exceed 40 lakh. Failure to file form number 8, there is a punishment for that. Annual return, every LLP shall file annual return within 60 days from the closure of what? Financial year. How many days? 60 days. Failure to file LLP, 100 per day, maximum how much? 1 lakh. TP how much? 50,000. Inspection of documents kept by registered incorporation document, name of partners, statement of accounts and solvency, annual return filed with ROC, available for inspection by any person. Is there any document called as LLP agreement here? No. So LLP agreement is not a public document and not open for inspection. Power of registrar to obtain information. Based on this, there can be question in the examination. Registrar has the power to call any information from employees or partner of the LLP. If the information given by that partner or LLP is not sufficient, or if there is any shortcomings in that situation, the ROC can demand the personal presence of that person before the ROC. Clear? In order to obtain information for the purpose of carrying out the provisions of this Act, registrar may require any person present, former partner, DP, employee of LLP, to answer any questions, to make declarations, supply other informations in writing. ROC is not satisfied with the reply or declaration, power to summon that person to appear before him, or inspector or public officer whose register designate to answer such questions. Important, based on this there can be practical questions. Compounding of offenses, if I said only an offense which is punishable with fine can be compounded. If it is imprisonment, not compounded. Who can compound it? RD or any other person not below the rank of an RD. If the same offense is repeated within how many years? 3 years, shall not be compounded. After 3 years, it is considered as what? Fresh offense. What is the amount payable on compounding? Shall not be less than minimum fine. Extend up to how much? What? Maximum fine. Procedure, application should be made through whom? ROC. ROC forward the application along with this what? Comments. Correct, right? If the offense is compounded, intimation shall be given to whom? ROC within how many days? 7 days. This is a prosecution. If prosecution is already initiated, then ROC gives a report and no, then the court will drop the prosecution. If the prosecution is not initiated, in that situation, there should not be any prosecution because the offense is compounded. Done. Failure to comply with order of RD. After you get the compounding, if you don't pay the prescribed amount of fine, then you should pay the twice the amount of fine. Maximum fine. Twice the amount of what? Maximum fine. Assignment and transfer of what interest? Partners' rights. Same like partnership for section number 29. Even the rights of the partners in LLP can be assigned or transferred. But that assignee will not become partner. You can only get a right to share in the what? Profits of the LLP. Are we clear with this? Is it possible to convert partnership firm into LLP? Yes. LLP into partnership firm? No. Private company into LLP? Yes. Public company into LLP? Yes. Unlisted public company into LLP? Yes. Listed company? No. Clear with this? Registration and effect of conversions. On conversion, all the assets, liabilities, everything becomes the what? Assets and liabilities of the LLP. LLP within 15 days of date of registration inform the whom? Concerned registrar. Upon conversion, partners are bound by the what? Respective schedules. What schedules? Effect of registration, there shall be LLP with the name specified. All tangible and intangible vest with whom? LLP. Old firm or the companies dissolved. Companies what? Dissolved. Foreign LLP, central government may make rules for the establishment of place of business of foreign LLP, similar to the companies. Done. Next one, compromise or arrangement of LLPs. Remember, compromise or arrangement. What is compromises? Let's say there is a dispute. Then we do compromises. Compromise or arrangement can happen between the LLP and creditors or between the LLP and partners. For example, partner is liable to contribute. Listen, everybody. Partner is liable to contribute 5 lakh rupees. Now you go for an arrangement where you will reduce it by 4 lakh rupees. Arrangement. Let's say you are taken loan from the bank, 50 lakh rupees, but you're not in a position to repay it back. Now you're going for an compromise, saying that I'll pay 40 lakh rupees, you weigh off the remaining 10 lakh rupees. These are called as compromise and arrangements. So compromise and arrangement can be done to the approval of whom? NCLT. Approval of whom? NCLT. A person should make an application to whom? NCLT. The proposed compromise or arrangement between whom? LLP and creditors or between LLP and partners. Tribunal on application of LLP, creditor, partner or liquidator order the meeting of creditors or partners as the case may be. Clear? Approval of creditors or partners, majority representing how much in value? 3/4 in value in meeting agreed, the compromise or arrangement shall be sanctioned by the tribunal. Clear? If tribunal makes the above order only if all material facts, including latest financial positions of LLP, including latest financial position of LLP and pending investigations has been disclosed by affidavit. Order of the tribunal shall be filed with whom? ROC within how many days? 30 days of making the order and will have an effect only after it is filed with whom? ROC. Based on this, they ask MCQs in the previous exam. At any time after application has been made, stay commence the continuation of any proceedings against the what? LLP. Who can do that? NCLT. Power of a tribunal to enforce compromise or arrangement means for the enforcement of this compromise or arrangement, who can make provisions? NCLT can make the provisions. Clear? Provisions for facilitating reconstructions or amalgamations of LLP. Amalgamations of LLP, two LLPs. In that, while sanctioning that scheme, NCLT can order that assets are transferred, continuation of legal proceedings, then dissolution of transfer LLP. All these orders who can pass? NCLT can pass to give an effect to that compromise or amalgamations. Correct, right? Yes or no? And no liquidation order can be passed without receipt of report from whom? Official liquidator. And no compromise arrangement can be made unless report of registrar of business of LLP have not been conducted in what manner? Prejudicial to the interest of the partner or public. So you should take a report from ROC, and also liquidation order is passed only on the report of whom? Official liquidator. Official what? All properties and liabilities transferred to what? LLP. Copy of the order of NCLT to be filed with whom? ROC within how many days? 30 days. Clear with this? Chapter number 13, winding up and dissolution. Section number what? 63 and 64. Correct, right? Can the LLP be owned up? Yes. Correct, right? How? Circumstances under which LLP be owned up by the order of tribunal. It can be voluntary or by the order of tribunal. Following are the cases in which LLP may be owned up by the order of tribunal. What is the first one? LLP decides that LLP be owned up by the tribunal. Second one, for a period of more than 6 months. How many months? 6 months. The number of partners of LLP is reduced below how many? 2. LLP is unable to pay its debt. LLP has acted against the interest of sovereignty and integrity of India and the security of the state or public order. All these things, it has not filed its statement of account and solvency for how many years? 5 years. All these things we have discussed in detail in the regular classes. Correct, right? Next one. Miscellaneous provision, business transactions of the partner with whom? LLP. If the partner lends money, transact any business with LLP, partner will have the same right that of a what? Because LLP is a body corporate, we know this. Can central government make the provisions of Companies Act applicable to LLP? Yes, by notification in the official gazette. That notification must be laid on in the both houses of the parliament. Document should be filed in what form? Electronic form. Payment of additional fees. If forms or documents are not filed, you should pay the what fees? Additional fees. However, if LLP partner DP commits the offense for a second offense, punishable with what? Twice the amount of the fine. Clear? In these compromise and arrangement and compounding of offenses, whistleblower, then liability of the partners, liability of LLP, then definition of financial year, then definition of what is the name of partner. Name of partner includes both first name, second name, first name, middle name, as well as the surname. Any changes you should inform to the LLP within how many days? 15 days. And LLP shall inform the same within how many days? 30 days. Understood? Based on this, they can ask questions in the examination. With this, we are done with the marathon revision of your CA Inter Law. We have covered all the laws in 2 days. How many days? 2 days. 9 to 6. Today it is 8 to 6. 9 a.m. to 6 p.m. yesterday, and today 8 a.m. to 6 p.m. Then, so that's it. With this, we are done with the marathon revision. Thank you. CSR. Okay. That's it.